Kind of left to right, really choppy though, a lot of headline risk being traded. The market is definitely trading headlines right now. You can just see that in the kind of the whippy action. Broadly though, it's risk on. Broadly, markets are trading back to where we were before we started this war. Is that the right place to be for markets right now? I don't know. It's a discussion. A lot of people are thinking about that going into this weekend, Tom, as we watch what could take place or could not take place in Islamabad.
European futures, to your point, pointing higher by 0.4% after closing, a little lower on Thursday, down 0.1%. It was energy that was outperforming as a sector by the end of the close yesterday, and it was media on the downside. We'll see how that changes today, of course. So European futures pointing higher by 0.4, up 23 points. FTSE 100 futures in the UK essentially flat. We'll look at the energy sector again and to what extent that plays into the FTSE 100. DAX futures pointing to gains 104 points, looking to add 0.4, close to 0.5%, Anna.
Yeah, so that's the futures picture. Let's have a look at some of the individual stocks and sectors that are very much in focus. And I'll start with the tech theme, as maybe we haven't lingered on this enough. TSMC's sales beat estimates, the war failing to dent AI demand. And so if that is important to you in terms of your chips outlook here in Europe, then that's something to keep in mind. We're watching energy stocks, of course. Oil prices at 1% higher on Brent, 96.88 is where we are. And Leonardo, this has seen a change in CEO. This is one of the state-controlled firms that has seen a change in CEO from the Italian Prime Minister. Others did not. Guy?
The divergence between chips and software, absolutely huge right now. So the chip story is certainly front and center. Okay, here we go. Friday morning, let's take a look at the session. This is what we are getting early doors. FTSE 100, not a convincing move. We're down by a little bit, less than 1/10%. There you go, 1/10%. How much further down do we go? We'll keep an eye on what is happening with the energy names. Elsewhere, we're expecting a little bit of positivity, but just a little bit as we wait for news. US CPI data coming out a little bit later on. What's going to happen with these talks? What's going to happen with all that energy that is bottled up in the Gulf right now behind the Straits of Hormuz? We need answers to these questions. CAC Iran up by less than 1/10%. DAX is up by 1/10%. IBEX is up by less than 1/10%. The market's doing nothing right now, waiting and watching, hoping for some clarity maybe to emerge. Do we get that? You've got to wait maybe until Monday morning to answer that question, Tom.
Across your sectors right now, interestingly, energy is down a little over 1%. On the upside, it's media. So after the losses of yesterday for that sector, gaining so far, at least in the session, 0.7%. Tech, to Anna's point, of course, we need to continue to focus on that. Some real strength coming through from the likes of TSMC and also Momentum in terms of the optics space, just showing that demand for the infrastructure piece remains alive and well. Tech as a sector up 0.7%. But of course, again, to Guy's point, that divergence between software and semis is and has been pronounced. Personal goods, they're kind of down 0.5%. Telecoms also a little softer by 0.3. That is broadly the look across sectors. Again, with the picture modestly up around 0.1% across the benchmark. That's the sector breakdown, Anna.
We will certainly keep an eye on what's going on with oil prices. So yes, it's interesting that we do have oil prices higher by more than 1% this morning, but energy stocks weaker. I guess that's because oil prices have actually dropped from where they were at the close. Sorry, where they were the close of European stocks yesterday, but not when they were at the close of oil trading yesterday. But oil prices are actually jumping right now, and we've gone suddenly up, and we're up by 1.4% on Brent now. We were up by 1% earlier on, so not big moves by recent standards, but certainly a decent size move. Media is bouncing. That was one sector that was really beaten up yesterday, and that sector is bouncing back a little bit. Some of the advertising businesses coming back there. And technology is the second best performing sector, and some of those chip names perhaps getting a boost from what we heard from TSMC, but we've got like ST Micro, Nordic Semiconductor moving a little higher.
SML is the biggest points gainer on the stock 600 this morning, so that's going to certainly give that sector a lift, up by 0.7%. But it's a really eclectic mix in terms of what else is rising this morning. In terms of points, it's ASML, Roche, Richemont, UBS. SAP's actually up to that software story, and MS. Actually, luxury does look like it's coming back. If you're looking for one theme, you've got Richemont, MS, LVMH, all rising this morning. So maybe that sector, beaten up of late, coming back a little bit.
Yeah, one area of focus for us. Let's talk to Beata Manthi, Head of European Equity Strategy over at Citi, and with us this morning. Beata, nice to have you with us. We're watching this oil price, 1.6% higher. We'll keep putting that up on the screen, the session chart looking as if something's spooked oil. And that's a useful place to start, actually, because I wanted to ask you, you run lots of analysis, Beata, ranking markets, ranking sectors, screening for this, that, and the other, working out where you think the opportunities are. I mean, how long does any of that research last right now? What is the shelf life of that kind of analysis at a time of such headline risk?
So what you're talking about is the first one we've done since the conflict has started, because until now, it's been all about positive positioning unwind, and recently short covering, right? Because the market swings have, of course, resulted in massive underweight positions, especially in Europe, broader across the world, but short positions have been the strongest, the largest in Europe. Now, with the big swings that we've seen and rebound this week, there is still a fair amount of net shorts. So this could be still unwinding. So perhaps short squeezes
Still short squeeze,
are
right.
still there.
Yeah.
However, given investors are really tired of trying to play the headlines that are changing every hour, we think that now is the time to step back and think, wait a minute, okay, so the market is now trading 3% or 2% below year-to-date highs when it comes to Europe. Is it fair? What is the market pricing in? So we have this proprietary model that tries to capture what kind of EPS outlook is priced in by the markets.
Yes.
And this is where the fundamentals view comes in as we are heading into the reporting season. And what it tells us is that European market is still priced for upgrades, and that is a problem. Right?
Yes. So that suggests that markets are complacent, too optimistic?
Probably. And of course, the conflict is not the only issue we'll be trying to understand this year, right? Reporting season, to fundamentals and trying to understand how much damage has been done and what the companies are going to say about the future. Probably it's going to be a lot of uncertainty, right? Because it's hard to say right now. So it's hard, even if the war finishes today, it's hard to just unwind all the damage that has been done. And, right, so we are not going back to the world the market has been putting bets on at the start of the year. Some of this comes back, but not fully. That's our view.
If I want to, let's talk about the fundamentals. Do I need to wait to understand what the fundamentals are until I've heard from a whole bunch of CEOs in earnings season? How important are earnings calls going to be in terms of, actually, I need to know what's happening, and at the moment I don't. Do I need to wait until then before I can actually get a fair idea of whether or not my earnings estimates are in any way accurate?
Not necessarily. You can look at the playbooks from the previous crisis, right?
Sure.
So in 2022, actually, the overall earnings level for Europe has gone up, but only because energy has been seeing massive upgrades. Everything else has been downgraded, and the overall earnings growth number has halved. But it was still positive. So it wasn't a disaster even in 2022.
But every scenario is different. History rhymes, but it's not.
Absolutely. Absolutely. So now you could take a more positive view or a more negative view. When you think about the macroeconomic backdrop right now, our economists argue it's actually worse than in 2022.
Worse?
Worse.
Okay.
Why? because labor market was much tighter back then than it is right now. Households were much healthier balance sheets coming out of the pandemic savings, and the fiscal had more scope, and actually fiscal was still working its way with the post-pandemic funds, right? Monetary policy was also at much lower levels. From that perspective, it's worse, and how it's projected in the equity markets right now is this high valuation. So what I've mentioned, the market is priced in for upgrades. Well, of course, it's the function of the valuations still being high. Actually, at the entry to this crisis, we've been trading at the highest valuations at any entry point to the previous geopolitical crisis.
Okay.
So this is all bearish. It's not necessarily market down this year, but perhaps a volatile market, right?
Just in terms of the backdrop that you paint when it comes to the economy and the relative weakness there, does that mean that markets are overpricing central bank hawkishness, given that backdrop?
The markets have already repriced a fair bit of that, right?
Yeah.
So pricing has been also very volatile. Our economists have been always pushing against this very hawkish pricing, claiming that actually there is damage being done to the economy, inflation is picking up, growth is already suffering. So it's not as like you should not be hiking into a crisis like this, which is really exogenous supply crisis, right?
Okay, so you've painted a relatively cautious / negative picture for us. Where are you seeing opportunities? Which sectors are screening kind of the healthiest at this point?
So it's not a disastrous picture, but it is a slowly deteriorating picture, right? It's not going back to the optimistic picture we've had at the beginning of the year. That's all. Now, in terms of opportunities, of course, the situation is uncertain, and we don't know whether we are going to have ceasefire lasting or not, as you see in the oil prices volatility today, for example. So underneath the surface, you really need to go underneath the index level and look for opportunities on stocks or sectors. And what we do, we look at the sectors. So we would like opportunities that could do well both ways in the both scenarios. So we look at the disconnects between the fundamentals or short-term momentum in these fundamentals, because the assumption is most of fundamentals will deteriorate, valuation disconnect, and the positioning. So we would like to have uncrowded trades, cheap trades, and positive momentum. There are very few places where you can... We found some. None of the sectors ticks all of the boxes, but those that tick most of the boxes are actually healthcare within defensives and personal care, so a defensive hedge that is mispriced if the risks persist. And banks actually and tech in Europe look quite interesting on the cyclical side.
Yeah, you mentioned media, I think, as well, as one of those. Healthcare, banks, and media rank at the top of your composite screen.
Absolutely.
And media actually bouncing this morning. I mean, what is it about media that makes it attractive? Because that sector can be volatile.
So a lot of bad news is in the price. The question is how much. Now, media is in this attractive place, not because of what has happened during the conflict, but what has happened beforehand. So the unwind of the AI trades, right? So the market is very volatile, and media is going up today. It was going or
down
software.
yesterday.
It was down a lot. So I wouldn't read too much into one-day moves. But of course, the market is trying to find the floor and push these stocks higher at least.
Where's retail? What's retail doing right now? What is your sense of... up until now, it's been buy the dip, buy the dip, buy the dip. The last week has felt like, and it's interesting, I just got a note from my markets desk talking about that the CTAs are still short,
yes.
and that Goldman Sachs thinks that you could see significant buying still from here once to get those shorts covered. That's felt like this week. Do you get a sense that buying the dip is still the right trade? Is it kind of what is your... For a lot of people watching this, that has worked. Is that paradigm still in operation? The broader kind of index story?
So I would say the dip, well, I don't know whether you can say has been bought. It has been short covered, right?
Yeah,
because nearly, almost there.
Yeah.
Now, underneath the surface, like luxury goods, for example, they are still well below, right?
Yeah.
Where what's priced in model, and I'm going to put retail together with some into consumer durables broader sector where luxury goods are there as well.
Yeah.
It's one of the few markets out there in Europe that is priced for negative EPS, while the analysts still have an optimistic
I meant retail as in retail investing, buying.
Oh, retail investors. Yeah, well, they can come back very quickly, right?
Yeah.
In Europe, they are not so dominant as they are in the US.
Right. Okay.
And they have other opportunities as well to buy, right? Equities are not the only market that they are buying.
Okay.
Now, what looks interesting for the broader global market perspective, and our US guys have been pushing something that has derated a lot beforehand, which is tech and quality, right? So the market didn't like it before because of all the AI jitters.
Yep.
But now, if you worry about the future and growth, you start to think, wait a minute, actually this part of the market looks cheap. And this is one of the few places where actually huge upgrades are coming through, right? So you might come back, retail might come back to that as well.
Nice to see you. Nice to talk about us. We always appreciate it. Nice to see a note. Maybe some clarity beginning to emerge. Beata Manthi, City's head of European equity strategy. Core 6 looks like this morning. Let's figure out exactly what we are looking at. A market that is still kind of waiting and watching. Luxury has come back. You are seeing tech certainly having a slightly better day. As Anna says, though, the oil price is on the move. We'll keep an eye on what is happening there very carefully. Charlie Wells is behind me. He's got more details on what's happening with these markets.
Guy, I've got more details, and I've got a really big drop this morning for you. That is Sodexo. This is the French multinational food services company. They do a lot of catering. Well, they issued some very disappointing forward guidance this year, talking about underinvestment, talking about a really difficult macro environment. And they got a new CEO last year, and that CEO really has a lot of work to do. And there was a lot of discussion about that in this forward guidance, talking about a lot of the challenges that they face, and we're seeing that reflected. This is a huge drop for Sodexo this morning. Let's flip and tell a very different story, also in the red this morning. That's Leonardo. I was talking about management changes at Sodexo. Also, management change this morning, or coming through overnight at Leonardo. The Italian government has changed the CEO. They do this. They can nominate new CEOs every 3 years. Now, there was a lot of investor pushback on the idea that Leonardo might get a new CEO because the stock had been performing so well over the past 3 years during the tenure of the outgoing CEO. But down this morning, we were expecting some gyrations there, and we're starting to see those this morning. Green here, this is for the chip sector. So we got some very strong results from TSMC over in Asia. That's looking like it might be spilling into Europe. ASML provides the machines that TSMC needs to make those advanced chips. So seeing some green here, and then the broader ecosystem green as well. This could be answering some of that question that we've had over this geopolitical uncertainty, which is, can that AI narrative continue? We're seeing optimism here. We're seeing that spill out. We've got a much less optimistic story. That's about Porsche, the luxury car maker, of course. They are down. They issued some results that really disappointed. They had some real weakness in China. And I think that's another story we really want to focus on, is that luxury story, right? Luxury brands have been challenging. There's been, some upticks at some of the firms, but luxury spending weak in China, and that really hurting Porsche. Also, the EV push that this company and a lot of other auto companies made into EVs, that biting it as well. So Porsche feeling some pain this morning.
Charlie Wells, thank you very much indeed with some of the individual stocks on the move this Friday. Coming up, President Trump demanding that Iran reopen the Strait of Hormuz, ramping up pressure then on Tehran ahead, of course, of crucial talks tomorrow to turn a fragile ceasefire into lasting peace. We discuss that next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. 18 minutes into Friday's equity session, and the CAC Cameron underperforming. That's the Sodexo story that Charlie was just bringing us. Perhaps one of the reasons for that. That's pretty flat, what we're seeing in Paris. Elsewhere, we see pretty modest gains this morning. But, Guy, that's the picture we have for European equity markets as we head towards an important weekend.
Huge weekend. We've got a CPI coming out of the States before we get there, but talks in Islamabad are going to be the story this weekend as we work our way towards Monday and markets reopening. Really high stakes. What are our expectations? US and Iranian officials are going to be negotiating in terms of what is already proving to be a very fragile ceasefire. President Trump says he's, quote, very optimistic about the deal. Later yesterday, though, he did threaten Tehran about charging fees on the Straits of Hormuz, which remains an issue for the market. So what can we expect? How high should the bar be? What kind of an outcome should we be expecting? Let's try and answer that question. Let's go to Dubai and join Jumana Basechi. What are the chances of a breakthrough, Jumana?
Yeah, well, there's cautious optimism going into this weekend. Remember, there were multiple rounds of negotiations before the war even kicked off to begin with that didn't yield a positive outcome. So there is a degree of cautiousness, but at least it is constructive that these high-level delegations have actually arrived in Islamabad, as we understand now. The U.S. being represented by J.D. Vance, the vice president, Jared Kushner, Steve Witkoff. On the Iranian side, we understand that the Speaker of the Parliament, Mohammad Ghalibaf, alongside the Iranian Foreign Minister, are there as well. So high-level delegations, direct discussions will be taking place, a major milestone. But when it comes to the principles of where the two sides stand, they are still very, very far apart. The U.S. once again reiterating their principles, which is, zero enrichment policy for Iran, limiting their ballistic weapons, a full unconditional reopening of the Strait of Hormuz, and limiting the funding for some of their military proxies in the region. Iran, on the other side, have been saying that they want a full cessation of hostilities, war reparations, assurances from the U.S. that they won't strike again, in addition to their ability to, number one, maintain these group of proxies around the region, including Hezbollah, which is a key point for them, and a new one, which is they are asserting that they have right of sovereignty over the Strait of Hormuz, and clearly that is a non-starter, but is also a condition that did not exist before the war started 6 weeks ago. So whether they're using that as a point of negotiation or a serious point that they would like to set up a new protocol for the future, we don't know at this stage. But from the U.S.'s perspective and the Gulf states' perspective, an outcome in which Iran is still effectively monitoring who goes through the Strait of Hormuz is not acceptable.
And Jumana, meanwhile, of course, we had this announcement that seemed to take many by surprise from the Israeli Prime Minister yesterday, that Israel will be holding direct talks with Lebanon as the conflict there had continued. What do we know about that component and whether or not we're getting closer to a resolution there?
Yeah, well, clearly it came after a lot of international pressure and pressure from the White House. Even President Trump said himself that he had spoken to the Israeli Prime Minister and told him to sort of lie low, I think is the language that he used in this NBC interview, with regards to the airstrikes that were taking place in Lebanon. A very deadly day on Wednesday, death toll of more than 300. The heaviest day of fighting and airstrikes that Israel had launched across different parts of Lebanon, and a very heavy price as far as civilian casualties were concerned. And it prompted that response out of the international community. Now, what I think is important to emphasize over here is there seems to be an attempt to dislodge the upcoming negotiations that are taking place in Islamabad between Iran and U.S. and the separate channel that is the direct negotiations taking place between the Lebanese government, not Hezbollah, Lebanese government and Israel. And ironically, there is one topic where there is overlap between the Lebanese state and Israel, which is their desire to disarm Hezbollah. From the Lebanese state's perspective, they've been saying that they want to implement that plan since the ceasefire went into place in 2024, but they also claim that they need help from the international community. And from Israel's perspective, obviously they want to see Hezbollah defanged so that they don't pose a threat to the northern border anymore. So there is an attempt now for this dual track to go on simultaneously. We do understand that a delegation from Lebanon and Israel will be meeting in DC next week.
Jumana, thank you very much. Bloomberg's Jaman Basechi in Dubai, of course, with our expectations and what the market should be thinking ahead of the meetings that are taking place, the negotiations this weekend. So how is the market positioned and what's on investors' minds as we head towards the weekend, those peace talks in Islamabad? Here on the opening trade, let's talk about that with Bloomberg's Adam Linton, who is with us right now. I look at those gains on European stocks this morning, Adam, and they're not as strong as maybe the futures picture had indicated. And I'm reminded of a post by the Markets Live team earlier on. I think it was Connor saying stocks haven't risen on a Friday since the start of this war, and we have that big meeting over the weekend still ahead of us. These gains feel pretty tentative, don't they?
Yeah, I mean, I'd say they're tentative, but it's still relatively encouraging. The market's still looking to overlook a lot of the questions. What happens after this 2-week ceasefire? How long does it take to get Hormuz flowing again? What happens with all the energy infrastructure and the lasting damage? And instead is focusing more broadly on the trajectory of the conflict. So we've gone from outright conflict, we've gone to US wavering, to Iran willing to talk. We've now got a 2-week ceasefire, and then we've also got Israel willing to speak to Iran. And, the market this week has been characterized by a lot of themes that we've talked about in recent weeks, where anything that signifies positive news, the market's been willing to buy the dip. And, the positive news this week is giving a bit more of a green light to give that a bit more emphasis. And yes, some of that has been exacerbated by positioning, but ultimately, markets are very much in buy stocks mode. As you mentioned, we could see this waver, as we've seen throughout the conflict. Friday, you do see people tend to sell stocks. If we see that today, then to me, that'd be kind of more prudent risk management than anything more sinister.
Adam, is US inflation another risk to these markets, potentially?
Potentially, if it's particularly out of line, but I don't think necessarily so. I mean, I think we're looking to see headline inflation jump, but we've seen all the headlines over the past few weeks of prices at the pump, etc., etc. So that will serve to definitely boost the headline inflation. If you're a central banker, you're probably more concerned about the second round effects. That's something that will show up in core inflation, and we may not necessarily see too much for that in the coming months. If it does come in particularly hot, then potentially we could see some downside in bonds, which have been trading a lot more cautiously than what we've seen in stocks. So bonds, they're a lot more reticent to kind of price out the impact of the conflict. We don't know where energy price is going to land. We don't know what that means for inflation, and we don't know what the central bank response is going to be.
A lot of things we don't know. And Adam, I was wondering earlier whether the CAC has been weighed down by Sodexo. I'm reminded that Sodexo is not on the CAC Caron, so that's not happening. But Total Energies is the worst performing stock there, or at least the biggest points drag.
Okay. We've got a lot of things to think about. There's a lot of things coming up. Adam's just laid out a lot of what's happening in Islamabad, obviously what's going to happen with the data. It's the weekend, though. We're there. And you're going to pick up
sport.
There's a lot. It's a fantastic amount of sport coming.
Are you going to be? How are you going to decide between the golf and Coachella, particularly with Justin Bieber playing?
That's an important thing that I've got to figure out.
It's a bit late to get your ticket, though, Guy. Apparently, they're all sold out.
Well, I'll park that one for now. Justin Rose is 2 under. I really want Rosie to do well, but McIlroy looks super.
5 under right now.
5 under, playing really well. Great back nine. Course looks tough though.
Before we get to the weekend, coming up, back to the tech story. We'll focus on the golf over the weekend as well. Can ARM pull off its biggest shift yet? We're going to give you the details and an exclusive interview with the CEO. Stay with us. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
You are watching Bloomberg Tech Europe. Coming up, it powers the vast majority of smartphones worldwide and a growing share of AI data centers. ARM, the company underpinning the chips used by Apple, Nvidia, and Microsoft. Now, the UK-based firm is making one of the boldest moves in its history. ARM is going from purely designing chips to making them in a bid to command AI like it's dominated smartphones. It is a high-stakes shift, but the company's chief executive says it could drive strong growth for years to come.
We are shifting away from being largely known for smartphones to being around the cloud and AI data centers, where in a few years, that's our largest business by far, and in 5 years, it'll be orders of magnitude larger than what we do in smartphones.
So, will ARM's big AI gamble pay off? We put that question to its CEO, Rene Haas. We'll also hear from investors and industry experts. on the future of this unique company. Welcome to Bloomberg Tech Europe. This is Cambridge, England, home to ARM, one of the world's most influential chip companies. ARM was founded in 1990 with a radically different vision from Silicon Valley's chip giants. Instead of making processors, it would design them, focusing on efficiency, not just raw power. That low power approach, combined with a licensing model, meant ARM's designs could be used in almost any device and end up anywhere. ARM's model proved ideal for mobile phones, and when smartphones took off, ARM's designs were already built in. Today, nearly every smartphone in the world, from Apple to Xiaomi, runs on ARM-based technology. ARM went public in 1998 in both London and New York at the height of the dot-com boom. 18 years later, it was taken private for $32 billion by Japan's SoftBank. Former NVIDIA executive Rene Haas took over as chief executive, CEO, in 2022 and returned ARM to the public markets just a year later. This time, ARM listed in New York only, a major blow to London. Now, ARM is making one of the biggest strategic bets in the company's history. The company recently unveiling its first ever in-house processor, the AGI CPU, designed for artificial intelligence data centers, marking a move from licensing into selling silicon itself. From smartphones to the infrastructure powering AI, then ARM's stronghold on global computing continues to grow. Now, ARM may be listed in the US, but it is very much a company with global reach. The company sits at the center of Masayoshi Son's ambitions to take on the AI hyperscalers. Its parent, SoftBank, still owns roughly 90%, even after ARM's 2023 IPO. I traveled to San Francisco to speak with CEO Rene Haas about the company's pivotal shift.
What's happening inside ARM is we are shifting away from being largely known for smartphones to being around the cloud and AI data centers, where in a few years, that's our largest business by far. And in 5 years, it'll be orders of magnitude larger than what we do in smartphones.
For the first time, ARM designing its own chips, its own CPUs, the whole package, and you're working with Meta for this. How significant is that for this company as a strategy?
I think it's very significant. When we looked at the opportunity, particularly in the data center, with the growth of AI, but more specifically agentic AI, and agentic AI quadruples the demands on CPUs, we looked at two things. Number one, this is a market that's heavily underserved at the moment. And number two, customers are asking us, would you deliver and build a chip for us? So to your point, yes, we now have our first product. It's ARM's product. It's the ARM AGI CPU, designed by ARM, built by TSMC, sold to customers like Meta or SAP or Cloudflare, OpenAI, a litany of customers that we've announced. And the demand has been extremely strong.
What is the potential size of this new revenue stream, of this new market for you?
When we look at the royalties in our traditional business model associated with the cloud and AI business, it's about a $3 billion TAM. When we look at the potential of this product line, maybe stretching out 4 or 5 years, it's north of $100 billion. So it is profoundly different in terms of the scale. It puts us in a whole different zip code.
Semiconductors have increasingly become a tool of geopolitics as well. How challenging does that make your role as CEO of a company that has that global scope?
5 years ago, maybe a little bit less, it wasn't something we worried about. We may have had people inside Washington or inside working with people at Number 10 to make them aware of the technology, but it wasn't something that was, top on the radar. Visiting Washington or getting to know the folks inside DCMS inside the UK, that was not something that as CEOs that you had high on your priority list of things to do. That's all changed.
Do you think governments understand where the real leverage is in the chip stack?
I think they're increasingly learning that. I would say 10 years ago, not so much, but they've certainly added lots of capability in terms of people. If you look at the U.S. government in particular, in the current administration, they've added David Sachs, who is the AI czar, and under David's team, he's put a tremendous amount of capability in people to go off and learn that. Same thing under Peter Kyle and then Liz Kendall in the UK.
And you're stewarding this technology that underpins billions of devices Do you personally, René Haas, feel the weight of that responsibility? Are there moments when you think, wow?
When you're in it on a day-to-day basis, you don't really think about that kind of scale. But sometimes when I step back and when we're talking amongst the teams, we're preparing some materials for a launch, and we try to communicate the scale of what ARM does, we come up with a number of 350 billion chips. And people like to talk about, well, how many chips does a certain person use? 350 billion chips. There's 117 billion humans that ever lived on Earth, ever, and we're 3 times that number.
That scale is enormous.
Yeah.
One of the fascinating parts of the ARM story is the nature of the business. So headquartered, of course, in Cambridge, United Kingdom, majority owned by SoftBank, publicly listed here in the US. How do you navigate having to meet quarterly earnings with Masa Yoshitshine's grand sweeping visions of how this kind of tech plays out?
Yeah, I have a fortunate job in some senses in that SoftBank, Masa, is a 90% owner of ARM. So I have investor meetings quite frequently with my chief shareholder. But he's very long on ARM. Hasn't sold a share since we went public. Is very, very long on the potential. So it helps make my job in some ways easier, Tom, in the sense that he has a long-range vision, as do I. Technology, we always know, is a long game. It's not a real quarterly game. So it allows me to have some freedom to think about the long term without having a wide cadre of investors who worry about what's going on inside the quarter. Thankfully, the quarters have been very good, and we've met and/or raised guidance nearly every quarter since we've gone public.
What's going on with Stargate? OpenAI, Oracle, they seem to be pulling back on some of their commitments around Stargate, which is this massive infrastructure commitment for the US, but also outside the US as well.
Yeah,
is that starting to falter? Are you concerned about what's going on with Stargate?
No, not at all. I mean, we, SoftBank, just put a large investment into OpenAI of the last round. They're going to be using a lot of that capital for more compute. OpenAI is a magnificent company, and I think their growth potential is literally unbounded. Compute is what will limit them. So they're needing more and more compute. There's been a lot written about Stargate, but Stargate is a complex program. I think the noise made around the Stargate thing stumbling has been a little bit overblown.
Apple is a big customer, big client, clearly, of ARM. Has Apple lost the AI race, do you think, René, or are they going to be fast follower? What's your take?
Too early to tell. We are still in very early days of this AI race.
Where do you stand on the question of AI and jobs? And a company like ARM, are you going to be, in 5-10 years' time, are you going to have more employees or fewer?
The way I think about AI eliminating jobs is when you think about, again, let's use agentic AI as an example, right? An agent can go off and run a job or run a piece of work for you. And one might argue that, well, that's going to eliminate jobs because all that work is now being done by an agent. But as long as there are people coming up with creative ideas and are imaginative about how to grow, what more can be done, what new product could I design, things could just happen a lot faster. So inside ARM, we are pushing it heavily. I'm pushing it very, very heavily, not to reduce OpEx. It is to design products faster and to design better products quicker and innovate and have more products. Because right now, my limitation for developing great products is the amount of engineers that we have. That is my biggest limitation. And right now, AI hasn't solved that. And it's not to replace the engineers because we've got no shortage of ideas. I've got tons and tons of ideas that we talk about in our leadership team meetings where we look at it, gosh, we'd love to do X, if only. So I'm much more an optimist on this, and I think so long as companies can come up with creative ideas on what to do and build, AI is going to suit us quite just well.
I spoke to ASML's CEO, Christophe Fouquet, a few months ago, and he said he was pretty damning about Europe's place in the semiconductor industry. He says Europe has no real capabilities to compete with the US and with China. Do you agree? Where can Europe compete when it comes to semiconductors?
I think Europe has fallen behind, in this space. I think when you look at the amount of innovation that takes place inside either the U.S. or China, Europe has fallen behind. I think some of it isn't actually at the big company level. I think some of it is at the startup company level. In other words, companies that can get funding, early funding, do innovation, attract really smart people to go off and build companies and be entrepreneurial. for whether the reasons are there's not enough capital, or that capital is not organized well enough, or there's something that is making founders go move elsewhere. So I don't think it's a lack of talent. I think it's some lack of infrastructure to nurture the companies to start in Europe and stay in Europe.
When it comes to the data center story, when do you think you'll be able to declare victory? What for you is success? You've, again, shifted ARM to have a laser-like focus on data centers to build out that market. When can you call that a win, do you think?
Well, on one level, I think it's a win now in that we've got real customers, Meta, SAP, Cloudflare, Cisco, as I mentioned. So on level 0, it's a win. Going forward, I think there's lots of opportunity to do much, much, much more. The aperture for the opportunity for ARM has just got much, much, much wider. I mentioned north of $100 billion for this AGI CPU product. But if we think about the broader market, it could be north of $1 trillion that we could address.
ARM's CEO, Rene Haas, speaking to me in San Francisco. ARM's move to sell its own chips has been largely cheered by investors. Its stock surged after the announcement on March the 24th. One of those investors supportive of the plan is Claire Playdow-Bouverie, fund manager at Liontrust. Liontrust's top tech investments include NVIDIA, Broadcom, and TSMC. Playdow-Bouverie says ARM's switch to produce its own AI CPUs is a significant moment in the company's history.
ARM is now a full-stack provider of the CPU. And what we see time and time again with technology platform transitions is that the lion's share of the economics go to a handful of players, and these are full-stack players. Think of Microsoft in the PC era, Apple for the mobile, AWS for the cloud. And ARM has got the software ecosystem, 22 million developers, that's over 80% of the global total. It's got the IP, and now they've got the hardware, they've got the CPU. Now, the key question is what's more important? Designing the CPU first and establishing leadership, think of Intel, AMD, or building out the ecosystem first and then designing the chip. And we actually think it's the latter, because designing the chip, okay, it's hard, but it's not the hardest part. Building an ecosystem takes years. It actually takes decades. If you think about CUDA, NVIDIA's software ecosystem, that took 2 decades to build out. It's got over 5 million developers working within CUDA today. ARM has done the same over 35 years, and that ecosystem is actually 4 times larger. So we think this is very, very important for the ecosystem. It places ARM in a pole position, in our view, for agential AI and AI at the edge.
Is the cost to this for ARM that it can no longer claim to be the Switzerland of the semiconductor industry? Is that a risk for ARM?
This was the key risk. And we think that ARM made the right call because they were essentially trapped. ARM's key customers were downgrading their relationship with ARM in order to pay them less. So moving from pre-designed ARM CPU cores to designing their own CPU cores and just paying ARM the bare architecture license fee. Qualcomm was the canary in the coal mine there with their acquisition of Nuvia. So if they weren't to make this move and launch the AGI CPU, we think they could have seen just a gentle erosion in royalty rates.
Claire Playdow-Bouverie, fund manager at Liontrust, speaking to me about ARM's prospects. Coming up, ARM CEO Rene Haas weighing in on the AI boom.
It feels different in the sense that it's just much bigger. So if you think about these cycles, whether it was the PCs going to mobile internet, now going to AI, again, pattern matching is similar, but the scale is unlike anything we've seen before.
We're bringing more from our interview with Rene Haas as he discusses the outlook for AI and his legacy. That is next. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
As ARM moves into building its own chips, it estimates it could earn up to $15 billion in revenue over the next 5 years. So what does that mean for rivals like Intel and AMD and for ARM's own growth ambitions? I spoke to Bloomberg's semiconductor czar, Ian King, to break it down.
I mean, this is a seminal moment. This is something that's kind of been telegraphed for a while, but it really is. They're stepping over the line and they're really becoming a chip maker.
What does it mean for ARM? What does it mean for the semiconductor industry more broadly?
Well, up until now, ARM has been this kind of provider of technology in the background. Everybody uses them. They're everybody's friend. But now they're kind of stepping out into the light and they're saying, hey, here we are. We're a real company. So some of those previous customers are going to become competition, and they're making this bid. They're making this play for a share of AI.
How do you think the competitors then, and let's start with AMD and Intel, how this impacts them? Does ARM take real market share from AMD and Intel? How do you expect the competitors on that front to respond to this?
I mean, you could say that ARM already has taken share from those two guys, because at one point, the server market, the server processor market was 100% x86, which is 100% Intel's technology. Because of AWS, because of other companies that are actually using ARM's technology, that market share dominance has already been eroded indirectly.
So ARM becomes a chip maker. Yeah. The hyperscalers are also trying, on some levels, to become chip makers themselves. Does this decision by ARM to become a chip maker rather than just providing the components, does that accelerate the shift by hyperscalers to build out their own silicon, or does it put those plans on the back burner?
We'll see. I mean, and this will have a heavy say in ARM's future, whether this is the right decision or whether it becomes a competitor with its customers, right? The balance will be decided by how fast it can run, how good its products are. If they're ahead of everybody else, given the demand that's there, everybody will use them still.
And you've charted this company for years, and you've seen René Hess take over as CEO and change the focus, change the emphasis, and try to diversify the revenue streams from beyond smartphones, where they have that 90% market share or above. How much success do you think René Hess has had on that front? How do you think this ties into that pivot?
Yeah, I mean, there's no doubt there's been considerable growth over the last few years. They're now more than $4 billion of annual revenue, and that's still growing according to Wall Street estimates. So there's no doubt there's been success there. But at the same time, NVIDIA in that period has become a tens, if not hundreds of billions of dollar revenue company. So yes, ARM has done fantastically well and it's been rewarded by the stock market, but compared to what else is available, still a long way to go.
And what are you hearing from investors, analysts, others about Rene Haas as a leader of this business? Are you, how comfortable is the board with what Rene Haas has done and the direction he's taken this company in?
I mean, the only person really that he has to keep happy right now is Massa, right, is the owner of SoftBank, who's made this bet on ARM, who bought ARM, put it back in the public markets. So, you know, the numbers will tell us whether Rene is succeeding or not. Certainly what he's trying to do is in line with what SoftBank is trying to do. And, you know, if they continue to grow and if they continue to snatch part of this opportunity, and let's face it, they don't really have to displace NVIDIA, right? Just doubling what they're doing, which is perfectly possible within all of these budgets, would be an enormous success.
Bloomberg's Ian King. Rene Haas has spent more than 3 decades in the tech industry. The ARM CEO started out at Texas Instruments and later spent 7 years at NVIDIA. He told me the AI boom is unlike anything he's seen before.
It feels different in the sense that it's just much bigger. So if you think about these cycles, whether it was the PCs going to mobile internet, now going to AI, again, pattern matching is similar, but the scale is unlike anything we've seen before. And it's really because AI touches every facet of human life, every single facet of human life. When you then combine that with the fact that the amount of compute, memory, product that's needed to satisfy that demand, just more zeros. So the scale is much bigger. That's probably what feels different. And also that the impact is so broad.
And you were at NVIDIA before generative AI really really had its moment.
Absolutely, yeah.
Did you foresee that technology, the embers of that technology, when you were at NVIDIA? Were there parts of that story that were coming to play?
Absolutely. And again, back to pattern matching. I was at a semiconductor startup before NVIDIA, and one of the things we were working on was voice recognition on answering machines. Now, at that point in time, now when you think about using voice recognition, it's almost an automatic thing. It works incredibly well. Well, back then, the capability of the computers and the technology to actually recognize voice was very limited. But you sort of see at some point in time could happen. So fast forward to NVIDIA, did we know AI was going to be the next killer app? No. But were we investing in areas to allow GPUs, for example, to be used to program for something other than drawing triangles? Yes. So that's where CUDA was born when I was there in 2006 timeframe. But again, AI is not a new thing, right? If you go to Bletchley Park and you take a tour, and you'll see some of the notes of Alan Turing, he has papers in the 1940s, Can Machines Think? So what's old is new, what's new it's old. Again, back to the pattern matching. I'm not sure what we're seeing is very new, but what we are seeing is something that I don't think we thought in our lifetime we would see move so quickly.
A few years back, you told me that one thing that concerned you about AI was potentially humans losing control of the machines. Is that still a concern?
I think the big challenge with AI, to your question, there is the fact that unlike other areas that can be governed that are physical, you know, whether it's around climate change or weapons, AI is a soft thing, right? It's software at the end of the day. So how do you manage regulation around software that is fair and equitable, that can be safety checked in such a way that is going to be fair for everyone? And that's a hard problem to solve. I think the UK has been doing a good job to try and get in front of this. I know other governments have as well. So it is something I think more needs to be done, though.
In 10, 20 years' time, when you look back, what do you hope your legacy will have been in this industry?
You know, legacy is not something I think about, you know, in terms of waking up in the morning and looking at everything I need to do, and then I look at the Pareto list and say, gosh, should I do that? Because that might impact my legacy in a negative way. I just don't think about it that way. You know, people will write what they want to write about what my life was like or what I did professionally, and that's just fine. I try to do the best job I can in the moment, and the legacy will be whatever it is. It's not something I think about.
ARM CEO Rene Haas. And on the next episode of Bloomberg Tech Europe, we're going to take a deep dive into the race for autonomous driving. Catch that episode on May the 8th. The Pulse is up next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
President Trump once again demands for Iran to reopen the Strait of Hormuz ahead of talks in Pakistan this weekend. Scott Besson and Jay Powell summoned Wall Street leaders to an urgent meeting on Anthropic and the security risk posed by similar AI models. Plus, Viktor Orban faces his day of reckoning as Hungary prepares to vote this weekend, with the ally of Donald Trump and Vladimir Putin struggling in the polls. So there is, like many days this week, a lot of news flow. It's pretty terrific, actually. Stocks seem to be trading on mixed signals. Again, investors looking to talks between the U.S. and Iran for signs of a fragile truce holding on. The other thing we're watching out for is, look, the market, I think, is starting to price in some sort of agreement, or at least the fact that it could be reached. The underlying S&P 500 index on track for its biggest weekly advance in almost a year, but then you hear the corridors of a lot of trading houses say, does this really make sense? You look at euro dollar 116.79. We have to talk about inflation. It's just a couple of days before we have the IMF World Bank meetings, and then Brent crude 97.72. The European markets map, again, it's a similar story of stocks, pretty mixed across the board. We have a little bit of green, but actually nothing huge in terms of numbers, with the DAX gaining some 0.7%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. It's been another volatile week with remarkable news flow. In just a moment, we'll discuss concerns over Anthropic from the U.S. government and the Fed with Charlie Wells. We'll also discuss markets and supply shocks with Emmanuel Ko from Barclays and Bloomberg's Liesl Hill. But first, President Trump says he's very optimistic about a deal with Iran before later threatening Tehran over charging fees in the Strait of Hormuz. Now, the continued closure of the waterway plus continued fighting in the region is really threatening to derail high-stakes peace talks this weekend. Well, joining us now is Onur Ant, Bloomberg's managing editor for the Middle East and Africa. Onur, thank you for joining us. So the U.S. president is really putting pressure on both Tehran and Israel. What is the state of the ceasefire now?
The ceasefire is largely holding. There were some notable exceptions, especially yesterday and overnight in Kuwait, where the government said some of the vital facilities came under attacks. That was later disputed by the IRGC in Iran, which said it did not attack any country during the ceasefire, which possibly means that some of the Iran-aligned groups in the region, possibly in Iraq, may have attacked Kuwait. Otherwise, we are seeing a continuation of attacks, exchange of fire between Israel and Hezbollah in Lebanon, including this morning when air sirens sounded across Israel after what Hezbollah said was a barrage of missiles and rockets into Israel. Otherwise, I think the ceasefire is holding in much of the Persian Gulf.
Onur, what are the chances of a breakthrough out of these talks in Islamabad tomorrow?
Well, hard to tell, given at least there are two areas of contention between the parties. One, obviously, is Hormuz. It still remains pretty much blocked. Only a fraction of what used to go through the strait is going through since the ceasefire began. And the other important issue, obviously, is Lebanon. Both Pakistan, the key mediator in this accord, and Iran said that they think the ceasefire does and should extend to Lebanon. But that has been disputed by the U.S. and Israel, and that seems to be a key area of concern for Iran going into the talks in Islamabad on Saturday, Fran.
Onur, thanks so much. As always, Onur Unt there, Bloomberg's managing editor for the Middle East and Africa. Now, Bloomberg has also learned that the Treasury Secretary, Scott Bessent, and Fed Chair Jay Powell summoned Wall Street leaders to an urgent meeting on concerns that the latest AI model from Anthropic will usher in an era of greater cyber risk. Well, our Charlie Wells joins us now. So, Charlie, this is a very big and important story, a complicated one. So what more do we actually know about this urgent meeting?
Well, what really stands out here is the seniority and the rapidity or the haste of this meeting, because this really is some of the most powerful people in Washington summoning the most powerful people on Wall Street to talk about what sounds like it could be one of the most powerful AI models ever to be released. This is not, a regulator talking to an IT guy. And, this is coming just ahead of bank earnings season. We're expected to see banks talk about AI. And this was previously unreported. And so I think this really represents a shift kind of from some of the optimism we've seen about AI to increasing fear.
So, Charlie, what do we know? Why are they so concerned about Mythos?
Well, look, Anthropic said in its release on Tuesday of Mythos that, this is a system that could exploit vulnerabilities of any operating system, of any web browser. And the real fear here is that bad actors, criminals, state-backed hackers could exploit some of these systemically important banks. So these are the biggest banks on Wall Street, the biggest banks in the world. If bad actors can exploit their vulnerabilities, that could destabilize the financial system. So that is really the issue at hand here.
Charlie, thanks so much. As always, Charlie Wells there with the very latest, of course, on Mythos. Now, traders are also waiting to see if Tuesday's two-week ceasefire accord that sent stocks on a tear and oil slumping can be cemented into a lasting peace. Well, joining us now is Emmanuel Kuh, head of European equity strategy at Barclays, and Liesl Hill, Bloomberg's managing editor for energy and commodities in EMEA. So thank you, Liesl, and thank you, Emmanuel, for joining us. Emmanuel, overall, the market, I think, is very, I don't know if it's relaxed, but certainly there's not much of a loss since we started the year on, despite the war and despite all the concerns, even with AI. What is the market looking at today?
Morning, Francine. Look, I think the market is looking at the glass being two-thirds full pretty much, right? So we had a very powerful short squeeze on Tuesday, and basically the market has already recovered two-thirds of its war losses in a matter of days, right? So I think the market is very much buying into the Trump put. The market never really capitulated in the first place because the view was Trump cannot afford to really crash the market and to crash the US economy. So I think the market was hopeful for some kind of de-escalation, and I think this de-escalation bias has been reinforced by this ceasefire, right? So I guess now market needs confirmation that we're going to get towards some kind of final resolution, which could basically contain the long-term impact of this conflict on the growth outlook, right? If it is a 1 month issue, I think the market will look through that. Now, if we have more lasting scars from this, that will result in weaker growth and higher inflation for longer, then I think there's a question mark about whether the market now is getting maybe too complacent and too optimistic about this.
But Emmanuel, even if the disruption lasts for a couple more weeks, I mean, it has an impact on inflation, on global food prices. We'll talk, of course, about energy with Lisa also in a minute. I mean, what is there to be really optimistic about today in European equities?
Look, I still believe that the case for equities to go back to the highs in a straight line is not that strong, because you are still left with a suboptimal growth policy trade-off compared to what you had before the war. So as it stands, growth will be lower, inflation is higher, and I think ECB has a very complex conundrum to deal with, because we do think they will have to hike rate if oil stays high. So I think, to me, it's very much about how quickly oil prices can normalize. And I guess if the end game of this conflict is a much more sustained unwind of this oil risk premia and maybe a more stable region in the Middle East, which is still a possibility, that might be a win for the market and the global economy over the long run. But I think that seems to be not the most likely scenario here. So I would say right now it's very much positioning, driving the action, but significantly risking into this, from Citi, from systematic funds, hence this pain train being tactically to the upside. So these funds are being forced to step in and to buy equities as volatility is coming down. But I think the fundamental picture is in our view, weaker than it was before. Hence, our preference maybe for US equities over Europe, given that the US should have less of a lasting impact from this war on its growth and policy mix.
Emmanuel, before we get on to energy prices, what's your take on AI? Again, Anthropic and Mythos is now, could be a cause of concern, which a lot of people knew, but I find it quite remarkable that you now have a high-level meeting with, the head of the Fed, the Treasury Secretary, calling in all the Wall Street banks.
I mean, we know AI will be a major source of disruption for economies, societies, and markets. I think the markets are quite aware of that already, and we've seen massive dispersion between winners and losers and all of that. I think there's a question mark about what policymakers and governments will do to manage this fast-moving disruption, right? Whether it's about cybersecurity, whether it's about impact on the job market, etc. And I think there's a question whether the regulatory backdrop around AI will evolve and tighten to some extent, right? So there's going to be a lot of moving parts. But what is interesting is that if you look at the US equity market, for example, it's been hit somewhat by this tech underperformance. So even though tech earnings are still very strong, capex forecasts are very, very strong, now the market is starting to apply a higher risk premia to tech and big tech and AI players, because there's a question mark on how much they will be able to monetize all this innovation and disruption, and whether at some point you could see some regulatory backlash that start to impact the earnings trajectory over the long run.
Emmanuel, let me also bring in Liesl, who's managing editor for energy and commodities for Bloomberg here in the EMEA. Your team has done a terrific work actually in trying to bring all the stories on fertilizer, on food prices, on energy, on commodities. I mean, they're now looking for some kind of ceasefire, or were they always a little bit too optimistic?
So I think, excuse me, in the futures market at least, we've seen, as you say, the prices have come off in the last few days since the ceasefire was announced. But we're dealing with kind of two-track situation where we've got the futures traders looking at the signals coming from the headlines, what's going to happen with the talks over the weekend. But then the reality in the Strait of Hormuz and in the global, what we call the physical market, the availability of energy to the world, nothing's really changed. As we've been writing, we've seen very little moving through the Strait. Yesterday, it's more of an art than a science, but all we could see moving through the Strait of Hormuz out was Iranian-linked vessels, which have been what's dominated the flows over the course of the war. And then as a result of that, the physical, what one of my colleagues has coined, the ASAP barrels, prices for those remained extremely tight. We've seen in the North Sea record prices yesterday, and we're seeing really interesting flows of oil and fuels that didn't typically move around the world in this way, but as buyers are scrambling and becoming increasingly desperate, everyone's just looking for whatever they can get, really.
But Lisa, even if there is a ceasefire tomorrow, I mean, it's not easy for ships to be moved, right? So barrels aren't where they're supposed to be. If you have, for example, jet fuel, you need to refine it or change it. How complicated will that be in the next couple of months, even if we have a ceasefire, which it seems still quite unlikely this weekend?
Yeah, that's right. I think it takes a really long time, weeks and months to unwind. As you said, getting the tankers where they need to be. There's also a lot of questions about the state of the energy infrastructure in the Gulf. We had Saudi Arabia coming out overnight confirming that they've seen their capacity reduced, their production capacity reduced, confirming some more hits on some of their refineries and other infrastructure. And obviously there's this pipeline that the Saudis have been relying on, this sort of contingency bypass plan going from their production to the Red Sea. And that's been a really big focus for the market. It's been quite impressive, of course, how significantly they managed to ramp it up. And they're moving quite a significant share of their typical exports through this pipeline. But what we saw was on Wednesday, even after the ceasefire, there was a hit on a pumping station on the pipeline. The oil is continuing to flow through the pipeline, but as they confirmed last night, because of the hit to the pumping station, the capacity to move as much oil as there had been has been reduced. So there's been that reduction as well, which again is less oil and less fuel coming out to the rest of the world.
Yeah, Emmanuel, I mean, when you look at, for example, European equities, I know there was a curb on certain airports in Italy this week because they didn't have enough jet fuel. I mean, is it too soon to analyze in Europe which sectors could really be hurt by all of this?
I think we need to have quite a bit of balance here, because it does feel to me this market wants to go up. And again, we are going back to positioning as the main reason for that. There was a lot of de-risking, and if the direction of travel is some kind of resolution, ceasefire, truce, and oil price get back to a lower level, even though it may be higher than where it was before, I think the market looks to that and prices as kind of the unwind of this risk premium. So you're going to see some of the energy sensitive sectors in the consumer space, in materials, in leisure, I guess, doing well and getting a bit of this short squeeze boost. Beyond that, I think the big picture is still very much about the strategic autonomy theme being reinforced by the war. And I think my learning from this war is that whether I think about US or China or Europe in the middle, they all need to be more self-independent, self-sufficient. So they need to invest in defense, in energy capacity, in technology. And CapEx will be booming on the back of that. But I think the energy complex, I think the defense space, I think some part of tech and materials, infrastructure will be where the money will be flowing and where investors will have to be invested for the very long run. So I think some of these structural, secular themes are being somewhat reinforced by the war and the need of most countries to be now self-sufficient and independent strategically.
Emmanuel, we'll spend a bit of time talking about defense later because, of course, also the Italian Prime Minister ousted the Leonardo chief executive this week. Is Europe actually rearming rapidly enough? And what does that mean for European equities? Could we even see consolidation?
Look, it's never rapid enough, but I think it is happening faster and faster. And 4 years ago, most of our clients were telling us, look, defense is not investable. We are not allowed to be in defense because this is not ESG compliance, etc. And now, defense is a must-have in terms of, sector allocation, because, again, this is key for strategic autonomy. And, again, I think this is where investment will have to go up. And obviously, we know that now the US is disengaging from NATO to some extent. So I think European countries will have to work under the expectation that they have to be more independent and more united on that. So are we going to see M&A consolidation? That's a possibility, but I think defense will be more strategically in focus in Europe and will capture more investment and more, investment support from governments and private sector. By the way, I think this is going to be somewhat at the expense of the consumer. In the good old days, whenever government had to be providing some support to the economy, they were going to the consumer. And now they have to allocate more funds to these, sectors which are needed for strategic autonomy and for defense. And I think the sector will get still very, very much support from public and private sectors.
Yeah, and Lisa, I mean, given what Emmanuel was just saying, if you look also at the Strait of Hormuz, now there's talk about payments, about ultimately who controls this?
I think that's the question that everyone in the market wants to find out. It does seem clear that Iran does have a significant amount of control over the Strait and has been exercising it over the past 5.5, 6 weeks. But yes, the question coming out of these peace talks is what that's going to look like.
Yeah, does that make, Emmanuel, is it some of the questions that you're also asking at Barclays?
Yeah, of course. Again, I think with a bit of a bigger picture, the question is what level of oil price we're going to end up with after this war, right? So we're at $55, $60 at the start of the year. We're around $100 now. So I guess we can go back down. But the question is whether we end up with a lower or higher oil price than we had before the war over the medium term. I think for now we are working with an $85 assumption for macro scenarios, and we think the economy can live with that. It's suboptimal, but it's still all right. We can live with a bit of a higher oil. But yeah, I think the question is whether we end up with a much safer oil supply after the war, or do we still have some bottlenecks here and there that keeps prices higher than they were before? And all of that, I think, is also pointing to there's a question mark about, in the grand scheme of things, whether the U.S. market or the U.S. assets deserve a higher risk premium given the chaotic approach of the U.S. administration. And what is interesting to me is that even though we had this stagflationary shock hurting Asian and European economy more than the U.S. economy, the U.S. equity market has not performed that well compared to the other regions over the past months, and the currency is also not behaving as a complete safe haven. So euro-dollar, for example, is 117 today, and I suspect there is some degree of concern about U.S. assets, U.S. equities, U.S. treasuries, U.S. dollar, having to deal with a higher risk premium going forward, given some of the policy attitude we are seeing in the U.S.
Emmanuel, thank you so much. Emmanuel Coder, head of European equity strategy at Barclays. Liesl Hill, Bloomberg's managing editor for energy and commodities in EMEA. Now, coming up, we'll talk to Judy Gaines, president of J. Gaines Consulting, amid concerns higher fertilizer prices may fuel food inflation. That's coming up next, and this is Bloomberg.
Week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Iran's chokehold on the Strait of Hormuz has raised concerns higher fertilizer prices may lower crop yields and fuel food inflation. Well, Judy Gaines, president of J. Gaines Consulting, joins us now. Judy, thank you for being with us. If the disruption persists, what does it mean for global food prices over the next 6 to 12 months?
I think we need to break it down depending on the commodity, because there's different impacts depending on which soft commodity you're speaking about. So
if we look at,
for example,
I was going to start with sugar, but let's go for coffee, and then I'll ask you about sugar next.
Sure. Okay. For coffee, the biggest problem is logistics, and there's also going to be demand destruction. The Mid-Eastern region accounts for nearly 10% of global consumption, and so for coffee, it's a two-way street, and I don't think you have to worry about higher prices, because we've got a bumper Brazilian crop that's about to be harvested. And so I actually think that that's going to supersede the problems that are happening right now in the Mideast.
I mean, the Middle East is also a key supplier of refined sugar to African countries. What shifts are you seeing to try and replace the lost volumes from the Gulf region?
Well, there's many other countries that can replace that. So Brazil is a major possibility, and Brazil is going to have ample supplies in the crop that just started to be harvested. And we also have India as a net exporter. But I think for India, the market's going to be tighter, not easier. And one of the key factors for sugar, it's not just how you move the cargoes from place to place and where the refining capacity is, but then also how are countries going to respond? Are they going to produce more sugar, or are they going to feed the sugar towards ethanol to help to lower fuel costs?
Yeah, Judy, can you talk to us about chocolate? I mean, the region, right, the Middle East also imports a significant portion of chocolate and confectionery. So will this hurt global demand and the bottom line for chocolate makers?
Well, global demand was decimated because of high prices that we've seen the past several years. And prices are actually starting to ease, and there's been a lot of substitution. In your Easter eggs and your chocolate bunnies weren't necessarily solid milk chocolate this past year. And so we're seeing an increase in production. We'll see some trade flow shifts, but similar to coffee, we're coming off a period of very high prices, and so there's probably going to be some easing. So good news for consumers based on that.
How worried are you about food and feed inventories running down in the Middle East? And is there anything that traders are doing to plug that gap?
One of the biggest problems in terms of feeding is actually for the textile industry. And it's not really spoken about that much, but there it's a multi-pronged problem. So you have the region supplying most of the feeder stock for making polyester and nylon. And then you have, so even though production from a mill standpoint might be in Asia, they're getting the supply from the Mideast. And so you might see a switch in apparel sales going more towards cotton, which is not really affected except for from the grassroots level from farmers paying more for fertilizer. And so you might see there's a switch in the mix in apparel. So the blends might lean more towards cotton than they will polyester and nylon, the synthetics.
Judy, does it change, if you're Europe or the Middle East now, how does this change how you deal with future crises, how you deal with food security and independence?
Well, I think it's been challenged the past several years, because certainly the Red Sea movement away from using that route has added 15 to 20 days to supply chains already. So now many are still going around the Cape of Good Hope. It's an added cost. It's factored in already, and now it becomes a multiplier because you have the additional cost of the freighting.
Yeah. Judy, thank you so much for joining us. Judy Gaines there. We're back in 2.
problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, President Trump once again demands for Iran to reopen the Strait of Hormuz ahead of talks in Pakistan this weekend. Scott Bessent and Jay Powell summoned Wall Street leaders to an urgent meeting on Anthropic and the security risk posed by similar AI models. Plus, Viktor Orban faces his day of reckoning as Hungary prepares to vote this weekend, with the ally of Donald Trump and Vladimir Putin struggling in the polls. Now, Hungarians head to the polls this weekend for an election which is really shaping up to be high-stakes reckoning to Prime Minister Viktor Orban's 16-year grip on power. Being billed as one of the most important elections in the country's history, the results have the potential to reshape Europeans' political landscape. Our Bloomberg Chief Europe correspondent Oliver Crook joins us now from Budapest. Oliver, thank you so much for being there. It looks like a beautiful day. What hurdles is Orban facing to hold on to power?
Not be so beautiful a day on Sunday for Viktor Orban, who's going up against some of the toughest opposition that he's had in his 16-year rule of Hungary. In the building behind me, the Parliament of Hungary, who is going to inhabit those 199 seats. We've seen a lot of different polling going into this election, and I've heard from a lot of people, the commentators we've spoken to and the experts, that if this is in fact a free and fair election, this is going to go to the opposition leader, Peter Magyar, and he will take potentially a majority and potentially a two-thirds majority, which is something that Viktor Orban has enjoyed for the last term, and that would mean legislative changes across the board and potentially even changes to the Constitution. That being said, there are a number of different concerns going into the election about the fairness of the election. I'll give you one example that we've seen just very visibly on the way into Budapest. When you go down the road, you can see little election posters everywhere. You can be very aware of the fact that there's an election this weekend. However, every single big billboard going into Budapest is all for Viktor Orban, for Fidesz, for his party, and that really sort of stems some of the concerns that we've seen going into this vote on Sunday. Again, we're standing a few meters away from where Peter Magyar, the opposition leader, will be holding his sort of potential party on Sunday evening. So we'll be watching very closely because this is still sort of resting on the wire's edge.
So what challenges does Orban face from this opposition leader who's leading in the polls?
Yeah, so again, there's a real question about how much of this is enthusiasm for Peter Magyar. He has mounted a very impressive election campaign. He's really gone back to the basics in terms of walking really across Hungary, shaking a lot of hands, and he's really been leading this sort of political campaign for the last 2 years. It also helps that he is basically seen as the most effective vessel to replace Viktor Orban, whose sort of economic policies have been failing over the last few years for Hungary. It is an economy that has really largely stagnated over the last couple of years. They saw absolutely massive inflation. We've seen real dysfunction within the social services. So for Peter Magyar, this is both the story of being a sort of young and inspirational and trying to sell a more sort of competent and technocratic government, while at the same time a real sort of dissatisfaction with the Orban regime.
What will be the impact of the elections beyond Hungary?
Yeah, and Francine, this is, I think, one of the most interesting things. I mean, we arrived here in Budapest yesterday when J.D. Vance left, and you can see the influence that all the sort of external forces have on this Hungarian election. It seems almost that the Hungarian election matters more to many of the countries outside of Hungary than it does to some of the people within Hungary. I mean, for the EU, Viktor Orban has been an absolute thorn in the side, getting many of the initiatives over the line. For Ukraine, there are 90 billion euros that are waiting on the sidelines there, that loan to Ukraine that has been blocked by one person, Viktor Orban, who sits at the European Council. You think about the United States, the relationship with Donald Trump, the relationship with MAGA. You've had Donald Trump openly campaigning for Orban. Marco Rubio is here. J.D. Vance was here this year, really seen as one of these sort of great allies of the MAGA movement on their side of the culture war, to say nothing, of course, of the allyship that Orban has lent to Vladimir Putin. We just had a story out a couple of days ago printing the transcript of a phone call between Viktor Orban and the president of the Russian Federation, Vladimir Putin. Basically, Orban saying that I'm here at your service to help you out. So really been seen as an emissary for Russia within Europe, and to say nothing, Francine, of China. When you go back to 2023, China invested a huge amount of money here in Hungary. About 44% of all of the money that China invested in Europe came here to Hungary in the form of BYD, the car manufacturing plant, CATL, the battery manufacturer. So all of these countries have a huge interest in seeing the outcome of this election.
Ollie, thanks so much. Bloomberg's chief Europe correspondent, Oliver Crook. Now, let's bring in Susanna Seleni, director of the Democracy Institute at the Central European University and author of Tainted Democracy, Viktor Orban and the Subversion of Hungary, and our very own Stephanie Baker, Bloomberg senior writer and author of Punishing Putin. So thank you both for joining us. Susanna, let's start with you. To what extent would you say that Hungarian elections today can be considered free and fair?
Well, we know it for many years that it's not free and fair. Already 8 years ago at the election, the OSCE delegation described Hungarian election as not fair. And the reason why it is that Viktor Orban has been running an illiberal state for 16 years. So it's not just any kind of 16 years of rule, it's a constitutional majority. And over this period of time, Orban captured the entire state, which means that the Hungarian state resources, institutions, funding, financial institutions, everything is serving Fidesz party's aims. So it's a partisan state. So therefore, not just the elections are not fair, but the whole apparatus of the state is not fair in Hungary. And this makes it so high stake because it's, of course, losing this incredible power, this huge and centralized power, would risk not just Orban's power in Hungary, but basically his role in influencing global politics altogether. So this is why it's not just important, but it's also a kind of dangerous election for him and also for Hungary, because as it was said, there's a lot of foreign influence in this country, a lot of other interests. And if Orban fails, then there will be a lot of autocratic holdover that can puzzle a new government. So there is a lot of danger coming with some kind of change, especially if the change is not big enough. I mean, the difference between the two parties is too close. Then I think it's a massive situation.
Yeah, Stephanie, I mean, why do you think the opposition, has struggled for so many years to unseat Orban, despite unified also efforts in past elections? And do you think this time will be different?
Well, I think it's partly, as Susanna said, because of the electoral system that Orban has managed to put in place through his supermajority, that he's done some gerrymandering. I think that's made it very difficult for the opposition to pull ahead. But you see with Peter Magyar that he is actually coming from Fidesz, from that party, and has come out a few years ago against Orban, accusing the Orban regime of corruption. So he's coming at it from the right, so to speak. And I think he's been able to unify opposition to Orban and get that anyone but Orban vote unified. So I think that that's a key factor, that he is from the conservative, he's from a conservative plank, and he's trying to, do a delicate dance to try to say that he wants improved relations with the EU and NATO, but not be perceived as a Brussels puppet, as Orban has tried to accuse him of. But of course, he has faced a lot of outside support. We have documented Russian interference, in the Hungarian election. A Russian-backed disinformation campaign has been spreading false reports about Peter Magyar to try to undermine his campaign and support Orban, and that has been a feature of of Hungarian elections, previously, that there is Russian support for Orban for obvious reasons. He has blocked, sanctions against Russia. He has blocked this 90 billion euro loan to Ukraine. So the Russians have a stake here in getting Orban reelected.
Susanna, I mean, it was quite surprising for me to see the Vice President of the United States, J.D. Vance, showing up. What does that do? Does that favor voters for Orban, or does that put the population against him?
Well, it's really interesting because Orban has been playing as a politician with global importance for years now. So in a certain way, this is not so spectacularly new. He was visiting Putin and Xi Jinping and Zelensky and Donald Trump within 1 week last year. So I'm not sure whether the visit of Vance is really so important, specifically for those people who will be essential at these elections, and basically the ones who will decide who to vote for in these very last days. So 80% of Hungarians already decided who to vote for months ago. And there are only a couple of 100,000 people who are the undecided, who are very apolitical people altogether. And what impacts on them, that is a really interesting question. And I think this is why Orban may profit something from the Vance visit. But we also know from various previous studies that these people who are just basically out of the political environment completely like to vote for the potential winner. So, and that would push them to vote for TISA. So those kind of things will be really interesting. And because Hungary is a winner-takes-all election system, and especially profits the winner, who gets little different can make big difference at the end of the day. So this is why, despite of TISA's lead in the polls, it's not at all secure and sure that they will win this election. There is a high probability that they would, but there are so many tricks in the Hungarian electoral rules that we cannot be 100% sure. And these are these last days which really are super interesting. And the Vance visit probably tries to convince those people who just make their minds in these days.
And Stephanie, to that point, and we're talking about the fact that Hungary's been trying to position itself, right, as between these Western allies, but at the same time with countries like Russia and China. What realistically does a post-Orban Hungary look like?
Well, I think, like I said, I think it will, if Peter Magyar wins, he will try to forge closer ties with the EU and stop this role of, Orban being the spoiler at Brussels. And I think that could restore some of the suspended EU funding for Hungary. I think if Magyar wins, it could be read as a signal of support for far-right parties in Europe waning. Whether or not that really would, indicate a sort of broader decline of support for those right-wing parties elsewhere in Europe is unclear, but I think that's how it would be read. And I think it could unlock, for instance, that 90 billion euro loan for Ukraine, which Ukraine desperately needs. It's going to run out of money in June, I believe. Peter Magyar has been somewhat vague on his position on that, and his party actually voted against that loan in the European Parliament. I think he's been reluctant to come out very clearly and say one way or another what he would do in that instance, but I think it would certainly remove Putin's closest ally in Europe if Orban were to lose. And I think we would still have Slovakia as the other country in Europe opposing Russia's sanctions and the continued aid to Ukraine. But I think it would result in a far more unified Europe and would indicate that far-right parties in Europe may be facing a tougher challenge ahead.
Susanna, what are you concretely watching out for in the next couple of days before the election on Sunday?
So there's not much to see before the elections. I mean, there's an incredible mobilization in Hungary. We expect very high turnout, 75% probably. And the essence of this campaign, which is really interesting, is happening in the countryside, especially in those regions where Fidesz has traditionally had a stronghold, because these are now under stress. So in Budapest, you see the incredible lot of poster campaigns, but there are not too many events other than like celebration event already starting by young people tonight, a big concert with all the current musicians, young musicians, basically start to celebrate a victory of freedom, which is quite a new thing, and demonstrate the mood in Hungary, and at least in the cities and the capitals, who are very ready for change. So, but the real tricks are happening in small settlements. But there is a lot of election observers, not just international delegations of all kinds. But for example, there's a motorcade. Thousands of motorcaders are traveling around, are trained to how to watch the chain voting and vote buying fraud. So there are a lot of new innovations in election monitoring. So these last couple of days, I think, super interesting to watch, because this is an election that has never happened in Europe for decades. And of course, the
we'll
day
be watching
after,
very closely.
This is what is coming.
Yeah, the day after is the one. Yeah, and we'll have live coverage throughout the day. Susanna, thank you so much for joining us. Susanna Seleni, the Director of Democracy Institute at the Central European University, and thank you as well to Stephanie Baker, Bloomberg senior writer and author of Punishing Putin. Now, coming up, Italian Prime Minister Meloni has ousted the chief executive of Leonardo after reshuffling leadership at state-controlled firms. More on defense next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Italian Prime Minister Giorgia Meloni is reshuffling leadership at state-controlled firms, ousting the chief executive of aerospace and defense manufacturer Leonardo. For more, Bloomberg's Charlie Wells joins us. Hi, Charlie.
Good morning, Francine. So yes, Roberto Cingolani is out. There has been a replacement name for him. And this is something that the Italian government can do because they keep stakes in a lot of these companies that they see as important, strategically important for national security. And every 3 years, they can name a new head or they can continue on. And I think what's notable here with this removal of Cingolani from the post is that is at Leonardo, but at Eni and Enel, we have seen a continuity here. So this follows Giorgia Meloni's setback in the polls last month when she tried to bring in those judicial reforms, but that failed. So this could be a move to try to assert control, to try to look like she is in control here. But there's been some investor pushback, and let me show you why. Because if you rewind back over the past 3 years of Cingolani's tenure, you see this rise, a five-fold rise in the share price for Leonardo. Now, of course, European defense has really been kind of strong over the past couple of years, but also Cingolani really is credited with something of a turnaround at Leonardo. He forged a partnership with Rheinmetall and really is seen as helping to push this up. You had some activist investors talking about how a management change was not right, some analysts talking about how this could eat into that equity story that we've been seeing that's been so constructive. Let's take a look at how Leonardo is doing today and see why some analysts may have thought this. We can see now that they are down almost 3%, so the market not liking this management change.
Charlie, thanks so much. Charlie Wells there with the very latest on Leonardo. Now, joining us is also Bloomberg's Benny Campbell for more analysis. So, Benny, as we were just hearing, look, the Italian PM ousted Leonardo chief executive, who's really credited with turning the company around. What does it mean for European defense at large?
Well, Cingolani was sort of a key figure in the European defense space. As we just heard from Charlie, he's built alliances. Rheinmetall was one, but he also built a very important alliance with other companies, Thales and Airbus, where they pool their satellite operations. And he's been really at the forefront of one thing that the European fractured industry really needs, and that is consolidation. He's really thought hard about that. He's also thought very hard about sort of what the future of warfare is, and a lot of that is moving towards software and towards sort of online applications and towards cheaper products like drones and so on, reusable kit. And so Cingolani was very much a proponent of these kinds of pushes. And the question is whether his departure or removal, shall we say, whether that will change anything directionally for the company. If you look at the stock, obviously some investors seem to think that might be the case.
Benny, Leonardo had also unveiled this air defense system for Europe, the Michelangelo Dome, to protect against threats like hypersonic missiles, drones, and artillery. So where does it leave that project?
So, yeah, the Michelangelo Dome, Leonardo, Michelangelo, they're going to run out of Renaissance names at some point. But the idea here being that it's a software that helps sort of upgrade or protect the region. It's not quite on the level of the Golden Dome that we've seen in the US, but if there's one thing you know, these are fiendishly complicated products. They are usually over budget and over time. Whether that will change now, probably not. But again, Cingolani is very much sort of on the software side of this, and it wasn't so much about sort of building a missile protective shield, but really making systems speak more intelligently with one another. And that's the sort of thing that that will continue under his successor. You know, this is Lorenzo Mariani, who joined from MBDA, who's a known quantity in the industry. So you shouldn't imagine massive disruptions, but you know, there might be another hard look at projects like this, the cost thereof, the complexity thereof, and to Cingolani's point, can you bring in other partners to help advance these kinds of tools?
Yeah, so Ben, can we expect consolidation in the sector? I mean, there's always this, overarching question on, is Europe rearming rapidly enough, given everything that's going on?
Well, that's sort of been an age-long debate. You know, does the defense industry need consolidation in a way that, for instance, the civil industry under Airbus, people often point to that and say, look at what Airbus managed to achieve. Shouldn't the defense industry do something similar? We have a very fractured industry. We have BAE in the UK. We have companies like Thales in France. We have Rheinmetall in Germany, Leonardo, and so on and so on. The problem is always you have a degree of government overreach and control, and each government wants to retain a level of control. You have to look at a couple of big projects like the FCAS fighter jet plane that's being developed, and the mess really that is in. That gives you a sense of just how difficult it is to bring companies to speak to one another. In this case, Dassault of France and Airbus, which is sort of on the German side in this case. So consolidation is something that on paper everyone agrees on, and it should happen. And if we want to build that European counterweight to the US and to China, we need it. But then in practice, a lot of national specificities start creeping in, and we saw it overnight with Cingolani leaving, that governments do assert their power over these companies.
Benny, thank you so much. As always, Benny Camel there from Berlin. Now, years of lobbying by Israel's Benjamin Netanyahu has paid off when Donald Trump decided to go to war with Iran. Now, as the U.S. president tries to extricate himself from the conflict, the fault lines in one of his closest geopolitical relationships threatens to box him in. Let's bring in Bloomberg opinion columnist Mark Champion. Mark, always love reading your stories. What do we understand about the relationship between, Israel PM Netanyahu and President Trump today?
Well, I mean, it's fascinating. So, you've got some pretty convincing reporting that we've done, that the New York Times has done, that shows that Netanyahu was absolutely central to the decision to go to war on the part of the U.S. It's something that Netanyahu's wanted for a very long time. He has tried to persuade other U.S. presidents to do the same thing. He wasn't able to. He succeeded. Now the war hasn't, in militarily the war's gone very well, but, in terms of achieving any strategic goals, not so much. So, the U.S. is looking for an off-ramp, and you start to see some tension there because Netanyahu is not ready to get off, and he wants to continue the war. He wasn't involved he wasn't brought into the talks with Iran. And he was just informed about it. You then saw what he really thought in terms of, just hours later, a massive strike in Lebanon, knowing that,
Mark, I mean, that was pretty shocking, right? Because you're in a ceasefire, and hundreds of Lebanese were killed with these strikes this week. Can the U.S. president temper that or put an end to it?
He has tried. So he got on the phone to Netanyahu. I wasn't on the phone call, but, in essence, it sounds like he said, cut it out.
Yeah.
And he has then said, Netanyahu agreed to low-key what's going on. Netanyahu himself, very clear, got on TV and said to Israelis, there is no ceasefire in Lebanon. We are continuing with full force against Hezbollah. And we will see whether he tempers it enough. And then we also will see, it's really, Trump is in some ways a hostage now to the dynamic between the Iranians and the Israelis. As the Iranians say, this ceasefire included Lebanon. The Pakistani mediators agree. The U.S. and Israel say no. It's really a question of, what does Netanyahu do? What do the Iranians do in response to each other? It's going to be complex for Trump to work that out.
Yeah, especially a complex couple of days ahead. Mark, as always, thank you so much. Mark Champion there from Bloomberg Opinion. Meanwhile, if you look at the markets, they're a little bit of a mixed bag. Look, stocks are pausing with focus towards the weekend for this U.S.-Iran talks. Again, oil was set for its steepest weekly loss in 9 months. Brent actually rising around 1.7%. Up next, it's Bloomberg Brief, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Everybody has a moment
where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
It is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Repeating himself without profanity, President Trump again demands Iran reopen the Strait of Hormuz before direct talks begin tomorrow. Stock futures are dragging and oil gains ahead of that meeting, plus new inflation data out for the U.S. this morning. And Anthropic's new model is so scary that Treasury Secretary Bessent and Fed Chair Powell together met with the biggest bank CEOs in America to warn them of the risks. Let's take a look at what's going on in markets. We're looking at futures down, but we have had 7 up days in a row for the cash trade. Every single day this week and 3 days last week have been gains. So S&P futures coming off a little bit, but from relatively high levels. The same is true for the NASDAQ and the Russell. Check out treasuries right now. We're looking at still the same range that we've seen, 380 essentially for the 2-year, 430 for the 10-year, and 490 for 30s. In terms of crude, we're still holding at about $100 a barrel, a little less, a little more than that right now on WTI. We're still looking at the May contract here for NYMEX crude, $100.11 a barrel. Brent at $97.93. Both these coming up a little bit from some weakness yesterday. And you can see gold right now trading at $4,741 an ounce. For some of the single stock stories that we're watching this morning, let's get over to Chloe Melee in London. Good morning, Chloe.
Good morning, Matt. Let's start with Lumentum that is doing very well today. This is a company that is backed by NVIDIA and has just said that it's seeing accelerating demand for its optical components from the biggest U.S. tech companies, and that hyperscalers were continuing to raise that CapEx budget, and that would be really a big boost for the company. So we're seeing those really optimistic comments being translated into that share price this morning. Moving on to ServiceNow, which is seeing a little bit of weakness. It just got downgraded by UBS, and it's also being caught in the latest wave wave of softness for software stocks. So we put aside some of that conversation around AI disruption because everything else was going on, but now it's very much back on the agenda as Anthropic and Meta release new AI models, and so we're seeing some of that weakness there. And finally, let's go over to Italy, where Brunello Cucinelli just reported as the first big luxury company to report, and it's painted quite a positive picture with estimates, with results beating estimates, and so we'll see if LVMH, Hermes, and the rest follow in those footsteps.
Brunello Cucinelli. I know Stephen Carroll from Bloomberg Radio shops there a lot. Chloe, thanks very much. Chloe Melee with your stocks. Coming up this hour, we'll push ahead to CPI with JP Morgan's Priya Misra. President Trump demanding again that the Strait of Hormuz be open, this time ahead of peace talks. They'll start tomorrow, direct talks between the U.S. and Iran. Posting on Truth Social, President Trump wrote, quote, "Iran is doing a very poor job, dishonorable, some would say, of allowing oil to go through the Strait of Hormuz. This is not the agreement we have." Let's get to our team coverage. We have Bloomberg's Jumana Bercecci in Dubai and our Washington Deputy Bureau Chief, Laura Davison. Jumana, what do we expect from these talks tomorrow? Is everybody there? Is everybody ready? I know that they're very far apart in terms of their plans.
Well, actually, really interesting that you ask, is everybody there? Because we still don't have confirmation that the Iranian delegation has actually landed in Islamabad yet. Reportedly, they have said, or Iranian state media has suggested, that the Speaker of the Parliament, Mohammad Ghalibaf, will be representing the Iranian delegation alongside the foreign minister. But again, no confirmation that they are there yet. On the U.S. side, we know that J.D. Vance is going to be representing alongside Witkoff and Jared Kushner. And those two individuals, of course, were key to the prior discussions that were taking place with Iran even before the war began. But as it pertains to, you know, the potential for a breakthrough, the starting point here is the two sides are still very, very far apart. And we know that the U.S. are reiterating what they have said even prior to the war started, which is that Iran should not have the ability to enrich uranium. There's still questions about the exact whereabouts of that uranium stockpile. So an outcome in which Iran is still maintaining a grip of that uranium stockpile, I think, would be one that would be unacceptable to the U.S. And also limiting their ballistic missile capabilities. And of course, the new one that is opened up, which is Iran insisting on the right on sovereignty over the Strait of Hormuz. This is a non-starter for the U.S. It's a non-starter for Gulf nations in the region as well. And Iran, on their part, are saying that in addition to this new protocol that they want to establish over the Strait, they want war reparations and they want assurances that the U.S. will never strike again. So very maximalist positions being put forward. I will say, though, the fact that the negotiations are actually set to happen, again, waiting confirmation that the Iranian delegation has arrived in Pakistan, is a positive sign, because it seemed as though yesterday it was questionable as to whether the ongoing Israeli airstrikes on Lebanon on Wednesday, which led to a huge amount of destruction alongside a huge number of casualties, would derail the process from the Iranians' perspective. So that's TBD as we head into a crucial couple of hours.
Laura Davison, normally in Washington, D.C., you've been in Hong Kong these last couple of weeks. How is the international reaction, especially from China, to these talks? And what do our international allies and adversaries expect?
Yeah, there's been a lot of frayed tension between the U.S. and both allies and adversaries alike going into this war. You know, China has really played a very crucial behind-the-scenes role. You see both Iran and the U.S. crediting China's ability to sort of nudge Iran into this ceasefire, and you know, there have been public comments made from all sides, you know, suggesting that they hope to see China continue to stay involved and act as a, if not an official mediator, but sort of a behind-the-scenes consult, so to speak. The real question, though, is where are allies? The U.S. had Mark Rutte, the NATO Secretary General, at the White House yesterday. The big ask there for allies is that they put together some sort of plan on what it looks like to help secure the Strait of Hormuz. That, as Jumana mentioned, being sort of one of the key issues and key dividing points going into these talks. And the thing that Trump, at least his social media would indicate, has been the thing he's most focused on, is opening up that strait, opening up that waterway. That, of course, is the area where Iranians have the most most leverage. So this is going to be a very difficult negotiation, and an issue that just a couple weeks ago, U.S. allies didn't want to touch at all. They really resisted, getting involved in the Strait of Hormuz until fighting has stopped. It's not completely clear that this ceasefire will last, that it has durability, but European allies, Japan as well, have started to indicate they're looking at having some level of involvement, though that could be still some days out. It really depends on how the talks this weekend go, and if it looks like there will be an end to this war within sight, or if things fall apart.
Laura, a lot of reporting around China pressuring Iran in certain ways. How can the U.S. pressure Israel? Jumana mentioned that they continue their war effort in Lebanon. That seems to be one of the key sticking points. Israel, the weakest link in this ceasefire chain. How can President Trump this time ask Benjamin Netanyahu to stop it?
This has really been a challenge for Trump. He, has tried to put pressure on Netanyahu to cool it when it has, in Trump's words, so to speak, in Lebanon. Vance also has said that the U.S. government has been working very diligently to rein Israel in. But this, of course, is personal for Netanyahu. This is Iran is an issue that he has seen for a long time as Israel's greatest adversary. So this is going to be a challenge. Netanyahu just about 6 weeks ago had one of the greatest victories of his career of getting the U.S. to come along with this. Now he sees that slipping away with the U.S. pulling out really before Israel is ready. So this is going to be a very challenging relationship to navigate going forward, though so far it seems that the U.S. has been able to at least contain Netanyahu, if not control him completely.
Laura Davison and Jumana Bersetchi, really appreciate your coverage. Looking forward to what we find tomorrow when these talks kick off. Let's get to the other top trending stories on the terminal this morning. The White House warns staff against placing trades and making bets on prediction markets using confidential information. The internal email sent on March 24th comes after a series of very well-timed bets raised questions about insider trading relating to military actions in both Iran and Venezuela. Porsche's first quarter sales fell. Global deliveries dropped 15%, dragged down by a decline in China. The new CEO of Porsche, Michael Leiters, is planning further job cuts and is weighing additional high-end models above the 911 or high-end versions of the 911 to bolster margins. And Lufthansa's cabin crew, one-day strike kicking off this morning after stalled negotiations over a new collective labor agreement. The strike is set to cause more than 500 flight cancellations as people return from Easter vacations. People are still on Easter vacations only in Europe, folks. Coming up, Treasury Secretary Scott Bessent and Fed Chair Powell call an urgent meeting with Wall Street CEOs to warn them of the dangers of Anthropic's new AI model. More on that next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Matt Miller in New York. Treasury Secretary Scott Bessent and Fed Chair Jerome Powell urgently summoned CEOs of the biggest firms on Wall Street to warn of risks around Anthropic's new AI model. Let's bring in Bloomberg's Neil Campling for more. Neil, it's at the same time, fascinating and terrifying. What's the concern about Anthropic's new model? That it could hack our big bank technology systems?
Exactly that. I mean, so this latest model called Mythos is not just better than other AI models, it's a massive leap in capability, particularly in exploiting and identifying digital vulnerabilities. So it's triggered serious concern among cybersecurity professionals, governments, AI researchers around the world, as you mentioned. And I suppose one of the most alarming aspects is its ability to uncover critical software vulnerabilities, including ones that may have been hidden for decades. So, you often need highly specialized, time-consuming analysis of working out where vulnerabilities are, whereas Mythos can do this in seconds, in minutes. The capability is absolutely revolutionary in terms of this type of technology. But that also means, of course, is that it has a major risk that if these tools fall into the wrong hands, that they could be used for the wrong purposes and could, in theory, lower the barrier to cybercrime. To be fair, we've often seen these kind of risks with new big technology advances. We had these hackathons that Facebook Meta used to do years ago, but obviously the scale of the growth in these AI models is so vast that it's very difficult for even governments or even cyber experts to keep up with these developments.
The way they work or the way they're trained is so opaque to the layperson, right? It's like, I don't know how the cell phone works, but it does. Had they been trained to do this? I mean, the data set, I understand that you give these large language models has something to do with what they're capable of afterwards. Why would Anthropic allow this to happen?
It's not an Anthropic. Obviously, Anthropic wants to make sure that it's able to adapt responses to make more efficiencies in the data sets themselves, in the technology use, for good purposes, not for bad purposes. It's just that with any tech advancement, that also means that systems can also learn through their own self-learning to evade their own safeguards, and that's one of the problems that you have in these AI models from the get-go. And so I suspect this is why the banks are being summoned to answer what their protocols are in place, because the cybersecurity tools will need to be developed at such a fast pace to keep track with these AI agentic agents. But we're even now seeing AI agentic cybersecurity agents being sort of introduced, and I suspect that'll be another big growth part of the market over the next few months as these models develop even further.
Neil, you are our tech guru, so I don't expect you to know the ins and outs of the politics of it, but to me it's fascinating that the biggest bank CEOs, the Fed chair, and the Treasury Secretary all got together in one room to talk about stuff that I'm not 100% clear on, and we didn't even really find out about it for 2 weeks. I mean, how did this meeting actually take place? Was it on Zoom? Were they in the same room? What else did they talk about?
If only we knew that. At least we got the scoop that they had the meeting, which is pretty impressive in itself. Again, with these technologies, I would argue that many of the companies and governments are behind the development curve or knowledge base of what these things can actually do. I've watched this for the last 20, 30 years. The pace of development, it's very difficult to keep up with that pace of change. And so they would clearly be, I suspect, discussing around the safeguards of the entire monetary system, because that's what the world economy relies on. So we have to ensure that the technologies are properly safeguarded. But Anthropic to Google, Alphabet to Amazon, AWS Web Services. If you think back, 10 years ago, the whole idea of many of the US government and the Pentagon and other departments using AWS or hyperscalers for some of their services would have been unthinkable. Yep. But we do. We have many US government departments using AWS. There are private-based clouds within those massive compute networks. So technologies can be adopted, embraced, and adapted to ensure they're used in a safe environment.
Neil,
this is a natural course of technology development, as far as I see it.
Great to get some timing this morning. Really appreciate it. Neil Campling runs our tech coverage there out of London for Bloomberg News. Now, Hungary votes on its next prime minister this weekend. Incumbent Viktor Orban facing his biggest challenge in 16 years, even as he basically controls the state media. More on that next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We have breaking news on the war in Ukraine. One of the top aides to Volodymyr Zelensky of Ukraine says that he sees progress towards a potential peace deal with the Kremlin, adding that a resolution to the war may not be long to achieve. So a very interesting story on the Bloomberg terminal, and it could take some of the pressure off of European allies of Ukraine and even the U.S. as we focus on Iran. Meanwhile, in Hungary, Prime Minister Viktor Orban is facing his biggest re-election challenge in his 16-year term as opponent Peter Mayar's TISA party gets a late shift in momentum. Orban, who's faced recent criticism for disclosing his submissive relationship with Russian President Vladimir Putin, told voters today that foreign intelligence services were interfering in elections to sow chaos, even after reports that the Russians offered a fake assassination attempt to help Orban. Bloomberg's chief Europe correspondent Oliver Crook joins us now from Budapest. So why is Orban losing support, especially since he essentially controls the media in the country?
Yeah, so really this is an economic story largely, Matt. Over the last couple of years, you've had real stagnation within the Hungarian economy. You've had scars, lasting scars from huge levels of inflation over the last couple of years. Those have come down, but those really have been some of the main driving issues here in the Hungarian election. We should say there's also been a complete breakdown of many, or not complete breakdown, but certainly a large sort of problems within the social safety net. I mean, you talk to people, something that people keep giving as a very concrete example is if you ever go to the hospital, you have to bring your own toilet paper. They don't have those sort of facilities there available to the public. So that has been a story of discontent. But there has also been a story about a sort of very positive momentum and a positive picture by the opposition candidate that's been painted, Peter Magyar, who's really gone a sort of old school campaign. He's walked across much of Hungary, shaking hands, really trying to put a sort of positive vision here. So I think for Hungarians, a lot of the story is a sort of dissatisfaction with Viktor Orban after 16 years of rule, the longest serving leader within the European Union, with some optimism of what a new regime could bring. And we're going to find out over the weekend on Sunday when we get this vote. And I should say, Matt, everybody you speak to here, no one has any idea where this is going to go on Sunday.
Does it help or hurt, Oliver, that the U.S. vice president flew over to essentially campaign for Orban?
This is what I think is one of the most interesting dimensions of this election campaign. I mean, this is a pretty small economy, about a trillion euros. It's got about 10 million people. It's a small European country, but it has a huge amount of influence on the global stage in terms of the relationship with the United States. We know that Viktor Orban has a very close relationship with the President of the United States, Donald Trump. He campaigned for him before Trump was reelected. We've seen Trump campaign for Viktor Orban. We've seen Marco Rubio come here, and J.D. Vance left here yesterday, really giving that final push. And I think there are two dimensions to this, right? On the one hand, J.D. Vance coming here, I think for most Hungarians, doesn't really move the needle. A lot of people don't know really who he is. We should say that, you know, in the lead up to the election, maybe a year ago, the Trump effect would have been much more positive. But with some of the things we've seen from the Trump administration, whether it's the Greenland moment, whether we see the war in Iran, which is having an impact here in Hungary, this is something that largely it is not supported across Europe, even with the far right. So I would say that the Trump effect may be more diminished than it was 6 to 12 months ago. But Matt, it's not just the U.S. that cares, right? This is a key election for Brussels. Viktor Orban has been the single person standing in the way of that 90 billion euro loan to Ukraine. This has a massive impact in Brussels, massive impact in Kyiv, and of course a massive impact in Moscow. We had this transcript posted that Bloomberg got their hands on earlier this week about a conversation between the president of the Russian Federation, Vladimir Putin, Viktor Orban, in which effectively Orban saying, "I'm here at your service to help you out." So many influences and so many interests here in the Hungarian election over the weekend.
Yeah, Orban wants to be the mouse to Putin's lion. Bloomberg Chief Europe correspondent Oliver Crook live from Budapest. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Repeating himself, but without profanity, President Trump again demands Iran reopen the Strait of Hormuz. This ahead of direct talks between the U.S. and Iran start tomorrow. Stock futures drag after 7 days of gains in the cash market. Oil gains ahead of that meeting. Plus, we get new inflation data out for the U.S. this morning. And Anthropic's new model is so scary, Treasury Secretary Scott Bessent and Fed Chair Jerome Powell together met with the biggest bank CEOs in America to warn them of the risks. In terms of futures, we're seeing only slight declines, very slight declines on S&P and NASDAQ futures right now. Treasuries doing a whole lot of nothing this morning, holding in that range at 380 for the 2-year, 430 for the 10-year, and 490 for the 30. Oil is rising a little bit, but holding also at levels that we saw yesterday. So 96.71 for a barrel of Brent, 98.61 for a barrel of NYMEX crude. They've been higher this morning. So coming off of their session highs, gold right now at 47.47 a troy ounce. For some of the single stock stories we're following this morning, let's get over to Chloe Melee in London. Good morning, Chloe.
Good morning, Matt. Lumentum is firmly in the green this morning after saying that it will really benefit from growing demand for its optical components from the biggest U.S. tech companies, which are at the moment really raising and boosting those capex budgets. And so we are seeing this very optimistic outlook reflected in those shares this morning. Moving on to ServiceNow, which has been caught in the latest wave of weakness for software stocks. So these concerns around AI disruption are really now back on the agenda because we've got new AI models and tools coming from Anthropic and Meta, but also because earnings season is getting started, and therefore this concern around the impact, the AI impact on the software sector is really coming back at the forefront for investors. And finally, TSMC is also on the move today after reporting a quarterly revenue up 35%. So this is really easing those concerns around the impact of the war in Iran on this global AI chip demand. And so this is seen as quite positive for the AI sector, and we are up about 2% for TSMC.
All right, Chloe, thanks very much. Chloe Melee looking at your stocks in the pre-market for us out of London. Meanwhile, back here in New York, J.P. Morgan's Priya Misra weighing in on the potential impact of the latest energy crisis, writing, quote, "We came into this shock with a low hire, low fire labor market, but strong private sector balance sheets. So even if oil settles in the 70 to $90 range, we think the soft landing baseline should persist. I'm pleased to say Priya joins us now on set here at 7:31. Lex, as uncertainty remains surrounding the war with Iran. Priya, in terms of oil, we seem to be holding about $10 higher than that range right now. How damaging is this to the U.S. economy?
So, it does hurt growth to the extent that that it's essentially a tax on the consumer. So I think that's what we're concerned about. The thing is, we're watching wages. Wage inflation is okay. It's hanging in there. It's not really picking up. So I do think it's going to have some impact on consumer spending. But we came into this shock with very resilient balance sheets. Remember, we've dealt with, banking crisis. We've dealt with Liberation Day. The private sector, I would say corporate as well as consumer, have learned how to deal with shocks. This is a supply side shock. So I do think it is a drag on growth. But does that take growth from 2.5 to 2? That's the soft landing. I think it keeps the Fed from hiking. They're going to be watching, and we're going to get CPI today. They're going to be watching the second order effect. If this is a supply shock, it does have a small drag on growth, but it doesn't result in that second order inflation threat. I think it keeps the Fed maybe from not doing anything right away, but then, later this year they can cut rates. So I think you may get some help from easing financial conditions later in the year. That can help the growth side. But I think the key question is, where do we settle down? We've taken the off-ramp, I hope. They're talking this weekend. But what's that end state? What happens to the straight? Is that $10 higher oil prices? We can handle that. I think the tail risk is still there, that maybe it's $50 higher oil price. And I think then you start worrying about that downside risk taking us much weaker in growth.
Well, how much more can the consumer handle? After Bidenflation and then the Trump tariffs and now what Israel has dragged us into in Iran, how much more can this consumer take? Are we still living off the stimulus we got during the COVID era?
So I'm glad you bring this up, because the consumer has been extremely resilient. I think it was the pent-up savings. Now what it is I think generally easy financial conditions. As a K-shaped consumer, the upper part of the K, if you have a job, if you have some savings in the stock market, that's done well. And so I think that's buffering the consumer. The lower part of the K, I think, is struggling. We're seeing this in securitized credit. We're seeing, some stress in the consumer. But in terms of spending, it's been resilient. I think it all comes down to, is the job market okay? We are in a low-hire job market, but as long as layoffs stay low, I think the consumer can withstand some more of a shock. There may be some slowing in growth, but I would say the job market, the resilience in the job market is what's keeping the consumer where they are.
What do you expect from CPI? Coming out at 8:30 this morning, we're expecting the core to rise year over year, 2.7%, still far away from the target that I think no one believes the Fed actually is trying to achieve.
Well, I think the Fed will tell you that is their longer-term target.
They'll say that, but they haven't met it in forever, right? And they cut rates, so they're obviously not trying to get there.
No, I think they're trying. They do have a dual mandate, and there was weakening in the labor market, and inflation has come down. We're not at 9%. It's not a great number.
We're at 3%, on top of the 9% that we had.
So they did raise rates at a very aggressive level. I'm not defending the Fed, but I think these rate cuts that they did was taking extreme level of restriction to small level of restriction. I think now we're in the realm of neutral rates. So I think the bar for them to cut is much higher. They need to see improvement in inflation. Unfortunately, they're not going to get that because we're still seeing the impact on goods inflation from tariffs. So what I'll be watching, the headline number is certainly going to be high. Core is going to be high. I'm going to be watching core services. And this might give us some comfort that once the goods inflation starts to come off, if service inflation is continuing to decelerate, what do you watch for that? You watch inflation expectations. Look at longer dated tips break-evens. They've been extremely stable. Look at wage inflation. That's not picking up. Even though we're in this decent job market, we're not seeing wages picking up. Look at rents. Private sector measure of rent inflation is actually decelerating. So if service inflation stays where it is or continues to decelerate, it'll give us some confidence that once the tariff impact has flown through the data, which will happen in the second half, and we don't see any second order effect from energy inflation, then you might get to maybe 2.5 by the end of the year, allowing the Fed again to maybe cut a few more times. So I think they're trying. They've got this dual mandate. They've been hit with supply shocks. And so I think the Fed's been in a tough position. It's just got tougher. So I think they stay in doing nothing right now. But watch for that. Is this moving from a supply side shock to a demand side, which is what happened right after COVID. Remember all the revenge travel? I think there was this demand aspect. Right now, we're seeing this largely a supply shock, but I'll be watching for those details. I know the number's not going to be great, but I think it's in the price.
Priya, just got 30 seconds here. I'm fascinated by rates because on the one hand, I would expect people to pile into treasuries and the dollar for safe haven amid a war in the Middle East. On the other hand, deficits and debt continue to run at the hottest pace. I mean, 136% debt to GDP, right? And we seem to have failed to withhold our side of the petrodollar agreement.
So there's a lot going on with rates, but I'm glad you bring this up because that's where we think value has been created. I mean, you look at risk assets, corporate spreads, they're all kind of back to conflict levels. Rates are higher. So, there are a lot of things going on. I think the rate market reacted a lot because of inflation fears, deficit fears. I would also highlight deleveraging. There was a lot of that. We've seen this after Liberation Day. We saw it during COVID. I think the fact that Treasury debt has grown a lot, it's held by price-elastic, price-sensitive investors like us, like banks. I think if you have investors that buy it, that need liquidity for margin calls, or even if you're a foreign central bank and you need to buy oil, you're going to sell. So that's why rates rose. I think that's where value has been created because this is a supply shock, tax on the consumer. We just talked about that. You look at fundamentals, the Fed will be ultimately, in at some point cutting rates. If this ends up, going into the tail risk scenario of much higher oil prices, then we're talking recession. The Fed's cutting a lot more. So actually owning the belly of the curve, the long end is much more about supply or petrodollar point can come in. So I think steepness makes sense. But I think owning some 2-year, 5-year, because they are higher, that's the one area where the market said, this is an inflation shock. Well, it's also a growth shock. And I think as the market starts pricing that non-linear impact on growth, I think interest rates actually are likely to decline.
Priya, great to get your intel. Thank you so much for coming in this morning. Priya Misra, there of JP Morgan Asset Management. Now, let's get to your other trending stories on the terminal this morning. Ukraine's top negotiator with Russia, Kirill Budanov, says he sees progress towards a peace deal with the Kremlin. Budanov, who was Ukraine's former top military spy, told Bloomberg he believes Russia also wants to stop the war. However, he declined to say how a possible compromise would look on territory, which is the thorniest issue in the talks. Porsche's first quarter sales fell. Global deliveries slumped 15%, dragged down by a decline in China. The new CEO of Porsche, Michael Leiters, is planning further job cuts and weighing additional high-end versions of the 911 to bolster margins. And Lufthansa's one-day strike kicks off this morning after stalled negotiations over a collective labor agreement. The strike is set to cause more than 500 flight cancellations as people return from spring break. Coming up, Washington and Tehran gear up for a weekend peace talks. More on that next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now. And very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the lines air. Then make the 4 fingers curl, make sushi shape, then touch this. 2, then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3, then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
This is Bloomberg Brief. I'm Matt Miller here in New York. President Trump reiterating his demand for Iran to reopen the Strait of Hormuz again. Posting on Truth Social, quote, Iran is doing a very poor job, dishonorable some would say, of allowing oil to go through the Strait of Hormuz. That is not the agreement we have. This comes as both sides are set to come together in Pakistan for direct talks to turn the ceasefire into a longer-term peace agreement. Joining us now from Washington is Kasia Klimasinska. So, Kasia, what do we know about, the two sides seem so far apart that they couldn't get any further apart. What kind of progress can we expect?
Matt, hello. Very high stakes for those talks in Islamabad, Pakistan. This weekend, starting Saturday morning, we know that the capital of Pakistan is ready with very high security. This is the first time since 2018 that a high-level U.S. official will visit. The U.S. delegation will be led by Vice President J.D. Vance. And as you mentioned, President Trump has already kind of set the tone for those talks. It's clear that for him, anyway, the most important is the Strait of Hormuz. All he wants to see is those ships, those tankers going through in order to bring global oil prices down.
I wonder about, this war in Iran had the benefit for the White House of putting the Epstein scandal on the back burner. After all that they had done to withhold the release of those files, all the GOP, all the DOJ, all the FBI had done to stop them coming out, we have stopped focusing on them because of the war. And now, the president's wife, the First Lady Melania Trump, comes out yesterday to the press and brings up Epstein again. Why and how?
This was a very big surprise for us. First Lady Melania Trump made a statement yesterday at 2:30 p.m. in the afternoon, and she said that she never had a relationship with Jeffrey Epstein. She apparently replied to an email, but she said it was trivial. It was just a polite reply. She says she didn't know him. Because she obviously has her social cycles in New York and in Florida, that at some point those social circles, have overlapped slightly, but she didn't know them. She didn't have a relationship. And interestingly, she also said that she's not a victim.
The other thing we have seen from the war in Iran is that, or the other thing we've lost focus on, I guess, is the war in Ukraine. Now we're hearing that Zelensky's top negotiator says he could see a deal with the Kremlin. What do we know about that and how the pursuit of peace is going there?
This is a developing story. We just heard from Ukraine saying that there are chances of perhaps some sort of an agreement with Russia coming sooner than we all expected. We know that the U.S. anyway kind of lost interest. It was the same set of negotiators that were kind of mediating between U.S. and Russia and Ukraine, and also being involved with talks with Iran. But also earlier this week we saw some representatives from Russia reaching out to the U.S. So I think we'll hear more on this story today and perhaps over the weekend as well.
All right, Kasia, a lot of news to cover there in Washington. Kasia Klimasinska doing that for us from our D.C. bureau. Now, oil climbing at the end of a roller coaster week. It's on track for the biggest weekly loss since June. Joining us now is Bloomberg's Anthony DePaola. And Anthony, you know, we'd gotten to relatively high levels, almost $117, I think, a barrel on WTI. And it's fascinating to see the NYMEX crude higher than contract higher than the Brent contract, although I know they're for, you know, different months. How do traders see oil priced going forward? Yesterday we heard from Goldman Sachs that maybe $100 a barrel could be the average for Brent.
Good morning, Matt. Yeah, I mean, you mentioned it there that oil's on track for a weekly loss. That's because of that huge sell-off earlier in the week on the back of the ceasefire that was announced. We were really looking at a major potential escalation here in the Gulf, and that didn't happen. That means lots of energy infrastructure that would have been in harm's way is taken out of harm's way. So I think that's really playing into the factor, into the oil price there. And as you mentioned, that difference in months between the two contracts. So that potentially gives you some kind of an idea that the market is looking at this crisis as being shorter lived. So maybe we're looking at, you know, potentially getting flows going, and then analysts and investment banks like Goldman Sachs, as you mentioned, are looking at maybe a month or so time to ramp up the oil production there, and that would then ease pressure on prices. But if we do have a longer closure of Strait of Hormuz, if we do have damage to facilities, that just lengthens this thing out, lengthens the time that facilities are offline, and then damage that takes place. It takes longer for those to come back to market. So those are kind of the dynamics we're looking at, Matt.
Anthony, what do we know about traffic through the Strait of Hormuz and a potential toll charge? You know, we've been hearing about a $2 million toll for a couple of weeks now. Is that $2 million worth it for tanker operators? Is it priced into this market?
Yeah, I mean, that $2 million charge comes from an idea that Iran was charging about $1 a barrel for oil tankers to go through. So on the biggest tankers, the VLCCs, which carry about 2 million barrels, that gets you to that 2 million figure. But a lot of this is unclear what is going on. So with the ceasefire, the strait was supposed to be open, but the Iranians are saying it's open, but it's restricted. You have to come through us in order to get through. We had the CEO of the UAE's biggest oil producer, ADNOC, saying earlier this week that means Hormuz isn't free. And we are not seeing vessels going through. So we're seeing some tankers kind of lining up like they're going to get ready to go through Hormuz, but so far we haven't seen that many taking that plunge. So we've had a couple Chinese-owned tankers with various types of crude on there, Saudi, Iraqi, lining up to go through, but we're watching to see if they actually make that. So far, it's been Iran sending its tankers through really throughout the war, but we haven't seen the flows from those other countries yet. And so what we really need to see is that broader opening where tankers are able to flow through, where people know what the score is, that they can go through safely. They're not going to pay. They're not going to have legal or other issues. Because at the moment, Iran's telling people you can't go through if you don't come through with us. Right. From the U.S. side, you know, Iran's still under sanctions. So if you pay Iran money, you risk violating sanctions. So it's a complex picture, and we're not seeing people go through yet, Matt.
All right, Anthony, thanks so much for your reporting. Bloomberg's Anthony DePaola covers the oil market for us. Now, U.S. Treasury Secretary Scott Bessent and Fed Chair Jerome Powell gathered Wall Street's biggest CEOs for an urgent meeting to warn of risks around Anthropic's new AI model. Let's bring in Bloomberg's Neil Campling for more. Neil, first off, what do we know about this new model? What is it called? Who can access it, and how dangerous is it?
Sure. So Matt, this is the Claude Mythos, which is the latest AI big agentic tool that we have from Anthropic. What we know, it hasn't been released publicly yet. Not yet. In any case, it's going to beta currently this month. Now, The heart of this issue is basically a classic technology paradox. It's the dual loose dilemma, a tool that can be used for good and for harm. Okay, so it can help organizations detect fixed vulnerabilities before attackers find them, strengthen global security, strengthen the banking systems, make them super resilient. But equally, they can enable attackers to exploit the very same vulnerabilities faster than ever that these tools can find. They can tip the balance in favor, whether it's for offense or defense. It's this dual use nature that makes it very difficult to regulate and also to responsibly deploy, which is why Anthropic are not releasing this to the public yet. And it's also why regulators and the banks are making sure security protocols are resilient and tight, and to make sure that this tool is fit to be used for the right reasons and to be super resilient in business case usage going forward.
Neil, really appreciate your reporting this morning. Bloomberg's Neil Campling also helps to put out Before the Bell, which is an extremely helpful newsletter you can subscribe to on the Bloomberg terminal. When we come back, we'll give you what to watch out for the rest of the day and next week. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Now look ahead at what's going on today. We have CPI coming out at 8:30 a.m. Eastern in terms of the economic news. That's got to be your main point. Then the University of Michigan puts out its consumer sentiment survey at 10 a.m. In Washington and Tehran, we'll hold peace talks in Pakistan tomorrow. This weekend we could get peace in Iran. We could get peace in Ukraine, according to what we're hearing from Zelensky's chief negotiator. And we could get the unredacted Epstein files, maybe, after Melania came out and said she has not had a relationship with Jeffrey Epstein. Taking a look at crude, we're seeing gains there. Gold coming down 1/3% as Futures hover near unchanged. That's it for Bloomberg Brief. Surveillance is ahead.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
This bull market has been battle tested.
The fundamentals have still remained very healthy.
Wall Street's figured it out. It's a buying opportunity. The market is highly skeptical that the ceasefire is real.
It feels like we're on the same kind of off-ramp here. That's pretty good for the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning and welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. Markets are waiting for Islamabad as delegations from Iran and the United States prepare for talks in Pakistan. The ceasefire remains fragile, but the president is frustrated by the lack of traffic in the Strait of Hormuz. On Truth Social, Trump said Iran is doing a very poor job. This is not the agreement we have, and it comes as a key license from the Treasury Department allowing the purchase of Russian oil set to expire this evening at midnight. And we'll see the war's impact on inflation data later this morning. Danny Berger, thank you for joining me. John and Lisa are off. So really, this is going to be the first check when it comes to data about how the war has impacted the economy.
It's true, and maybe that finally wakes the market up. Maybe it won't. Stocks are less than 1% away from where we started this whole conflict, but it is the first big piece of data that will capture the energy price ramping through March. Expectations, Anne-Marie, 0.9%. That would be the highest print since 2022. How much of that is reflected in corporate earnings looking forward? How much of that is reflected in markets for now? It is at least an equity market that has decided that the off-ramp to peace, that's the important thing, not achieving peace itself.
But at the moment, the rhetoric does not match the facts on the ground. ships are not going through the Strait of Hormuz like normal. And clearly the president is frustrated with that. There are going to be these negotiations, but you have to ask, what is going to be success for either side?
It seems like mixed messaging from this president. On the one hand, he says that negotiations are going well, and what the Iranians say behind closed doors is different than what they say to the public. But then you get what you pointed to, the president expressing his frustration on Truth Social and taking issue with this idea of a toll. I wonder where that leaves us through the Strait of Hormuz, because many people have pointed to the toll as being the obvious solution to this, that maybe the United States participates in it. If the president's not okay with that, what does it look like to reopen the strait?
Yeah, and I actually asked him about this a few weeks ago, and he said, yeah, I know they're doing it a little bit. This is what Khamenei said yesterday in a statement. We'll definitely bring the management of the Strait of Hormuz to a new stage. It's the same regime, different management. And for Iran right now, that is their only piece of leverage in these negotiations.
Right, why would you let that go? And again, it gets me back to the market pricing. Even if you do have some tankers going through the Strait of Hormuz, you're gonna get a toll charged. It seems like the only way to get through is to have bilateral negotiations with the Iranians. That still seems like it leaves us in a higher place for oil. Maybe not 100, maybe 80, but that still makes a difference for this market.
Yeah, at some point, will the futures market catch up to where actually the physical market is trading? This morning, we do have equity markets, futures relatively flat. This comes after, as Danny said, markets for the past 7 days have been on a tear, going higher. Euro dollar this morning, 117. 10-year yield, 430, trading within range. Then, of course, we're all going to be focused on crude oil as we head into these very high-stakes talks tomorrow in Pakistan. New York crude, WTI right now, 98.71. Coming up on the program, Michael Purvis of Tallback & Capital Advisors with stocks on a 7-day winning streak. Maha Yaha of the Carnegie Endowment for International Peace as President Trump demands the reopening of the Strait of Hormuz, and Krishna Gua of Evercore ISI on what today's inflation print means for the Federal Reserve. We begin this hour with our top story. President Trump demanding Iran reopen the Strait of Hormuz ahead of the peace talks this weekend. Bloomberg's Jumana Bersetchi joins us now from Dubai. Jumana, busy weekend for you ahead. Set the table for us for these talks in Islamabad.
Yeah, well, President Trump is saying that he's confident that these talks actually will be successful. He also said in an interview with NBC that the Iranians tend to be more reasonable when they're not in the public domain. And let's see whether this actually translates. And the big challenge here is turning what has been actually an ongoing ceasefire the last couple of days, very little activity reported overnight. So the ceasefire is still in place, into a more permanent cessation of hostilities, and whether the two sides can actually bridge a lot of the daylight that still exists between their relative positions. Now, what I will say is it's the early afternoon over here in the region, and there's still no confirmation yet that the Iranian delegation has landed in Islamabad. So we still don't know if they're actually there. This may change in the course of the next few hours, but it's important, of course, not only because they need to be represented, but in the case that the whole talks and all of these efforts get torpedoed by the events in Lebanon. And this has been extremely noteworthy over the last 24 hours or so, because the Iranian sides are saying that there is a possibility they don't end up participating in the talks unless a ceasefire is established in Lebanon. And this comes after a day of very heavy bombardment. Wednesday, Israel's heaviest day of airstrikes in Beirut and other parts of Lebanon as well. The death toll was very high. And on the back of that, you did see a lot of international community backlash. As a consequence of that, it seems as though the White House did put pressure on the Israeli Prime Minister. And so by the end of the day, the Israeli Prime Minister Benjamin Netanyahu did say that they were going to start directly negotiating with the Lebanese government, not with Hezbollah, but with the Lebanese government. So you could say that there are two tracks opening up here, but so long as Iran wants to bring the Lebanon portfolio into the bigger portfolio, I think is going to really overhang the potential outcome of negotiations that we get this weekend. In addition to, of course, the new issue that you and Danny were just talking about, which is Iran wanting to maintain sovereignty still over the Strait of Hormuz. If you look at how many vessels have passed through since the ceasefire, it's minimal, probably 10 in total since Tuesday. Effectively, they're still monitoring who and what vessels can get through this waterway, an outcome that is not acceptable for President Trump, as he suggested on his Truth Social post yesterday, and clearly not acceptable for Gulf states as well. So, expectations are low, but at least there is some optimism about where we could get to, and that the very worst case scenario of an even more destructive military escalation in the region has been avoided.
Jumana, thank you so much. And I look forward to your reporting this weekend. Of course, Bloomberg's Jumana Bersecci leading our coverage out of the Middle East. Here's the view on Wall Street this morning. Michael Purvis of Tal Bakken writing, the real thing hovering over the market is that we will still don't know the return on investment from the massive AI spend from the big tech companies. This is a bigger issue than the Iran war. Michael joins us now. Michael, why is that a bigger issue than what is happening right now in terms of a pretty massive conflict that is whipsawing markets every single day in the Middle East?
Well, let's step back for a second and just think about what's happened with the S&P 500 over the last 3 months. Year to date, as you were just pointing out, the market's basically flat. You look at that 8%, basically forward earnings are up 8% and PEs are down 8%. That's a very healthy sort of backdrop to consider the market there. And I think what's been happening with Iran and oil prices, and I'm not dismissing it, I think it creates all sorts of lingering issues for the economy and for various parts of the markets. But I think it's really going to be, it's almost in some ways more of a problem for the bond market than it is for the equity market. If the earnings are able to continue to grow at the index level, of course, every sectors are different, and single stocks are of course are different. That is sort of overarching. I think getting back to your question about the AI, I mean, look, if you look at price earnings multiples relative to their growth for the big, the Mag 6 or the big tech sector, those have been really compressed. But the problem is that effectively the PEs that these stocks are going to be have been rated on are going to be in I think, lower range until this massive CapEx spend, which is just simply historic, is able to demonstrate what the actual returns on that spending are. And I don't think we're going to get answers to that anytime soon. But my setup right now is that we have a problem with the big tech spend demonstrating sustainable high margin economics on the one hand, but the overall economy and the overall earnings profile for the broader index should be okay here coming through this.
Michael, I do just wonder, though, if we have a premium of something around $30 priced into oil, to what extent is that currently reflected in earnings expectations? Because that's, at the end of the day, a tax on every transportation, packaging, retail, consumer-oriented company. If we're paying 22 times forward earnings, is that an honest mark?
Well, I think it's a little bit more like 20 times right now. We do have a little bit of a discount by the standards of the last couple of years. Again, I'm just looking at Bloomberg consensus estimates, not my own there. But yeah, look, I think the question about higher oil prices being a tax on the consumer is a very real one. And I don't want to take too much comfort in the fact that a year ago we had this incremental tax through tariffs, and yet companies and many parts of the consumer were able to grind through that, just fine. I think it's helpful to look at that, but it's also, you don't want to be complacent in just saying, oh, there are, this is just going to be a replay and everything's going to be fine in Q2 and Q3 and Q4. I do think that there's going to be certain parts of the economy that are going to be hurt by this. And there's going to be certain parts of the economy, the energy sector, for example, that will have have at least a near-term benefit from these higher oil prices there. I think this story really one sort of cross-asset consideration here is that if you look at what happened to implied correlations across stocks in the S&P 500 through this move, they really did not surge. They surged a lot higher during other sort of volatility events there. And that to me is a bit of a tell that this story is really going to play out in a very sort of nuanced and diffuse way, as opposed to sort of, oh, earnings are categorically bad and equities are going to be dangerous, so we have to exit the equity asset class. The VIX really has not surged, and it has not surged because these correlations the cross-stock correlations have been so low.
I should correct myself. The Bloomberg forward PE ratio is 21, so we fall somewhere in the middle between you and I, Michael. So if that's overall cross-asset picture, you started out by saying this is a bigger problem for bonds than it is for equities. And we have heard calls, PIMCO and the like, saying maybe we should be buying bonds at this point because the ultimate impact will be weakening growth and a Fed that cuts, therefore bonds are attractive. Why do you think that this Treasury market is more challenged than that?
Well, in theory, the PIMCO argument, I think, is absolutely right. Like, we should be buying bonds at these elevated yields there, and if anything, the growth picture is negative, and the oil shock is transitory, and the supply shock there. But I think the broader picture here has been one, and this is, I think, sort of nuanced but very important, is that the move higher in yields since February has all been really been driven by a repricing of Fed policy here. And so what that, to me, I think you need to see, to get the, the back end yields back down to where they were 5 weeks ago, I think you really need to see that Fed policy pivot back to where it was in February. Longer term break-even inflation rates have not really moved up in any significant way. It's really about the Fed policy. So how do we get Fed to pivot back to where it was in February? You either need some really bad economic data over the next couple of months, and or, with a presumed new chairman coming in, you need him, presuming Warsh wants a lot of cuts as soon as possible, you're going to need him to convince his colleagues at the Fed to do that. And I think that's going to be sort of a tall ask to expect that in the near future.
It's gotten much harder, especially as oil prices are higher amidst this war. Michael, thank you so much for joining us this morning. Michael Purvis of Tallback and Capital Advisors. We want to get you an update now on stories elsewhere this morning we're watching. Here's your Bloomberg brief. The U.S. and Iran heading into high-level peace talks in Pakistan tomorrow. Ahead of the talks, President Trump warning Iran against charging fees on tankers going through the Strait of Hormuz. Israeli Prime Minister Benjamin Netanyahu agrees to have direct negotiations with Lebanon. Netanyahu says there is currently no ceasefire between the two nations and vowed to keep attacking the Iranian-backed Hezbollah. The Wall Street Journal reporting the talks will be preparatory at the ambassador level. And the Senate Banking Committee is no longer planning to hold a confirmation hearing for Kevin Warsh next week. The hearing to confirm Warsh as Federal Reserve Chair was scheduled for Thursday. Punchbowl's reporting Warsh has not submitted all of the necessary paperwork just yet. That's your Bloomberg brief. Coming up on the program, all eyes on the Strait of Hormuz.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to, but they're doing it a little bit.
Maha Yaha of the Carnegie Endowment for International Peace is coming up next. You're watching Bloomberg Surveillance. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. Markets this morning relatively flat. Of course, the markets are a little bit angsty on this Friday. The week doesn't end today. Of course, there's going to be these incredibly high stakes discussions in Islamabad over the weekend, led by Vice President J.D. Vance with the Iranians. And clearly it comes at a time when they're holding on to this fragile truce, but we do not see the uptick from ships moving in and out of the Strait of Hormuz, which is why oil is going to be in focus. NYMEX crude right there, you see it, $98.89, up 1% after a volatile week, with oil moving all around when it comes to the headlines coming out of the White House. Under surveillance this morning, all eyes on the Strait of Hormuz.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to, but they're doing it a little bit. I don't know. Look, their capability is a lot less than it was 2 weeks ago. And with every week and every day, frankly, it gets less and less. All I can tell you is they're begging to make a deal. So let's see what happens.
Here's the latest. President Trump demanding Iran reopen the Strait of Hormuz, warning Tehran against charging fees for passage. Bloomberg's Tyler Kendall joins us now from Washington. Tyler, very good morning to you. So what does success look like for the U.S. this weekend?
Yeah, hey, Anne-Marie, good morning. Well, at this point, we know that the Strait of Hormuz and reopening it is going to be the main point of success as President Trump ramps up these threats just 1 day away from these direct talks. The White House, though, maintains that the diplomatic efforts, though, are on track, but at least publicly, both sides appear very far apart when it comes to some of these key tenets, not just of the ceasefire, but of what could be in a longer-term agreement. Now, in these pair of posts, President Trump last night saying that Iran is doing a, quote, very poor job at reopening the strait because, as you've mentioned, at this point, we've seen very few ships ultimately transit through. Now, President Trump has previously floated this idea that both the U.S. and Iran could charge tolls when it comes to the strait, though the White House press secretary Caroline Leavitt did say earlier this week that that's not a definitively accepted policy position by the U.S. And in part, that's because tolls in the strait are actually raising legal questions under international law, as Bloomberg News has previously reported that the starting price by Iran appears to be $1 per barrel, likely paid in digital currencies by these ships that are transiting through. And I'll point you to a new analysis released by the Wall Street Journal earlier today that finds that it's going to be Gulf states in particular who are paying the brunt of these tolls if they stay in place. But whether they stay in place or not, Anne-Marie, this is just underscoring how a longer-term deal could really be tenuous, considering Iran, we know one of their top demands is that they want sovereignty over the waterway. Anne-Marie, at this point, that is a non-starter for the U.S. As you well know, there appears to be these big differences, including what the future of Iran's nuclear capabilities are going to look like. But again, officials say it's all going to come down to this weekend, setting the tone for the 2 weeks ahead.
Tyler, thank you so much. Bloomberg's Tyler Kendall in Washington. Joining us now is Maha Yahya, Director of the Middle East Center at the Carnegie Endowment for International Peace. Maha, the fact that they're meeting, is that basically the success of this weekend?
In short, yes, the fact that they're meeting, but I don't think any of us are holding our breath, so to speak. It's very clear that the maximum Iran is willing to offer does not meet the minimum of what President Trump is requiring. They're speaking at each other, not with each other. And a lot of the news that has come out over the last few days just points to that, between President Trump saying he threw the 10-point plan in the garbage, the Iranians saying the ceasefire includes Lebanon, then, I mean, we've seen a lot of confusion, strategic confusion, I would say. So we'll wait and see what happens, but I don't see these talks at least leading somewhere. It's positive, it gives everyone a breather for now, and we have to wait and see where this goes.
Do you think it's a breather to more escalation?
It could be. It could be. I mean, it's very clear that the IRGC, their demands of the Iranian regime, control over the Strait of Hormuz, as your reporter said, their nuclear capacity, negotiating over their partners and proxies across the region. I mean, these are non-starters for the United States, let alone Israel, which is a major player in this. The deal may be between the U.S. and Iran. That's where these are the two negotiating parties, at least up front. But the real partner in this is Israel. And already we've seen rumbles of discontent because, from what we understand, President Trump announced this ceasefire without real consultation with his partner, Benjamin Netanyahu. So it is a breather. We may see escalation again, but it is a breather for now.
And just on that note, Maha, one of the big areas, if not the biggest area of concern with this ceasefire on the side of the Iranians was Israel continuing to attack Lebanon. We learned yesterday that they're going to be holding direct talks. Wall Street Journal reporting this morning that they're preparatory talks. It's happening at the ambassador level. How big of a factor is this going to be heading into the weekend as a separate thing that could derail any hopes of a ceasefire?
Look, the talks themselves, I think, are important in the sense they really break a decades-old taboo. In the past, when Israel and Lebanon have negotiated, they've always negotiated via third parties, never face-to-face. So this is the first time that you have direct talks between a Lebanese representative and an Israeli representative. Will these lead anywhere? Not at the moment, no. It's very difficult to negotiate with someone that's bombing you. On one hand, the Lebanese government itself is trapped between a rock and a hard place because the decision to stop any kind of military activity rests elsewhere, not with the government. You have to bring Iran into the game. And frankly, for Benjamin Netanyahu, he has no interest in stopping the conflict in Lebanon. It's a war that is popular with his own base and with the broader, according to the polls we're seeing, the war is quite popular. Politically, he promised residents in the north that it's not about stopping the attacks. He wants to completely destroy and dismantle Hezbollah, something he promised in Gaza and hasn't been able to do with Hamas. So it's very difficult to see how they're going to, again, they will not go for a ceasefire. And Hezbollah is saying, we will not, we want a complete ceasefire. Iran is saying the same thing. So it puts everybody in a very murky situation. What we might see is, again, another breather in the sense that the conflict is ongoing in the south. The bombings has not stopped in the south at all. But we may see Lebanon spared another Black Wednesday, what we saw 2 days ago of an entire complete blitz, 100 airstrikes in the space of 10 minutes. It was absolutely terrifying. To this moment, it's more than 300 people killed, thousands injured, and to this moment, it just doesn't make any rhyme and reason beyond terrorizing the country.
Maha, thank you so much for your time this morning and some of your insights from the region. Maha Yahav, the Carnegie Endowment for International Peace. That last point, the fact that the Iranians are making Lebanon and Hezbollah a part of this, says to me, one, Iran is going to continue backing their proxies in the region, but also this is why it's so hard for the White House. This isn't like Liberation Day where Donald Trump holds all the cards. It's not even just the United States and Iran. It's the United States, Iran, Israel, Gulf partners, what's going on in Lebanon, very challenging.
It's what makes an off-ramp really difficult. And again, it's a market that maybe is overlooking that or is just focusing on the positivity. I saw this one fact from Marko Papic of BCA Research saying that the U.S. is only responsible for about 20% of daily strikes on Iran. The rest are Israel. Israel is a huge player in this.
Yeah, and that's why the president had to call him. If he wanted this ceasefire, he had to call Bibi Netanyahu. Coming up in the program, more on this conversation. Ellen Wald of the Atlantic Council with crude, diesel, and gasoline prices on the rise ahead of key driving season in the United States. Plus, Christina Aquino will join us with your morning movers. Rising AI demand fueling an optics rally. You're watching Bloomberg Surveillance.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Very good morning to you. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. Lisa and John are off today, and I'm joined by Danny Berger this Friday morning with equity futures doing relatively nothing. But of course, we need to remember we have had 7 days of gains, one of the biggest weekly gains for the S&P 500 we have had in over a year. When it comes to what else traders are looking at this morning, of course, we are counting down to the all-important CPI data at 8:30 Eastern. You do have 10-year Treasury yields up about a basis point, 4.30 on the 10-year. There's your board for 2 10s and 30s. And all eyes today and this week, going into the weekend, is going to, of course, be on oil. We have high-level talks happening in Pakistan. You have Brent crude at $96.45, NYMEX at $98.59. They are 2 different contracts. We should note that when you look at that. When you look at that spread, WTI is on the May contract. Brent is on the June contract. The point of the matter is, though, is that oil is ticking higher because the facts on the ground have not changed. Essentially, the Strait of Hormuz is still closed. And this is going to be a key negotiating leverage the Iranians will use at the table. But of course, the United States, especially off the president's Truth Social post yesterday, they definitely want to see the movement of vessels. So we're 3 hours away from the cash open. Let's get some morning movers with Christine Aquino. Hey, Christine.
Hey, Anne-Marie. All right, let's take a look at optics this morning. Those shares are hot. Lumentum up in pre-market, dragging its peers, Applied Optoelectronics and Coherent along with it. That is because of comments from Lumentum saying that demand from the biggest U.S. companies for its products is actually accelerating. The company said that it is booked solid. It is on track to fulfill its order books through 2028. And CEO Michael Hurlston said that CapEx for the biggest hyperscalers in the U.S. doesn't seem to have any end in sight. And it is, in fact, falling further and further behind in terms of being able to meet that demand. Not exactly a bad problem to have. Let's also take a look at shares of Taiwan Semiconductor, TSMC. That company reported a 35% increase in quarterly revenue, the equivalent of $35 billion. That is, of course, beating projections. Analysts see this as a sign that Middle East tension hasn't necessarily curbed demand for chips here. TSMC, of course, reporting its full results on April 16. Its shares are up more than 30% this year, actually beating some of its biggest customers, including NVIDIA and Apple. And of course, taking a look at Shake Shack as well this morning, those shares are higher in the pre-market as well. It received an upgrade from Mizuho to outperform from neutral and a price target of $120. Reminder that earlier this month, the company did affirm its guidance for first quarter and full year revenue. And Bloomberg Intelligence saying that its increased ad spending as well as improved execution will help it beat in the first half. Those results are due early in May. Anne-Marie and Danny.
Thanks so much, Christine. I actually love Shake Shack because they have a gluten-free bun.
Are they the only ones? I feel like that has to be rare, have a gluten-free bun.
Them and Chick-fil-A, but the Shake Shack bun's very good. So if I treat myself, it's a Shake Shack.
Do you remember the Beyond Meat guy, though, was saying that Maha's ruined all of this? He basically said our earnings are bad because people don't want meat-free items. They don't want gluten-free buns. They all just want, like, red meat because that's what this government is projecting out there.
Right, for some. Yeah, for some. All right, on our radar this morning, the U.S. and Iran ceasefire appears to be holding ahead of tomorrow's peace talks in Islamabad. Meanwhile, Israel vowing to continue strikes on Lebanon, given what's going on with Hezbollah. Ceasefire negotiations between the two countries set for next week. And President Trump demanding Iran open the Strait of Hormuz, calling the country's effective closure of the waterway dishonorable. In a separate post, the president pressuring Tehran to stop charging tolls for tankers to cross the strait. And the White House is warning employees against insider trading. An internal staff-wide email was sent following a series of well-timed and profitable bets around the president's military decisions in Venezuela and Iran. This is very interesting because we can all see the data about a number of massive trades that were put on at very interesting timings that paid off if you were to know potentially some information that the president was going to make in terms of Venezuela or Iran.
And I think the timing of this email is significant. It happened on March 24th, which was the day after all of this. The day before, to your point, the president had said that he had productive conversations with Tehran, a pause in fighting, stock surge, and 15 minutes before that, you had had huge amounts of trading. I think it's going to be interesting to see how this settles out with the likes of Polymarket and the other event betting kind of websites, because oversight for them is a little bit less, regulation is a little bit less. They've had problems before, and still, a lot of these trades have been frozen by these platforms who are trying to figure out exactly how to handle them. They want more liquidity. Why would you trade on these things if you're just going to get a bunch of insider trading get done?
Right, exactly. It feels like if you're just anyone, it's going to be stacked against you. I know there's been so much talk about this with Iran, but remember Venezuela? A user gained roughly $450,000 on Polymarket, perfectly timed bet regarding the arrest and capture of Nicolas Maduro.
It also keeps happening. It happened with the Nobel Peace Prize, too. Right before they announced the winner, you saw the contract surging for the eventual winner. It's these kind of sketchy things. Again, I get back to this idea of if you're a regular person, you don't have inside information, it looks less attractive to you.
And actually, it's becoming a campaign issue. Rahm Emanuel is talking about the fact that they need to ban anyone working in the government from betting on these kind of sites, Polymarket and Kalshi.
That feels pretty straightforward to me.
Yeah.
I feel like that probably wouldn't be controversial, you'd hope.
Probably not, but then Congress would need to vote for it.
True.
We'll see. All right, crude climbing back close to $100 a barrel. Saudi Arabia saying its output has been cut by more than 500,000 million barrels a day due to Iranian attacks. Bloomberg's Anthony DiPaola joins us now from Dubai. Anthony, thank you so much for joining us. We're talking about how this ceasefire is holding on, but we have seen attacks continue on key facilities in Saudi Arabia as well as Kuwait. What does the damage look like?
Good morning, Anne-Marie. Yeah, you're right. The ceasefire is there. It came in our time here in the Middle East on Wednesday morning, just about an hour or so before that deadline from Donald Trump that he was going to go after the power plants and other facilities in Iran, likely causing reciprocal strikes in the Gulf. But we did see a strike on a key pipeline in Saudi Arabia just hours after that ceasefire happened. That knocked out, hit a pumping station, knocked out about 10% of the flow capacity on that pipeline. And that pipeline is a major export route for Saudi crude. With Hormuz still blocked, the Iranians claim it's open, but you need to go to the Iranians to be able to get through it. So effectively it's blocked. We haven't seen tankers go through there. The Saudis therefore are using their cross-country pipeline that takes oil from their main fields in the deserts around the Persian Gulf all the way across the country to the port of Yanbu on the Red Sea, where it's able to access global markets. Already exports, the export capacity from that port is less than Saudi Arabia's normal exports to the market. And this attack, taking about 10% of that capacity off, risks hurting that even more. So that just highlights some of the risks to the infrastructure and some of the tenuous nature of oil markets right now as we really wait to see if Hormuz can reopen and if vessels can continue flowing through there to get that oil back to the market that needs to rebalance markets, Anne-Marie.
Anthony, thank you so much for your insight this morning. Bloomberg's Anthony DiPaola in Dubai. Ellen Wald of the Atlantic Council writing this morning, there is no maritime certainty and there has been no indication from Iran that ships will be allowed to transit near its waters safely. Ellen joins us now. Ellen, it's an excellent point because although you've heard the White House say there has been some uptick, even the president yesterday said he doesn't like what he's seeing and he doesn't like that they're going to be charging some tolls. Is that the big item on the negotiating table this weekend?
I think that combined with some continued, attacks, the attack on the East-West pipeline and the one on Kuwait have to be the very first orders of business because it's not even what the ceasefire, agreed to. This is not a ceasefire. If in fact ships cannot transit and areas including important oil installations in the Middle East are still being subject to drone attacks, whether it's from Iran or whether it's from Iranian proxies in other areas. It's basically the same thing at this point.
When Tehran says they're going to be charging tolls, and we have seen them charge tolls, I know one vessel paid about $2 million for a safe transit through the Strait. Is that acceptable to Gulf countries?
That's not acceptable to anyone. I mean, there are, international maritime conventions that countries agree to, which say that, you can't just charge tolls or you can't charge for passage of, in the seas and in areas. I mean, this is a very fundamental idea. This is not the Suez Canal. This is not the Panama Canal. The Strait of Hormuz was not constructed by a particular country. It doesn't even lie within Iran's territorial bounds. It's not even the same as, when you consider the Dardanelles, which is an area that, Turkey is on both sides of that waterway and does charge a very minimal, fee for ships that's generally considered to account for like Coast Guard services and safe passage. Iran's not doing anything here. It's just charging a toll because it can and to assert its dominance. And that's not acceptable in, international maritime agreements that we've had for, hundreds of years now.
Ellen, beyond the strait itself, as our reporter Anthony DiPaola was pointing out, you also had this attack on Saudi's East-West pipeline. How big of a threat are those pipelines and for Hezbollah, the other regional proxies of Iran? What does the threat look like there for that type of disruption to occur?
That's a huge issue, and it's been the kind of threat that we've been basically expecting and waiting for the entire war. Is that Iran will hit something that's vital for vital oil infrastructure in the region, and hitting the East-West pipeline, hitting a pumping station there, they've taken out vital oil infrastructure now, and that's not going to be repaired overnight necessarily. And so once you've got Saudi Arabia not really able to export out of the Persian Gulf, and now their other outlet is damaged. Plus, you've got Yanbu, their port on the other side, under threat from Iranian proxies like the Houthis. There's still a very, very serious threat to oil, to ships, to trade in this region that cannot be ignored. If in fact more severe, and the threat has even grown since the earlier days of the war, because these missiles are finding their targets now.
So given all those risks, Ellen, you still have an oil futures market by this time next year is pricing something around $75 a barrel. Do you think the risk is greater than that? Do you think there should be more of a premium to just how expensive oil and energy prices will be, considering either lasting scars or continued concerns on the battlefront?
Absolutely. I think that the price that oil is going for on the market does not reflect either the reality on the ground of what actual customers are paying for oil, and it also doesn't reflect the reality that it's going to take a while to get things back to where they were. I mean, we're not even, there's going to be a backlog of ships for at least a month, okay? And that doesn't even take into account the fact that, there is serious damage that's going to take months, if not on the LNG front, years to repair. And that's not being reflected in the oil market. Now, it's possible that over time, other producers will take up the slack, but that doesn't mean that oil is really being priced considering the damage that's done, the amount of time it's going to take to get things back to normal. If we get a true ceasefire, say today, and a diplomatic resolution, but as long as the IRGC remain in control and there's this possibility, they now know that they can charge this toll, they can stop traffic, and so if they're going to remain in power, this is always going to be hanging over the heads of any ship that transits the strait. There's going to be, if this stands, if this government stands, there's going to be a risk premium on oil that has to leave the strait for years to come.
Well, Dr. Sultan, in a LinkedIn post this week, said the final cargoes that transited the Strait of Hormuz before the conflict are now arriving at their destinations. This is where the paper-traded markets are meeting physical reality, and the 40-day gap in global energy flows is truly exposed. Ellen, at the same time, we're supposed to have this evening at midnight a key waiver expire for purchases of Russian crude. How challenging is the energy shock going to get? How much more acute is it going to feel for Asian countries?
I think it's going to feel more acute unless they just decide to defy this waiver and continue to purchase from Russia, or the Trump administration could decide to renew it. Although, that's a card that they hold. If they decide not to renew that waiver, that could help put additional pressure on Iran to make these changes. Now, I don't think Iran is going to do that because this is Iran's final card that it holds, and so Iran is not going to let that go without a fight. And so I do think that the market, the paper market, the market we see on our computers every day, that's not reflecting the reality of what's about to hit Asia.
Ellen, thank you so much for your time this morning. Ellen Wald of the Atlantic Council. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief. Russia and Ukraine agreed to a ceasefire from Saturday afternoon through Sunday to mark Orthodox Easter. Russian President Vladimir Putin made a similar gesture of an Easter truce last year, during which Russia and Ukraine accused each other of breaches. China's exports of electric vehicles jumped to a record high in March as the global energy shock renewed interest in EVs. Overseas shipments jumped 140% from a year ago, with BYD accounting for about 1/3 of the total. And Treasury Secretary Scott Bessent and Fed Chair Jerome Powell warning Wall Street that Anthropic's latest AI model could usher in a new era of cyber risk. Regulators fear Anthropic's Mythos system is powerful enough to identify and exploit major vulnerabilities across the financial grid. And that's your Bloomberg Brief. Up next this morning, owning opportunity.
The bond market looks pretty good. It's held in phenomenally well over the last 6 weeks, and investors don't want to miss this opportunity the way they did last year with Liberation Day.
Krishna Gua of Evercore ISI joins us next. You don't want to miss that conversation. You're watching Bloomberg Surveillance.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, welcome to Bloomberg Surveillance. A lot of risk this Friday morning, although obviously we're not seeing that in the futures market. First, the market needs to digest CPI data, very important inflation data coming up because we will have the impact of the higher oil prices due to the war, part of this CPI data. And then on top of that, it's not really a weekend. It is a working weekend given the fact that we have incredibly important discussions taking place in Islamabad between the U.S. and Iranian delegations. Under surveillance this morning, owning opportunity.
Investors are underallocated to fixed income. They don't want to miss this backup in yields. They want to get into the bond market. It starts with where is fair value. I think the Fed is in hibernation mode. I like that. The bond market looks pretty good. It's held in phenomenally well over the last 6 weeks, and investors don't want to miss this opportunity the way they did last year with Liberation Day.
Here's the latest. Yields holding steady as investors await fresh inflation data for clues into the Fed's next move. Krishna Gua of Evercore ISI writing, the market is now discounting a clear skew to one cut from the Fed this year. Krishna joins us now. Krishna, I like what Bob Michael of JP Morgan said to us yesterday. The Fed's basically in hibernation mode. Do they need more information right now?
Oh, sure they do, and they're in no rush whatsoever. Look, I think the baseline is that the Fed having got some reassurance from the last labor report that the labor market is okay, is going to spend the next roughly 6 months policing the inflation shock from oil, making sure that it's not seeping into core inflation more than a bit, making sure it's not contaminating expectations or wage price setting behaviors. And if it validates that, and if it validates underlying disinflation is still coming through as they expect, then and only then they can turn back to consideration of a rate cut.
Are you confident that that scenario can play out, Krishna? We're going to get CPI in just under 2 hours' time. You also have PCE data already from February showing a persistent uptick in inflation. Do you think it can remain well-behaved despite the disruption to energy markets?
So I think the answer to that is yes. Am I 100% certain the answer to that is yes? No. And if I was a central banker, I would go out of my way to be wary, careful, et cetera, et cetera, et cetera. But look, even the core PCE print that we got yesterday actually wasn't so bad. Why? Because the heat was in goods. We understand why goods are strong. It's mostly tariff pass-through with a little nudge up in that computer software and accessories category from spillovers from AI CapEx. But the real question is core services ex-housing behaving, or is it getting stuck? And we actually got a quite reassuring soft print on those services inflation data yesterday. Now, of course, when CPI comes out today, everything will be swamped by the initial headline inflation shock from energy. The question, though, is 6 months from now, is that turning out to be a one and done or something more serious?
We do, though, keep getting these supply shocks to the economy, and everyone is this one-off. It's something that Michael Purvis of Talbachen has discussed with Anne-Marie and myself, that maybe it is just more of a feature of this American economy, the fact that we are fragile enough to continue to get supply shocks. Should there be some level at which we just, not forever, but for a long time, just price in higher inflation that is just a feature we can't escape?
So I don't think it's a feature of the fragility of the US economy. I think if you wanted to make that argument, the argument you'd make is that the world in some more structural sense has become more geopolitically unstable, more vulnerable to a range of shocks, whether they're conflict-related shocks, indeed whether they're pandemic-related shocks, trade-related shocks. And it's from those that you might get a higher frequency of supply shocks than we've been used to in the past. I think that's certainly something we should take seriously. Is it going to mean that inflation remains, 3% or higher than that going forward? I don't think so in the base case. Though again, I would police it if I was the Fed. I think it's more likely that inflation over the sort of medium to long haul is a bit more volatile rather than averaging a lot higher under this regime.
Can a Kevin Warsh come in and do nothing?
Well, I think Kevin will be angling to get to a point where he can justify cutting rates. That's not the same thing as cutting rates get out the door. I think Kevin's posture will be that, look, we have faced a series of serious inflation shocks on a backward-looking basis. That was the pandemic, then the tariffs, and now oil. But looking forward, we have the AI shock unfolding, which is going to lift productivity and is going to act as a force of disinflation. So I think Kevin is going to try to get us to look forward. After all, monetary policy is supposed to be forward-looking rather than look backward. And really the key debate and the judgments that will have to be made will be about trying to get the right balance between that forward-looking perspective, which should, in my view, incorporate AI productivity and disinflation, and the necessary data dependence to really understand whether these shocks that we have experienced have just accumulated to a point where they're starting to corrupt the underlying inflation process.
Just quickly, Krishna, do you think he is going to be confirmed in time for May 16th?
It's looking dicey at this point, right? We've had some media reports over the last 24 hours suggesting that a sort of tentative 16th April, that would have been next week, hearing is now not going to happen, and there's no date yet set for when Walsh will have his hearing. Why is that? Well, very obviously because they haven't resolved the underlying issue, which is the DOJ has not buried its investigation into Powell, and therefore Tillis won't release the whole on Walsh. There's no point really him coming to do his hearing. It looks to me like it's increasingly likely that Kevin won't be ready, confirmed in time to take over on May 16th, and that separately, even if he's confirmed at the last minute, gets in the door on May 16th, it feels to me increasingly likely that Powell is going to stay on for a period of some months as a regular governor.
Wow. Krish Nagua, what a call there of Evercore ISI. Thank you so much for joining us. Coming up next, Tiffany McGee of Pivotal Advisors, Michael Zezas of Morgan Stanley, David Tinsley of Bank of America Institute, and Bob McNally of Rapidan Energy Advisors, as we do see oil ticking up higher today as we head into those talks tomorrow in Islamabad with the Strait of Hormuz effectively still closed. You're watching Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
CPI will give us the first look at how these higher energy prices are seeping out into the broader economy.
This is a big hit to consumers and households and businesses.
We don't actually think these increases in oil prices will have all that big of an effect on things.
We're not seeing sustained inflationary pressures.
We in the markets accept that a 2% inflation target is a myth.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning and welcome to the second hour of Bloomberg Surveillance at 7 o'clock here in New York City. Markets are waiting for Islamabad as delegations from Iran and the United States prepare for talks in Pakistan. The ceasefire remains fragile, and the president, though, by the frustration. He's frustrated with the lack of traffic in the Strait of Hormuz. On Truth Social, Trump said Iran is doing a very poor job. This is not the agreement we have. Of course, it comes as well as a key license from the Treasury Department allowing the purchase of Russian oil is going to expire at midnight. We'll see the war's impact on inflation data later today, Danny. This is going to be really important inflation data, given the fact that it includes all of the spikes we've seen in energy prices because of the war in Iran.
It's the first time we're going to get a key piece of economic data that has that. It also follows February data, PCE, which we learned this week, which was sticky before the war even started. So it's a difficult way and idea to take risk this morning, because it's not even just that. What if everything looks good and you load up the boat on risk and you start to short treasuries or whatever you want to do, and then all of a sudden talks fall apart on the weekend? How do you position for something like that? It is incredibly complicated, and there are so many factors going into it.
I mean, I've been even thinking about what if one side doesn't show up this weekend? This is obviously a group of people that there's no trust in this relationship. There's never been trust in this relationship. And the one thing the United States really wants is the one piece of leverage the Iranians have. And I don't see any indication yet that they're willing to give up their stronghold on the Strait.
The point plans are so far apart at this moment. And add to that, you've been also talking about this morning, Anne-Marie, is the fact that you're also going to have Israeli and Lebanese delegations meeting. They're talking at the ambassador level, according to the Wall Street Journal. And that has been a key reason why Iran has said that the U.S. has violated the ceasefire, that Iran continues to attack Lebanon. So it's not even just the Iranian talks with the United States, it's also that too.
It's multiple parties. I think Maha put it really well this morning from Carnegie Endowment. She said the maximum of what Iran is willing to offer is not the minimum of what the U.S. will accept, which is why the fact that they're just meeting might actually be the success of these negotiations this weekend. So markets this morning, of course, they are waiting for whatever comes out of these talks this weekend, but they're pretty much pricing in this ceasefire. You have equity futures this morning relatively flat, but we've had 7 days of gains on the S&P 500. U.S. Treasury yield up slightly, 4.28%. And New York crude this morning, $98.11. Oil is going to be the focus when it comes to these talks this weekend. And if we see any inclination from the Iranians to start allowing more free flow of oil vessels and cargo through the Strait of Hormuz. Coming up this morning, Tiffany McGee of Pivotal Advisors as a relief rally runs out of steam. Michael Zezas of Morgan Stanley ahead of U.S.-Iran peace talks, and Bob McNally of Rapidan Energy as Tehran tightens its grip on Hormuz flows. We begin this hour with stocks flat and crude climbing as President Trump unleashes new threats to Iran over the Strait of Hormuz. Bloomberg's Jumana Bersecci joins us now from Dubai. Jumana, thanks so much. And I know you're going to have a very busy weekend ahead. What can we expect?
Yeah, well, the challenge here is turning what has been quite a fragile truce, but it is still largely being upheld. And I should say that as of Friday, there have been no reported incidents of strikes either way and anywhere in the region as it pertains to the regional ceasefire. So it is being upheld. But the challenge, of course, is to take this temporary truce and turn it into a longer-term permanent cessation of hostilities. And now we know that the U.S. delegation is on their way or reportedly has arrived in Islamabad in the early hours of this morning, led by J.D. Vance. Unclear at this point whether the Iranian delegation has actually landed. There hasn't been confirmation yet, though overnight reports suggest that they will be represented by the Speaker of the Parliament, that is Mohammad Ghalibaf, who's been very vocal over the last couple of weeks on social media about their intransigence and really reaffirming some of those key points that they've been insisting on, including the right of sovereignty over the Strait of Hormuz, and then the Iranian Foreign Minister Abbas Araghchi as well. Now, one of the big questions that you and Danny were just talking about is whether the Lebanon situation is going to torpedo the discussions. And I think what has become apparent in the last 24 hours is the White House and President Trump himself did want to see a de-escalation of sorts on the Hezbollah front in Lebanon, especially after that day of extremely heavy bombardment on Wednesday, which led to the deaths of over 300 people in Lebanon. And so yesterday evening, we got word from the Israeli Prime Minister saying that they are willing to start direct discussions with the Lebanese government. And to be clear here, this is the Lebanese government. It is not Hezbollah themselves, to talk about the further disarmament of Hezbollah and a potential longer-term security arrangement. That seemed to be enough in order for the U.S. to push forwards with the negotiations. The question is it enough for the Iranian side? They are maintaining that the regional ceasefire has to include Lebanon as well. I think many in Lebanon would say that they have the right to actually assert their own sovereignty in this situation. So one thing to bear in mind, the other big topic, of course, is the Strait of Hormuz. Overnight, President Trump saying that Iran are not keeping to the terms of the ceasefire, which is an unconditional opening of the strait, free passage for all vessels. They shouldn't be charging a transit fee, which is what reportedly they are doing. And so the question here is whether we can come out the other side of these negotiations with that free, unconditional passage for vessels through the Strait of Hormuz and some of the other terms that the U.S. were insisting on even before the war started, including minimal enrichment, possible retrieval of that enriched uranium stockpile, and Iran really ceasing to shore up and to provide support to some of their proxies in the region, crucial to the Hezbollah question as well. So there's still a lot to get through in the coming days.
Jumana, thank you so much. Bloomberg's Jumana Bersachi in Dubai. Here's the view from Wall Street this morning. Tiffany McGee of Pivotal Advisors writing, markets are sensitive to any changes in energy flows or escalation risk. The recent move in equities reflects relief around geopolitics, but not a full resolution. Tiffany joins us now for more. So, Tiffany, when it comes to the two key points going into the weekend, we have inflation data at 8:30, and then, of course, these talks on Saturday. What do you think the market's going to be more focused on?
Well, I think, a good example of this is we can look at what happened yesterday, right? And so, yesterday looked like a strong day on the surface, but the details kind of really tell a more nuanced story. So you had stocks higher, but yields were also moving up a little over like 4.3%, and oil back to near $100. And so this really wasn't a clean risk rally at all. It was really more markets adjusting to uncertainty and not pricing it away. So I think as we kind of go into the weekend, we still have a lot of uncertainty. So, that's something that we really need to continue to watch.
How much of all of this, Tiffany, is just positioning? This is something I've been asking constantly over the past week because the market moves, yes, on ceasefire hopes, but otherwise have been odd. For example, software stocks plunged 5% over the past 3 days alongside energy. There's no logical reason for software to be falling in a ceasefire unless it's just hedge funds re-upping on their short positions just because this allows them to go back to the bets they had before. So how much of this market is not really being priced on fundamentals, but is just simply positioning?
Well, I think it's a combination of both, and so listen, we've got, I think that we are really in a headline environment. And so that's really moving the markets. We can look at even what's going on over the past few weeks with the price of oil, with the fact that even about 2 weeks ago, we saw all this volatility in the market, but yet earnings expectations continue to increase. And that's one thing we'll also kind of be looking at heading into like earnings season. We are really in a fundamentals-driven market right now. It's really not about hype anymore.
Bank of America's Michael Hartnett is out with a note this morning saying that investors should flock into commodities for the next few years. He thinks that a surge in commodities is going to last for that a few years, and that in a portfolio, it might even supplant popularity around equities, that this becomes a big chunk to diversify away from bonds. Do you think commodities deserve that big, shiny place in a portfolio as well?
Listen, so our clients are institutional investors, and so diversification is really the key for us. When we think about positioning, we're really focused on our clients' strategic asset allocation and then making those tactical moves. Commodities do have a place in a portfolio. We like to really invest in real assets. We like a combination of real assets, infrastructure, REITs, commodities. All of those things act as a diversifier to traditional stocks and bonds. And so, yeah, I definitely do think that they have a place in the portfolio.
What place does gold have in the portfolio, Tiffany? There should be geopolitical angst, concern about what the Fed is going to do. It seems like a good time to be piling into the precious metal, but it's been trading a lot just like a momentum trade.
It has. And so, when I think about how we position portfolios for our clients. Again, we set that strategic asset allocation first. Gold is always a portion of our client's portfolio, but we do so through a fund structure where we have exposure to other metals as well. So we don't have a ton of direct exposure to gold, but that's how we like to play it. We like to play it in a more diversified position.
So if there aren't enough risk headlines, today was CPI, talks and negotiations over the weekend. Next week, we really get into the earnings season in earnest. It'll kick off with Goldman Sachs on Monday. Tiffany, what are you looking out for? What signals are you hoping to hear from the big banks in order to understand where we are in this American economy and in the financial sector?
Yeah, so I think as we head into earnings season, I think the numbers really matter, but the messaging matters more. So we're watching a few things. We're definitely looking at margins. Can companies really absorb the higher energy costs, or are they passing them through to their customers? We're also, on the AI front, looking for that AI payoff. So, we know AI is driving growth, but are we seeing real returns yet? That's really important. And so we'll also be paying attention to guidance. And so, with much uncertainty, right, we're in this period of uncertainty, forward guidance really matters more than the quarter to us. And also we're looking at consumer sensitivity. Are higher energy prices starting to impact demand? So it's really like a show me earnings season, not a tell me earnings season.
That's a good way to put it. Tiffany, thank you so much for joining us this morning. Tiffany McGee of Pivotal Advisors. Let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg brief. The U.S. and Iran heading into high-level peace talks in Pakistan tomorrow. Ahead of the talks, President Donald Trump warning Iran against charging fees on tankers passing through the Strait of Hormuz. Israeli Prime Minister Benjamin Netanyahu agreeing to direct negotiations with Lebanon. Netanyahu saying there is no ceasefire between the nations and vowed to keep attacking Iran-backed Hezbollah. The Wall Street Journal reporting the talks will start at the ambassador level. And the 4 astronauts of NASA's Artemis 2 are on their way home. Their mission broke records, taking them further from Earth than any humans had ever been, as they got closer to the surface of the moon than any astronaut in more than half a century. Artemis 2 is expected to splash down in the Pacific Ocean tonight, and I cannot wait to hear what those astronauts have to say.
I always feel bad for them when the cameras come out and they're expected to be on camera right when they get off, because they can barely walk. They've been without gravity for a while.
We should give them a little bit of a moment, a breather, see their families, maybe shower, have something to eat. But it's so cool. These pictures are incredible.
It is really, really cool to see the other side of the moon in such high definition, to see the Earth. It's always a bit humbling to be like, there are so many horrible and crazy things happening in the world, but here it is from like the look back from Earth, what it really is, just a little blue orb.
Well, we look forward to their journey home. That's your Bloomberg Brief. Up next on the program, a fragile peace.
This is a fragile truce. Ceasefires are fragile by nature. We have seen an uptick of traffic in the Strait, and I will reiterate the president's expectation and demand that the Strait of Hormuz is reopened immediately, quickly, and safely.
Michael Zizis of Morgan Stanley joins us next. You're watching Bloomberg Surveillance.
politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Good morning. Welcome to Bloomberg Surveillance. I'm Anne Riverdern. Alongside Danny Berger today, Lisa and Jonathan are off. Under surveillance this morning, a fragile peace.
This is a fragile truce. Ceasefires are fragile by nature. Of course, we want to see the ceasefire effectuated and abided by all parties as quickly as possible. We have seen an uptick of traffic in the Strait, and I will reiterate the president's expectation and demand that the Strait of Hormuz is reopened immediately, quickly, and safely.
Here's the latest. President Trump putting pressure on Iran, demanding Tehran reopen the Strait of Hormuz ahead of peace talks in Pakistan tomorrow. Bloomberg's Tyler Kendall joins us now. So, Tyler, when is J.D. Vance set to arrive in Pakistan, and what does it look like in terms of success for this administration?
Hey, Anne-Marie, good morning. Well, Vice President J.D. Vance is making his way over to Pakistan for these talks to start tomorrow. He'll be accompanied by Special Envoy Steve Witkoff, as well as the president's son-in-law, Jared Kushner. Though people familiar with the matter do tell Bloomberg News the fact that the vice president is now taking the lead in these talks may indicate a more cautious approach as the U.S. looks for a potential off-ramp. The fact that the talks are happening is considered to be forward progress, considering that the demands, at least publicly, from both sides appear very far apart. And the White House does maintain that these talks are on track. Even after yesterday, it appeared that they had hit that potential roadblock over Israel's operations in Lebanon against the Iranian-backed militant group Hezbollah. Now, the Israeli Prime Minister Benjamin Netanyahu said earlier today that those operations in Lebanon will continue, though it does appear that the pledge of direct talks between Israel and Lebanon have helped to smooth the path forward. But we still know there is a lot that has to get done, not just for a longer-term agreement, but to make sure that this 2-week ceasefire is upheld. Because if President Trump's posts last night on Truth Social are any indication, the U.S. is going to ramp up the pressure to ensure the reopening of the Strait of Hormuz. Because, Anne-Marie, at this point, it doesn't appear that Iran is going to let up that leverage, though there were some new headlines this morning breaking, including that a Russian flag tanker has appeared to exit the Strait and that 7 additional Malaysian flag tankers are set to depart as well. But still, we are only at a fraction of the total vessel traffic where we were before the war began.
It's pay for play. Bloomberg's Tyler Kendall, thank you so much for joining us. Joining now to continue the conversation is Michael Zezas of Morgan Stanley. So you say, good morning, Michael.
Morning.
Thanks for joining us. So you say you have to stay humble,
yeah,
and it's a scenario-based approach investors should be looking at. So walk us through the scenarios you're thinking about as we head into this weekend.
Yeah, so again, I think it's really difficult to understand what happens in the next 24, 48, 72 hours. But if we think a little more medium term, a couple weeks out, I think the incentives are pretty well aligned across most actors to at least have Hormuz opened in some meaningful way. Complete return to normal, that part's really unclear, right? But if you're getting some oil and some natural gas flowing back through in some meaningful way, then our commodity strategy team, led by Martin Ratz, has done a really wonderful job laying out the price arrangements across different. A full normalization, of course, you maybe could get something, in the $60 to $80 a barrel. We might be living more in this partial reopening scenario, $80 to $100 a barrel. And of course, if the whole thing breaks down, and we thought it broke down sustainably, then the demand destruction point that you could go to is $120, $150 a barrel. But if we're in that kind of 80 to 100 range, even if you sort of have this fragile piece, fragile equilibrium, that's the type of thing that we think is still consistent with positive U.S. economic growth, the equity markets rallying back, even if it is suboptimal relative to the conditions you had coming into the conflict.
Why do you think, though, there is this consensus that the Iranians really are ready to open the strait and have it be normal? Because this is their only piece of leverage with Washington.
Yeah, I mean, I don't know if there's a consensus that everyone's ready for it to be normal. I mean,
Well, look at the price of oil, and it looks kind of...
Yeah, well, I think that's where price matters quite a bit, right? So normal, if we define normal as what existed before the conflict started, then I think you'd expect to see prices of oil be much, much lower than they are right now. So the premium of where you are right now, and maybe, you know, even if you get down to something like $80 a barrel, that premium reflects potential that you're only getting partially reopened and probably this kind of long-term overhang of risk, right? The U.S. and Israel might deem it to be in their interest periodically, if Iran is starting to rebuild militarily, to restart conflict. And so if you're going to have this kind of lingering risk and lingering uncertainty of military conflict, until you sort of rewire supply chains around that, you remove Hormuz as a choke point, there's always going to be this lingering premium that would go on top of what would otherwise be normal, and that would be, you know, quite a bit lower prices than what we're seeing today on oil.
Just be clear, I want to make sure I didn't mishear you when you were saying that $100 a barrel, that's something that the American economy could live with. We could still have strong economic growth. Companies would be okay. Is that your estimation?
That's what our economists say. You're sort of starting from a point right now, okay, at least over the course of the rest of this year, where the U.S. consumer is strong enough. There's enough CapEx flowing through the economy because of secular trends, AI industrial build-out, for example. And frankly, one of the trends that's reinforced by this dynamic, which is supply chain realignment and companies having to spend to sort of immunize their supply chains from various choke points, Hormuz just kind of being one of them. So with that much CapEx flowing and that much consumer spending going, the dynamic here where the economy wouldn't be strong enough would be if oil prices go to the point where it creates like real demand destruction, not just on people driving, but also the cost of that starts to sort of seep into other areas of the economy. Our economist assessment is that you've got to have oil above $120 a barrel for several months before that would happen.
Is there not just some, though, psychological dynamic to seeing above $4 on average at the pump, that you get a consumer that starts to pull back, that it changes consumer behavior? Or is that still not enough?
Well, it is. It's just it's not enough to actually reduce growth in a meaningful way down, or substantially.
What about in pockets of the economy, like consumer companies or things like that? Are there pockets of the economy that start to look weaker?
Well, it certainly exacerbates the trend of the K-shaped economy, right? Because if you're talking about these sort of basket of goods that different types of consumers have, gasoline obviously makes up a much bigger portion of the consumer bucket on the lower end of the economy. So that does matter quite a bit. But in the aggregate, if we're talking about GDP and can we continue to grow, and the CapEx that's sort of boosting that, for example, the AI industrial build out, I think it's about 25% of growth this year, and we think that's sort of relatively immune to what's going on right now, that is still going to push GDP.
What about, because I know you have some thoughts about the midterm elections.
Yeah.
Could Republicans withstand $100 oil? Maybe the economy can, but...
Yeah. I mean, listen, the prediction markets say no. The polls suggest the same thing. So investors do have to be thinking about a midterm election dynamic where congressional power shifts into the Democrats' hands.
Even on the Senate, you think?
Well, again, I think that's more of a toss-up. But the House of Representatives, again, if you look at polls and prediction markets, would suggest that it's a likelihood at this point that Democrats are taking over. I don't know that there's much of a functional, again, just purely from the investor's perspective, that there's much of a functional difference between whether the Democrats get the House or the House and the Senate. Or said differently, what policy changes come from either of those outcomes that would affect markets? And we've been arguing the answer is really not that much, because a lot of the policy dynamics we're talking about right now, including what's going on with Iran, it's purely flowing through executive power. So maybe it sends a soft signal about 2029 and future policies, but I think that would be far too speculative to actually change investment strategy around.
But if the administration wants to get through some more fiscal spending, they would have to do it before November.
Yeah, very likely, very likely.
Because they have a defense budget, a higher defense budget they're looking for.
Yeah, very likely. And therefore, that's probably what's going to happen. And again, sort of relieves the pressure on the midterms to catalyze some other outcome that the market might be concerned about or looking for.
Could the bond market handle more fiscal spending for this administration? We're talking about $1.5 trillion defense budget.
Yeah, I think so. I mean, listen, I think it's not that there is some a magical number or limit that the bond market can or can't handle. So I think in the aggregate, the numbers that we're talking about spread out over a 10-year basis are not all that meaningful. But I mean, certainly we don't seem to have a set of policies, or we're not on a policy trajectory that's specifically aimed at fiscal sustainability or changing deficit to GDP in a meaningful way. Perhaps it is sort of leveraging the idea that we're going to have better growth in the future, maybe driven by productivity, driven by AI, but not this sort of proactive approach by Congress to address it.
Michael, thank you so much
Thanks
for
so much.
your important work this morning. Michael Zezas of Morgan Stanley, especially as we think about the scenarios that could come out of this weekend with these talks happening in Pakistan tomorrow. Coming to the program, David Tinsley of Bank of America Institute on the sharp jump in consumer spending. Plus, Christina Aquino is back with us this morning. ServiceNow falling after a downgrade from UBS. The stock is down more than 1%. More on that story next. You're watching Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. It is Friday, 7:30 a.m. We're just an hour away from CPI data. I'm joined by Danny Berger. John and Lisa are off today. And Danny, we have equity futures just relatively flat. But you have to remember, we've had 7 consecutive days to the upside, even amidst this war right now, where the truce is sort of there. You see an off-ramp both sides maybe want to take. They are meeting, which someone told me last night, the fact that they are meeting is a success. But at the same time, we really don't understand how long this can hold for, and is it really credible?
It's a market that is just happy enough with a path to peace, not full-on peace. It is remarkable if you look at where we are. We are down now only 2.2% from all-time highs. On the year, we're only down 0.3%. It's a market that's been extremely resilient. I wonder if that will change today, Anne-Marie, because it's the pattern we've seen for this market. You get a rally on Monday and Tuesday, and you start to weaken as the end of the week comes through. We haven't seen that this week, to your point, of 7 days of a rally, but will CPI change that?
And there's really no weekend this weekend because these talks are really important tomorrow. Of course, in the bond space, nothing really changing here. We have 430 on the 10-year yield. Again, this will be important in terms of what happens with the CPI data. And what does the Fed do with that CPI data? Do they look through this inflationary shock we may see because of what is going on with oil prices and potentially a question mark about how this all ends? And that is why this board is so important right now. Brent crude and WTI. Wow, look at WTI for the June contract. We are sub $90. This is something this White House would like to see.
It's pretty remarkable considering the lack of traffic going through the Strait of Hormuz, considering all the risk events on the weekend. And then if you look further out in contracts, we easily get below $80 a barrel before this time next year. It's something Ellen Wald was talking about, that there does remain, and I'd say you've been great on this too, Anne-Marie, there does remain this disconnect between physical markets and paper markets.
Absolutely. It's a complete disconnect because the Strait of Hormuz is still essentially shut. I say controlled by Iran because they are letting some vessels through, but far cry from the normal flows we saw before the start of this conflict. All right, we're 2 hours away from the cash open. Let's get you some morning movers with Christine Aquino. Hey, Christine.
Hey, Anne-Marie. All right, let's take a look at optics shares this morning. Still going strong ahead of the market open. That is because of comments from Lumentum saying that demand for its products from the biggest U.S. tech companies still accelerating. That company also saying that they are booked solid. They are on track to fulfill order books through 2028. CEO Michael Hurlston actually saying that CapEx from hyperscalers does not seem to have any end in sight. It's falling further behind in fulfilling demand. Not exactly a bad problem to have for the company. Tell you what, though, a company that's not doing too well in the pre-market, ServiceNow, those shares are down more than 1% ahead of the cash open. That comes after a downgrade by UBS to outperform with a $100 price target. Those shares actually fell to a 3-year low this week because of lingering concerns over AI disruption in the sector. We will get a full picture of the extent of the damage from that narrative when ServiceNow reports its results on April 22nd. Another company that is being challenged in the pre-market, Sweet Green. Well, actually now it's in the green at the moment, but we have seen a little bit of insider purchases this week reported by Goldman Sachs, purchases of more than $3 million. Those shares, though, have also been having a hard time this year. They're down 17%. They reported comparable sales falling 11% in the fourth quarter. That is the biggest decline since it went public. Higher lettuce sales, or higher lettuce prices, I should say, also factoring in February. So we'll see how that shakes out for its results when that comes in early May. Anne-Marie and Danny.
Thanks so much, Christine. I like how Christine's talking a lot about food at the end of these markets. I have to say, I'm not really a fan of Sweet Green, but haven't they gotten a lot of flack for skimping on chicken and things like that for people's salads that are like $20 plus?
Yeah, to the point where I don't know if you saw they launched this whole ad campaign of like, get rid of your protein bars. Here's this bowl of just chicken, and that's what you should be eating for your protein. So I feel like they kind of picked up on that. I don't know if it's helped them, but.
Oh, interesting. All right, well, stock's up today. On our radar this morning, U.S. and Iranian delegations meeting for high-level peace talks in Pakistan tomorrow. President Trump reiterating his demand for Tehran to reopen the Strait of Hormuz, calling the near closure, quote, dishonorable. And Israeli Prime Minister Benjamin Netanyahu agrees to direct negotiations with Lebanon. Netanyahu saying there is not currently a ceasefire between the two nations and vowed to keep attacking Iran-backed Hezbollah. And Treasury Secretary Scott Bessent and Fed Chair Jay Powell warning bank CEOs of Anthropic's new Mythos AI Regulators fear the model is capable of exploiting major vulnerabilities across the financial grid. Now, this story is really interesting, I think really important. Two things that struck out to me immediately. First off, Bessent and Powell are having a meeting, and they're somewhat getting along, even though we see the president jawbone Powell all the time. And two, how dangerous and concerned are they about this AI that all the bank CEOs were summoned to Washington?
And it's not just them concerned. Anthropic itself is concerned. This is the first LLM that they're not rolling out to the broader public, that they're being selective because they basically saw this thing is so powerful, it can exploit all types of cyber vulnerabilities. This was from the New York Times article about this. I thought it was really interesting. So during safety tests for Mythos, an Anthropic research got an email from Mythos itself while he was eating a sandwich in the park. It was a surprise because the model wasn't supposed to be online. It had broken out of its test environment and then went on to brag about breaking the rules and attempted to cover its tracks. We're getting closer to this land of agentic AI, and it's kind of like, cool, so we'll boost productivity by 10%, but maybe like bring a complete downfall to human civilization.
Right, so robots just completely taking over. The other thing that is interesting is Anthropic's having a massive fight right now at the same time with the DoD. So they are in the crosshairs right now when it comes to a number of departments down in Washington.
And it also kind of feels like, I know it's not necessarily marketing for them, but like kind of good marketing. We're on the verge for an OpenAI IPO, and the two are really warring against each other. I don't know, when I read this story about Anthropic having such good of an LLM that they don't want to release it to the public, I'm like, hey, Anthropic seems ahead in this race.
What also scares me that if this is where Anthropic is, I wonder at this point, where is China when it comes to all of this? All right, investors awaiting fresh inflation data due out in just under an hour. According to the Bank of America Institute March Consumer Checkpoint Survey, consumer spending picked up sharply in March, even beyond gasoline. David Tinsley of Bank of America Institute joins us now. David, thank you so much for joining us. I love the research. Give us a sense of where consumers are spending.
Well, I think, the big story in the data today, in the report today, is that consumers are weathering the madness of March really pretty well so far. So obviously we saw a big spike in gasoline. That goes without saying, gasoline spending. But even looking aside from that, we saw a 3.6% year-over-year rise in our card spending, which is the same tied with February's data, but noticeably stronger than the second half of last year. And when you look back over the year, where are people spending? It's discretionary services, travel, tourism, entertainment, restaurants has had a couple of good months just of late. And there's also been something of a recovery on the retail spending side as well, electronics being one area that has picked up there. So it's quite broad-based, I'd say.
David, what's your understanding if prices for gasoline remain or go higher from where they are now with the national average above $4 a barrel? How does that impact other parts of spending for this American consumer?
Well, right now, I think it's worth thinking about this K-shape with regard to this. So this top-end consumer, this higher-income consumer, as we show in our report today, is seeing some really fast wage growth. It's at 5.2% year-over-year, the fastest it's been, or the biggest gap with lower-income wage growth, which is at 1%. Since this series, our data begins in the middle of the 2010s. So I think the higher end is going to weather the gasoline shock, and you have to keep that shock in perspective, I think, too. It's certainly not the largest we've seen over the last sort of 10, 15 years. They're going to weather that relatively satisfactorily for some period of time. Obviously, lots of uncertainty around where that goes. Lower income, their wage growth just 1%. We did notice in our report their discretionary spending growth did tick down in March. So I think where there's a little crack, if you like, is again at that lower income consumer end. But I think most of the consumers helped by, well, the fact that the equity market, as you were discussing earlier, is not sold off dramatically. Also this wage growth and, of course, tax refunds. So all those things are really kind of soothing the pain of higher gas prices for now.
But are tax refunds to some degree, David, kind of canceled out with higher gas prices? Do they not provide the benefit that they would have without this conflict?
Well, it would be nicer to have tax refunds without the high gas prices, and then you'd get an even stronger boost for discretionary. But, you know, the way, in a way, to think about these tax refunds is they're up about 10 to 12% across the economy. That's hundreds of dollars for the typical household. In our data in March, the gasoline bill was up sort of, let's say, around $30, $40 a month. So when you think about that, you see that really the consumer, if they spent all their tax refund increase on gasoline, they could weather that shock for, say, 6 months plus. So one doesn't want that as the scenario, of course, because then there's less for discretionary. But still, it gives you an idea that the stimulus is helping soothe the consumers' headwinds from this gasoline price increase.
But it's not just gasoline at the pump. It's, of course, diesel prices, which impact, especially in America, farm to table, impacts grocery prices, coffee, beef, all of that is up, as well as electricity prices. So to Danny's point, I mean, if you consider everything in that, is it less than 6 months they can weather this storm?
Well, that is a fair point. You know, we only just begun to see some of those kind of like second round impacts, as you say, transport costs, plastic costs, packaging costs, et cetera, et cetera. So, you know, if those price increases, those price pressures get fed through, well, yes, then under those circumstances, it could be less. I think when you hear from some corporates, though, they don't really necessarily feel in the place to push through a lot of price increases from those supply chain pressures. So, you know, that's to play for, I think, over the next 6 months or so.
And like we heard from Delta, they still see individuals traveling. When it comes to some extra money left over, where are you seeing consumers put that money to work?
Yeah, well, when we look at refund checks going into accounts and we look at 3 weeks after that refund check has hit the account, pretty obvious categories: electronics, clothing, airlines, as you were suggesting. There's a broad range of kind of nice to have discretionary areas that people are spending more on. Interestingly, though, people are also putting some of the money to debt repayment, credit card repayment, student loan repayment, which of course is also in some ways quite a good thing, because it means that they're building a slightly stronger balance sheet for the situation if does arise of future shocks.
David, thanks so much for your time this morning, for bringing us the insights of this report. David Tinsley of Bank of America Institute. We want to get you an update now on stories we're watching elsewhere this morning. Here's your Bloomberg Brief. CoreWeave striking a $21 billion deal to supply computing power to Meta through 2023. The company provides AI cloud capacity to the Facebook parent from multiple data centers powered in part by NVIDIA's Rubin systems of chips. A change at the top of luxury retailer Dolce & Gabbana. Co-founder Stefano Gabbana resigned as chairman in December and is considering options for his 40% stake. Sources telling us here at Bloomberg the firm is entering a new round of debt talks with creditors. And First Lady Melania Trump denying close ties to late sex offender Jeffrey Epstein.
I never been friends with Epstein. Donald and I were invited to the same parties as Epstein from time to time, since overlapping in social circles is common in New York City and Palm Beach.
The First Lady also adding she never witnessed any of Epstein's crimes. Reports say many in the White House were caught off guard by the First Lady's statement. And that's your Bloomberg Brief. Coming up on the program, reopening Hormuz.
The market is highly skeptical that the ceasefire is real, it will take, and it will actually open up the Strait of Hormuz. It's all about the barrels and the flow, and right now we're not seeing either of those two.
Bob McNally of Rapidan Energy joins us next. You're watching Bloomberg Surveillance.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. We are counting down till 8:30 a.m. We are going to get inflation data in the United States. Really important given the fact that this is going to incorporate what we've seen in higher energy prices when it comes to the conflict in the Middle East. Equity markets pretty much just plowing along. When it comes to this ceasefire, they believe potentially this has legs. We've had 7 days of gains, and S&P 500 futures this morning relatively flat, but we're all in the green across the board. And then oil is where everyone's going to be focused on as we head into the weekend. Of course, J.D. Vance leading the U.S. delegation to Pakistan to meet with the Iranians. Brent crude this morning for the June contract, $96, and WTI, $90, up just under $90. That's really important, Danny, for this White House, to keep it below 100 if they can, keep it below 90.
And it's really the backdrop for the talks this weekend and trying to get the Strait of Hormuz wide open. It's something that you would discuss with the president about Iran wanting to charge tolls. If this is what Iran is doing, even if it means reopening the strait to some degree, does there need to be a higher premium in oil prices just because of the ability of Iran to really control what's happening?
Also, there were no tolls before it. Of course, the U.S. Fifth Fleet was there and protecting it in a way, but it's going to be unacceptable not just to Washington, but to other Gulf partners like the UAE, Oman, Saudi Arabia, and that's the conversation we're having this morning. Under surveillance this morning, reopening Hormuz.
The market is highly skeptical that the ceasefire is real, it will take, and it will actually open up the Strait of Hormuz. So until we start to see some sort of convergence between global energy prices against the Gulf Coast crudes, the message is that this ceasefire is just headline only, and it's all about the barrels and the flow. And right now, we're not seeing either of those two.
Here's the latest. Transit through the Strait of Hormuz remains limited despite President Trump's demands that Tehran reopen the waterway ahead of peace talks. Bob McNally of Rapidan Energy writing any increase in Hormuz flows would be slow and tentative, and Gulf producers will be reluctant to restart shut-in production until a durable deal is on the table. Bob joins us now. Bob, thank you so much. Your research over the course of this conflict has been really incredible. When it comes to this weekend's talks, how are you preparing clients about how to think of this, and what does success actually look like?
Thank you very much. So we're telling clients this. Let's just step back and lower our expectations. All we know for sure is that President Trump called off, looked like to be a big attack on Tuesday night. And since then, the United States has stopped attacking Iran. That's it. Other than that, we're talking past each other on whether we're going to open Hormuz, under what conditions, and this and that. Saudi Arabia is still taking fire from Iran. Bahrain still taking fire. So the conflict goes on, as you've noted, the flows haven't resumed, and here we are. So going into the weekend, I think we should have low expectations. We'd put, there's maybe a 15, 20-ish% that they pull a real deal out of the hat. They have an agreement on restarting Hormuz, on the basic framework of a final deal, the nuclear, the missiles, the sanctions easing. There's a deal that's eventually going to be made. We don't sense that it's imminent, can't rule it out, but I would have low expectations about a realistic restart of Hormuz transit, which is what the market's waiting for.
Given the headlines, the oil prices are moving on the headlines, but the facts on the ground are that there hasn't been normal flow, and we're seeing just maybe a handful a day of vessels going through, and mostly they're Iranian or very friendly countries. Bob, is the futures market actually priced fairly?
Well, the futures market's very different than the dated Brent or the physical markets. They're two different things. It's in the futures market where we do see more expectations about where this is going. I think it is too optimistic. I think the sell-off was unwarranted, and I think it's going to likely reverse. I think futures markets are going to be converging upward toward expiry onto physical prices, which are reflecting that scarcity premium, and that scarcity is just going to broaden this month as that hole widens from Asia and arrives in Europe and eventually the United States. So, yeah, I think futures prices are going up. I think, when they look back at this, I think a real defining feature of this is the disbelief that this could even happen in the market. No one thought, but Rapidan, that a disruption in Hormuz could last more than a day or two. I challenge you to find anybody who said, yeah, it's going to take several weeks for them to clear up Hormuz. Now that we're in that nightmare scenario, folks want to believe it's going to end soon, and they accept pleasing words and verbal intervention about that. So there's been this willingness of the market. You see it in equities, you see it in bonds, you see it even in the crude futures. Tell me it's going to end soon. Eventually that's going to wear off, and we're going to have to deal with the reality of the biggest disruption in oil market history.
Bob, I think you're spot on. I think it says something about human nature, just our inability to hedge or imagine chaos and our desire for things to return to normal. So if oil prices do need to head higher, Goldman Sachs is talking about $100 a barrel, that being their baseline if this lasts months. Where do you land on where this energy market might settle, considering continued action in the Middle East and issues with the flow of energy?
So we have three scenarios for how the oil rally will end. The base case is a ceasefire, just not now. We're thinking maybe later this month, probably in the 120, 130, 140 era where now futures have converged up. So we probably have to go a little bit higher in physical. At that point, Iran's control over Hormuz will be degraded somewhat, and they'll decide time to make a deal. Now, if we have to take longer to have the U.S. military forcibly open the strait, and since we started late on that, later than I expected, that could mean oil prices 150, 160. That'll take a little longer, especially if we don't have international help. Finally, final scenario, this is our lowest probability, but you can't rule it out, is we have to do it the hard way. The rally ends because the oil price inflicts a recession and destroys GDP growth. And boy, that's an effective way to cap an oil price. It's the way we normally see oil price rallies end since World War II. There's a recession at the scene of the crime. And so that could be, well north of 150. We find the new level that basically causes economic growth to slow markedly.
Some big fat tails in this. And one of the other risks, Bob, I'd had a conversation with Ed Morse now at Hardtree, was at Citi and in various other places before, who in the beginning of this conflict said that one of the bigger risks for energy markets was the addition of Iranian proxies into the fight. And we have gotten that with Hezbollah, the risk being of what we saw yesterday, attack on a Saudi key east-west pipeline. Bob, beyond just what's happening through the Strait of Hormuz, how much are you monitoring the other energy infrastructure, and is it something that we're complacent on, the risks to those types of assets?
No, it's something we're very focused on, and Ed Morse is a great man. We are particularly focused on the one ray of hope. The one outlet here is that heroic Saudi decision decades ago to build the East-West pipeline, and then to expand its capacity in short order from 5 to 7 million barrels a day and flow it through to Yanbu. And you see the boats there picking up. It's the one really offset we have to the loss of this 20 million barrels a day. It's terrific. It's not sufficient to offset the whole loss. It's terrific. Now you have the Houthis, and we've been saying this as well, are getting in the fight. And if they and the Saudis decide to hit those pumping stations along the East-West pipeline, which has already occurred, if they're able to hit the Yanbu terminals, that one last sort of ray of hope, goes away. And so we're very focused on if we escalate to the next level, and we would have gone there Tuesday night if we did a big attack, you will see the proxies come in, and we're most focused on the Houthis and the risk to that one Saudi redirect through east-west to Yanbu. Most important.
It's the pipeline the world knew it didn't need. Bob, thank you so much for your time this morning. Bob McNally of Rapidown Energy. Coming up on the program, another hour of Bloomberg Surveillance as we count you down to inflation data at 8:30. Abby Yoder of JP Morgan Private Bank, Erica Najarian of UBS, Matt Lazzetti of Deutsche Bank, and Jessica Naviskis of Marquette. You're watching Bloomberg Surveillance. Good morning.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is a 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This bull market has been battle tested.
The fundamentals have still remained very healthy.
Wall Street's figured it out. It's a buying opportunity. The market is highly skeptical that the ceasefire is real.
It feels like we're on the same kind of off-ramp here. That's pretty good for the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
We're 30 minutes away from inflation data, live from New York City this morning. Good morning. I'm Anne-Marie Hordern. This is a third hour of Bloomberg Surveillance with Danny Berger. Lisa and John are off today. We, as I said, 30 minutes away from the CPI data. It's the first print, Danny, we're going to have that has the full impact of rising energy prices, rising oil prices, due to what's going on in this conflict in Iran.
The expectation is for a 0.9% increase, and that would be the highest since 2022. Maybe the bad news for this economy is that you already had some concerning dynamics coming before that. We saw that in the February PCE. That was maybe a little bit stickier than we wanted. We heard from David Rosenberg writing in saying that the economy was already losing steam. To be fair, he is a tiny bit of a perma bear, but just concerned that even before the conflict broke out, there were these vibes in the economy that were not positive. This adds to it. So you see a market that is flat today. It's rallied a lot. I just wonder, does stickier inflation change the posture of those willing to take risk?
And there's two big risks now going into the weekend. It doesn't really even feel like a weekend because there's not just the inflation data at 8:30, but then on top of that, everyone wants to see what is going to be the outcome of these talks in Islamabad. And individuals I'm talking to say the fact that they're just meeting, like, that's the outcome. That's the success of these talks.
Although Bob McNally from Rapidan was just on with us saying that he was saying to clients, set your expectations lower.
So low.
Yes, so low, and that we could have continued high oil prices. His expectation, we could see up to 150, or you go so far that there's significant demand destruction and there's a recession. We're not really talking about those odds right now.
Dr. Sultan, who runs ADNOC, which of course is the UAE's biggest energy company, said that the last vessels before this war that left the Strait of Hormuz, it's now over. They've landed at their destination, and there's no new inflow. And that is why this moment is so acute. And that's why the Treasury Department right now and the White House are weighing whether or not to extend waivers for Russian-sanctioned oil on some of these countries in Asia, like India, which are in town lobbying hard to try to make sure those flows continue.
Still just a Band-Aid on a very, very deep wound of a waterway. And again, I go back to what Bob said. I think he put it really well, that no one expected, maybe except for him, that Iran would be able to do this, that they'd be able to close the Strait of Hormuz. And here we are in the worst case scenario. And oil futures are still pricing that we fall below 80 by this time next year.
A lot of jawboning from this White House, but at some point, maybe the physical market, to Bob's point, will catch up. Where are we in terms of markets this morning as we head into that inflation data? S&P 500 futures are flat. We are off of a 7-day rally. Of course, investors are pretty much just baking in that this ceasefire for now holds. And all eyes, of course, as me and Danny have been talking about, will be on crude. New York crude this morning, $97.88. This White House certainly wants to keep it below the $100 mark. Coming up this morning, Abby Yoder of JP Morgan with stocks looking to build on their longest winning streak since October. Erica Najarian of UBS previewing next week's bank earnings, and Matt Lazzetti of Deutsche Bank breaking down the latest inflation data. We begin this hour with stocks flat and crude rising as traders await direction on the fragile ceasefire between the United States and Iran. Bloomberg's Tyler Kendall joins us now for Washington. Tyler, set the scene for us in Islamabad this weekend.
Yeah, hey, Anne-Marie, good morning. Well, we are expecting Vice President J.D. Vance to depart for Pakistan later this morning as the White House maintains that these diplomatic efforts are on track. Yet we did hear fresh threats from President Trump when it comes to the Strait of Hormuz overnight. In a pair of posts on Truth Social yesterday, the president said that Iran better not be charging tolls on ships that are transiting through the waterway and that Iran is doing a, quote, very poor job when it comes to reopening it. And this is important because, of course, reopening the strait is pivotal to the 2-week agreement, but it is underscoring the potential difficulties ahead for a longer-term agreement considering that we know one of Iran's top demands is that they want sovereignty over the strait. Now, that is just one in what appears to be a long list of big differences between the two sides when it comes to negotiations. Even as U.S. officials assert, Iran is striking a different tone privately. It's the strait, but also the future of Iran's nuclear capabilities that appear to be the biggest disagreements at the moment. Now, while the U.S. and Iran will sit down in Pakistan, it is also important for us to note that there are going to be these parallel talks between Israel and Lebanon here in Washington next week, after it appears that Israel's operation against the Iranian-backed militant group Hezbollah posed a potential roadblocks for the U.S. getting these talks this weekend off the ground. Anne-Marie, as you know, the White House maintains that Israel's operation in Lebanon is separate. It was never supposed to be part of these ceasefire talks. But after a reported call by President Trump to Israeli Prime Minister Benjamin Netanyahu, it appears that these direct talks have helped to pave the way for this weekend's conversation.
Tyler Kendall in Washington, thank you so much for your time this morning. Here's the view from Wall Street. Abby Yoder of JP Morgan Private Bank writing, quote, "We are still constructive on the market driven by fundamentals. We maintain our year-end S&P 500 bull base and bear targets, leaving us at 7,500 at the midpoint." Abby joins us now. Abby, good morning. Thanks for joining us. Can we get there if this ceasefire doesn't hold and it's not credible?
I mean, that's so when all of this started happening, we had to really think about it. Like, it's impossible to kind of figure out, like, pinpoint where it's going to go, but we wanted to do some scenario analysis around what would happen if oil prices as the main variable stayed at certain levels for an extended period of time, right? Because that's important. How long they're at a certain level is going to dictate, like, what this market does and what it means for sentiment. So no, if you have oil above $100 for the next 3 to 6 months, that's not going to get you to that, you know, our current base case. But that's not our base case. Our base case is that oil reverts back down to an $80 per barrel, and it stays there for, you know, for 3 to 6 months, right? And that's actually above that $80 is above what we had for oil previously. Our outlook was $60 to $70, so we are baking in that geopolitical premium.
Is this what clients are mostly sending you questions about right now? Is this top of mind?
Of course it's top of mind, but like you go back to January, and the biggest concerns were around software and what was happening from, you know, an AI perspective, and how, you know, you have these private AI labs that are kind of overtaking the software space. And then there's also private credit that I still think is, like, going on underneath the surface, especially when you look at some of the financials performance. So I think even if we move past these geopolitical fears that are obviously front and center at the moment, those are still out there. And we've seen that kind of in price action in terms of the reaction post, like, ceasefire talks.
Software has been so interesting to me because it hasn't necessarily been logical. When this war first started, energy rallied and software rallied.
Yeah.
Now that we have a ceasefire, energy has fallen and software stocks have fallen 5%. This also from Bespoke, the 30 worst performing Russell 1000 names since the ceasefire began. 3 are energy stocks, 22 are software stocks. Abby, what do you make of that?
I mean, those are really good points in terms of, it was interesting to see the bounce when the war started, but I think a lot of that was positioning related, right? Like, you had gotten to valuations on broad software that we hadn't seen in 10 to 15 years, right? So there was an element of that. There was just a lot of, you know, short positioning in that sense. But now, to your point, now that we have these ceasefire talks, you're seeing the broad market rally, and they are not participating. And I think, again, that goes back to, okay, when let's say we move past geopolitical risk, what was at the forefront of everyone's concerns prior to that? It was really around software and what was happening from an AI perspective. Now, there are idiosyncratic moves in that you've seen cybersecurity names do really well, right? Like, I think those stand out as probably the winners in terms of the application layer, but the other, you know, software as a service general, like, is still under pressure from
unless whatever Anthropic, you know, is putting out eats every single cybersecurity thing, which I guess is a threat now, as is all of human civilization. The other thing I found interesting, again, I was just looking kind of at broadly the market moves year to date, and small caps have actually outperformed a lot, 8.5 percentage points, which feels pretty significant just given the chronic underperformance. Is there something there that in this angst, maybe you get some of the smaller cap names that can play along?
Well, I think what you've seen, and small cap falls into this bucket, is what was working prior to the war? It was cyclicality, right? And so I think that's what you're seeing. You're seeing this rotation back into, okay, growth has actually held in pretty well. Earnings have held in pretty well throughout this, 6-week period. And so let's rotate back into what was working, that halo theme. The cyclicality and small caps really do embed that and have been, a market underperformer for a very long period of time. So I think there's just room for positioning to increase there as well.
What has changed since the start of the year? Because there's been so many different narratives in terms of what you're recommending to sectors for clients.
Yeah, I mean, nothing has actually changed. I think what will be very pivotal, so we recommend 5 sectors: financials, utilities, tech, industrials, and healthcare. And I think, right now, if you look at the worst performing sector, it's financials, right? And I think this earnings season, which starts next week, and you're going to hear from Erica after this, really has anything changed? How does private credit really affect these banks? I think that's something that we're really looking at to really understand what we want to do in terms of a financials outlook. And then also, obviously M&A and IPOs have kind of taken a back step because of the geopolitical headlines. Is that still happening? Is that backlog still there? What gets that to start really working will be something that we're looking at.
When you look at earning revisions, it's for everything that's being hit right now with these headlines. Are you surprised by any of them?
No, I mean, to your point, so where have we seen? Well, first, let's take a step back. Typically, when you start the year, you see negative revisions for the S&P 500 to the tune of 3% downward revisions. We've seen actually a positive revision of 2.5%. That's really interesting, right? And what's driving that, to your point, is technology primarily. We've seen 10.5% revisions for technology year to date. A lot of that concentrated in the semiconductors. And then you've seen it from energy and materials, just given what's going on with commodity prices. So it's a very interesting dynamic. It sets up, interestingly for 1Q, again, which starts, next week. And the expectations are for 13% year-over-year growth, which would mark the 6th consecutive quarter of double-digit growth for this index.
I think that there's a lot of logic behind there between tech still doing well. Now you need to upgrade energy too. But what about for consumer-facing names, or frankly, any company that has plastics, needs to use fertilizer, is exposed to energy? Have those been factored into earnings outlooks yet, or does that need a bit of a wake-up call as we work our way through earnings season?
I don't think it's been factored in. I mean, I think it was interesting to hear from the airlines this week, and that they really aren't changing their outlook. Yep. In fact, they're actually increasing it by kind of tweaking things at the margin in terms of pricing. And so it's really going to be dependent. I don't think that you can paint consumer as a whole in terms of because there's going to be differences in who has pricing power, right? Who can offset those input prices. But I do think it's going to be, not only do you have the commodity price impact that is very different than last year, but you also have the currency impact that will be different from a revenue perspective as well. So I think those two things will be very important in thinking about, okay, we've seen these positive revisions to earnings. The street is now expecting 16% growth for 2026 for earnings. How is that affected by these two major variables, I think will be very important.
Abby, thank you so much for your time this morning.
Thank you.
Thanks for stopping by. Abby Yoder of JP Morgan Private Bank. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief. The White House warning employees against insider trading, sending an internal email following a series of well-timed bets around President Trump's military decisions. In one instance, traders placed massive bets on falling oil prices minutes before the president announced a pause in attacks on Iranian infrastructure. The Senate Banking Committee is no longer planning to hold a confirmation hearing for Kevin Warsh next week. The hearing to confirm Warsh as the next Federal Reserve chair was scheduled for Thursday. Punchbowl's reporting Warsh has not submitted all of the necessary paperwork just yet. And in sports, Rory McIlroy is picking up where he left off at the Masters. After a sluggish start, the defending champion notched 5 birdies in 8 holes. He's tied for the lead at 5 under with American Sam Burns. The second round teeing off in just the last hour. I don't know enough about the Masters to say anything, but I do know, I have a feeling that this is why Jonathan had this week off.
Yeah, and that's what I'm also wondering, do you think he's watching the show or the Masters? It's
Masters. I didn't know they kicked off an hour ago. They start early.
I hope everyone has Masters up next to Bloomberg surveillance.
Okay. I've seen a few photos of that on financial Twitter. So yeah.
That's all you need on this Friday
morning. Lots of screens. Up next, the morning calls, plus Erica Najarian of UBS looking ahead to next week's bank earnings. You're joining Bloomberg Surveillance.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
When CPI comes out today, everything will be swamped by the initial headline inflation shock from energy. The question, though, is 6 months from now, is that turning out to be a one and done or something more serious? I think it's more likely that inflation over the sort of medium to long haul is a bit more volatile rather than averaging a lot higher.
That was Krishna Gua of Evercore ISI. As we count you down to the inflation data this morning, markets are relatively flat. Of course, we have had 7 days of gains, and all eyes will be on oil going into the weekend. 97.82 right now on NYMEX crude as we await these high-level discussions between Tehran and Washington. Time now for the morning calls. First up, UBS downgrading ServiceNow to neutral and slashing its price target. The firm saying it's no longer better positioned for the AI era compared to other software names. Next up, Piper Sandler downgrading Nike, citing innovation concerns and worries that athleisure wear is, quote, becoming too saturated across the industry. I feel like that's an evergreen statement. And finally, Mizuho upgrading Shake Shack to outperform, saying the company has the drivers in place to exceed expectations throughout 2026. Let's turn to banks now. Goldman Sachs kicking off earnings on Monday. Joining us now is Herman Chan of Bloomberg Intelligence. Herman, thanks so much for joining us. So set the scene. What do we need to know for Goldman next week?
Yes, so we're expecting strong trading results across the board for Goldman and the banks that are kicking off earnings next week. So really good guidance over the past month or so from the likes of JP Morgan, Citi, and Bank of America on trading and investment banking on a year-over-year basis for the quarter. And lending's been pretty strong across the group as well, with the pickup in commercial lending in particular. So actually, despite all the macro issues on geopolitical front and issues on potential stagflation, we're actually expecting pretty strong earning results across the group.
What are you going to be most focused on? Is it just going to be the earnings call, how all these CEOs react to the whipsaw of markets and the headlines that are coming out because of the conflict in the Middle East?
Yeah, I think we're really focused more on the guidance for the rest of the year. Is there, how's the investment banking pipeline look? Has there been anything that maybe was taken out of the pipeline? Are we seeing a bit more choppier markets, particularly in IPOs and M&A? And also, can the lending that's been really strong to start the year, can that be sustained given all these uncertainties that are happening in the market today?
Herman Chan of Bloomberg Intelligence, thank you so much for setting the scene for us. Joining us now, Erica Najarian of UBS, and she writes our estimates for 26 and 27 are largely unchanged. Recent year-to-date performance could unearth some opportunities, especially given strong momentum in direct lending, capital markets, and deregulation. Erica joins us now. You've been very consistent when it comes to the banks. What are you looking forward to next week?
So I'm looking forward for some numbers, actually. We have been just dealing with a barrage of headlines, geopolitical, is AI going to wipe all of us out? Nobody's going to be able to, pay their credit card, or buy a fancy sweater. And so, I'm excited for the facts. And actually, the regulatory data is very promising. Direct lending to companies is up like 2.6 standard deviations above the seasonal average. The consumer, for now, crossing fingers and toes underneath this desk, still spending. And of course, capital markets is still booming. And so, the market is going to see this as largely a little bit backward looking. And so it's really important for us to hear from the management teams, especially the G-SIBs, in terms of what they're seeing looking forward and how resilient these trends are.
The capital market strength has been pretty incredible. I remember having a conversation with Paul Taubman at the outbreak of the war, who basically said it's time to put the pom-poms away, that it might not be as robust. Instead, what we got was the best first quarter on record for M&A. I spoke to the heads of M&A at both Morgan Stanley and Goldman Sachs, who said it looks incredible, the pipeline looks good. Is there any reason to expect that that will change in banks' outlook, that we won't continue to have strength, because we have, despite AI fears and war?
So I think we need to think about M&A and IPOs maybe a little bit separately, right? So it feels like in this current administration, there's like a very specific window for these strategic partnerships, right? Because you have a, you used to not be able to get like your handbag deal approved, right?
Oh yeah.
It's like, oh, monopoly on, mid handbags.
Coach and Michael Kors.
Yes,
right?
yes. And so it feels like that window matters more than the volatility. Now, the real question is that, clearly there are blockbuster IPOs that are coming down the pipe, but what about the smaller ones? And now the sponsor saying, valuation has come in. And so what's more important, timing or waiting out the valuation once again? I think that's actually, could quite be more interesting to ask about, but it does feel like M&A, that boom will continue despite all these headlines.
The other headline that's been ever present is just anything related to private credit has attracted a lot of eyeballs. Will there be any spillover from the stress that we're seeing, again, whether it be stress just on the sentiment level or on the actual underlying asset itself?
So that's a great question, and I'm really excited for David Solomon and Jamie Dimon to kick this off because, I'm not going to use this opportunity to nerd out on the structure, but essentially—
By the way, you can. It's Bloomberg TV. If you're going to do it somewhere, this is the place.
So let me break it down to you like this. For the bank to lose the first dollar on these credits, you essentially have to lose, let's say, 40% equity first. Right? And so the way they've protected themselves in terms of essentially being very senior to the special purpose entity that holds the collateral or the pool of loans, and the way they've structured these credits, they essentially are, you have to burn through that equity first. And when you're hearing in the headlines that, banks are marking these loans, marking the value of the special purpose entity, they're actually behooving the fund to put in more equity, right? And so, I'm an equity gal, not a bond gal, but over collateralization is a technical thing, and that's the position that the banks are in. Now, Jamie sets the tone, right? And in the third quarter, he did talk about pests, yes. Right? And, his chairman's letter sort of set the tone in terms of what he thinks, the defaults could be if we fall into recession. But the question for him is, okay, well, that's all well and good, but what is the actual blowback to the banks? I think that's the important question, because then we could put to bed, the underlying fear that there's a systemic issue here. And by the way, we're coming upon this sort of inflection point, these issues, where the banks are coming in with so much capital, so much liquidity, plus the regulators are redefining excess capital and liquidity. And the very definition of systemic risk is if the banks pull away, all that capacity away, and then you have a credit crunch. And I'm not sure that's the case right now.
One of the ways I've heard it described that it could theoretically be systemic is just that banks themselves lend to private credit players. And we've seen JP Morgan, for example, say, we're going to revalue what we think you're worth because of your software loans. Do you see a scenario where, one, there's spillover effects, or two, just simply that they decide to pull back from this area of lending because of those concerns?
Look, I think that there has certainly been a boom in these types of credits. But if you think about the brand name sponsors, right, they're going to be around forever, and they're your pipeline for a lot of other businesses other than, any non-depository financial institution lending. And so you're not going to say, hey, I'm going to pull back from, Ares and KKR, right? And so, I think there's always going to be, a reevaluation of, credit underwriting whenever something like this comes up. But I'm not sure that there's going to be that big of a pullback.
If we could just finish on the banks for next week, what's your top pick?
Ooh, actually, I'm going to be a little bit spicy. So we upgraded Morgan Stanley.
An uncertain world by quality.
Well, look, Your words. If everything is on sale, buy the Hermes Kelly, right? It's just funny to me that, you know, in this capital markets renaissance, Morgan Stanley has been left out of the conversation, arguably one of the best investment banks in the world. And also, I mean, it's just a juggernaut in the wealth management business. And I think it's gotten hit a little bit on these AI concerns. But Morgan Stanley has proven in its history that it's not afraid to disrupt itself. I mean, think about them buying E-Trade. So I think they're going to be, you know, go in there and have a standout quarter and flex a little bit and remind everybody that, you know, they're best in class.
Ted Pick flexing next week, maybe, according to Erica. Thank you so much for joining us, Erica Najarian of UBS. Coming up in the program, the latest round of CPI data is set to cross. Matt Lazzetti of Deutsche Bank will be here with us breaking it all down. You don't want to miss that data. Coming up in just 5 minutes' time, you're watching Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Good morning. Welcome to Bloomberg Surveillance. We are just moments away from CPI data in the United States. Of course, it's going to be incredibly important inflation print because it's going to encompass the impact of the war in Iran right now and the rising energy prices. Ahead of that data, markets are just relatively flat. We just had 7 days of gains when it comes to the S&P 500. NYMEX crude this morning is down 0.3%. And with your inflation data, here is Michael McKee. Hey, Mike.
Good morning. Well, we're seeing the war come home as CPI on a headline basis comes in up 0.9 for the month as forecast, and that pushes the year over year to 3.3%. Remember, it was 2.4% in February, so a big jump. The core comes in up 0.2 on the month. It takes a while for stuff to get into the core, so that's not a surprise, although it's a little lower than anticipated. The CPI core for the year, 2.6%. The index for energy, they say, rose 10.9%. Take a guess what gasoline went up, 21.2%. According to the Bureau of Labor Statistics, that accounts for 3/4 of the entire increase here. Index for food unchanged over the month. Food away from home rising just 0.2%. So it is not a bad overall report. It looks like it's driven generally by energy, but it certainly doesn't help the Fed's case at all.
No, it certainly does not. When you look at these March CPI energy prices rise 10.9% month over month. It's the most since 2005. And Danny, what we're seeing right now in the equity markets is a massive spike in S&P 500 futures as well as NASDAQ futures.
Yeah, we're seeing relief. We went from little change up to 0.2%. You also see bond yields come in too. They were all pushing higher. Now it's little change across the curve. The front end of the curve comes in 1.5 basis points. Anne-Marie, it's relief, but not massive relief because we still have the big risk event this weekend. Yes, you have this in hand, but can you rush into risk right now? Even if CPI isn't as threatening, can you rush into risk with still negotiations to come over the weekend?
Right. This is a Friday, but really this is an extension of the week we're going to have. Tomorrow's all-important meeting is going to be the talks in Islamabad. And just moments ago, we had Vice President J.D. Vance climb up to his plane, and he is going to be heading over to Islamabad. So these talks will be taking place this week, but a lot of people say really just the base case is that they met. That might just be the success, which is why it's going to be interesting what it means for oil prices.
Yeah, and what do we see if these just get extended and we don't get a resolution? You and Mike were talking about the huge addition of gasoline into prices. Gasoline accounted for almost 3/4 of the U.S. CPI rise. Maybe that's something you can look through now, but how does that feed through to consumer behavior? Does that in turn impact what we're willing to spend? What's the bigger threat? Is it inflation? Is it growth?
Yeah, so gasoline, Mike, accounted for almost 3/4 of U.S. CPI, as Danny and you also mentioned. What else are you seeing in this report?
Well, I think one of the biggest things that everybody's been watching for is what happens with shelter prices, because we had been seeing a decline in house prices, but it looks like they've started to go back up again. Owner's equivalent rent up 0.3 and rent overall up 0.3 as shelter costs rise the same. So after a string of months where they were only rising 0.2%, they seem to be going up again, and that's not going to be good news for those looking for a long-term decline in core rates. So that is something to keep in mind as we go forward.
Mike, we already had data in hand from PCE of the prior month this week, which didn't exactly seem like a great starting point. What do you make of the 2 months together, not just this one in isolation? What do the trends look like?
Well, it's a little bit mountain-shaped. We went up in January, down in February, up in the month of March. And that's probably going to be the case, although we are likely to see another continued effect of the war in terms of energy in the April numbers. And then the question is, does it start to show up in things like food prices, because fertilizer has been unavailable and prices have gone way up? Does it start to show up in other areas where it just takes a while to get in there? And that's kind of the issue for overall for what we're going to be seeing going forward, is what kind of effects will the war have? And that is the job for the Fed, to try to separate that out. and figure out what the underlying inflation rate is. A couple of other notes to pass on here is we see that new car prices were up only 1/10, and used car prices went down by 4/10. That's a surprise. Wholesale prices have been going up, so we had expected that to rise. Apparel prices look like they were up by a percentage point. So there's a tariff impact. Remember tariffs?
Yeah, we do. We're still waiting to hear what's going on in terms of those refunds and potentially the new levels for other countries, Mike, after the Supreme Court, of course, struck down IEEPA. Michael McKee, stay close. Thank you so much for your insight. Matt Lazzetti is joining us around the table now of Deutsche Bank. Matt, just what's your reaction for the CPI?
Yeah, I think as Mike highlighted, you want to kind of disentangle some of the stickier items from the volatile items. And I think for this print, it is important that rent and OER were stronger. That does tell you, they're a little bit higher than we expected. Maybe on a forward-looking basis, those things tend to be a little bit more persistent. Used car prices were actually materially weaker than I think we were anticipating. You had the decline that Mike had noted. I think over the next several months, those should be picking up given what we see from wholesale prices. You did see airfares rose pretty strongly. Maybe that's reflecting a little bit of the rise in jet fuel prices as we look ahead. But overall, very strong headline print. Core print weaker than expected, but we'll have to see over the next several months. Probably get a pickup.
But this isn't the worst case scenario, is it?
No, I think for the Fed, you can look through a particular month, particularly driven by gas prices. I think more important for the Fed would be yesterday's print, which was core PCE. That is running at 3% year over year. It's a percentage point above their own target. Now they think that 50 to 75 basis points of that is from tariffs, but the starting point is just not good when you're overlaying another energy price shock on top of that.
So you have those two in hand. The market, Anne-Marie was just pointing this out to me, that you do have markets starting to price in more bets of a cut. We're something around 20% odds we get one by the end of this year. Given what you were just saying, is this a setup where you can get cuts?
So our baseline is that we will get a cut in the back half of the year, but kind of confidence in that has waned, I think. And the story and narrative to get there, I think, has changed. So coming into the year, we thought that we would see some meaningful disinflation over the back half of the year, core PCE falling below 2.5%, and with that, the Fed being able to cut rates, potentially as you get a more dovish reaction function under a Kevin Warsh-led Fed. We're not there yet, obviously. But I think that story has changed. Inflation is now too high. I think the probability that we get enough disinflation this year where the Fed cuts on an inflation story alone is less likely, and you likely need to see some weakness in the labor market to get the Fed to cut later this year. As we saw last Friday's jobs report, we don't see that weakness. You have a labor market that looks very resilient. The unemployment rate is actually declining a little bit. Payroll gains are picking up. And so I do think the market, yes, we're pricing a little bit of a cut, but the probability is pretty low at this point.
And this is where, and Lisa's talked about this a lot, where scenario analysis becomes kind of the only thing you can do, considering how big the left tail is. We were talking to Bob McNally, Rapid In earlier, who's saying one of his scenarios, not his base case, but one scenario is where you get a huge hit to growth because of higher energy prices, and you need to start talking about recession. For you, what is the level where that can come into the picture?
Yeah, I think the way that we think about oil prices is there is this strong historical parallel between oil price shocks and recessions. I think 9 out of the 11 recessions that we had after World War II were coincided with a meaningful oil price shock. But the structure of the economy has changed materially over the past 10 years. We're now a net energy exporter, record production that we're seeing. Households still take a hit. But households are buffered given the tax cuts that we see. So the price level that we are kind of worried about would be about $150 per barrel for oil. That would eliminate the benefits that households have from the Trump tax cuts. We're not there, and obviously we've moved away from those levels over the past week.
I just want to bring in Mike McKee for another moment. I know he's been digging into the data. Mike, what else are you seeing?
Well, we've got some interesting surprises and some not so surprising news. You look at airline fares, they were up 2.7%. Of course, the airlines raising prices to keep up with the fuel problem that they have, but it's also the season where they start to raise prices going forward for summer vacations. But some areas did not rise, and that is a bit of a surprise. Medical care services were pretty much flat, down 0.2 on the month after a series of big increases. We also see motor vehicle insurance flat on the month. That had been going down. So some offsetting moves in things that actually will show up in the PCE when we get to that later in the month. But overall, kind of, as Matt said, expected in terms of inflation, and we get the usual volatility in various individual categories. The question is, how strong is underlying inflation going forward? That's the Fed's job to figure out.
Right, so there are some really negative pockets, but Mike is pointing, even Matt, to some decent improvement when it comes to inflation in some scenarios. I guess the Fed could breathe somewhat of a sigh of relief because they knew the gasoline shock was going to be there.
Yeah, you knew the gasoline shock was going to be there. You got some weakness in medical care commodities, used car prices. I think the one thing is, as you look ahead, the fact that rent and OER are stronger is important. Those are very persistent components. They're a much larger share of CPI than they are of PCE. But nonetheless, if those pick up, you build in a little bit more inflation as you look ahead. And then again, some of the weakness in used car prices, where we have pretty high confidence that over the next several months, those are going to bounce back given what we see from wholesale prices. The key question remains, how much pass-through do you have from this oil and energy price shock to core components? The Fed's modeling on that reaches different conclusions. The Fed staff's model suggests that you have very little pass-through to core inflation. They had some other modeling that they did after the 2022 oil price shock, which suggests that you could have more persistent pass-through. So I think that's the key question for the Fed.
I still just go back, and you're great on this, Matt, just the setup. That the setup wasn't great for this. That in PCE, we saw this rise come before and the sticky inflation. If we couldn't get inflation down to target for the past 60 months, even before the outbreak of war and another energy shock, how do we even get there at this point?
Yeah, and I think that's the real issue for the Fed, right? Because even before this shock, the core PC inflation was still a percentage point above their target. We are now, 5-6 years into the initial inflation shock that we saw after COVID. Yes, there are reasons why this time inflation is higher than it should be, and tariffs is the culprit at this point. But I think what you've seen is just more Fed officials growing kind of frustrated with the progress or lack of progress that they've seen on the inflation front. So even if you were to exclude another energy price shock and the fact that that could lift inflation on a forward-looking basis, you still are left with very little inflation progress over the past 18 months and a labor market that looks very close to the Fed's targets. In that environment, I think the Fed would be leaning towards keeping rates steady, and even in a normal environment could be thinking about that they are not restrictive enough to bring inflation down and the potential for rate hikes. Now, we don't think that that's a baseline, but I think it's a normal environment where growth is solid, the labor market is resilient and close to target, and inflation is a percentage point above target.
We just had the vice president depart for these talks in Islamabad. What are you looking forward to this weekend?
Yeah, I think the market has taken this view that both sides have just shown their hand and wanting to de-escalate, right? Now, the path between here and a full reopening of the Strait of Hormuz seems to be very unclear, and we've had very little progress on that front so far. But I think as long as the market sees continued progress or movements in that direction, then we will see oil prices that I think remain somewhat more subdued, the markets can remain more buoyant, and the markets will be a little bit less worried about Fed rate hikes. And speaking with clients, I think that they've really meaningfully taken down their view of the risk scenarios around this. I think they think that the peak market impact of this event is behind us. So there could be some complacency on that front. And so you do worry a little bit about that we have had these headlines, we believe that de-escalation is going to be in place, and that we're a little bit too complacent around escalation.
Right, the market is really holding on to the idea that this ceasefire can last.
Absolutely.
All right, Matt Lazzetti, thank you so much for joining us this morning. That was, of course, Matt Lazzetti of Deutsche Bank. Why don't you get to a recap and an update on stories we're watching this morning. Here's your Bloomberg brief. Recapping the data we just got. March CPI inflation rising 0.9%, the biggest monthly jump since 2022. Core CPI falling below expectations, suggesting that underlying inflation may be stabilizing at a lower pace. The data leading traders to price in one Fed rate cut later this year. And the 4 astronauts of NASA's Artemis II are on their way home. Their mission broke records, taking them further from Earth than any humans have ever been, as they got closer to the surface of the moon than any astronaut in more than half a century. Artemis II is expected to splash down in the Pacific Ocean at 8 p.m. Eastern tonight. And Taylor Swift and Travis Kelce have set a date and a location. They're getting married in New York City. The New York Post reporting the couple sent out save the dates for a July 3rd wedding. The power couple was reportedly set to marry in Rhode Island, but changed their plans to accommodate more guests. I guess congratulations are in order. I don't really care too much. I am wondering, though, where New York is going to be big enough that they couldn't do this in Rhode Island.
That was my thought, and this is just like kind of my selfishness of being like, I don't care about them, but It's also going to be happening at the same time as the World Cup. I'm kind of scared for us in New York City.
And America 250.
Yeah, you're right. It's going to be a scary, like, honestly, if you don't have to be in New York City, I would frankly leave for the month.
I'm going to send an email now and request that week off.
Good
Up
idea.
next, Jessica Noviskis of Marquette Associates on the path ahead for interest rates. Plus, Bailey Lipschitz with your morning movers with CoreWeave shares rising after striking a deal with Anthropic. That stock is at more than 5%. You're watching Bloomberg Surveillance. Good morning.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. We're just off the heels of that CPI data coming in line. Important data, though, because, of course, this was going to give us a little bit of data and insight into the energy spike we saw following the Iran war. And what we see is that coming in line, so stocks like this, and stocks moved higher on the news. Of course, the S&P 500 has had 7 days of gain. So this Friday, we do look like we're moving into potentially another 8 consecutive session with the S&P 500 closing higher. We are just 1 hour away from the cash open. Let's bring you your morning movers with Bailey Lipschitz. Hey, Bailey.
Hey, we're keeping an eye on CoreWeave, the company striking a partnership with Anthropic. So now, according to the CEO, they will have Anthropic, OpenAI, Google, and Meta. So when you look at the reaction from analysts, there was a little bit of uncertainty since the company went public on over-reliance to a single customer. Well, they got the big 4 AI models right now in a partnership. So building on that, building on their ability to get access to NVIDIA chips. And as you can see, up 5% 5%. This does come just a day after a big partnership with Meta was unveiled with a price tag on that. Want to position ourselves now with another company that's outperforming. That's Marvell Technology. This company was upgraded to overweight at Barclays. Closed at a 15-month high yesterday, already up more than 40% year to date, really benefiting from demand for AI data centers. According to the analyst, really pointing out the fact that there is no slowing in demand for building out those chips, and Marvell is kind of sitting at the crux of that, really saying that the company could rapidly grow and see its business rise by 90% this year and next. Want to talk about some of the underperformers or companies that are kind of down in the dumps, if you will, on the back of this AI momentum. Looking at software companies, DocuSign, Viva, and Autodesk, all down more than 1%. This does come after Citi cut half a dozen companies to neutral from buy. That analyst saying that most of these are good companies and well-positioned for the long term, but outside of real catalysts for the next 12 months, you shouldn't be looking for a lot of upside beta, so maybe better to reposition elsewhere. So we are keeping an eye on the red on the screen. As you can see, software really the big losers these days, with all the AI hardware and infrastructure companies on the upside, guys.
Thanks so much, Bailey. All right, the broader market, though, rising following the inflation data as traders add to bets on one Fed rate cut this year. Jessica Noviskis of Marquette Associates joins us now. All right, so Jessica, it was bang in line. So does this just basically mean the Fed can kind of look through what we've seen in terms of the energy shock?
That's exactly what we expect from the Fed. So the increase in the month-over-month headline number, March over February, was entirely attributable to gasoline prices. Gasoline makes up about 3% of the CPI index, and it was up 21%. So that's that differential there. Given the ceasefire, we think that is sort of cover for the Fed to look through this energy crisis and keep rates on hold when they meet later this month.
What about for investors, Jessica? Does it now mean we can look through inflation and look through to earnings?
I think investors are already doing that. I think this is more of the same that we've seen in markets, this persistent optimism, this buy the dip propensity. The markets and investors have been conditioned to look through volatility, to look through that worst case scenario, because that's what's worked in markets. If you've taken risk off at the wrong time, that's the best way to destroy value. So I think investors have been doing that, and they're going to continue doing that until they are confronted with something that they cannot do that any longer.
What's the borderline between that and complacency? Is it complacency in markets, or is there some real logic to this idea that markets are able to look through geopolitical angst and this specific energy shock?
It certainly depends on how long the war lasts. If this ceasefire holds and we see a resolution at the end of this, I think it's fair to write it off, depending on how quickly energy markets reprice, which it still hasn't. There has been structural damage to energy infrastructure in the Middle East, and to the extent that that keeps energy prices high, companies are going to have to factor that in.
Why is the market so willing to buy positive headlines and less so negative ones?
Because it's worked, it's been the right move. I think a lot of it has to do with the retail trade that we've seen really building in markets since COVID. We saw the quick bounce back. Russia-Ukraine was limited. Liberation Day, the bounce back. Venezuela was a quick win. I think it's what investors have come to expect. And I think the risk of missing out on U.S. equity returns for both U.S. investors and foreign investors is too high. So folks have chosen to remain invested, and I think we will continue to see more of that.
Jessica, thank you so much for your time this morning. Jessica Noviskis of Marquette Associates. We just had news this hour that Vice President J.D. Vance has boarded his plane. He's heading to Islamabad. This was just moments ago. This is, of course, ahead of tomorrow's U.S.-Iran peace talks. Vance telling reporters President Trump gave very clear guidelines for negotiations.
We're looking forward to the negotiation. I think it's going to be positive. We'll, of course, see, as the President of the United States said, if the Iranians are willing to negotiate in good faith, we're certainly willing to extend the open hand. If they're going to try to play us, then they're going to find that the negotiating team is not that receptive.
Bloomberg's Tyler Kendall joins us now with the latest. So, Tyler, we do have Vice President Vance heading over for these meetings. I keep asking this question. For the United States, what does success look like at these meetings?
Well, Anne-Marie, as you've mentioned on the program earlier today, it really appears just the fact that the negotiations are happening and getting off the ground is considered to be a success, at least at this moment, after we saw that potential roadblock yesterday over Israel's front in Lebanon. The thing is, there are just still such big differences between the two sides, as the vice president here is saying that President Trump has given them clear guidelines. President Trump has previously outlined that the U.S. wants to see no Iranian nuclear enrichment in a potential deal, and that the U.S. would be able to extract already enriched material. The thing is, we know that something like that is considered to be a non-starter from the Iranian side. Still, U.S. officials maintain that Iran privately is sending them a different message. But Anne-Marie, as you well know, another key part of this is the Strait of Hormuz, and publicly, Iran doesn't appear to be letting up on their leverage there. President Trump issuing fresh threats overnight, saying that Iran better not be charging tolls and that the country is doing a very poor job reopening the strait, as data is showing us that traffic at this point really hasn't resumed.
Yep, essentially still closed, and that's their entire leverage. Bloomberg's Tyler Kendall, thank you so much for joining us. Coming up on Monday, Peter Cheer of Academy Securities, Norman Rule of CSIS, and Henrietta Trace of Veda Partners. Jonathan and Lisa will be back with me on Monday. Danny, thank you so much for joining me, and you're taking us through at the 9 o'clock open.
Hopefully people aren't sick of me yet.
Yep, nope. big weekend ahead. I hope you enjoy your weekend as you, of course, stay close to your terminals. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherianne in Seoul, and this is Bloomberg.
We could
come to the end of a 7-day streak. Well, we had 7 up days. This could be the down day. 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump presses Iran to reopen the Strait of Hormuz again as Israel and Hezbollah trade fire, clouding peace talks set for tomorrow.
And fresh inflation data this morning shows how quickly the Iran war is rippling through the U.S. economy.
And big banks head into earnings season as Scott Bessent and Jerome Powell call a meeting of the top CEOs amid a new AI threat.
Oh man, I'm obsessed and terrified about this story. I have to say,
it's pretty amazing.
I know there's a lot going on today, but I'm most excited to talk about that because
So
it could be the end of civilization as we know it.
Well, I think there are 2 incredible threads, right? On the one hand, there's the AI and the fact that it escaped from its testing cage
and bragged about it.
Exactly. On the other hand, there's a secret, maybe, meeting of the Treasury Secretary,
and Jerome
the Fed
Powell.
Chair, and the top bank CEOs that we didn't know about for a few days.
So true. I can't wait to get into it. In the meantime, Matt, in the pre-market, I am watching AI stocks on a different story, though. Anthropic has agreed to rent data center capacity from CoreWeave to help power Claude. So CoreWeave up 2%. All this coming as TSMC continues to see strong AI chip demand. Not a lot of movement from NVIDIA this morning, though. Up 2% for TSMC, again, on those strong results, Matt.
Is this the same story every single day?
Yes.
Every day, some hyperscaler has a contract with CoreWeave. Every day, TSMC has earnings.
CoreWeave and Meta yesterday, by the way.
It's on repeat. All right, a check on markets following the CPI print that we got this morning. You saw yields come sharply down. You can see S&P futures. Well, now we're up. So it could be an 8th day in a row for gains if we finish the cash session there. 2-year yield right now up about 1.8 basis points, so 378, bouncing back from the drop I saw earlier. NYMEX crude right now really unchanged at $98 a barrel. Brent as well at 95.74, so holding just under 100, although, Danny, it has been, WTI has been over 100 at some points this morning.
It has. Again, a lot of variability in that, especially heading into the weekend. But we did get that CPI data as we've been laying out. Let's break it down with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what did we get?
Well, we got no surprises, put it that way. Nothing really. The headline CPI came in 0.9% higher than in February, and that was totally expected because of gasoline prices. Headline year over year rises to 3.3%, well above the Fed's 2% target. Core, a bit of a surprise, comes in 0.2. The forecast was for 0.3, but it's there are some reasons why that came in a little bit lower. The core year over year does rise a tenth to 2.6%. What moved it all? Well, as I mentioned, gasoline prices, and you're not going to be surprised, they went up 21.2% in the month of March, and they kept going. So this is going to continue into the April CPI. Airfares, same reason, 2.7%, and fuel is going to be more expensive in April as well. Used cars, that's a surprise, down 0.4. Wholesale prices had risen, so we could see that go back into the CPI as an increase next month and push the core up. Apparel prices up 1%. Put those in there because that's tariff related, and we've almost all forgotten about tariffs. One other note in terms of this is there is an unpublished number for legal services. Inflation Insights Omar Sharif points this out. It fell by 4.1% after rising 10.1% in January. It's only counted every other month. So that's another reason that the core was held down that will go away in April. So brace yourself for a rising core as more of the war gets into inflation and as we continue to see gasoline prices rise.
Mike, I know it wasn't a surprise, but to see the headline CPI number rise almost 1% on the month-over-month level, it's just, I haven't seen that since Bidenflation, right? So what is the Fed to do?
Nothing. They're going to sit and just watch it, Matt, because certainly the March number was biased up by gasoline prices. Energy costs were responsible for 3/4 of that increase. What they have to do is separate out what might be underlying inflation not related to the war. That didn't look too bad in this month's CPI. They'll keep an eye on PPI next week, and then when we get PCE at the end of the month to see how that's happening. And then, of course, a lot's going to depend on the April numbers.
Mike, thank you very much for breaking all that down for us. That's Bloomberg's Michael McKee. Elsewhere, Vice President J.D. Vance headed to Pakistan, headed to Islamabad ahead of U.S.-Iran talks tomorrow. As Washington pushes for the Strait of Hormuz to fully reopen, Vance spoke with reporters this morning.
We're looking forward to the negotiation. I think it's going to be positive. We'll, of course, see. As the President of the United States said, if the Iranians are willing to negotiate in good faith, we're certainly willing to extend the open hand. If they're going to try to play us, then they're going to find that the negotiating team is not that receptive. We're going to try to have a positive negotiation. The president has gave us some pretty clear guidelines.
Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, what are we looking out for this weekend?
Yeah, hey, Danny. Well, at this point, the White House says that these diplomatic talks are on track, but at least publicly, it appears that both sides are very far apart when it comes to some of those core issues and demands, including President Trump demanding that Iran have no nuclear enrichment and that the U.S. be able to extract already enriched material, because we're hearing from Iranian officials leading into these talks this weekend that that is going to be a non-starter. Still, U.S. officials maintain that privately Iranian officials are painting a much different message as we try to glean some clues on where we could get a potential agreement. But in order to talk about a longer-term agreement, we first need to get through this 2-week ceasefire. And at this point, at least one of those core pillars still isn't being upheld, and that is when it comes to the Strait of Hormuz. As you well know, we got these fresh threats overnight from President Trump saying that Iran better not be charging tolls on ships that are transiting through the strait, and also saying that he thinks Iran is doing a, quote, very poor job in reopening it amid data that is showing that at this point, it does appear traffic is still basically at a halt. Danny, we'll have to see where this ultimately goes. We do know that one potential roadblock was Israel's ongoing operation in Lebanon, but after a reported call by President Trump to Israeli Prime Minister Benjamin Netanyahu, that appears to have paved the way for direct talks between Israel and Lebanon next week in Washington to allow these talks between the U.S. and Iran to go forward in Pakistan.
It's okay. So I want to kind of shift gears a little bit, because we also got a pretty amazing story that the White House a couple of weeks ago put out an internal memo to staff not to trade on inside information, a reminder, if you will. Is there concern that they were?
Well, according to this memo, perhaps, Matt, it's definitely drawing fresh scrutiny and questions on whether or not insider trading is happening, though we should say there has been no evidence White House staff has profited off of it. But Bloomberg News had reported last month that there was a flurry of activity in the futures market within the 15 minutes before President Trump posted what was considered to be a pretty pivotal post, saying that there were positive discussions with Iran that ultimately led him to delaying planned threats against Iranian energy infrastructure. Now, Bloomberg News compiled the data just to put a finer point on this, and it shows that contracts corresponding to at least 6 million barrels of Brent and WTI were sold in the 2 minutes at 6:49 a.m. Eastern before the president's 7:05 a.m. Eastern post back on March 24th. Compare this to the average over that same period from the 5-day prior, which was 700,000 barrels. So that is, of course, a sizable difference. This memo obtained by Bloomberg News and reviewed also put a finer point on concerns when it comes to prediction markets amid questions about what future guardrails could look like there.
Yeah, fascinating stuff. Tyler, appreciate your reporting. Tyler Kendall there reporting from Washington. Speaking of, Treasury Secretary Scott Bessent and Fed Chair Jerome Powell summoned Wall Street CEOs to an urgent meeting on concern that Anthropic's Mythos AI model will cause an era of increased cyber risk. Carolyn Hyde, co-host of Bloomberg Tech, joins us now. So, I mean, the meeting in itself I find fascinating, but the fact that there's an AI model that apparently escaped from its testing cage and then went online to brag to human engineers about it, then tried to cover up its track is a little bit freaky and cool and cool.
And cool, and Anthropic is riding on the cool, freaky mythos around all of mythos at the moment. Yeah. Look, this is previously unreported that Jerome Powell and Scott Bessent are so worried about the power of AI systems more broadly of course, we know that Mythos is the key one here. The Glasswing project was already announced by the company, where they're working with 40 such partners to try and stress test their own systems before it's let out into the wild. Some of those partners include banks like JP Morgan, and actually Jamie Dimon wasn't at this meeting. He couldn't make it with Jerome Powell and Scott Bessent. But you had Jane Fraser there, you had the heads of Morgan
Jamie
Stanley.
Dimon couldn't make it. So the Treasury Secretary of the United States of America and the chairman of the Fed call an emergency meeting, and Jamie Dimon's like, I'm busy, guys.
Well, he's probably like, I'm ahead of this. I'm already part of Glasswing project. I'm already seeing all the cyber risks, and I've got it in place. JP Morgan comes top time and time again in terms of AI usability, AI deployment within the bank. So he's probably feeling pretty right now.
It just seems like crazy to me that we're developing these models that could potentially, in the hands of bad actors, cause huge issues. And like, for what? Just to make everyone a little bit more productive? It feels like we're just like going somewhere and we don't know what the end game is.
Well, the hope and the fear and anxiety is around biotech in many ways. But think of the amount of times that you hear from the venture capitalists that back this, the companies that are pushing this into the wild, that this could cure cancer, that this could help your parents, my children live healthier lives. That is, the abundance argument is what continues to drive Demis Hassabis over in Google, what continues to drive Dario Amodei to take on these risks. But the idea that there could be so much positive coming out of it should outweigh some of the negatives. That, of course, is the ongoing concern. Now, there's also some reporting out there, of course, that compute is the real limitation here. And maybe that's why they're only letting 40 partners have it, is because Anthropic needs to get all the compute for us to be able to use the latest Mythos program. Now, it's interesting that OpenAI have been telling its own investors this week, look, don't worry about us at the moment. We've got a computing advantage versus Anthropic. But this all interweaves with what we're hearing from CoreWeave at the moment, that they're doing a latest deal with Anthropic to help them be able to have the compute, the energy to drive forward the opportunity and the risks that come with generative AI.
Can I just quickly ask, does TSMC release quarterly sales figures like once a week?
Monthly.
I feel like I constantly hear this. And also, is there a new deal with CoreWeave every day? No wonder investors are willing to buy their bonds for whatever they want to sell them.
I mean, Michael and Trader's coming on the show a little bit later because, yes, just yesterday we heard that they're upping. They've now got $35 billion exposure to Meta as an overall customer. They had that $21 billion deal yesterday. Today they're announcing that they are lending compute, going to give them compute to Anthropic. So now they're with all the key AI players. We're asking him whether this is going to be a weekly cadence because we're all exhausted. Meanwhile, we're also seeing TSMC that they do give monthly updates. And this is a preliminary number. You don't actually get the end result numbers until April the 16th. But TSMC just going great guns. And why? Because they basically supply the chips to Apple for your smartphone, but also for NVIDIA chips or AMD, all the like. And clearly, even with the Iran concerns, even with these every now and then AI compute bubble concerns, everyone still needs their TSMC chips.
Yeah, and it's driving NVIDIA chips higher in the pre-market. They were down when I came in this morning, but they're back up, and we could have an 8th day in a row of
so exciting.
Broad
Already
equity
the
market
longest
gains.
winning streak since October of 2025.
There you go. So the longest winning streak in stocks since October of 2025, the highest headline inflation that we've seen since 2022, after the biggest drop in oil since COVID.
We're only down 2% from all-time highs. Everything's...
Carolyn Hyde, looking forward to your program. AI can kill us all, but also I use it to help me find bands that sound like Tool, and it's really important.
It's a better use.
Catch Caroline with the CEO of CoreWeave, Michael Intrader on Bloomberg Tech at 11:30. Plus, in the next hour, we'll hear from Vlad Richter, the CEO and co-founder of Fencer, a cybersecurity platform on how to protect ourselves from whatever Anthropic's developing next. Coming up, ceasefire talks ahead, but shipping remains under pressure. Jennifer Kavanaugh of Defense Priorities joins us. This is Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. North Korean leader Kim Jong-un is flexing his alliances and firepower ahead of President Trump's China trip. After fresh missile tests, Pyongyang is hosting China's top diplomat, signaling tighter Beijing ties. Kim now demands recognition as a nuclear power before any U.S. talks, raising the stakes for potential diplomacy. NASA's Artemis II crew is set to splash down in the Pacific tonight after a record-breaking trip around the moon. The capsule will slam into Earth's atmosphere at 25,000 miles per hour, testing its heat shield under 5,000-degree temperatures with no backup. After a brief blackout, parachutes deploy and recovery teams will bring the astronauts home, marking a major milestone in America's return to deep space. Bloomberg will bring you that live when it happens, and Ed Ludlow, I'm sure, will be there to bring you all of the details. Rising gas prices are driving more Americans to pawn shops for quick cash. Owners say demand for small, high-interest loans is climbing as people struggle to cover basics like fuel and groceries. Even middle-income customers are pawning valuables. Analysts say booming pawn businesses often signal deeper financial distress, which is obvious. That's like NINSS, yes.
Yeah, correct. That's not great. It is what it is. Meanwhile, Matt, what we're all watching this weekend, U.S. and Iranian delegations set to meet in Pakistan tomorrow as Washington calls on Iran to reopen the Strait of Hormuz. For more on this, Jennifer Kavanaugh, Director of Military Analysis at Defense Priorities, joins us. Jennifer, thanks for joining us. What represents a good outcome and a win for the United States this weekend?
I mean, really, I think the best outcome that we can expect from this weekend would be an agreement to meet again, a specific plan for the next meeting. The two sides are very far apart. Their plans do not overlap at all. The Iranian 10-point plan and the U.S. 15-point plan are diametrically opposed. So I don't expect a lot of deals to come out of this first weekend. Simply progress talking, constructive discussions about what the key issues are, a decision about what to focus on first, whether it's the Strait of Hormuz or Iran's nuclear program, and then a specific plan for when the next meeting will happen and where.
How long do you see this ceasefire lasting? Because it seems that Israel continues to bomb Lebanon, and the Iranians insist that is breaking the ceasefire. Meanwhile, President Trump said he'll only allow a ceasefire if the Iranians open the Strait of Hormuz, but it appears to be closed.
Well, I think that's the question that everyone's asking is, how will this actually last beyond this weekend? Both sides do have an incentive to keep the ceasefire going at least through the 2 weeks. For the United States, the military options on the table are really undesirable. In order to accomplish the goals that the president has set out, ending Iran's nuclear program, reopening the Strait of Hormuz, these are things that military tools really can't accomplish at any sort of reasonable cost. And so for the United States, diplomacy makes the most sense. And Iran, too, has taken significant damage from U.S. and Israeli strikes. And it's at a point now of high leverage, seeing that it's shown the world that it can control the Strait of Hormuz and that it survived a war with the United States. So both sides have an incentive here to actually make good on this 2 weeks and actually make progress. If we get to the end of the 2 weeks and nothing's been agreed, but there's progress ongoing, I could see this getting kicked down the road. But as you said, I think the two issues here are, number one, what happens in Lebanon. Hopefully there are going to be some talks about this next week. Hopefully that can keep that below the radar. And what happens at the Strait of Hormuz, because right now some number of ships are getting through, but it's a small number and they're only going through after paying Iranian tolls.
And it's the president making clear in a Truth Social post that he's not okay with Iran charging tolls. It's something the GCC would not like either. The Gulf states would not want to see happen. Jennifer, what is the alternative? What is the mechanism for getting the Strait of Hormuz open and to remove this piece of leverage that Iran has?
Well, really, the only real option, like long-term solution, is some kind of diplomatic resolution, a political solution to this conflict. And that's true for a couple of reasons. The first is that the real problem here isn't that companies and countries won't pay Iranian tolls. They may not want to, but they probably would if they had to. The problem is that they're not sure it's safe to go through. There's still concern about whether or not there are mines in the strait, whether or not Iran might use missiles and drones. So until there's a political solution, that uncertainty will keep shipping companies from going through, insurance companies from providing the necessary insurance. And that will keep the Gulf states from putting a lot of their production infrastructure back online. So really, you need a long-term political solution to restore confidence. The military options on the table are very undesirable. If the United States wanted to try to force an opening of the Strait of Hormuz, it probably could, but it would take something like 100,000 forces on the ground to hold territory along that strait to suppress any sort of Iranian missile or drone fire. It would take at least 10 or probably more U.S. destroyers. 10 destroyers is already 20% of the U.S. deployable destroyer fleet. And then you'd need significant amounts of U.S. air power and air cover to protect those ships as well. So you're talking a massive operation. This would only partially restore traffic through the strait, and it would be required indefinitely until you had that political solution.
Jennifer, great to have you on the program. I hope we can get you back soon. Jennifer Kavanaugh there is a senior fellow and director of military analysis at Defense Priorities. Appreciate your time. A check on futures ahead of the opening bell. We have seen S&P futures, NASDAQ futures both turn higher after that inflation number came out. We had CPI just about 52 minutes ago, and it came out, although obviously much higher than it was the month before, in line with or even less than Wall Street had been expecting. You see crude unchanged really on NYMEX and Brent crude, both 98 and 95.74 a barrel respectively. Coming up, Mira Pandit of JP Morgan Asset Management joins us after the opening bell with the S&P 500 on its longest winning streak since October. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Seven consecutive days of gains will today make it 8, the longest winning streak since October of 2025. Inflation coming in on 9.9% versus for the headline figure. We're up 0.1%, NASDAQ 0.2, but it's a pattern we've seen, this hesitation to take risk into a weekend, especially when you have negotiations occurring in Pakistan. NYMEX crude is still higher, $98 a barrel for the May contract. The June contract for Brent crude, it's still that mismatch, is down 0.1%. Coming up on the show, we're going to have your opening bell in about 4 minutes' time, and then we'll catch up with Mira Pandit of JP Morgan Asset Management as trading gets underway to end your week. This is Bloomberg Open Interest.
Estava sitiada.
Isso é o começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Money can do a lot of good. It can really transform people's lives.
but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that have now turned positive. So S&P futures and NASDAQ futures, as well as Russell futures, all higher. We could see an eighth consecutive day of gains for the S&P 500. You hear the opening bell down at the New York Stock Exchange. You've got Natixis Investment Management ringing the bell, celebrating an ETF, the Natixis Loomis Sales Focused Growth ETF, up 63% over the last 5 years, no big deal. And it's ETF Friday, so we're going to be talking about ETFs in just a little bit. Down at the NASDAQ market site, you've got the Senate Press Secretaries Association. So these are the spokespeople for some of the least popular men and women in America. In fact, I just looked at the Gallup poll results, and Congress and senators are even less popular than journalists.
Wow.
Yeah.
You know it's low when they're less popular than us. Well, they're happy, and you know what? They should be.
Shedding tears of joy.
They're still doing a civic duty.
I believe that's the first time I've ever seen anyone shed a tear of joy
Wait,
at a bell
actually,
ringing. Yeah.
Was someone actually crying there?
Oh, it's gone now.
Wow, I missed that.
Is it still called crying if they're tears of joy? Is that
yes,
still
it's
crying?
still the act of crying is tears coming out, whether it's happy or sad. Okay, to something completely different now. Some of the stocks I'm looking at pre-market.
Completely different and the same as every day.
And maybe you'd shed a tear because of the huge sums of money coming through. And to Matt's point, have you heard this one before? Someone renting data center capacity from CoreWeave. Yesterday, it was Meta. Today, it is Anthropic. CoreWeave shares up 4.3% as we get closer to the end of humanity with new models coming out from Anthropic. NVIDIA, that's higher by 0.7%. And TSMC out with yet another sales figure. Still strong AI chip demand, sales rising 45% in March.
I can't believe CoreWeave has only doubled in the past. It's up like 130%. Since it went public.
Yeah, but remember we had all those fears of bubbles and taking on too much debt. I think that put a ceiling, I mean, obviously a massive and a huge and a very high ceiling, but a ceiling on CoreWeave.
Well, I look forward to the interview with CEO Michael Intrater coming on Bloomberg Tech at 11:30. Check on markets right now following the CPI print. Head of U.S.-Iran peace talks. You can see that the cash trade higher, the 2-year yield also climbing just a little bit, but holding in that range. Crude also really not moving at $98, $99. Brent crude at 95 or 96. The inflation number wasn't a surprise. We knew it was going to come, but incredible inflation in the last month. Joining us to talk about this is Mira Pandit, JP Morgan Asset Management Global Market Strategist. Mira, almost 1 full % month over month for the headline number, and we can expect more to come. I guess this isn't a problem for equities.
Well, ultimately, it was something that was expected. We knew we were going to see something in the 3s or higher when we looked at headline inflation and a big jump from gasoline. And the good news is that 3/4 of that overall increase did come from gasoline. So it's not coming from a variety of other sources. And when you look at core inflation, that is still relatively tame, just 0.2% increase. But you look at that year-over-year number, and it's still in the mid-2s, and that's going to be something that the Fed wants to continue to see come down and make progress. So it's almost from an inflation front a little bit less about the oil impacts, because we know that over time that will recede. But the question here is, how does it potentially feed into core over time if it does?
Yeah.
Or do we see some more progress there that keeps the Fed probably on hold for the time being, but nonetheless not as worried about it as, say, in 2022?
I mean, it's got to feed into the core before it recedes, right, Mira? I got a IB from my buddy Joe Bruce-Wayless at RSM, and his take is, ouch, first of all. And then he says, hard to believe this is not going to bleed through to underlying inflation.
I'm a little bit more optimistic for a couple of reasons. One, you are going to see some mechanical higher shelter prices the next couple of months. But after that, we are seeing a general downward pressure in shelter. Less immigration means less upward pressure on areas like rents. Again, I think the core goods component as it relates to tariffs should slow down over the course of the year. And then I also think, look, this isn't 2022, where outside of headline inflation, you still had 5% inflation on the core measure. Ultimately, if we think about where we are today, that's been relatively contained. And if consumers are spending more at the pump and they're spending more on food, then that potentially takes away from some of their spending in other categories. We don't have the type of fiscal stimulus that we had in 2022 when consumers were flush. So ultimately, I do think that actually that higher headline inflation, when you think about the overall budget, could potentially cut into that core a little bit and help to ease that, but also likely slow growth a bit as well. And I think that's kind of what keeps the Fed in check as well.
And that argument is the likes that we've heard from PIMCO, for example, saying you should be buying bonds, that growth is the bigger concern, not inflation. How do you play that into a portfolio if that could be the outcome of what we see from higher energy prices?
Ultimately, I think that we have to think about the whole picture here, which is if the consumer starts to hurt and if the consumer starts to struggle, it still looks like we're going to get some offsetting impacts from the elevated tax refunds, so that should buffer the consumer a bit. But if the consumer does start to struggle, we're probably going to get more fiscal stimulus. This is a midterm election year. So it actually hasn't changed our growth forecast all that much. I think some elements of the timing and the construction of inflation and growth have shifted a little bit, but our overall forecast for inflation is slow by the end of the year after peaking, because again, no matter what, the oil thing changes the shape of inflation, but we expected higher tax refunds to potentially push up inflation. So we still follow that same trajectory. We still likely see trend or slightly below trend growth, in which case it hasn't changed our overall investment thesis all that much.
I want to talk a little bit about AI, the threat from it, software, and market positioning, because this is something that Danny and I have been talking about lately every morning. When we see a sell-off in software stocks now, is that because people are freaked out that AI is going to eat software's lunch, or is it because they can now sort of post-war, if you will, get short again after flattening out over March?
I think that the AI displacement fears really did play out in the first 2 months or so of the year. I don't think we've gotten necessarily new news. Now, with some of the things coming down the pike from some of the major model producers, maybe this does give us a little bit of new news. But I do think what we're struggling with here is sentiment. People are looking for reasons to take a breather after the last 3 years of double-digit returns on the markets. But ultimately, the challenge when we think about investing with tech right now is, yes, if you look at the Mag 7, valuations have come down from 29x to about 24x. You're also seeing that the fundamentals still look really solid when you think about 25% earnings growth this year and good expectations there overall that with upward revisions, but it's still a third of your portfolio. So that does create challenges in terms of a buy the dip around tech. And then software, look, I think that the challenges will be long-term. Even if software isn't displaced fully, you're still going to see the economics of that model change as it goes sort of from a per head to more of a compute cost issue.
One of the other interesting dynamics of this market year to date has been the fact that small caps have outperformed so much, which feels pretty remarkable just given years of chronic underperformance. By 6.5 percentage points is how much they're beating the S&P, the Russell 2000. What's underlying that, and is it something that can continue?
Ultimately, we're not likely to see the Fed cut massively. We're not likely to see accelerating growth. We're not at the start of the new cycle. I think there is some excitement about potential earnings growth, but what we've seen in prior years, in the last couple of years in particular, is that there's sky-high expectations for profits, but they undershoot a lot by the end of the year in small cap, whereas that dynamic has been far less pronounced in large and mid cap, where you see maybe a little bit of a decay in earnings in terms of expectations versus reality. So I worry a little bit about that profitability dynamic within small cap. I do think it's just more of a sentiment rotation, because even areas like energy, for example, were up 25% before the war, an area that struggled last year. So I think that part of this is let's go to some of the places that we haven't been in recent years rather than here's a durable trend in areas like small cap.
And Mira, we're going to have to end it there. Thank you so much for enjoying it. Enjoy the rest of your Friday and your weekend. That's Mira Pandit of JP Morgan Asset Management. About 9 minutes into your trading day, and we are headed for an 8th consecutive day of gains. If we can end here, this will be the longest winning streak in just under a year. In 11 months, we have not seen 8 days of gains. What are we seeing? It's kind of this weird dynamic that Matt and I have been talking about. The winners are semis and the losers are software stocks, two trades that have literally nothing to do with war. But is this all about hedge fund positioning? Broadcom, Amazon, Nvidia, Meta, those are at the top of the pile. Again, I mentioned how some of the semis are doing well, Applied Materials, Lam Research. You go into the loser column and you got some software stocks in there. Palo Alto, for example, ServiceNow. It is the stocks that hedge funds love to short. Palantir is down 4%. Maybe there's a bit of a cyber play going on with that scary model from Anthropic, which they refuse to release to the public. If you look at the individual sectors and how they're performing this morning, materials, consumer discretionary, and communication and info tech doing well. I want to flag financials is at the bottom of the pile. And if Joe in the control room, if you could be so kind as to click on financials, I want to show you what the, oh, you can't see what the worst thing is. I promise if this screen were able to, there we go, we can scroll down. Ares is at the bottom of the pile. That is down 3.4%. We learned this morning that the fundraising for its new private equity fund, that it's targeting a much, much smaller fund. Is that concerns about what's happening, their ability to fundraise, or Matt, is it just the fact that it comes off the back after record fundraising for private credit for Ares last year? So either way, it's a big step down after that.
It is, regardless, it is something that we're going to talk about a little bit later on. So we're going to focus in with one of Wall Street's top lawyers on the risks in private credit. Coming up, big bank earnings are about to kick off. Just as Scott Bessent and Jerome Powell warn CEOs of the biggest banks outside of Jamie Dimon about an AI threat that maybe he already knew about and was ahead of. We'll discuss with Goldman Sachs analyst Richard Ramsden next. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. A little over 10 minutes into your trading day, and some of the biggest of the gains now starting to fade. We're still up about 1/10 for the S&P. NASDAQ that outperforms the semis have a really good day. Brent crude still up 0.25%. So let's get you some top calls and analyst action that we are following this morning. Piper Sandler, they downgrade Nike, citing concerns that athleisure is reaching saturation across the industry and may be at peak levels. Those shares down more than 1%. Next up, Mizuho, they've upgraded Shake Shack. They say the stock looks cheap, momentum is building. They also cite extra boost from tax refunds. And the World Cup, really people are spending their tax refunds on Shake Shack? Maybe, I don't know. Finally, CFRA upgrades Meta to a strong buy, saying it's set up to win big in digital ads while turning AI into a real moneymaker, helped by new models, cost cuts, and a strong core business that could drive its next wave of growth. Those shares up 0.8%, Matt.
I've had to think about it, and
Yes.
you know, they do have a burger called the Smoke Shack.
Okay.
And it is
What does that have to do with tax refunds? I'm not going to spend my tax refund money on just like more Shake Shack.
I mean, dollars are fungible, right? So it doesn't matter what you're spending them on.
I guess, yeah, you're just
Shake
spending
Shack
more and eating out.
Is in there. Let's talk about money as we focus on that theme. Scott Bessent and Jerome Powell have summoned Wall Street's biggest CEOs over a new threat: AI-driven cyber risk. The warning comes just as earnings season kicks off, with the biggest banks expected to post solid first quarter results. Joining us to talk about the earnings part of that is Richard Ramson. He runs the financials group at Goldman Sachs Research. And Richard, we called you in to talk about earnings and how the banks are doing financially. But just while you're here, how unusual is it for the Federal Reserve Chair and the Treasury Secretary to call a meeting, an unannounced meeting, with the biggest Wall Street CEOs?
Definitely not a regular event, but obviously it does happen, you know. And I think in this instance, I think it probably speaks to the fact that, you know, AI is moving incredibly quickly. And it obviously gives the banks a lot of opportunities around efficiency, but there are obviously threats that AI brings to bear too. I think what most banks will tell you is they're very good at protecting against what they know in cybersecurity, but it's very difficult to protect against what you don't know. So this type of public-private partnership where, you know, the government shares information with the industry, I think is incredibly important for the industry just to be aware of threats that are out there that perhaps they wouldn't have known if it was just up to them. So I think it speaks to the fact that this is obviously a key area of focus, but I think it also speaks to the fact that this is an area where there is a lot of cooperation between the administration and the government and the industry.
This is an issue where if there hadn't been a meeting and there's a blow up later, we would all be saying, why didn't the Fed chair, you know, and the Treasury Secretary call a meeting? So it does seem like good management.
It does seem like good management, even though Jamie Dimon isn't there, and you'd think maybe he should be there as the representative of the biggest bank. But still, beyond that, I mean, I'm really interested to hear what they say about AI on the earnings calls. But just what do you want to hear from the banks as earnings gets kicked off on Monday from Goldman Sachs? What are sort of like the top line items that you're like, these are the outstanding pieces, and I want to learn about how they stand?
Look, I think earnings is going to break down into two pieces. I mean, the first is obviously the results themselves, and Matt, I think as you said, the results I think are going to be very good. You know, the banks are going to see mid-single-digit net interest income growth. The reason is that loan growth is very robust. It's actually the highest level of loan growth that we've seen since 2022. Fee income is going to be very healthy, especially on the capital markets side. There's been a lot of deal activity, but trading activity has clearly benefited from the volatility. The banks are showing very good cost discipline. We're expecting north of 200 basis points of operating leverage. And I think on the credit side, it's going to be pretty benign. Now, the trouble is this is all in the past. I mean, what people care about is the forward. And there are several things that I think people are really going to be focused on. The first is, since these banks last spoke, a lot has changed. The two big changes are interest rate expectations. So when they last spoke, the market was expecting 2, maybe even 3 rate cuts. We're now expecting potentially no rate cuts, or maybe even a rate hike, depending on what happens over the course of the year.
That's good for the banks, right?
It's good for the banks in one respect, in that their balance sheets are obviously positioned for higher rates, but the reason that interest rates are going up is not positive, which is it's more concerns around inflation and potentially stagflation. And that could have an impact on things like loan growth and on deposit costs and deposit competition. So I do think analysts and investors are going to want to hear, look, how are you thinking about this very significant change in rate structures, and what does it mean for your outlook, given the very broad range of outcomes? I think, look, the second thing that people are going to want to hear is, oil prices, $100. What does that mean for consumer credit quality? It is clearly a concern in consumer finance, less of a concern for the large banks, but I think there will be a lot of questions around, look, what does this mean as you think about both consumer spending trends, but also the risk that you're going to see a deterioration in asset quality from very, very benign levels.
Are you optimistic, though, Richard, that, Danny has a weekly deals show every Wednesday at noon for an hour, and she's been hearing that deals are still getting done,
regardless first quarter,
regardless of the war, which is pretty great, right? There's a war in the Middle East, and they're still doing deals even there. And obviously, the trading business must be on fire.
Look, I think there is a bifurcation on the deal side between financial sponsors and strategic activity. And what I'm expecting to hear is, look, financial sponsors to a degree are on pause. Bid-offer spreads have obviously widened. Financing markets in certain areas are more difficult and more expensive. But you're right. I mean, on the strategic side, deals are still happening, and they are very large, consequential deals that have very complex financing requirements. And obviously, the big banks typically do very well in that type of deal environment. They typically punch above their weight from a market share perspective. On the trading side, no question. Look, this is going to be a very good quarter. We're expecting that trading revenues are going to be up double-digit year on year. It's probably going to be a record trading quarter in terms of just dollars. But again, I think the focus is going to be on the outlook. Have we moved from good volatility to bad volatility in certain markets? And I think the focus will be on rate markets in particular and commodity markets. And is there an expectation that you are going to see a fade in terms of trading revenues heading into the second half, especially given the de-risking that we've seen in the hedge fund community?
All right, Richard, great having you here. Hope we can get you back soon. Richard Ranson there of Goldman Sachs Research, covering the financials as we get prepared for earnings season to kick off. Coming up, software shares slumping as investors continue to gauge the AI risk. We'll talk about whether it's that or positioning next. It's ETF Friday. This is Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm
Christina Raffini.
We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Software shares continue to sink amid AI fears. The iShares expanded tech software sector ETF is down over 5 days, 7.5%. Joining us now is Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence. So, Anurag, what's the story here? Is this, as Danny and I have been talking about for weeks now, is this really investors' pessimism on software due to AI, or is it maybe positioning? Because we did see software have a fantastic run at the beginning of March.
I think it's a little bit of both, because every time there's a big model release, this comes back again. Or another way to think about it is whenever there is de-risking in the market, people rush back towards the memory names and short the software as they were doing before. So I think it's a little bit of both. And, frankly speaking, it's not going to change anytime soon, because I'm sure the next big LLM provider is going to come up with their model over the next, let's say, a couple of months. And then you're going to see the same headline risk that goes into it. I think the biggest issue that we see in the near term is because of the macro weakness, we will expect, estimates to cut down over the next 6 months. And then as soon as that happens, it's going to be a vicious cycle again. People say, well, their growth is slowing down because of AI. So I think it's going to be a while before we see a positioning of software in terms of acceleration of revenue. And I think that can help the sentiment of the entire group.
Anurag, less than a minute here, but are semiconductors just the other side of this trade? SMH, the ETF that tracks them, is up 12% this week.
Yeah, it's the same thing. That's what I'm saying. As soon as you get into that realm, because one of the things is very clear right now, AI infrastructure demand is very strong. That's something what we discussed yesterday with AWS and all the everything that's happening on that side. And you will see all the CoreWeave deals happening right now. So we know what's working for sure. What we don't know is how software will pan out in the second half of this year.
All right, Anurag Rana, Bloomberg Intelligence, have to get you back if Anthropic's mythos comes for any of us. Coming up in the next hour, Joanna Shu of the University of Michigan. Following fresh consumer sentiment data, top Wall Street lawyer Richard Farley on private credit concerns, and Vlad Richter, the CEO of cybersecurity startup Fencer, on the mythos threat. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to
any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Wheels up on Air Force Two as Vice President Vance heads to Pakistan for U.S.-Iran peace talks.
If they're going to try to play us, then they're going to find that the negotiating team is not that receptive. So we're going to try to have a positive negotiation. The president has gave us some pretty clear guidelines.
Correspondent Imtiaz Tayyab is covering the negotiations in Islamabad.
The fact that they are talking is a huge step in a direction that many here in the region are hoping this conflict is moving. The Gulf, as we know, has suffered enormously during this war. The Strait of Hormuz, where 20% of the world's energy passes through, that has been choked off, affecting so much of the world's economy.
The war has led to the biggest jump in inflation in 4 years. Consumer prices spiked 3.3% in March, thanks mostly to rising gas prices. CBS's Kelly O'Grady.
It was driven all by energy. And we've been talking about this for a month, right? We talk about oil every day. We talk about gas prices. And that was really where you saw the big jump. Food, though, was flat.
Average gas prices at $4.15 a gallon today. A new report finds property taxes are rising even faster than inflation. CBS's Michael Wallace.
The real estate data firm Adam says property taxes rose 3.7% in 2025 from a year earlier. Delaware property owners saw the biggest tax increase, 18%. Nationwide, the average property tax bill was $4,427.
New Jersey had the highest taxes, West Virginia the lowest. Property taxes actually fell in 10 states, most of them in the West. 4 astronauts who made history by looping the far side of the moon, scheduled to return to Earth with splashdown in the Pacific Ocean off San Diego later today.
I'm Peter King at the Kennedy Space Center. Artemis 2 will have a blazing hot and fast re-entry. During the unpiloted Artemis 1 re-entry, chunks of the heat shield came off, prompting investigations and worries from experts inside and outside of NASA. Orion Deputy Program Manager Debbie Korth says mission managers have mitigated the risk this time.
I think, we did a very thorough job and have confidence in the heat shield able to perform this mission. We changed the mission design that will allow us to fly the heat shield we have.
An investigation underway into whether AI played a part in last year's mass shooting at Florida State University. Prosecutors say the student gunman who it killed 2 people and wounded 6 others had asked ChatGPT about the busiest time at the student union. State Attorney General James Uffmeyer.
AI should exist to supplement, support, and advance mankind, not lead to an existential crisis or our ultimate demise.
This is CBS News. Looking to make a move? The Motor City's ready to sweeten the deal.
After decades of population loss, Detroit is now the Michigan city seeing the biggest growth, and they want to get bigger. The Move Detroit Coalition has created a new initiative awarding $500,000 to 313 current and future Detroiters. Those who already live in the city or are returning after leaving are eligible for up to $15,000. Others can apply for $1,000 in financial support. The money can be used to buy a home, toward rent, for relocation costs, business projects, and renovations. Taylor Dietz for CBS News, Detroit.
Forget New England. Taylor Swift and Travis Kelce may have other plans for their big day. A source tells the New York Post your English teacher and your gym teacher will be tying the knot in New York City July 3rd. That's the day before Swift's favorite holiday. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also on the video thing, YouTube, and you can go to Bloomberg.com, and that's where you'll find us streaming over there. Scarlett Fu is out today, but not to worry. Alex Semenova is sitting in for Scarlett for the next 2 hours. We appreciate you coming in.
Great to be here with you.
Alex, good stuff there. I believe Scarlett will be back on Monday, so that's a good thing. This is the Bloomberg Intelligence Program. Coming up, we're going to check in with Joanne Shu, University of Michigan. The UMich sentiment data came out today, a little bit weaker than expected. We'll break that down with Joanne. Ed Mills, Washington policy analyst and managing director at Raymond James, great firm down there in Florida. He'll give us some thoughts on what's happening in Iran and how the impacts markets going forward. David Havens, Bloomberg Intelligence senior credit analyst on private credit here. How systemic is it in terms of private credit quality issues in that marketplace? And then we need to check in with Ellen Wald, one of our go-to voices on all things global energy. What's your thoughts about the Strait of Hormuz and oil going forward? So a lot coming up in the next couple of hours. Let's kick it all off with Alexis Christopherson of Bloomberg Business Flash.
All right, thanks, Paul. And this Bloomberg Business Flash is brought to you by Eisner-Amper. Most advisors tell you what happened. Eisner-Amper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. Stocks are on track for their best week since May, as officials from the U.S. and Iran are set to meet this weekend in Pakistan to discuss shipping through the Strait of Hormuz. S&P 500 now up just 3 points. We've got the Dow Jones Industrial Average, though, down about 145. NASDAQ Composite up 77 points. Brent crude at 96.19 the barrel, up about 0.3%. West Texas Intermediate now climbing 0.7%. Its session high here at 98.57 the barrel. U.S. inflation jumped in March by the most in nearly 4 years, driven by a record increase in gas prices. Meantime, the University of Michigan survey finds inflation worries send consumer sentiment to a record low. In stock news, we've got shares of CoreWeave up about 5% after Anthropic agreed to rent data center capacity from CoreWeave. And Taiwan Semiconductor also having a good day. That stock up better than 2.5% after reporting a 35% increase in quarterly revenue. Round 2 of the Masters underway at Augusta. At last check, we've got Sam Burns and Rory McIlroy atop the leaderboard. They're tied there, each at 5 under par. And that's your Bloomberg Business Flash, Paul and Alex today. And you're happy about this, Paul.
I put a couple shekels on Rory. Terrible odds, but I got to stick with the Irish thing.
There you go.
Rory to repeat there. So, Alexis Christophers, thank you so much. We appreciate that. We've got Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. This is the Bloomberg Intelligence Program. Taking a look at the market, as Alexis was just reporting, kind of a mixed outlook there on the stocks and bonds here. But let's see what's moving on the move today and some of these stock movers. We do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
Well, we can go ahead and start off in the healthcare world. That's Organon, ticker OGN.
Jersey City.
Oh, yeah. Up about 25% right now for most intraday on record. That's after the Economic Times reports that Sun Pharmaceutical, which for those unfamiliar is a generic pharmaceutical maker based out of India, is considering a $12 billion offer to take over that debt-ridden company. Organon is a reproductive health company behind a lot of birth control products like Nexplanon, and Evercore out with a note saying that while it remains unclear if the deal will actually materialize, the chatter does bode well for valuations in the broader pharmaceutical space.
Avalon, we're also coming up on almost a year since CoreWeave went public now. Crazy how quickly time goes by. What are you watching there with that company?
Absolutely. That's ticker CRWV. It is currently up about 5.6%. That's after Anthropic agreed to rent data center capacity from CoreWeave. The multi-year deal will help Anthropic build out Claude AI. While the financial details were not disclosed, CoreWeave now counts the 4 largest AI model makers, so Anthropic, OpenAI, Google, and Meta, all as customers, which many analysts are already saying that that's a very bullish sign for the company.
Yeah, it sounds, I mean, they're just in a nexus of all that spending, it seems like. What is Kyivstar?
Yeah, that's ticker KYIV, slightly different one. It is currently up now about 4.7%. That's after Ukraine's top negotiator with Russia said that he sees progress toward a potential peace deal. This Ukrainian telecommunications stock is kind of seen as a proxy for the war and is expected to benefit a lot once the war ends. At least that's what Oppenheimer thinks. They said in a note in September that reconstruction efforts will offer very meaningful upside for those shares. And we'll see. That top negotiator told Bloomberg that he doesn't think it will be long.
All right, so looking at that, it's about a $2.6 billion U.S. Market cap stock, up about 5% today, down about 12% year to date, but certainly could be a player in a reconstruction situation there. We'll keep an eye on that going forward here. Again, red and green on the screen here. So Avalon, Purnell, thanks so much for that. We appreciate it. And for more reports like that, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Looking at the eco data today, again, we had some University of Michigan sentiment data came in here. Just the headline, I'll just give it to you, folks. Came in at 50.1. The consensus was 53.4. And last period was 55.8. So a disappointment on the sentiment data. Let's break it down with the folks at University of Michigan. They don't just make football players. They also make really, really good economists like Joanne Shu, Surveys of Consumers Director at the University of Michigan. Joanne, what are some of the takeaways from your data from this month?
Consumers are speaking loud and clear. They are very, very frustrated by the persistence of high prices, and they're feeling very weighed down with the cost of living. This is not much of a surprise, particularly given this morning's CPI print, which consumers had already incorporated these price hikes from last month into their views. And this 25% increase in gas prices, these prices at the pump that are really weighing down on consumers. Their short-term outlook has deteriorated quite a bit, but there is a glimmer of hope. The long-term outlook did not sour nearly as much as the short run did. But at this moment, consumers are very frustrated and they're struggling with cost of living issues.
Joanne, a lot of people are feeling echoes of 2022. How does this reading compare historically to previous episodes of geopolitical turmoil and inflation worries?
This is a historic low and is very, very low given, and sentiment readings for the past year have all been actually very, very low. And so consumers have been frustrated for some time. Given that we're in a wartime situation, it's not surprising that consumers have kind of heightened awareness and heightened worries about what's going on in the economy. Interestingly, we didn't really see too much of a reaction with respect to labor market expectations. I mean, they did sour a little bit relative to last month, but within range of what we were seeing in the last year. And that stands in contrast to personal finance expectations and business conditions. Those are much worse than we had been seeing previously.
Joanne, the administration officials, representatives are making the argument that this impact on energy is short-term. Once the war is over, and again, there are negotiations for peace starting this weekend in Pakistan. Once this war is over, things will go back to normal. Is that something that you're seeing in your data?
There are some consumers who hold to that belief that it is possible that when one, this conflict will not last very long, and two, when this conflict resolves, that we may have energy prices that return to what they were before, or even be even lower. But there's so much uncertainty around this, and there's also a larger proportion of consumers who are worried that there will be consequences to this. To this Iran conflict that's going to last more than a few weeks, that it's going to last into the year ahead, and potentially beyond that. Many consumers are bracing for inflation to increase quite a bit over the next year, if not longer.
How close, Joanne, should policymakers be watching this survey compared to the hard data? At what point does it get their attention?
You know, our data is really showing, is forward-looking, whereas what we often call hard data is always backward-looking. So we are taking a pulse of what consumers are feeling right now. And as I mentioned, consumers have been showing very, very low sentiment, near historic lows for most of 2025 and for the first few months this year as well. And indeed, all the incoming data on consumer spending from Q4, from the first quarter of this year, have shown weakness as well. And so it shows that, you know, consumers kind of dour feelings about the economy. It's passing through to the decisions that they make. It may not have been a massive pullback, but they're starting to pull back. And with this surge in gas prices and the possible pass-through later on, if the conflict continues, does not bode well for consumers going forward.
And your University of Michigan one-year inflation forecast, the consensus was 4.2, and that came in at 4.8. And it was 3.8 just a month ago. So a big surge in short-term inflation expectations. But longer term, as you mentioned, the 5 to 10-year inflation outlook kind of came in right in line at 3.4%. So I guess that kind of suggests, Joanne, that I guess consumers are pretty realistic in their outlook that this is more of a short-term event.
That's their view at this moment, but there continues to be a tremendous amount of uncertainty over how the Middle East conflict is going to develop, and to what extent supply disruptions coming from the Strait of Hormuz are going to persist. So, you know, I don't think that people should hold on to this 3.4, 5 to 10-year inflation expectations numbers as something that is definitively going to keep going for the foreseeable future. Depending on how things look with geopolitical events and supply disruptions, this could very well change quite quickly in the months ahead.
All right, very good. Joanne, thank you so much. We really appreciate it. Joanne Shu, Surveys of Consumers Director at the University of Michigan. Again, just the highlight number, the headline number, University of Michigan current conditions outlook came in at 50.1. The consensus was 53.4, and last month was 55.8. So a big drop there, reflecting higher short-term inflation pressures stemming from the war in Iran. Alex, what are you looking at these days from the equities desk?
Yeah, something really interesting that we've observed about kind of the rebounds that we've had is that there's no euphoria in it. So initially when we saw there was that 2% up day, it was very evidently a short squeeze. We saw Goldman's basket of most shorted stocks rallying. We saw profitless tech rallying. But more recently, over the past 7 days, a Goldman basket of companies with strong balance sheets has actually been outperforming companies with weak balance sheets. So signs that there is some durability in this, that it's not just investors kind of, you know, buying oversold levels, that there's some confidence that we'll get a resolution soon.
Yeah, I'm looking at the VIX, and we're now below 19. So that really gets your attention here, getting back to a more quiescent kind of view of markets here, maybe a little bit of the panic or just the angst of investors in this market. So we'll see how that plays out. And oil, which has been driving a lot of these equity markets and bond markets for the last 6-7 weeks, oil's pretty steady here, unchanged. WTI right around just under $98 per barrel. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are mixed ahead of this weekend's planned peace talks between the U.S. and Iran. S&P futures up about 12 points, but Dow Jones Industrial Average now down 114. NASDAQ Composite rallying 132 points. Consumer prices jumped the most in nearly 4 years in March, driven by a record increase in gas prices. That report largely in line with estimates. Taking a look at oil, a little changed. Brent crude at $95.63 a barrel. West Texas Intermediate, $97.75 the barrel. The Bloomberg Dollar Spot Index, $1197.10. We've got the 10-year yield at 4.30% and the 2-year at 3.78%. In stock news, NVIDIA-backed Lumentum up about 1%. The specialized chip maker said demand from the biggest U.S. tech companies is accelerating. We've got shares of the women's healthcare company Organon up 25% on a report that India's Sun Pharmaceutical is readying a $12 billion bid for the company. And Ares Management is planning a smaller flagship U.S. direct lending fund. That's to help speed up the deployment of capital. Shares of Ares down 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Alex.
All right, Alexis Christoforous, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com as well. Big weekend for this war in Iran. We've got representatives for the U.S. led by Vice President Vance heading over to Pakistan. Iranians are doing the same. Presumably the Israelis will be there as well, and hopefully they can hammer out a longer-term ceasefire for this war in Iran. We also got Congress coming back to Washington Monday, so a lot's going to be happening, I think, in the next few days. We want to figure out what's going on there. Ed Mills, Managing Director and Washington Policy Analyst at Raymond James, which is a great regional firm. They punch way above their weight. I competed against them for many, many years. Some good folks there. Ed, what are your expectations here? What should our expectations be for these peace negotiations in Pakistan that are presumably starting tomorrow?
Yeah, Paul, there's probably three paths here. Path number one is they work it out. Path number two, everything shuts down. And maybe the most likely is we get a kind of progress, but not a breakthrough. And to me, I think the two things that I'm watching the most there are we getting any additional ships through the Straits of Hormuz. That's one of the most tangible items. And number two is kind of, are there kind of ongoing actual kind of kinetic activity, not only in Iran, but as we look to Lebanon and kind of what Israel is doing there, how does that spill over attacks on other Gulf allies in the region? Those will all influence these kind of negotiations over the weekend.
Hey, Ed, I'm looking at a headline here that says J.D. Vance is warning Iran that the U.S. will not be played in negotiations. We've seen a lot of optimism from markets that we're nearing a de-escalation here. We're getting closer to a deal. Is there any disconnect in market expectations and maybe what the White House sees playing out here?
Yeah, Alex, that's a great question. So what we've been telling clients here at Raymond James is some level of skepticism has actually been very warranted throughout all of this. What we had earlier this week is we did avoid the worst case scenario. And I think what markets were looking at there was the more Trump escalates or threatens, the more severe it is, the more likely there is going to be a breakthrough. I think there's a view out there that President Trump absolutely wants to wrap this up. We are seeing kind of the impact on consumers. We're seeing the impact politically. We're getting closer and closer to that 60-day mark where it might be kind of an issue kind of under the Wars Power Act to continue this. And so when you take that all into consideration, the market does think that there is a desire to get this done. But does Iran want to outlast the United States? Is the United States and Israel on the same page? And there's so many unanswered questions. So that cynicism that we've been telling clients at Raymond James to have, I think is still appropriate. I think we avoid that worst case, but I'm not necessarily thinking that everything works out over the weekend and it's all clear sailing from here.
Ed, what's the political angle here? The polling suggests that this war is very unpopular with the American public, very little support for it, the polling indicates. And then there's also the collateral kind of damage for consumers, which is just higher gasoline prices plus some other inflationary price pressure here. What's the Republican Party? What's the play here?
Yeah, so Paul, I think if you asked me in January what was going to be the theme for 2026, I would have told you it was all about affordability. President Trump was concerned about the midterm elections, and any effort from Congress and from his administration was going to try to have targeted tariff relief, keep gas at or below $2 a gallon. That's completely thrown out the window. So Republicans were battling against a lot of headwinds to keep the House of Representatives. I think people assume that's even more of a likely turnover to Democrats. And now the attention's turning even more to the Senate. So what does that do in D.C.? I think that actually puts a lot more pressure on Republicans to try to get things done. We're going to see if they can get this reconciliation bill through. What's in it? Is there a lot more defense spending? Are there going to be an effort to have some sort of targeted relief to consumers? President Trump has talked about that tariff relief to consumers. I'm pretty skeptical, but I do think that that political survival is what we're going to see as Congress comes back, and a little bit of panic to get some stuff done.
Ed, one of Trump's top advisors today warned that Beijing's involvement with Iran could potentially hurt U.S. and China relations if it hurts American interests. What is the risk here with China? What are the implications?
Yeah, Alex, so the original meeting between Trump and Xi has been rescheduled to the mid-May. It's really interesting because one of the big topics here at Raymond James has been Trump told his administration, do not do anything to disrupt the relationship between the United States and China, because China has stopped the flow of critical minerals and rare earth minerals in exchange for the kind of tariff that President Trump put on. That has been worked out. If we don't get those critical minerals, we don't get those rare earths, our industrial production in this country shuts down. And President Trump knows that. But there's an even greater issue right now is that we need those also for our military production, and China's not providing that. And so what we have seen in previous times between Trump and Xi, as they're getting closer to meeting, he tries to ramp things up, trying to see if he can get something else out of this. It was very clear that China was involved in the negotiations over the weekend, pushing Iran to accept this. And so, you know, President Trump looks at China and says about half of their oil comes from the Middle East. Is there an angle we can push here? Because there's things from China that we absolutely need. We can't disrupt it too much, but is there a little bit of leverage? That's the hope.
Ed, thanks so much. Really appreciate it. Ed Mills, Managing Director and Washington Policy Analyst, a little firm called Raymond James, and he's down in Washington, D.C. Let's get back to these markets here. Just looking at the credit markets, one of the concerns, if you think back all the way back before the war with Iran started, one of the key issues for this marketplace was the private credit business. And do we have a credit problem in certain parts of the U.S. credit markets, particularly in the private credit market? So that kind of got put on the side burner with the war in Iran, but we want to break it down. David Havens joins us here, Bloomberg Intelligence Senior Credit Analyst. And for the folks on radio, David walks in this studio dressed like we're the only ones keeping him from the first tee today. He's like ready to go. So we'll make this quick here. David, thanks so much for joining us here. You've been in this market a long time. You've seen the growth of private credit. We have had some concerns over the last, couple of 3 months that there are maybe some credit risk, and that's always been a back of everybody's mind, a little bit of a fear. How do you think about private credit and credit quality?
Yeah, private credit, almost by definition, has a lot of risk associated with it, but it also has controlled risk. The way that I'm dressed like a golfer today, but I also like to ski. Okay. And the way that I sort of think about credit markets is you've got very safe credit markets that are sort of like green beginner slopes. They're like government bonds and things like that. Private credit markets are kind of like the off-piste, out-of-bounds territories where you need to make sure you've got an avalanche rucksack with you, and a beacon. And these guys are prepared. They're good at underwriting. And so far, actual problems within portfolios have been very limited, but there are obviously warning signs out there. People are concerned about the AI boom and the impact that might have on software loans. Obviously, private investors are concerned, or private wealth investors are concerned, because they've been asking for money back from some of the BDCs.
David, there's this news today that Ares is planning a smaller private credit fund. What is appetite for it going to be like amid these broader concerns about private credit? Do you expect it to be unscathed, given that Ares is a bigger name?
Well, Ares has a wonderful reputation, and Ares has a great track record, and people need to put money to work. You've got a choice as an investor. You can put your money in various places. You can keep it on the sidelines, wait for something better to happen. You've seen the Ares vehicle downsized from previous vehicles because there is a little bit less demand, but there's also been a tremendous amount of growth in the market up until then. So I think that we're just seeing a little bit of a pullback. I shouldn't say a little bit of a pullback, but I think that, over the long haul, this private credit area is probably going to continue to see pretty decent growth. People need income.
Yep. Is this, I guess what I've heard or heard this characterized some of the credit issues or concerns over the past several months, it's more of a liquidity issue than a credit quality issue, i.e. the quality is generally pretty solid there, as you mentioned. But if you're a retailer and you get spooked and you want to take some money out, you probably didn't read the fine print.
Correct. Even though the fine print is on page 1.
Yes. Yes.
But you're right. I think that people don't read the fine print. I think they wanted to take money out, and all of a sudden they're like, what? I can't get my money out of this? I can get my money out of almost anything. But that's not the case here, and it makes for bad press. And so I think that there's, a bit of now we're talking about retail investors, right, and private wealth. I think that there's a bit of there's a negative reaction to that, and it's a little bit of a negative feedback loop in the private wealth area. The Ares vehicle that we were talking about just a moment ago, that's an institutional vehicle, and I think that these, investors are a little bit more sober, take a longer term view.
We got this hotter CPI reading today, the biggest monthly jump since 2022, and there's this expectation from investors that, if this goes on with the war, we might be in a higher for longer rate regime once again. How exposed is private credit to that? What are the implications to the private credit market?
It's a double-edged sword. On the one hand, higher rates means that there's going to be more income coming into the lenders themselves because they're floating rate lenders, so base rates go up, they're going to have more investment income coming in. That's not a bad thing. The other edge of that sword is that you've got leveraged borrowers who have to scrimp by to make their interest payments, every quarter or every period where they have to pay interest. They're going to be under a little bit more stress if base rates rise. So it goes both ways.
David, thank you so much. Appreciate it. David Havens, we're going to let him get to the first tee. If you need a fourth, let me know. I can always make it. David Havens, Senior Credit Analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. Kind of red and green on this screen here today, but I'm going to start with WTI crude oil. It's down about 0.4%, so let's call it steady. We had that spike. Mike McGlone said we probably saw the peak put in around 120 a barrel, now pulling back with some expectation for some negotiations in the Middle East. So it'll be, I think, an important weekend to see what kind of news comes out of Pakistan in these negotiations.
Yeah, this has really been a headline-driven market. It's been incredible to see. As long as things are moving in the right direction, maybe some calm.
Absolutely. Coming up, we're going to check in with Ellen Wald. She's president of Transversal Consulting on the impact of Iran on the market. She is one of our go-to voices on the global energy market. She knows what's happening. And again, a little bit of stability there. Tom from the Upper East Side asked for a Bitcoin quote. We're higher, $73,000 per token. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are mixed and oil is steady ahead of talks this weekend between the U.S. and Iran to discuss the fragile ceasefire and possibly reopening the Strait of Hormuz. The S&P 500 is up about 13 points at 6837. The Dow Jones Industrial Average is down about 80 points, and we've got the NASDAQ Composite climbing 156 points right now. Brent crude at 95.34 the barrel. That is down about 0.6%. WTI crude little changed at 97.90 the barrel, and the Bloomberg Dollar Spot Index now at 1197.17. We have got Bitcoin up nearly 1%, back above $73,000. Consumer prices in March saw the largest monthly gain in 4 years as the war with Iran sent gas prices skyrocketing past $4 a gallon. The University of Michigan survey finds those mounting inflation worries pushed consumer sentiment to a record low in recent weeks. As for stock news, shares of Taiwan Semiconductor up now about 3% after reporting a 35% increase in quarterly revenue thanks to strong demand for its chips. And shares of Berkshire Hathaway also on the plus side today after selling $1.7 billion of yen-denominated bonds, marking its first such deal since Warren Buffett stepped down as CEO. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Alex.
Alexis, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and on Bloomberg.com as well. Well, the good news for Brent crude is down at $95. It is down from its recent high of $110 in the early days of the war. But the bad news is it's well above the $60 range it was trading at before the war here. So the question is, where do we go from here? And there's nobody better to ask that question to than Ellen Wald, president of Transversal Consulting and senior fellow at the Atlantic Council. Ellen, the negotiators are heading to Pakistan as we speak to begin some negotiations. But the fact is, the Strait of Hormuz is effectively still closed. What are you hearing from your contacts in the energy market?
I'm hearing that what we're seeing and the markets is not really reflecting the situation on the ground. I mean, we've got an area where no crude is effectively moving out, and maybe some Iranian crude is moving, but nothing more than before. And a ceasefire that after the ceasefire resulted in an attack on Kuwait and an attack on a Saudi pipeline, a vital pipeline that is now the result of which has cut their exports through the Red Sea. And so we're actually, I think, in a worse situation than before, given what's going on.
When it comes to supply, Ellen, how much of a role does OPEC have right now in potentially offsetting any disruptions?
OPEC's role right now is essentially nothing because OPEC could lift production, but it doesn't matter because the big producers in OPEC that have more spare capacity can't get that oil out anywhere. So essentially, they mean nothing. If Saudi Arabia can't get oil out, if Iraq can't get oil out, if the UAE can't get oil out, then really what's the point of them producing? They've already filled up their storage facilities. So, so really they're basically at a standstill. And I think that the biggest issue we're facing right now is that Iran wants to maintain this status quo control over passage through the Strait of Hormuz, charging tolls, and you have to receive, confirmation from the IRGC that it's okay to go. And if that's a starting point for these negotiations, then we're really in a bad situation. And in fact, the UAE has basically said, we can't stand for this. This cannot be allowed to stand. That runs contrary to all kinds of international maritime conventions, many of which countries in the Gulf are party to.
Ellen, quantify for us who's at risk if it's the status quo here, i.e. the strait remains closed or significantly closed, because the U.S. is a net exporter, so probably not so much for the U.S., but how about the rest of the world? Who's exposed here?
I mean, everyone is exposed. Everyone basically, except maybe the U.S. and Canada, are exposed. It basically means that tankers are going to have to pay this fee to Iran or to whatever entity is going to collect this. And even if that doesn't directly affect U.S. consumers, it will, because it's going to impact, that is going to be passed around the entire world. That cost is going to be passed on the price of oil. I mean, major oil companies that, say Chevron, for example, they have assets, they own part of the oil fields in Iraq, and they make money off of that production. And so they're going to be paying those fees, and they're going to pass that on to consumers everywhere.
Ellen, I've heard folks on Wall Street argue that the economy, the consumer, are a little bit more insulated to oil shocks, a little bit more resilient than in the past. How true is that?
Well, let's put it this way. Europe is weeks away from a jet fuel shortage, and we're not weeks away from a jet fuel shortage in the United States, but that doesn't mean we're unaffected. So we're in a better situation than Europe is. We're in a better situation than Asia is, but gasoline prices are still up. Diesel prices are extremely high. There's no indication that those are going to fall. And when diesel prices are up, that impacts all levels of the economy, because diesel is what our trucking industry runs on. That affects food prices, anything that gets transported by truck, essentially. Construction industry is also affected, and so we're not immune, even if we're not experiencing shortages like other countries are.
What is a realistic solution here, Ellen? Is it just going back to the status quo ex ante here, or is there some other solution that you and the folks in the industry see here?
Yeah, I think, going back to the status quo would probably be better than what we have now, except at the same time, I don't think there is any going back, because at this point, Iran or the IRGC or whoever is running the show over there has realized that simply by threatening ships with drones or missiles, they don't even have to threaten them with boats the way they used to. They can just threaten them with drones, that they can effectively shut down the traffic. And so I don't think there is any possibility of going back to where we were before. We have to move forward. There has to be some way to remove this threat entirely from the Strait of Hormuz, because it is not the same thing as the Suez Canal or the Panama Canal. Iran does not own this waterway. This is an international waterway, and freedom of the seas is an incredibly important global principle that we've fought world wars over. So, this cannot be allowed to stand, and they have to reach some sort of negotiation whereby Iran backs off.
If in the best case scenario, let's say we do reach a deal soon, the Strait of Hormuz is reopened, how long before things normalize? How long before we see oil come down substantially enough that it no longer risks eroding the economy?
That's a really great question. I mean, the first thing we've got to do is we've got to get through this backlog of ships. I mean, the first ships are now reaching Asia that had left right at the end, right before the crisis started. So we're in a major backlog, and it's going to take time to clear that out. We're also in a state where we don't have the same LNG capacity that we used to, and it could take years to get that back. And so I think if the waivers to purchase Russian oil are maintained, then we're in less danger of eroding the economy. But if this situation gets resolved and then those waivers for Russia disappear, then it's still going to take a while to get things back to where they're going. I'd say at least a month or two before we could say we're anywhere approaching a place where the costs aren't eroding the economy.
Ellen, just 30 seconds. Is there a scenario where part of the negotiation, Iran says, okay, it's now open again? Would that be enough?
Unless, no, they need to provide assurances to the ships and the insurers that it's safe to travel. That means they can't just say, take your chances and we'll see. They need actual assurances that they can pass safely.
All right. Very good. Ellen Wald, a lot to be decided there for sure. Ellen Wald, president of Transversal Consulting and a senior fellow at the Atlantic Council down there in Florida. So again, one of the key issues to be negotiated between all the parties is the Strait of Hormuz. And can you, in fact, create, I guess, some type of agreement that does give that level of insurance to shippers and the insurance companies? That's, I guess, the end goal.
Yeah, and then another question, Paul, as Ellen discussed, it's not as simple as the president saying that a deal has been reached. Mm-hmm. We have to see things normalize. It's going to take some time before we see oil prices come down.
Yep, absolutely. So again, looking at WTI, just under $99 per barrel. It's up just about $1 here today. Brent, absolutely unchanged on the day, just below $96. So again, down from the highs at the beginning of the war, but still, 40–50% higher than where they were prior to the war. So that is a wartime premium in there. And the question is, how does that premium come out of the price and over what time frame? This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we've got Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's talk about the consumer. Let's talk about the consumer. What are they buying? And one of the great places to look is sneakers. And you look at Nike, and you can do that with Poonam Goyal, Senior U.S. E-commerce and Retail Analyst at Bloomberg Intelligence. There's so many puts and takes for the Nike because, I mean, it's a product everybody knows. It's a global product. But that has pluses and minuses. Poonam, what's the Nike story here? I know they've had a lot of challenges with China. They've had a lot of challenges managing their inventory, tariffs, like a lot of other companies. What's the Nike story right now, Poonam?
Yeah, so Nike is basically going under a turnaround. There's a lot of things that they need to fix, but there are things that they have fixed. So let's start with the biggest piece of the business, which is North America. In North America, since Elliott Hill has taken helm, they have made improvements. In fact, sales have turned positive there, and that's a sign that the initiatives put in place, getting the right product back in, working on speed, clearing out old product, reducing inventory, it's all paying off, and we expect that to continue. The challenge, however, has been China. As we know, we spoke about this earlier, China is a market that not just Nike, but every athleisure company is eyeing for growth, for long-term growth. And in China, Nike has had major hiccups. So the playbook there is to repeat what they did in North America to fix the business, but it's not going to happen overnight. It is going to take time. And I think it's just about being patient and watching them execute against China as well.
Chinese consumers broadly have just been shifting to more local brands. What will it take for Nike to recapture their appetite, Poonam?
I think it's building brand heat, right? The first thing they have to do is get the right product in. So when you look at the product that's being sold in China, it's heavily discounted. In fact, Nike's perceived as an off-price label in China. So they need to flip that image. They need to remove the discounting, because that's clearly not good. They need to introduce premium product into the Chinese marketplace and then have local ambassadors, local clubs really, validate the brand for them. And all that will start with product first and then after. And we do think it's possible, but it's just there's so much old inventory there still right now that needs to be discounted. It's going to take, I think, at least 12 to 18 months.
If I'm an investor, that 12 to 18-month time frame, I'm not sure I'm that interested in it. How's the company trying to position its turnaround here to appeal to investors?
I mean, look, investors are not being patient, and we can see that with the reaction in the shares. Shares are down year to date. And Nike is just reiterating exactly what it's doing. It's talking about its playbook, lowering inventories, taking out discounts, getting the right product in. I think the next catalyst for Nike, in my mind, is going to be its Analyst Day. It's a day that we've been waiting for years. They postponed the last one they announced a few years ago. It'll take place in the fall. And we think that's when Nike will be able to really highlight the success it's had and also show its path forward with new inventory, new product, new collaborations, et cetera.
Poonam, how does this war and any disruptions from it, higher oil, the risk of inflation, make Nike's turnaround even more difficult? What challenges does it pose?
The risks of the war are not specific to Nike. I think it's across the consumer space. Higher oil prices means higher gas prices. It impacts low-income consumers more than it does high-income consumers. Thankfully, Nike is a brand that probably leans more towards the mid to high end than the low end. So they do have some buffer compared to a low end retailer. That said, if things prolong for a long time and inflation continues to tick higher, consumers will pull back. And the first place they pull back is on discretionary goods. And sneakers is a discretionary purchase.
Poonam, just step back a little bit. What's the competitive landscape for athleisure? Because there's so many. I mean, Nike used to be just, to me at least, a dominant brand, but it seems like it's gotten more and more competitive. I'm seeing brands of sneakers around here that I haven't seen before.
Yeah, you're absolutely right. Nike is still the dominant sneaker player globally. It is the largest footwear brand in the world. It remains that, but it has lost share over the last 5 years to other brands. Some of the brands that you may be referring to include On, Hoka, Asics, New Balance. All these brands and some others have gained traction, especially in the lifestyle and running space. That said, when you look at the size of those brands against Nike, there's still a wide gap. So we run a sneaker survey twice a year, and when we ask consumers, what is the choice of brand when it comes to sneakers, Nike's still number one. So when you look at broadly, Nike's still the favorite brand, but when you look into niche markets, you are seeing the rise of some of these other brands, which is obviously why Nike has been losing share.
Poonam, very quickly, what else stood out to you as some of the key differences in this report compared to prior quarters? Any metrics that caught your attention?
I think the biggest metric that caught my attention was the inventory levels. They have been dropping, and that's a really good sign because that just shows us that the efforts that the management team is putting in place is bringing in new product, and the new product results are actually quite impressive. If you look at the sales of their new products, they are up nicely, and that reflects that anything that they're putting their mind on is working.
Poonam, thank you so much. Appreciate it. As always, Poonam Goyal, she's a senior U.S. e-commerce and retail analyst for Bloomberg Intelligence based down there in Princeton, New Jersey. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence starts in just moments with the S&P up 11 points, the Dow down 140 points, but the NASDAQ up 150 points or 0.6%. WTI crude oil up about 60 cents, been pretty steady here today, just below $99 per barrel. More coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Coming up, we're going to check in with Stuart Paul, U.S. economist with Bloomberg Economics. We had a lot of economic data this week, so let's break it all down. Herman Chan's going to join us, senior analyst for the U.S. banks. We got bank earnings starting next week. I think Goldman on Monday, J.P. Morgan Wednesday. A lot of the banks reporting next week, so we'll get a preview there. It's Friday. That means we talk municipal bonds. You bet. Dan Close, head of municipals at Nuveen, will join us here to talk what's happening in the municipal bond market. And we're also going to talk to Steve Mann, Bloomberg Intelligence global autos analyst, talk to him about Tesla and some of the other automakers and their impact they're feeling from the war in Iran. So a lot coming up in the second hour of Bloomberg Intelligence. But right now, let's head down to Washington, D.C. Amy Marsh has got a Bloomberg Business Watch.
All right, thank you, Paul. Markets are mixed. Oil's a little bit lower. We check the markets for you all day long here at Bloomberg. The S&P 500 is up 0.2%. NASDAQ up 0.6%. The Dow is down 0.3%. 10-year Treasury yield at 4.3% and the 2-year yield at 3.78%. WTI is up about 0.75%, around $98 a barrel, and Brent crude is a little changed on the downside, hovering around $95, $96 a barrel. We have the first real numbers now on how a month of war with Iran has hit Americans' wallets. Bloomberg's Michael McKee has the March Consumer Price Index.
CPI on a headline basis comes in up 0.9 for the month as forecast, and that pushes the year over year to 3.3%. Remember, it was 2.4% in February, so a big jump. The core comes in up 0.2 on the month. It takes a while for stuff to get into the core, so that's not a surprise, although it's a little lower than anticipated.
Bloomberg's Mike McKee reporting, and that has bond traders trimming their wagers that the Fed will lower interest rates once this year. Fed officials have flagged the prospect of higher inflation, keeping policy on hold for some time as their preferred gauge of consumer prices is rising faster than their 2% long-run target. Investors are watching for signs that a ceasefire deal between the U.S. and Iran could hold. Delegations are set to meet in Pakistan on Saturday. Round 2 of the Masters underway at Augusta National, and at last check, Sam Burns and Rory McIlroy share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Alex Simonova and Paul Sweeney.
All right, Amy Marsh, thank you so much. We appreciate that. Alex Simonova is sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube and Bloomberg.com as well, as Amy was just reporting there, red and green on the screen here. Let's take a look at some of the stocks on the move. We can do that with Bloomberg's Natalia Kenijevic. Natalia, what are you looking at today?
Hi, Paul. Let's start with Nike. The ticker is NKE. The stock is down by almost 2%. We see that Piper Sandler downgraded the stock to neutral from overweight on concerns about athleisure, which is a combination of like athletic and leisure, so the analyst is saying that it's becoming too saturated across the industry. And also Piper Sandler noted that despite the fact that shares reset after the last earnings report, they're still not cheap. As a reminder, Nike shares dropped by as much as 14% when the company reported earnings last time and disclosed a very steep decline in sales and said that those kind of pressure on sales would persist during the whole year.
Yeah, their turnaround story really not going as well as they had hoped. What else is on your radar, Natalia?
CoreWeave shares, we are watching at CoreWeave shares are down, up by 13, almost guys, 14%. The ticker is CRWV. We got the news that Anthropic agreed to rent data center capacity from CoreWeave as a part of its effort to train cloud AI models, and it comes a day after CoreWeave disclosed another deal with Meta Platforms. It's a much bigger one, $21 billion deal to supply computing power to Meta through 2023. However, keep in mind that also CoreWeave disclosed that it's going to sell convertible bonds, and to some analysts, investors, this is kind of a concerning signal because CoreWeave has a pretty large amount of debt and the company is still generating negative income.
And finally, Shake Shack.
Shake Shack, yes. So Mizuho raised recommendation to Shake Shack to outperform from neutral. The stock is up by 2%. The ticker is SHAK. The analyst cited some positive growth trends across same-store sales and also mentioned other catalysts like higher tax refunds and the World Cup.
Ah, very good. All right. I mean, I'm a fan of Shake Shack, but I don't know about that. I think I take In-N-Out Burger over Shake Shack. I'm not sure.
I think there's an In-N-Out Burger supposed to come to NYC soon.
Is that right?
Yeah.
Wow, that'd be big, because usually I just get it out when I'm out in Cali. All right, Natalia, thank you so much. Appreciate that. Natalia Kenijevic giving us the stock movers there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Well, we got a lot of inflation or just economic data this week. And today, topped it off with CPI. U.S. inflation surged in March by the most in nearly 4 years as the war with Iran sent gasoline prices skyrocketing. Let's break it down and get to the details underneath. We can do that with our expert skier, U.S. economist, Stuart Paul from Bloomberg Economics. Stuart, again, the headline number is 0.9%. That's not good. But if you take out some of the other stuff, maybe not so bad. What do you see?
I think that's right. When you look at the core, there was a material downside surprise in the core. Used auto prices are falling, very important. When you look at a lot of the discretionary services items, folks, the sort of items where people decide, well, I'm getting crowded out of technology because of high input costs for software and for semiconductors. I'm facing higher prices for new autos because of aluminum prices. Gasoline is expensive. Where can I sort of flex my spending? It's mostly in discretionary services. A lot of producers and a lot of services providers are finding that they cannot pass along higher costs anymore. And so we're starting to see markdowns to encourage volumes to at least maintain pace. When you see that sort of retrenching demand, there's a little bit of an indication that growth risk is materially skewed to the downside, despite the inflation pressures we see from a cost push perspective because of the war and because of supply chains getting snarled.
Stuart, how much of a risk is it that this oil shock can contribute to an inflation episode like 2022? I think a lot of people are worried about some similarities to 4 years ago.
Yeah, I think that a lot of folks are making that analogy, but I think the material difference is that there's far less liquidity. Policy is a little bit more restrictive right now than it was back then. And the cash buffer that households have has been completely dissipated. You'll remember back in 2022, we were coming off the pandemic. Households were pumped full of cash by stimulus checks during the pandemic. That had been saved up to a pile that was almost $3 trillion at the time. That's now been entirely dissipated. So the extent to which inflation can broaden is really limited at this point. I think that one of the more interesting data points that we got today is that buying plans for durable goods released in the preliminary April University of Michigan Consumer Sentiment Index really dropped materially. Folks are feeling crowded out by gasoline prices, and they're pulling back on spending where they can. And when that's the case, when they're no longer bidding up prices of everything and anything, then that's sort of a redux of what we saw in 2022 or what we saw in the 1970s. That's just less of a risk today.
But we're not seeing that. Maybe it's probably too early. Do you expect to see that in consumer spending data? Because I don't know. Every time I doubt the consumer does way better than I would think.
Well, I think that the best that we could do is just to try to quantify these big things, these big ideas. So what does it mean when we have something like a 21% spike in gasoline prices? What does that mean in dollars every month? And it's about $5-6 billion of spending from households every month that gets just taken out of consumers' pockets and sent to gasoline retailers and further up the energy infrastructure. And I mean, that's not a shocking amount of money, but that's $5 billion that they can't spend on Shake Shack or In-N-Out Burger when it finally comes to New York City. And when they're pulling back on those discretionary services, when they're pulling back on large household durables even, the broadening of inflation pressures is a little bit dissipated. One thing to also keep in mind is that households have less room to flex here because savings rates are just at 4%. It's about 2.5 percentage points below where they were during the pandemic. Even coming out of the pandemic, again, when we had about $3 trillion of excess cash pent up in households. So again, I think that potential for broadening inflation is relatively mute right now. Nevertheless, the Fed's going to keep its foot on the brakes, just stay on hold, probably into the end of the year until it gets a little bit more clarity around inflation expectations and the outlook for the war and the potential for supply chains to stay snarled.
We are nearing the end of Fed Chair Powell's term. I know Kevin Warsh's nomination got delayed, but there is going to be a changing of the guard really soon. How is that going to complicate the Fed's job at this time when they're trying to contend with the risk of inflation once again?
I guess I'm just a little bit more skeptical than most that there will be a changing of the guard anytime soon. There's been a reshuffling at the DOJ before there's been a reshuffling at the Fed. Who would have had that on their bingo card earlier this year? And it seemed, at least during the last cabinet meeting, that President Trump was relatively complimentary towards Jeanine Pirro, who effectively brought these charges and brought this investigation against the Fed. And when that's the case, it seems as though Senator Tillis from North Carolina is going to keep the kibosh on Kevin Warsh's nomination. And honestly, I wouldn't be surprised to see no changing of the guard until the end of this year. I know that's like a way out of consensus idea, but as somebody who spent many, many years in Washington watching how this parliamentary procedure works, I just think that way too much attention is being put on what Kevin Warsh would do, how enthusiastic he would be about interest rate cuts. And instead, I think that this is going to be a moment where effectively Powell stays in the chairman's seat, especially on the FOMC. It's a little bit more complicated who stays chairman of the board of governors of the Fed, but that's also far less important from a markets or monetary policy perspective.
All right. So no change potentially at the Fed over the near to intermediate term. Stuart Paul, thank you so much. We appreciate that. Stuart Paul, U.S. economist for Bloomberg Economics, joining us here in studio. We got banks. They're going to be kicking off earnings next week, and they come fast and furious. They don't kind of space it out all. They just dump them on multiple banks each day. I don't know how the analysts
All
do
at
it.
once.
But exactly, all at once. Herman Chan is one of those analysts that has to deal with. He's a senior analyst covering the U.S. banks for Bloomberg Intelligence. Herman, we're going to get some of the big banks, J.P. Morgan, Citi, Wells Fargo, reporting next week. What are you expecting here?
Yeah, sure. So despite all the geopolitical uncertainties that have been weighing on the bank stocks, we're expecting a really strong quarter. We're talking about EPS growth in the mid-teens. That really tracks with the guidance that the banks have talked about intra-quarter at recent investor conferences where investment banking and trading guidance was really strong. Also mid-teen growth year over year. And then lending's picking up. So we're seeing some increased lending, particularly from commercial borrowers. And that's not just in the non-bank financial institution bucket that's been getting a lot of scrutiny, but broader to your traditional commercial borrowers, small business borrowers. So that's actually been helping the banking industry as a whole.
Herman, Wall Street's biggest banks are expected to post a record $18 billion stock trading haul for the first quarter. How big does that number go? It seems like it's just been consistently rising every quarter.
Yeah, that's right. So one good thing about the volatility that we've seen in the first quarter is that it's really lifting the trading activity both on the equity side and the fixed income side. So we're expecting really strong results across the board from Goldman that kicks off on Monday to JP, B of A, Citi, Bank of America. So everybody should be helped by this increased volatility in the first quarter.
I think in this earnings cycle, a lot of investors are going to be wondering to what degree, if any, will companies provide forward guidance given some of the geopolitical uncertainties? What do the banks typically do, and you expect any change to that?
Yes, sure. So they typically do not offer some forward guidance on the trading issue that we just talked about, but it's more about your top line net interest income growth that's really driven by lending and deposits. So there'll be some commentary there, particularly with what's going to happen with interest rates going forward, right? So in the fourth quarter reporting last quarter, everybody was sort of baking in 2 rate cuts for 2026. Now it seems like rate cuts are off the table, so that will have implications for guidance going forward for the rest of the year.
Herman, the banks always give us a look at how consumers are doing. What metrics will you be watching there, and from what banks specifically on signs of, how the U.S. consumer is holding up? Yeah,
sure. So that was a great discussion with Stuart earlier about energy costs. So that's something that we're watching pretty closely. The thing that we're focused on, particularly with the consumers, how things are trending in terms of delinquencies, early warning signs that there could be cracks in credits. I would say that a lot of the banks that have discussed intra-quarter have been saying that the consumer is holding up fairly well. The employment picture is still fairly solid. You're not seeing a lot of mass layoffs despite all the uncertainty with AI. So at this point, we think things are stable, but we're really focused on what they're seeing early days in terms of how the consumer is spending, where are they spending discretionary versus non-discretionary, and those types of metrics that will sort of inform us about the picture ahead.
What are the banks saying these days about the private credit market, specifically the potential for credit quality problems, or is it just a liquidity issue? What are the banks saying?
Yeah, so private credit has been top of mind. I would say that the direct exposure to the private credit companies, we've done some digging. It's about 3% on average to direct lending to business credit intermediaries that are non-banks, so the non-bank financial institution issue that I was talking about earlier. So it's fairly small, but it is growing. It's been one of the growth drivers for the biggest banks like Wells Fargo, B of A, JP Morgan over the past couple of years. So without that loan growth, lending would have been flat last year. So it's really a big growth driver for the industry. We think that probably continues, but there are more questions than answers at this point.
Financials, Herman, worst performing sector in the S&P 500 this year, down 7%. Do you think that gives runway to a nice rally if we get some solid results?
Yeah, that's a great question. We are going to see positive growth in EPS this quarter. I think the analysts are expecting about 15-16% EPS growth on average for the banks in my coverage universe. That being said, the stock's still screen fairly cheap. We're talking about like 1.4 times tangible, 12 times on a PE basis, so not heroic valuation. So there could be some catch up, especially given the fact that these are cyclical names, and if we have more certainty on the geopolitical front, these stocks could do better.
All right, Herman, thank you so much. We appreciate that. Herman Chan, he's a senior analyst covering the U.S. banks for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. He doesn't mail it in on Fridays like a lot of people do. He comes in to the office. We appreciate that. Kind of got still red and green on the screen here. The S&P's up 15 points. The Dow's down 130, and NASDAQ is up 107 points here. So we'll keep an eye on that. Coming up, Steve Mann, Bloomberg Intelligence, Global Autos Analyst. Talking about Tesla. That's coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Wall Street, I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Investors are watching for signs that a ceasefire deal between the U.S. and Iran could hold, with delegations set to meet in Pakistan on Saturday to discuss shipping through the Strait of Hormuz. We check the markets for you all day long here at Bloomberg. S&P 500 up 0.25%, NASDAQ up 0.8%. The Dow is down 0.25%. 10-year Treasury yield at 4.29%, and the 2-year yield at 3.77%. WTI crude up about 0.5%, around $98 a barrel. Brent crude up 0.2%, around $96 a barrel, and Bitcoin is up just shy of 1%, around $73,000. CPI data is offering a first look at the Iran war's impact on inflation, and it does look like it's hitting Americans right in the wallet. The March Consumer Price Index rose 0.9% to a year-over-year rate of 3.3%. Gasoline prices accounted for almost 3/4 of that jump, but housing prices also played a role. Round 2 of the Masters is underway at Augusta National. At last check, Sam Burns and Roy McIlroy share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's check in with Dan Close, head of municipals for Nuveen. He joins us from Chicago via that Zoom thing. Dan, we got a lot of crosswinds in this marketplace, geopolitical front and center over the last 6 to 7 weeks. What's it been like in the municipal bond market? How's that market been performing this year?
Yeah, it's kind of a tale of two cities so far. January, February were incredible for the muni bond market. Everything was going well, similar to most other markets. March, we had our worst month since September of 2023. March was. So we've now, the first or so week of April gained a lot back. Munis are up just under 100 basis points on the year. It's doing about twice as well as the Bloomberg aggregate. So we're outpacing other fixed income, but gave a lot of performance back during the month of March.
Dan, the current administration has threatened to withhold federal funds from Democratic-led states and local governments that don't cooperate with federal authorities. How do you risk manage that?
Yeah, we've seen some of these threats. I'm here in Chicago. There's been some threats to stop funding for the CTA. We generally look for just longer-term trends in our credits. Most of the federal funding that are in discussion here are very small portions of state and local government budgets. For instance, we see in states of Minnesota discussions of withholding funds. When you look at that in comparison to the $13 billion or so rainy day fund that Minnesota has and the funding that's at stake, it's still a very small portion, but we do take that into account in our credit analysis.
Dan, how's new issuance been this year so far? Because, boy, the municipal bond market had record years in 2024 and 25.
Yeah, last year, absolutely correct, $600 billion, and we're just seeing a lot more expensive projects coming online. We're not seeing back to the battle days pre-2008 of golf courses and ice rinks being financed. It's just, cost of doing business. It's, if you look at CPI, all urban consumer non-seasonally adjusted, beginning of COVID through the end of last year, that's up about 25%. The metric that we look at in our market is how much does it cost to pave 1 mile of road? And that's up about 62%. So the inflation we're seeing on these muni projects, the cost of steel and concrete and larger construction projects have gone up. So last year was a record at $600 billion. We anticipate we're going to be close to that. We saw a little bit of a drawback in March, but Nuveen's forecast for the balance of the year is that we get slightly above 600 billion, but it's not a number that particularly scares me. And I say that because there's going to be more bonds called, more bonds maturing, sinking funds tendered than new issue paper. So we're likely the only market in all of fixed income that is going to have a shrinking market or a shrinking asset class on a year-over-year basis.
Dan, issuance is ramping up. Fund flows are still a little bit uneven. Can you talk to us a little bit about the technicals in the muni bond market?
Yeah, so last year, total inflows, and this is both for ETFs and mutual funds, and ETFs have really come into the muni market in a big way, lagging a bit what we've seen on the corporate side for sure. But about 25 billion or so came in all flows in 2025. Through the first 3 months of 26, or the first quarter, we've already had more inflows in, so about 27 billion in. So that technical picture, I think looks very good. I've been, quite frankly, very surprised because that 6 weeks or so before taxes are due, we tend to see some of the most seasonal weakness. We went back, about 20 years or so, and that 6 weeks before individual investors actually cut their tax checks to the IRS, the muni market usually goes down about 30 basis points. And then that 6 weeks following, we tend to see that the muni market has a nice rebound up about 42 basis points. Heading into this tax season, given the inflows, given we've had about 19 weeks of 20 where we've seen flows coming into our market, the technical picture looks very good. I think the only things that I'm not really concerned about, but this is also the season where we tend to see a lot more deals coming online. But right now, I think the technicals are holding up very well, and I think the fundamentals are also a very good story right now for our market.
Dan, thanks so much for joining us. Really appreciate it. Dan Close, he's head of the municipals for Nuveen. And Nuveen has, I believe, the largest and longest running high yield municipal bond fund in the industry. So that's pretty cool. He's based out there in Chicago. We appreciate getting a few minutes from him. The war in Iran is creating obviously some logistic concerns, particularly in the energy space, but also in some of the metals that that come out of that part of the world. And that's a little bit of an issue for the auto industry. Let's check in with Steve Mann, Bloomberg Intelligence, Global Autos and Industrials Analyst. Steve, talk to us about the global auto companies, and are they facing any challenges by the unrest, the war in the Mideast?
Yeah, definitely they are facing a lot of logistic issues. You know, gasoline prices are high, but we published a piece of research today focusing on aluminum, because aluminum is a critical metal for the auto industry. It's a substitute for steel. And it's supposed to be, it's used to make the vehicle a little bit lighter. It's used even more so on EVs because, you know, they want to, you know, reduce the weight of the vehicle so the driving range is longer and extends the battery life. So EVs typically use about 75–80% more aluminum, around 800 pounds per car. Gasoline cars, a little bit less. It's about 400 pounds to 500 pounds per vehicle. Doesn't seem like it's significant, but it is a big cost for the auto industry.
Steve, how quickly does the spike in aluminum costs feed through to production costs, and does that eventually get passed on to the consumer?
Well, fortunately, the aluminum cost is more of an inflationary. You know, the aluminum supply chain issues that we're seeing is more of an inflationary for the automaker, less so of a supply crunch. Now, aluminum coming from the Middle East, it's about 15%. Coming into the U.S., it's about 15%. It's significant. But if you look at the auto industry alone, actually most of the aluminum is actually produced locally in the U.S., and about half is coming from Canada. Now, even though it's locally produced, it's under the USMCA realm, but the global prices is rising, and that's what's causing the inflationary impact on the automakers.
Steve, can you give us an update on tariffs? Where are we with tariffs in the auto industry? Quite frankly, I can't keep track.
Yeah, and the tariffs has a huge impact on aluminum. The fact that it's produced in the U.S. and in Canada, there's actually no tariff impact. You remember, aluminum, there's a tariff of 50% on aluminum and steel, but because they fall under the USMCA, the United States, Mexico, and Canada Free Trade Agreement, the exchange of metals between the two countries is not part of that 50%. So, look, again, it's we estimate the per vehicle cost is around as much as $385 for EVs, less for ICE vehicles. So again, I think the automakers can actually pass on that cost to the consumer, or somehow, do some cost initiatives to absorb those costs, higher costs.
Steve, you mentioned that Tesla and electric vehicle makers specifically are, most at risk from higher aluminum costs. Are there any automakers that are more insulated from this? Which companies?
Yeah, Tesla, Rivian, Lucid, anybody that makes EV is going to face higher costs for those EVs. But because Tesla, Rivian, and Lucid are pure plays, they're going to face bigger impact than say the GM and the Ford. Now, EV do use a lot of aluminum. Like I said earlier, help cut down costs. There's a lot of aluminum. You'll find a lot of aluminum in the batteries. You'll find a lot of aluminum in the motor housing. So the intensity is much greater on EVs.
So who I haven't heard of a lot from recently is Elon Musk. What's he up to these days, Steve? Is he getting ready for a SpaceX IPO? What's going on with him and Tesla?
Yeah, there's a lot of rumbling, rumors for Tesla specifically. Obviously, he is very busy with SpaceX. There's a lot of headlines around SpaceX IPOs. But within Tesla, it seems like, based on social media and other media reports, that Elon Musk is actually revisiting and launching a smaller vehicle. And that would be great, especially for emerging markets. We are seeing a lot of sales improvement over in South Korea and Japan. They're expanding their network, retail network there. They're expanding their service network there. So launching a smaller vehicle will be really helpful. The other thing that the investors are very focused on is the robotaxi. The rollout is a little bit slower than we initially thought, but we are hearing they're testing. They're putting cybercabs in multiple cities across the U.S. To validate the vehicle.
I didn't ride in my first Waymo, so I survived that out in Santa Clara. Steve Mann, thanks so much for joining us. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence, based down there in Princeton, New Jersey. S&P up 6 points, the Dow minus 170, the NASDAQ up 120. Coming up, we're going to check in with Catherine Chiglinski, Bloomberg U.S. Finance team leader, on Secretary Bessent urgently summoned bank CEOs to discuss Anthropic's new AI. That was pretty interesting news item coming out. So we'll get the reporting there. WTI crude oil up $1 right now. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. Stocks could see their best week since May. Traders waiting for this weekend's talks with Iran. We check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the upside. NASDAQ is up 0.4%, and the Dow is down 0.4%. 10-year Treasury yield at 4.3%, and the 2-year yield at 3.79%. WTI is up 1.5%, now closing in on, now topping $99 a barrel. Brent crude is topping $97 a barrel. That's about 1.25% higher. And Bitcoin is 0.3% higher at $72,000. Palantir shares little more than 1% lower, paring back its losses after President Trump posted on social media that the software company has, quote, proven to have great war-fighting capabilities and equipment. Palantir had been 6% lower. Consumer sentiment fell to a record low because of increasing worries about mounting inflation caused by the Iran war. Consumers expect prices to rise at an annual rate of 4.8% over the coming year and see costs rising at an annual rate of 3.4% over the next 5 to 10 years. The current conditions gauge and expectations index declined, with consumers blaming the Iran conflict for unfavorable changes to the economy. We have the first real numbers now on how a month of war with Iran has hit Americans' wallets. Bloomberg's Michael McKee with the March Consumer Price Index.
The CPI core for the year, 2.6%. The index for energy, they say, rose 10.9%. Take a guess what gasoline went up, 21.2%. According to the Bureau of Labor Statistic, that accounts for 3/4 of the entire increase here.
Bloomberg's Mike McKee reporting. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Alex Semenova and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Well, this is the way it works, folks, at Bloomberg News. When a story gets a green B next to it, that's a good thing. That means it's exclusive, or as those news geeks call it, a scoop. And this is a good one. Wow. Treasury Secretary Scott Bessent and Federal Reserve Chair Jerome Powell summoned Wall Street leaders to an urgent meeting on concerns that the latest artificial intelligence model from Anthropic will usher in an era of greater cyber risk. Great, our finance team, Todd Gillespie, Katanga Johnson, Hannah Levitt, and Sri Natarajan co-wrote that. And the editor is with us on this story. Catherine Chiglinski, U.S. Finance Team Leader for Bloomberg News. What was this meeting, and why was it so urgently called, I guess?
Well, it's really interesting because obviously, Bessent and Powell are always meeting with bank CEOs and sort of staying in touch with the financial system, but to have them both sort of in on this meeting in which, yes, they called the bank CEOs, who many of which were in town for sort of a lobbying meeting. They called them in for this urgent meeting, and I think what's really interesting is it really is about this Anthropic mythos model and what it really pretends for the industry. And I think that's key. You know, it sounds like obviously, Anthropic is trying to be very thoughtful on sort of releasing it to a select few companies to sort of be able to test their systems. And I think banks obviously are kind of a key, source that we needs to make sure that they can sort of batten down the hatches and make sure they're ready for this next era of cyber risk.
How unusual is this, Catherine, for bank leaders to be summoned on such short notice over the potential systemic risk of a private company to their industry?
Yeah, well, and I think it's interesting because they'll meet on macro events, they'll meet on larger, broader trends in the industry. I think this is a little bit interesting in that I'm not sure that there's exactly been like an AI prompt before that has spurred them all to come together and come together quickly. You know, AI has been definitely a risk factor that all the companies are talking about and have been talking about for many years at this point. But for them to sort of come together and say, listen, this is to get a warning from the Fed and the Treasury that says this is a big risk and you need to be preparing is a very big statement.
What have the banks acknowledged this risk, or how have the banks responded to some of these AI risks that may be out there as it relates to cybersecurity?
Well, I think honestly in the past few years, banks have really ramped up their cybersecurity protocols. I think AI is a new challenge, obviously, because it makes it quicker that these attacks and these risks can evolve. So I do think that banks have been responding already and are already sort of quickly on this. Like you look at Project Glasswing, which is that sort of Anthropic-led limited release to certain companies to protect their defenses, and JP Morgan is already on that list. So it's clear that they're quickly trying to get involved and to make sure that they can sort of ready their systems as best you possibly can in this sort of new age. But I do think it's interesting that this is enough of a, as we're sort of questioning, how good really is Mythos, I think this is a real indicator that regulators are taking it seriously.
Have there been certain banks within that group that are more proactive about mitigating these AI and cybersecurity risks than others? Any kind of standouts in terms of what they're doing?
Well, I think you have especially the big Wall Street banks, I think have been ramping up that a lot. And part of it is honestly cyber risk, affects your reputation. And if you're JP Morgan, the top US bank, you've got a lot to protect. I do think what's going to be really interesting is how regionals handle this. A smaller bank that maybe doesn't have as much of the flexibility and the capital to sort of support large-scale sort of cyber initiatives. It is going to be really important how the big giants, JP Morgan, Morgan Stanley, Citigroup, address this, because I think it'll sort of set the tone for the rest of the industry.
Anthropic, your reporting shows Anthropic has separately been battling the Trump administration in court. The Pentagon had labeled the company Anthropic as a supply chain risk, a designation that Anthropic has opposed here. So the government's definitely looking at this stuff from a lot of different angles, aren't they?
Definitely. And, I think right now, whenever anyone sees Anthropic in the government, you're thinking about this sort of political battle that they're in over the Pentagon's designation. And I do think, though, the fact that Jerome Powell was in this meeting, he's obviously trying to be very careful. They don't want to be seen as a very political institution. But I think the fact that the Federal Reserve was in this meeting really understates the fact that this is less of a political thing, and this is really more of a, as a top banking regulator, the Fed is concerned about sort of cyber risk and how the industry is doing it. And the Fed knows banks well. I mean, they have the examiners who are going in routinely to sort of supervise operations. So yeah, I think a little less of a political bent for this meeting in particular. It just really underscores sort of how cyber becomes a top topic for them.
We have bank earnings coming up. We're going to hear from a lot of these executives on earnings calls next week. Do you expect that they'll address this at all?
It would be shocking if they don't, mostly because we're always talking about AI. I feel like every earnings call, everyone wants to know, how are you using it? What does it mean for your employees? And I think a natural extension is sort of, what are you doing for the risks of cyber? Especially, you see with escalating global conflicts like the Iran war, we just had, a fintech Chime got hacked. So I think there's definitely an impetus for them to address this next week.
What is the expectation for earnings next week?
Well, a blowout quarter for trading.
Okay.
It's going to be potentially across all of the 5 biggest trading desks. We're expecting stock trading to set records, and fixed income trading good at most of the banks. I think that'll be up. M&A, it's kind of interesting because you would think that geopolitics really put a damper on it, but most of what we've seen so far and what they've been signaling is that it's really held up. So that'll be interesting. I think another wild card, in addition to sort of how they address the AI, though, is private credit. Like, how do they address it? Investors are very want details on what are their exposures, and so we'll be monitoring that pretty closely.
All right, Catherine, thank you so much. Really appreciate it. Catherine Chiglinski, U.S. Finance Team Leader for Bloomberg News, again with a scoop here out today from Bloomberg News. How Secretary Bessent urgently summons bank CEOs to the offices over Anthropic's new AI risk. So we'll certainly stay on top of that. The market's red and green here today. No real direction. Feels like people don't want to add a lot of risk here ahead of what could be a news-heavy weekend, potentially coming out of these peace talks in Pakistan. The S&P's pretty much unchanged on the day. The Dow's down 187 points. That's about 0.4%. But offsetting that is a 0.4% gain in the Nasdaq, up 97 points. And that's driven by, we have oil a little bit higher here. We got WTI crude oil up about $1.30. That's towards the higher end for the day at $99.20. 10-year Treasury up 3 basis points, 4.31%. This is Bloomberg Good Morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alex Semenova sitting in for Scarlett Fu. Scarlett's people are telling me she'll be back on Monday, so that's a good thing. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, and we're streaming live on YouTube and on Bloomberg.com as well. One of the outcomes, obviously, of this war in Iran is higher oil prices, significantly higher oil prices, resulting from we're now getting, I guess, a greater understanding of how fragile some of this ecosystem is for the flow of global oil around the world here. So that's renewing, maybe some focus back on renewable energy. Shaheen Contractor joins us here, Senior ESG Strategist for Bloomberg Intelligence. Shaheen, talk to us about, we had a guest in earlier today who invests from a private equity perspective in electricity, in the grid, in the flow of electricity. And his take was, we need everything to generate electricity. We need all kinds of fuel here, including renewables. And if you didn't have a full appreciation of that, maybe you do now with oil up 40% from where it was pre-war. How do you guys think about it in your world of ESG investing?
Sure. So Paul, I think you're right. Anything that has electrons right now is going strong. I think anything faster to deploy, so think solar, batteries, is seeing more potential than things that are longer cycle. I think there's this extremely interesting trend we've seen here. So typically, clean energy moves inversely to real yield, so think higher discounts, lower returns. But we're seeing that diverging, and I haven't seen that happen since 2014. So clean energy is outperforming despite real yields not falling, which again, we haven't seen before. And that's really, again, this AI power demand story. That's the structural demand driver.
Shaheen, how is this war reshaping the investment case for renewable energy? Is this something that is going to be structural, you think, or is it just a temporary sentiment boost?
So it's more a long-term tailwind, because if you think about oil being more expensive, it makes renewables more competitive. And, even in the previous, the Ukraine-Russia war, I think I read an article saying after that, Europe electricity prices were much less correlated to natural gas because of more renewables in the mix. So I think it's a long-term tailwind.
So talk to us about nuclear power. Again, in that, I guess with that argument that we're going to need energy from everywhere to power all this AI stuff. And then, even nuclear. What's thinking in your world about that as an investable area and as a source of energy?
Sure. So again, like you said, we need everything. I think nuclear has a much longer time frame to come online. I know there's been some innovation in, I don't know the name, but a short, small
modular
something.
reactor, SMR. That's my technology.
Okay, wow, very good.
That's what I'm looking for.
So there's been more evolution of that, but a full-on nuclear sort of power plant is it's not going to meet the demand we need because of time scale.
We've seen, of course, a lot of supply chain disruptions for materials, including aluminum. How does that impact the scaling of infrastructure for clean energy?
I think right now it's more of a, there's more of an order backlog, which is fueling this top line growth. I think I've read articles on basically solar PV, the input costs are getting more expensive. So it is compressing margins to some extent, to your point, but I think we still have this earnings growth driven by the backlog. So just as an example, earnings estimates are expected to grow about 12% versus the previous year, which is much further than any broader index.
What's the funds flow into ESG funds these days? What are the trends globally?
Sure. So sustainable ESG, whatever you want to call it, is 2025. It's about negative 100 billion, which is a lot. I think we've spoken about this. I think that's a little overstated because a lot of it moved to separately managed accounts. I'll come back to the one bright spot, which is the focus of this topic, clean energy. It's seen 3.8 billion in inflows year to date.
Which one has?
Clean energy, sorry.
Clean
the focus
energy.
of today, again, 3.8 billion in inflows year to date, reversing years of outflows.
So what is that a global situation? Because when I talk ESG or sustainable investing here, out of favor to a certain degree here in the U.S., it's been politicized, but not so in the rest of the world. We spoke to many investors outside the U.S. and they say, we're continuing to move towards cleaner, more renewable energy. U.S., you guys do whatever you want to do, but the rest of the world's moving. Is that still the case?
That is still the case. I mean, if you dig into the flow numbers, I said 100 million? Billion, sorry, 100 billion. Again, most of it is from Europe, but it's very specific. So some of it moved to separately managed accounts, so you don't count for that in fund flow numbers. A lot of it moved out of funds which have the word screened in them. Investors don't seem to like that word. It means exclusionary, more like ex-tobacco, less so ESG integration. So that's the sense of where it's going.
Shaheen, thank you so much. We appreciate that. Shaheen Contractor, Senior ESG Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just moments. Alex Semenova, thanks so much for sitting in. We appreciate that.
Thank you for having me. It was great to be on with you.
Yep, always good. Big help to the program here. And we're looking at the market here, folks, as we head into the afternoon trading session here. It doesn't feel like the market wants to put on a lot of risk ahead of what could be a weekend where there's a lot of headline geopolitical news coming out. So we got an S&P, it's down 8 points. The Dow is down 240, but the NASDAQ is up 55 points. And that's basically being driven by some movements in oil. WTI crude oil, it's up about $1.30 here, sitting just at $99 a barrel. We'll have more coming up. This is Bloomberg. Good morning.
This is CBS News on the Hour, your home for original reporting. I'm Christopher Cruz in Washington. Vice President J.D. Vance is on Air Force Two at this hour, bound for Pakistan, where he'll lead high-level peace talks with Iran. CBS's Natalie Brand at the White House says Vance will have a full plate.
Vice President Vance has remained optimistic going into these talks as he prepares. He's now traveling to them. Iran, he says, has to negotiate in good faith, and that he's been sent with clear guidelines from President Trump. And we know that that includes the issue of uranium enrichment, Iran's nuclear program, and, of course, the Strait of Hormuz.
CBS's Elizabeth Palmer says the Iranians will be negotiating from a position of strength.
The Iranian high card is the Straits of Hormuz and the fact that at the moment they're controlling and, in fact, have stopped traffic almost entirely in the Straits of Hormuz. We've seen this morning new inflation figures in the United States that reflect the fact that there is just a real shortage of energy in world markets. And so that is a vulnerability for the Americans.
The talks will be taking place as the two-week ceasefire is in danger of collapsing. The Artemis II mission to the moon and beyond will come to an end later today with splashdown in the Pacific. CBS News space consultant Bill Harwood says the astronauts will be coming in hot.
It really all comes down to re-entry and splashdown. They've traveled almost 700,000 miles on this trip, out around the moon and coming back. And, of course, the Earth's gravity is pulling them in faster and faster and faster. And they're going to hit the atmosphere at about 24,000 miles an hour. That's fast enough to fly from Los Angeles to New York in about 6 minutes. But the whole process from re-entry to splashdown is only going to take about 13 minutes.
The Orion capsule will hit 32 miles the speed of sound as it re-enters Earth's atmosphere. White House officials are today warning administration staff against placing bets on those prediction markets.
CBS News obtained an email from the White House Management Office telling aides not to use non-public government information to place wagers on markets like Kalshi or Polymarket, warning it's a criminal offense. Connecticut Democratic Senator Chris Murphy claims it's already happened ahead of the military operations in Venezuela and Iran.
There's a lot of people inside that White House that are using these prediction markets to enrich themselves corruptly. And of course they are, because the tone is set from the top.
Michael Wallace, CBS News.
The Trump administration is acknowledging its claim that 5 million New Yorkers use Medicaid personal care services is way off. The actual number is 450,000. Officials had used the higher number to justify a sweeping federal fraud investigation. The Dow is down about 0.5% at this hour. This is CBS News. A piece of French history is hitting the auction block.
It's inspired songs and movie scenes.
I believe this is your floor.
Oh, thank God. Now's your chance to own a piece of the Eiffel Tower. A 137-year-old chunk of the landmark's original spiral staircase will be auctioned off next month. A spokeswoman for Art Curial tells the New York Times it's about 9 feet tall and consists of 14 steps. Its estimated value, up to $176,000. The tower was designed and built for the 1889 World's Fair. The staircase was dismantled in 1983 to make way for elevators. Deborah Rodriguez, CBS News.
Not to worry, 23 other sections of the tower staircase survive. Some are at museums in France. Others are near the Statue of Liberty and in the gardens of a foundation in Japan. Christopher Cruz, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The U.S. and Iran get set for high-stakes peace talks in Islamabad. Welcome to Balance of Power. I'm Kaylee Lines. As the Vice President of the United States, J.D. Vance, and the U.S. delegation are en route to Pakistan for negotiations, which Iran says cannot begin until two conditions are met: a ceasefire in Lebanon and the unfreezing of its assets. So what does that mean for whether or not this will happen as scheduled? We'll get into that with Bloomberg's Tyler Kendall. Plus, we have to talk about the economic impact the war is having, as we got data today, both in CPI and University of Michigan consumer sentiment numbers that indicate there is an inflationary pressure here. We'll talk about that with Jared Bernstein, the former chair of the Council of the Economic Advisors in the Biden White House. But first, let's begin with a check on the markets as we close out the trading week. And Amy Morris is keeping an eye from here in Washington. Hey, Amy.
Thank you, Kaylee. Oil is higher. Indexes are mixed. The New York Post reporting President Trump has already said that warships are being reloaded to resume strikes on Iran if this weekend's peace talks fail. Let's check those markets for you. We do it all day long here at Bloomberg. The S&P 500 is 0.1% lower. NASDAQ is 0.25% higher, and the Dow is about 0.5% lower. 10-year Treasury yield at 4.31%, and the 2-year yield at 3.8%. NYMEX crude oil now 1.5% higher at $99 a barrel. Brent crude topping $97 a barrel, close to 1.5% higher. We have the first real numbers on how a month of war with Iran has hit Americans' wallets. Bloomberg's Michael McKee with the March Consumer Price Index.
The CPI core for the year, 2.6%. The index for energy, they say, rose 10.9%. Take a guess what gasoline went up, 21.2%. According to the Bureau of Labor Statistic, that accounts for 3/4 of the entire increase here.
Bloomberg's Mike McKee reporting that has bond traders trimming wagers that the Fed will lower interest rates once this year. Fed officials have flagged the prospect of higher inflation, keeping policy on hold for some time, as their preferred gauge of consumer prices is rising faster than their 2% long-run target. Investors are watching for signs that this weekend's ceasefire talks will hold, with delegations set to meet this weekend. Round 2 of the Masters underway at Augusta National, and at last check, Sam Burns and Rory McIlroy sharing the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go to Balance of Power with Kaylee Lines.
All right, Amy, thank you so much, walking us through the latest price action, which would indicate that the risk rally, at least if you're measuring via the S&P 500, is taking a bit of a breather after that 7-day winning streak, though it could still be the best day for stocks we have seen, or the best week for stocks, rather, that we've seen in months, amid optimism around the idea of a ceasefire between the U.S. and Iran and the prospect of a longer-term agreement. That, of course, is the aim of the talks that are going to be happening in Islamabad this weekend, local time Saturday morning. As this ceasefire right now is largely holding, but a lot still remains unclear as to how successful this might actually be. Clearly, the U.S. at least is hoping for success, as the Vice President of the United States, J.D. Vance, who is leading the U.S. delegation, indicated en route before he boarded the plane.
We're looking forward to the negotiation. I think it's going to be positive. We'll, of course, see, as the President of the United States said, if the Iranians are willing to negotiate in good faith, we're certainly willing to extend the open hand. If they're going to try to play us, then they're going to find that the negotiating team is not that receptive.
So that was what we heard from the vice president earlier, his warning, don't play in these negotiations. But the warning we're getting from Iran today is these negotiations may not yet be able to begin, not until, according to the Speaker of Iran's parliament, two conditions are met: a ceasefire in Lebanon and the unfreezing of Iran's blocked assets. Is that too tall an order for this to happen as scheduled? Let's get more now with Bloomberg's Tyler Kendall, who is live at the White House. Tyler, obviously, the question is, can these talks be successful? But I guess the second question is, are these talks going to be able to begin at all, given the current state of things?
Right, Kaylee, at this point, we can't talk about a longer-term agreement until we get through this 2-week ceasefire and have these talks held in Pakistan, as the Vice President, J.D. Vance, is already on his way. But it does appear that some of these last-minute roadblocks have come up less than 24 hours before the negotiations are set to begin. You already mentioned the demands coming from Iran's parliament speaker, but we should say that this White House maintains that a ceasefire in Lebanon, for example, was never part of the discussions for the ceasefire between the U.S. and Iran. We did hear from Israeli Prime Minister Benjamin Netanyahu earlier today, who said that Israel's operations against the Iranian-backed militant group Hezbollah will not stop, but still maintained that Israel is set to move ahead with direct talks with Lebanon, actually here in Washington next week, about potentially disarming Hezbollah. So that had been seen as a potential solution to Iran's demands, yet in just the last hour, getting this post is now casting doubt that that's going to be enough. On the other hand, the U.S. also maintains that their demands haven't been met when it comes to the ceasefire. Of course, most notably, the reopening of the Strait of Hormuz. In the last hour, we had a headline crossing on the Bloomberg terminal saying that most of the ships that have been able to transit through are Iranian-linked. We're not seeing that freedom of navigation that the U.S. maintains was critical in order to achieve this 2-week truce. And Kaylee, to put a finer point on it, President Trump in 2 posts overnight on Truth Social saying that he hopes that Iran is not charging tolls, as our own reporting indicates that the starting price is at $1 a barrel paid in digital currencies to ships that are passing through, and 2, that he thinks that Iran is doing a, quote, poor job in reopening the critical waterway amid what is this backdrop that, as of now, traffic really does remain halted.
Yeah, he said some would say that job was dishonorable, at least right now. Tyler, aside from what we're hearing from the president via Truth Social, though, are we expecting to hear from him directly? We haven't seen him on camera since the ceasefire was announced, have we?
I don't believe that we have. That's a good point, Kaylee. He has a few things on his schedule for this weekend, including a trip down to Charlottesville. It is our understanding that the cameras are already set up to catch him as he heads out to Marine One later. So we'll have to watch as this develops. But right now, it really has been all eyes trained on his Truth Social, because at this point, the White House is maintaining that negotiations and diplomatic efforts are going ahead. Vice President J.D. Vance is already headed to the region, accompanied by Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner. But we know that there's going to be some really big bridges to gap, because at least publicly, these sides are very far apart. Though, Kaylee, U.S. officials, including the White House Press Secretary Caroline Leavitt earlier this week, saying that privately Iran is making much different remarks.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. And as Tyler mentioned, of course, the Vice President of the United States is on the move once again. He is aboard Air Force Two en route to Pakistan. It's been a busy week for him, as it was earlier this week that he was spending time in Hungary alongside the Prime Minister Viktor Orban ahead of the country's election this weekend. That vote on Sunday, not expected to go well for Orban. It actually could spell the end of his 16-year rule. So we want to get more on that now as we turn to Bloomberg Europe correspondent Oliver Crook, who is live in Budapest. So, Oliver, just set the scene for us ahead of the Sunday vote. How's it looking?
Yeah, it's hard to overstate the importance of this vote for the Hungarian people, but of course for the broader European Union. Viktor Orban, and as you mentioned there, that 16-year political dynasty that he's held on to power consecutively. He's going for his 4th term here. And the real question is he going to be displaced by this sort of upstart campaign that began about a year and a half ago by Peter Magyar, who's really come out of really nowhere, was an insider in the party, has staged this absolutely spectacular campaign over the last 18 months, and over the last few months, really taking a double-digit point lead on Viktor Orban. There are a ton of questions, though, going into Sunday. There's a lot of questions about the fairness of the election. I mean, just anecdotally, coming into Budapest, you come in from the airport, every single big billboard political poster is for Viktor Orban. Half of them have Viktor Orban looking very stately, sort of gazing out into the middle distance with a sort of optimistic message. But I'd say more than half of them have a photo of a sort of mugshot of Volodymyr Zelensky, Peter Magyar, saying basically danger. The only way to stop this is to basically vote for Viktor Orban, getting him back in office. We heard from Viktor Orban Orban a little bit earlier today, again, sending more of this message. And this has really been the Orban sort of playbook here, basically trying to gas up fear, saying that, Hungary is exposed to the European Union, to Ursula von der Leyen, to Ukraine, and that he's the only one that can defend it. He may be running out of steam on that, largely because of an economic stagnation that's really extended for a couple of years, and a real inflation crisis that hit really severely over the last couple of years, has diminished, but has left its scars.
Well, and what about the notion of the U.S. government at the highest levels being involved in this? When you have the Vice President of the United States essentially campaigning alongside of you, is that something that helps him in these final days, Oliver? Or could it actually have the reverse effect in Hungary?
Yeah, Kaylee, and not just campaigning a little bit. I mean, J.D. Vance was here for 3 days. He only left yesterday. He did a bunch of state, sort of state visit stuff, spoke next to Viktor Orban. That's what you expect when a vice president comes. He attended a rally. He put Donald Trump on speakerphone in front of the audience to try to get everybody gassed up. I think there's a real question of how much effect this has for two reasons. For one reason, J.D. Vance, most people in Hungary don't really know who this is. Maybe it excites the base that was already going to vote for Viktor Orban. But the other fact of the matter is that 12 months ago, Donald Trump was seen as a real icon, really a different sort of movement in terms of the political far right within Europe. What we've seen from Donald Trump over the last 6 months, particularly on the question of Greenland, particularly on the question of Iran, has zero support across Europe, even on the far right. So some real questions about that. Plus, Kaylee, does anybody like it when people come from another country and tell you how to vote?
Well, good point. And you say the question of Greenland. That, of course, is something we heard President Trump raising this week, at least on social media, in the aftermath of his meeting with the NATO Secretary General Mark Rutte. There's a not so closeted conversation happening about whether or not Trump would still like to see the United States participating in the NATO alliance, of which, of course, Hungary is a member. How does that kind of rhetoric also impact the Hungarian electorate when it's thinking about its own security? To your point, it seems like security is central in the election messaging here.
Absolutely. Well, Hungary is very interesting in this way. As you say, it is a member of NATO. It was obviously occupied by the Soviets for a very long time. And in fact, Viktor Orban really cut his teeth in being one of the sort of brave and early politicians to basically say that the Russians need to get out and that Hungary should be an independent nation after the fall of communism. He's obviously reversed that tack, not saying that it should be a communist nation or part of Russia, but has been on the side of Vladimir Putin. I mean, we had a spectacular story out a little bit earlier this week where we heard from Vladimir Putin this phone conversation between Orban and Putin back in October, in which Viktor Orban was saying very explicitly, listen, I'm here to basically do your bidding. I'm at your service to help you out. And that's exactly what he's done across the European Union. So it's a super significant election here for the Hungarians. It's being closely watched in Brussels. Viktor Orban is the only person that is currently blocking that 90 billion euro loan to the Ukrainians. As far as NATO is concerned, I mean, I think everybody in Europe is just happy when Trump is not talking about NATO. That obviously went away. You'd think that maybe when he was distracted with the war in Iran, we wouldn't hear from Greenland, but we've heard from Greenland again and again throughout the week. And again, everybody in NATO, I think this is the single biggest issue for the Europeans, more than the trade war, is whether or not the United States will be committed to NATO.
All right, Bloomberg Europe correspondent Oliver Crook live in Budapest. Thank you so much, and we'll be checking back in with Oliver in the next hour. But coming up first, we have to check in on the economy, as we've gotten some economic data today, a hot CPI print in line with expectations, but still the most we're seeing inflation spike in years. And of course, UMich consumer sentiment not looking great either amid these higher gasoline prices. We'll have more next on Balance of Power on Bloomberg.
1221 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg. The S&P 500, little changed on the downside. NASDAQ is 0.3% higher. The Dow about 0.5% lower. 10-year Treasury yield at 4.31%. The 2-year yield at 3.8%. NYMEX crude oil is 1% higher at 98 per barrel. And Brent crude is $97 per barrel, around 1.3% higher. Bitcoin 0.25% higher at $72,000. CPI data offering the first look at the Iran's war's impact on inflation. Looks like it's hitting Americans right in the wallet. The March Consumer Price Index rose 0.9% to a year-over-year rate of 3.3%. Gasoline prices accounted for almost 3/4 of that jump. Round 2 of the Masters underway at Augusta National, and at last check, Sam Burns and Rory McIlroy share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's get to Balance of Power with Kaylee Lines.
All right, Amy Morris checking on the markets for us. Thank you so much. Of course, the market's having to contend with the prospects of a ceasefire turning into a longer-term peace agreement between the U.S. and Iran. Still very much a question mark, leaving, therefore, a question mark on the impact it is going to remain having on the global economy, as clearly evident in today's U.S. economic data. First, you have CPI rising 0.9% month on month, at least on the headline. X out energy, it's a bit of a different story, yet it does show that there is inflationary pressure out there, and that inflationary pressure is hitting consumer confidence, as evidenced by UMich consumer sentiment data, which dropped to a record low in the data out this morning. So you have risks on the inflation side. You have questions around the growth side. It is a lot for the global economy to contend with. And this is something I got into with the president of the World Bank Group, Ajay Banga, when he joined me in our Washington, D.C. studios yesterday. I began by asking him how he's thinking about the economic impact of this war.
The reality is no one knows the two dimensions you're trying to solve for. One is the length and duration of the disruption, and the second is right now, while there is some kind of a ceasefire, you can make a guess of what kind of damage has happened to facilities. If the conflict were to restart, then what kind of damage continues to happen to energy production facilities is unclear. Those two dimensions are what we're using. We've got a scenario that says that if it comes to a ceasefire now and 3 to 4 months of normalization, we have some impact on growth, some impact on inflation, both on the wrong side. But if it comes back into a conflict and continues after that, and this becomes a 6 to 8 month impact on before it normalizes, not the conflict, but the downstream effects, then that's a very different impact on growth and inflation. So that's how we're working it.
And which of those risks in your mind is greater right now, on the growth side or on the inflationary side?
Well, I would say if you were to, in the emerging markets, which is where my focus is, if you had to focus right now, you should be more concerned about inflation, because that's the immediate impact you're feeling of the disruption in all these supplies, whether it's oil or gas or sulfur or helium or fertilizer or downstream chemicals. But when you go out further, and if you're managing to get that inflation under control, then the next big thing to do would be to worry about your growth again. But they're both important. I just prioritize inflation before I went chasing down the growth path.
Well, and it raises the question, especially for some of these developing economies, if they're feeling the effects of this, their room to respond from a fiscal policy perspective. How much ability to do that is there if it's necessary?
Absolutely. So both the IMF and us and other institutions like ours are working through in what ways can we be helpful to these institutions, to these countries as they respond. So in our case, we have something called a crisis response toolkit, which was launched a couple of years ago. And what that does is 10% of the undispersed balances of approved projects in a country, any project, can be diverted for purposes of crisis management under the control of that country's finance ministry. So if you put all that together, you add in a few other projects where they could do this and other work we're doing across our emerging markets, $20 to $25 billion of liquidity could be made available very quickly to our clients. If this continues into that other scenario of longer term, then we're trying to see if we can get to another somewhere between 50 and 60 billion of capacity to help. Having said that, I want to make sure you understand one thing, which is, you know, what we do right now has to be done in a way in countries that it's kind of targeted carefully, and it's clearly temporary and transparent, because none of these countries have the headroom to, let's say, do a permanent fuel subsidy. Much better than that is to do targeted subsidies to those who are the most affected in the poorer sections of society, preferably through digital distribution means. Many countries across the emerging markets, not just in India or parts of Africa, but many countries now have digitized ways of being able to distribute targeted benefits to people. And that kind of thing is what I'm referring to, rather than blanket subsidies.
Part of my conversation yesterday with Ajay Banga, the president of the World Bank Group. And now it's time for my conversation with Jared Bernstein, of course, former chair of the White House Council of Economic Advisors under the Biden White House, and now Distinguished Policy Fellow at the Stanford Institute for Economic Policy. Jared, welcome back to Balance of Power. Great to have you on Bloomberg, as always. Obviously, and we just heard President Banga speak to this, the notion that so much still remains unclear as to the trajectory of the war in the Middle East, and therefore the impact that it ultimately could have on growth or inflation. My question to you is, even if it were to end here, how long the economic ripple effects could last, even if we do get to some kind of peace in the near term?
Great to be with you. The answer is longer than most people think. This is anything but a light switch. You can't turn it on or off in a heartbeat because of the damage to the infrastructure that's been done, as you've heard, and because of some unique dynamics in energy markets. You know, we often talk about these prices as having a rockets and feathers kind of dynamic, or a elevator upstairs down situation where prices rise a lot more quickly than they go down. We at the Sieber Group that you just mentioned, where I'm a policy fellow, we estimated what we think the gas price is going to do, the retail gas price for the rest of this year. It does not come back down, at least in our forecast, and I think that's quite consistent with others that I've seen, to the pre-war level for the rest of this year. So we see continued pressures, probably not as bad as we saw in April, if the scenario you just outlined holds, but certainly worse if it doesn't.
Well, and to this notion of gasoline prices staying higher for longer, or perhaps diesel prices is better for my line of questioning here, Jared. Obviously, we talk about headline inflation up 0.9% in the data we just got. When you X out food and energy, understandably, the number is a lot lower. But should we expect that due to things like higher diesel prices, which affects how things are able to transit through this economy, that the energy inflation we're seeing is going to feed through into more wider underlying inflation?
I think that's precisely correct. Look, pass-through takes some time. It doesn't happen in a week or a month. And therefore, my expectation, and again, this is, I think, common among forecasters, is that we'll see more energy pass through, and by energy I'm including things like fertilizer, in food and in airfares as we go. And airfares, by the way, do feed into the core. So there should be some pressure there forthcoming. I was glad to see the grocery price essentially flat in April. In March. It was the April report, the March report that we got in April. I was glad to see the grocery price flat. But my expectation is that will be higher in some forthcoming prints. The other thing we have to be concerned about is the impact on real wages. This is something a number of us have been elevating today, because here we have a longer-term trend of slower nominal wage growth colliding with higher inflation. Again, just as the interview you played from a minute ago suggests, a lot of the inflation part is a matter of duration. But if you believe my story about pass-through and rockets and feathers, I think there'll be continued pressure on real wages going forward.
Well, and so that is also likely feeding into consumer sentiment, right? The idea that you perceive prices going higher and your wallet is not necessarily getting fatter in order to afford those higher prices, Jared. So when I look at the UMich consumer sentiment numbers dropping to a record low in this morning's data, 47.6, at the same time that inflation expectations jumped a full percentage point, 4.8% over the next year. We know, and we hear this consistently from the Federal Reserve, that inflation expectations in managing those is their real concern. How quickly do you think that this could potentially spiral?
So this is a very interesting question and an important data series, the University of Michigan sentiment. And I actually have a few comments respond to what you just said that are a little more upbeat than you might expect, and then I'll
we could use a little positivity on a Friday, Jared.
Yeah. I'm going to give you a sort of one, which is the following. If you look at 1-year expectations in the UMich survey, this is people, this isn't price setters, this is regular folks telling you how they feel about the economy. So it's not, when I say price setters, businesses or owners of retail gas stations. You will see that it follows the gas price. You get a spike in the gas price, you get a spike in the UMich 1-year expectations. Look at the 5-year expectations, and you see it went up just 0.2. So I don't think, if I were the Fed, I wouldn't be weighting University of Michigan 1-year expectations particularly high. I wouldn't get that too heavy a weight. I'd look at it, I'd note it, and I would worry. I would definitely worry about inflation expectations getting dislodged, and we've heard Chair Powell express that concern. The broader point, and here I'll go back to some pessimism that I think is just really unfortunately warranted, is that there has been this is not a one-time thing in this UMich report. There has been such a pronounced downtrend in how people are feeling about the economy, almost regardless of some positive macroeconomic statistics, whether it's GDP or productivity or a relatively low unemployment rate. People feel really bad about the economy they experience on a day-to-day basis. A lot of that has to do with affordability and prices, and boy, this war really exacerbates that challenge for them.
Yeah. Well, and of course, largely that is because of the still effective closure of the Strait of Hormuz. Jared, we just got a True Social post from President Trump alluding to that. He says the Iranians don't seem to realize they have no cards other than a short-term extortion of the world by using international waterways. Arguably, that actually is a pretty large card that the Iranians have to play, and we've seen that borne out with the Strait of Hormuz, but it speaks to the notion of a potential supply shock, energy side supply shock for the global economy. You joined the Council of Economic Advisors in 2021 in the Biden administration. In the aftermath and in the midst of, frankly, a supply shock that started from COVID. Then there was the supply shock that emanated just years later from Russia's invasion of Ukraine. If we have this kind of supply shock that we're now dealing with, how would you be advising this White House to navigate it? What policy response is there if we can't get to a ceasefire or an agreement?
Well, first of all, let me just say that that card that Trump is being dismissive, in fact, you might even call it a Trump card, that the Iranians have, this regime in the Strait of Hormuz, is a very, very powerful card to play. And he's very much wrong to dismiss that. Now, this whole thing hinges, a lot of what we've been talking about, the economics of the war, hinges on what happens with transit through the strait. And thus far, what we've seen hasn't been particularly promising. And what's particularly discouraging is that this misadventure in the Middle East, in the Persian Gulf, has really signaled to the Iranian regime, which is as hardline as the one as it's been in decades, that they have this card to play. We've empowered them. So look, the best thing you can do is tell Americans the truth and do the best you can to maintain this ceasefire and try to back out of this situation you put us in.
All right, Jared Bernstein, the former chair of the Council of the Economic Advisors in the Biden White House, thank you for joining us right here on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. War in Iran sending inflation higher and the mood of American consumers lower. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.1%. NASDAQ up 0.2%. The Dow down 0.6%. 10-year Treasury yield at 4.32% and the 2-year yield at 3.8%. WTI is 0.8% higher, around $98 per barrel, and Brent crude around $97 per barrel. It is exactly 1% higher. We have the first real numbers now on how a month of war with Iran has hit Americans' wallets. Bloomberg's Michael McKee with the March Consumer Price Index.
The CPI core for the year, 2.6%. The index for energy, they say, rose 10.9%. Take a guess what gasoline went up, 21.2%. According to the Bureau of Labor Statistic, that accounts for 3/4 of the entire increase here.
Bloomberg's Mike McKee reporting consumer sentiment fell to a record low because of increasing worries about mounting inflation caused by the war. And this just crossing the Bloomberg terminal, Blackstone considering an initial public offering that could raise $2 billion for an acquisition company to buy data centers, that offering being led by Goldman Sachs. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Balance of Power with Kaylee Lines.
All right, Amy Morris checking on the markets for us on this Friday. Thank you so much. Of course, it is a Friday here in Washington. That means town is kind of empty, although it has been a little bit empty for the last 2 weeks, effectively, because Congress has been on recess. They come back next week, though, and they have a very long to-do list, including for the Republicans, trying to figure out how to rally very quickly around a reconciliation package to fund the parts of the Department of Homeland Security that Democrats are not willing to at this time, ICE and CBP. This, of course, is part of the two-track plan that the Senate Majority Leader, John Thune, and House Speaker Mike Johnson said they agreed to. The idea that first they will pass funding for DHS, ex-ICE and CBP, using reconciliation to get that funding all the way through for a 3-year period. But it gets a lot tougher from here than just making that deal, as the president wants this on his desk, he says, by June 1st. And the president is going to be meeting today at the White House with two pretty important figures in this. Senator John Barrasso, of course, a member of Republican leadership, and Senator Lindsey Graham, who chairs the Budget Committee, to talk about this reconciliation process, as Senator Graham has warned that this does need to be very narrowly tailored in order to get done quickly. So we want to get into this now and the other things on Congress's to-do list with our political panel. Jeannie Shanzano is with me, Bloomberg Politics contributor, Democratic analyst, and senior democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Lisa Camuso-Miller, Republican strategist and founder of the Friday Reporter Public Affairs Group. Welcome to you both. Lisa, if I could just begin with you, as we have already seen one successful reconciliation effort from this Republican-controlled Congress. It took a while, and the president wants this done by June 1st. Even if it is narrow, how heavy of a lift might this be?
Well, you know, Kaylee, it certainly is going to be harder than the president hopes it will be. I mean, I think that the level and the layers of all of the activities that have gone on between the time that they left for the recess and now are coming back to are probably very, very steep, and making it difficult for folks in the district who are increasingly feeling pressure about the midterm elections themselves are going to be able to take hard decisions. So unless it is so narrow that the members on the Republican side feel as if they're not taking any stance that puts them in conflict with what the district is prioritizing, I don't know. To me, it seems like a very, very steep and amazing feat to overcome. However, I will say the speaker has not yet let him down as it relates to timelines. And so I would be impressed, but also surprised if this happened as quickly as he'd like it to see happen.
Well, the speaker obviously has a lot of wrangling to do of the Republican conference in the House, Jeannie, many of whom have said if we're going to do reconciliation, we should have it funding the entire Department of Homeland Security rather than voting separately on funding for everything ex-ICE and CBP, as the Senate did. How do you get Republicans all in line in this? Are there not fissures, if you will, that Democrats are going to be able to exploit?
Fascinating, because before they left, the speaker called exactly what he's asking his members to pass now, trash and a joke, and he brought them along, and they said absolutely not. And as a result, even while we were in war with Iran before this tentative peace deal was struck, you had the Department of Homeland Security supposed to protect the homeland go unfunded because the speaker and the members wouldn't pass exactly what he is saying now they're going to come back and pass. So that's going to be terribly difficult for him. They had a 3-hour conference call. Members aired their frustration. Some said that they want to see this reconciliation bill before they vote for the Senate bipartisan bill. And that's why Barrasso and Lindsey Graham are going into the White House. And Lindsey Graham is right. They're going to make this very, very narrow. But let's also just add to this mix, Kaylee, that this is Reconciliation Bill 2.0. If, like, you know, they are through some miracle, as Lisa was talking about, able to pass that, they want to then pass a third reconciliation bill. So the amount that they have put on their shoulders is enormous, and it's going to be a huge, huge uphill battle for this Republican speaker and, of course, the majority leader.
Well, I'm glad you said that, Jeannie, because that's exactly where I want to go next, Lisa. The idea that it won't just be the second reconciliation package, but potentially a third that they want to see, with the midterms only drawing ever closer. This is an election year. Does that make this quite unrealistic?
Without a doubt. There is no question. The closer we get to June, the closer we get to the summer when they're supposed to be home and they're supposed to be touting successes, the harder it will be to get anything done in the Congress. And it's already at a pretty slow crawl as we speak. So yes, I've heard the same rumor. We're definitely looking at a third reconciliation package. It will be interesting to see. I think it all really hinges on how quickly the Reconciliation 2.0 happens. If, in fact, it happens by June, perhaps there's momentum behind the scenes and there's a movement to get it all done. But, Kaylee, these are the kinds of negotiations that are literally on a hair's thread. They are so incredibly thin, the margins between the Republicans and the Democrats, that any dissension, anybody who has a different point of view, anyone who has an argument about whether or not it can get passed will stop it on a dime. And so that, I think, is the one thing that we will have to see. If 2.0 moves quickly, 3.0 may have wind in its sails and it may happen, but everything has got to be done very, very soon. That's about 6 weeks as far as my calculations are in order to get everything done. And you know how it goes. This is a nonstop news cycle and a nonstop movement action system right out of the administration, making it increasingly difficult for House and Republican leadership to move anything because the White House continues to move the ball.
Well, you also have the White House, or President Trump at least, via executive order guaranteeing that employees of the Department of Homeland Security are receiving paychecks now. And I wonder, Jeannie, if you think that removes some of the incentives for lawmakers to actually figure this out expeditiously.
I think it does. And I think a big question, and you may have the answer to this, Kaylee, is when does that funding via the EO lapse? And the longer, like when Republicans say we want to see the Reconciliation Bill 2.0, the skinny one, if I can call it that, before we will vote on the Senate bipartisan, that's going to extend the time frame of getting this done. And then I think there is, at least on my understanding, a chance that funding to pay the TSA workers lapses. So that'll be a problem. And, you know, I think we should put the context here as well. We are looking at a debt of $39 trillion in this third reconciliation bill. The president and the administration are talking about asking for $300 billion to fund via reconciliation to fund the war in Iran. And then, of course, you have the president on video that has now been taken down by the White House saying over an Easter lunch that the states should pay taxes because the federal government simply can't be responsible for funding services like daycare, Medicaid, Medicare, and that should be done via the states. People know this, and this is all happening in an environment in which inflation is rising and consumer sentiment is in one of the worst fits. I think we've seen it in a long time as people are desperately concerned about their ability to pay. So I think that the 3.0 reconciliation, really tough to imagine that happening. And then, of course, you add to that the SAVE Act. Does that get passed via the Byrd bill? So many questions, Kaylee, very few answers. So many questions.
Yeah, some of these questions will ultimately only have to be answered by the Senate parliamentarian if it even gets that far. Can you make voter ID something that is budgetary in nature? They will be charged with deciding. I want to go back to what Jeannie just mentioned, though, on the idea of consumer sentiment. Lisa, the data from UMich today, pretty abysmal. A record low, in fact, on consumer sentiment, 47.6%, due in large part to higher inflation expectations. For the next year, the inflation rate, 4.8% is expected. That's a percentage point jump from March. Those are not the kind of figures you'd like to see, I imagine, if you're a Republican incumbent looking toward November. How much longer is there for the kind of economic sentiment story to turn around if Republicans are to hope for a kind of redemption, at least in public perception, on the economy ahead of the midterms?
Well, you know, Kaylee, the one indicator that is the most tied to how people perceive the health of the economy is the cost of gasoline. And it's high right now. I mean, there is no question. And we're going into the busier season. We're going into the summer season where people really start to realize that. But also, too, Kaylee, we have to remember that people's attention spans to this kind of thing tend to be short. So while right now they may be feeling the pinch, by the time we get to the fall, if things have improved and things have changed, that's a very different narrative. And that's when people start making their decisions as it relates to early voting and voting in the ballot box. So the narrow window itself is probably after Labor Day. But if everyone is feeling this incredible pinch, and the most, as I said, the one that's the most tangible for all of us is the cost of gasoline, that's going to be the one that I think is going to be very difficult. And the fact that we have the Strait of Hormuz involved and we have Iran conflict involved and everything else that goes into the rise of oil prices, to me, it feels like a perfect storm for an unkind and uncool time for Republicans to be defending the economy. But I do think that we have a little bit more room to run before we have to be defending all of what's happened.
Well, and considering that room to run, Jeannie, do you sense that Democrats are starting to get a little bit overly optimistic about their own odds, their ability to capitalize on this, as there's now a live conversation, not just about a flipping of the House, which has long been expected, and clearly there's historical norms that would lean more towards the idea that that will happen, but now the idea that the actual Senate majority could be in play. I just wonder if you're buying into that.
I am usually very pessimistic and concerned about the Democrats getting over their skis, so to speak. I think obviously you have to be very cautious because a lot can happen, to Lisa's point, in several months. That said, so much of where we find ourselves has very little to do with anything Democrats are doing right, and much more about how Republicans are faltering. Number one, on the economy. Number two, on this war. And all you have to do is look at how horribly Republicans have performed in the off year and the special elections, including in the most recent election for Marjorie Taylor Greene's seat, where the margin, even though the Republican held out, the margin was a problem for them. And of course, where was the sitting vice president while Americans are going to the polls? He was over campaigning in Hungary for Viktor Orban. So this is where the Republican Party finds itself. Last night or yesterday, the president lashing out at people like Megyn Kelly, Tucker Carlson, Candace Owens. These are people with millions of followers who have called the president out repeatedly now in a way he's obviously upset about for what is going on in the war. And that is intimately tied to the economy, not just in the price of gas, which Lisa just mentioned, but again, they're asking for $300 billion on top of a $1 trillion budget for the Pentagon to fight this war and reconciliation at a time when we are closing in on a $40 trillion debt and people can barely afford groceries and gas. People know that, and they know the president has not lived up to his promises. So yeah, I'm always cautious about Democrats getting overly optimistic. But again, this isn't so much what Democrats are doing right, but where Republicans have faltered. And if they don't correct this soon, the president and the party are going to suffer huge losses. That's what all the numbers show in the midterms in just a few months.
Lisa, just in our final 30 seconds, those names that Jeannie was mentioning, Tucker Carlson, Megyn Kelly, are they still representing a significant portion of the Republican base?
Yes, I absolutely think that they are. I'm curious though, and I don't know the answer to this, but what makes me curious about what's happened there between the rift between the president and some of these pundits is how long the lag time is between their followers, the Megyn Kellys and the Tucker Carlsons of the world, how long that lag time is before they start to feel like there has been a betrayal from the president. I'm not sure how long that takes. I'm certainly not going to think that it's right away. It's one of those things that I think we need to watch because it could very well turn the tides against him.
All right, well, watch it. We will. And Lisa Camusa-Miller and Jeannie Shanzana will be back with me for more in the second hour of Balance of Power, which starts in just a few moments as we gear up for talks between the U.S. and Iran and Islamabad this weekend. So stay with us on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The U.S. and Iran get set for high-stakes talks in Pakistan. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines in Washington, which Vice President J.D. Vance departed earlier today, now en route to Islamabad to lead the U.S. delegation in these negotiations with Iran, which Iran says cannot begin until there is a ceasefire in Lebanon and its assets are unfrozen. We'll get the latest this hour with Bloomberg's Tyler Kendall live at the White House. Plus, two important conversations are coming up with Republican Congresswoman Nicole Malliotakis of New York and former acting Trump White House Chief of Staff Mick Mulvaney. And we have to check on these markets as well after a slew of economic data today. CPI, high as expected, and consumer sentiment on the decline. So let's look at how markets are reacting to all of this as we close out the trading week. Amy Morris has a look from here in Washington. Hey, Amy.
Hey, Kaylee. Soaring gas prices leading to the biggest monthly inflation spike in 4 years. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.1%. NASDAQ up 0.25%. The Dow down 0.6%. 10-year Treasury yield at 4.31%. The 2-year yield at 3.8%. WTI is up 0.4%, around $98 a barrel. Brent crude topping $96 a barrel, approaching $97 a barrel. It's about 0.9% higher. CPI data offering a first look at the Iran war's impact on inflation. It does look like it is hitting Americans right in the wallet. The Consumer Price Index for March rose 0.9% to a year-over-year rate of 3.3%. Gasoline prices accounted for about 3/4 of that jump, but housing prices also played a role. Ares Management is planning a smaller private credit fund, a direct lending fund with a preliminary total target size closer to $20 billion to help speed up deployment of capital. Sources tell Bloomberg this new fund, the Ares Senior Direct Lending Fund 4, is expected to secure equity commitments in the $10 to $12 billion range. A smaller target size means a faster timeline for Ares to raise and deploy capital. NVIDIA-backed Lumentum says demand from the biggest U.S. tech companies for its optical components is accelerating and on track to fill its order books through 2028. Shares of NVIDIA more than 2% higher. Round 2 of the Masters is underway at Augusta National. At last check, Sam Burns and Rory McIlroy are tied for the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go to Balance of Power with Kaylee Lines.
All right, Amy Morris checking on the markets for us. Thank you so much. Meantime, we also have to check on the True Social feed from President Donald Trump, because that is basically the only way we've been hearing from him in the days since the ceasefire between the U.S. and Iran were announced. And he has been using this platform to express some frustration, especially with the fact that the Strait of Hormuz, despite what he said when the ceasefire was announced, what the White House said it expects, is still not really open for business. Only a trickle of vessels getting through, all of them Iranian tied. And President Trump's latest True Social post says the following: the Iranians don't seem to realize they have no cards other than a short-term extortion of the world by using international waterways. Read Strait of Hormuz. The only reason, he says, that they are alive today is to negotiate. And of course, those negotiations are expected to happen tomorrow morning, Saturday morning local time, in Islamabad between the U.S. and Iran. Iran is saying today those negotiations cannot start unless there's a ceasefire between Israel and Hezbollah in Lebanon and its assets are unfrozen. So there's still a question mark as to whether Iran is willing to show up to the table at this time. But the Vice President of the United States, J.D. Vance, is already on his way. He boarded Air Force Two earlier this morning, sharing this message before he did so.
We're looking forward to the negotiation. I think it's going to be positive. We'll, of course, see, as the President of the United States said, if the Iranians are willing to negotiate in good faith, we're certainly willing to extend the open hand. If they're going to try to play us, then they're going to find that the negotiating team is not that receptive.
So for more, let's turn to Bloomberg's Tyler Kendall, our Washington correspondent, who is live on the North Lawn of the White House. So, Tyler, the stakes are high, and we have a lot of unanswered questions here.
Exactly, Kaylee. I mean, you outlined it perfectly. We got this post from President Trump within the last hour expressing frustration about how the Strait of Hormuz still remains closed, even though that is one of the top U.S.'s demands in order for the ceasefire to go forward, and also expressing some frustration as we get these reports that Iran wants to see some of these additional demands that you mentioned, including a ceasefire in Lebanon, met before these talks can progress. Now, this White House has maintained throughout the week that a ceasefire in Lebanon was never part of any of the discussions for this truce, while we heard from the Israeli Prime Minister Benjamin Netanyahu earlier today, who said that operations against the Iranian-backed militant group Hezbollah will continue, though reaffirmed that Israel is set to have direct talks with Lebanon here in Washington next week. Amid all of this uncertainty, the New York Post is now reporting that President Trump is making plans for additional strikes on Iran if these talks fail. Not necessarily surprising, considering President Trump reiterated earlier this week that he would keep military assets in the region. Because, Kaylee, at this point, the White House says that diplomatic efforts are moving forward. We already know Vice President J.D. Vance is on his way to the region, accompanied by the Special Envoy Steve Witkoff and the President's son-in-law Jared Kushner. But there's going to be a lot that we need answered, as it appears, at least publicly, the sides are very far apart. And as you well know, of course, most notably when it comes to the closure of the Strait of Hormuz, Kaylee, data analyzed by Bloomberg News shows that since the ceasefire was announced, only 9 vessels have been allowed to either exit or enter the critical waterway.
Well, and Tyler, the Strait of Hormuz, obviously, yes, is vastly important in these conversations, but so too is Lebanon and Israel's activity there. We've had the president suggest in various phone interviews that he expects the Israeli Prime Minister Benjamin Netanyahu to low-key it, I think was one quote from him in his conversation with NBC, and yet Israel is continuing these strikes against Hezbollah targets. So how big is the gulf right now between the Israelis and the U.S. that to this point have been acting in lockstep?
Right. I mean, at least publicly, right, they have been, although we did get this reporting yesterday from NBC News that President Trump had called the Israeli Prime Minister Benjamin Netanyahu directly and asked him to scale back the strikes. At the same time, though, we know that Israel is dealing with its own domestic pressures when it comes to combating the militant group. And pretty incredible reporting, the Bloomberg Big Take out today shows that there has been a divide between U.S. and Israeli officials when it comes to just exactly how far this war ultimately should go. So you're right, it's at this point emerging as a major roadblock to these ongoing negotiations. But at the same time, this White House has maintained publicly that this was never part of the agreement to reach this 2-week ceasefire and truce, but amid international pressure for Israel to scale back these attacks. We'll have to see how it develops, because at this point, what has been put on the table is that we are going to see at the ambassador level talks between Israel and Lebanon about potentially disarming Hezbollah next week here in Washington, held at the U.S. State Department.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. Joining us to talk about all of the various things that need to be figured out in order for a longer-term deal to actually materialize. Of course, the Vice President, J.D. Vance, said, at least to some extent, he's optimistic as he departed today. And we know President Trump has been pushing for this, although he has also suggested that it's really Iran that wants this deal the most. Just listen to what we have heard from the president over the course of the last 2 weeks about the prospects for this agreement.
All I can tell you is they're begging to make a deal. If there is no deal, we are going to hit each and every one of their electric generating plants. We have to have a deal that's acceptable to me. And part of that deal is going to be, we want free traffic of oil.
So for more, we turn to Republican Congresswoman Nicole Malliotakis of New York, who is in our New York headquarters right now, joining us on Bloomberg TV and radio. Congresswoman, it's wonderful to have you back on Balance of Power. I think clearly there is a sense in the White House here in Washington that the hope is that diplomacy prevails, but the president maintains that there is the military threat still there that he is willing to use if necessary, if no deal can be reached. In the absence of a diplomatic breakthrough this weekend, would you be supportive of the president resuming military operations and specifically going as far in those as he has indicated he is willing to?
Well, look, we don't know the specifics of what he means by military action. What we do know is that he has 3 leverage points, right? He has the economic, which we've implemented multiple sanctions, sanctioning those who are providing support and equipment and missiles to Iran. We also have the diplomatic, which is going to be taking place this weekend. And then you have the military, which we've seen the decimation of so much of Iran's capabilities, whether it be manufacturing capabilities of drones and missiles, or whether it be the overall components of its military, naval, and air. So, look, I think that we need to really just wait and see what happens this weekend, but I have faith that we'll be able to get a good outcome. Obviously, the Strait is the most important thing right now for us economically, making sure there is that free flow of oil, making sure that these gas prices come down. That is critical for so many of our world partners as well. But we need to make sure that Iran is removed as a threat. And we've already made a tremendous amount of progress in a short time frame. And we'll see now that they are weakened if we will be able to make some more progress in these negotiations, because they are in a much weaker position today than they were just 5 weeks ago. And the president did give them, remember at the beginning of all this, gave them an opportunity to negotiate. They wouldn't negotiate. Maybe now they're rethinking that.
Well, to your point, Congresswoman, about the importance of the Strait of Hormuz economically, you said specifically it is important economically for the United States, which is something that the president has disputed. His argument is that actually when it comes to the energy flowing out of the Middle East, that is much more a concern for other countries, European, Asian ones, not so for the United States. Is that a sentiment that your constituents would agree with, especially as they're looking at prices at the pump, as you alluded to?
Well, he's right in the sense that the oil that is going through that strait really goes to many of our partners in Asia, but it does affect the overall world market. So I think that it is kind of both, a little bit of both. The reality, though, here on the ground, here in my community, as well as parts of the country, gas prices have increased. We need to get those prices back down. We were under $3 a gallon, about $2.89 was the national average. And I think this is a temporary spike. And it is an important long-term investment that is being made for the security of our country, for the Middle East and the world. The reality is we need to make sure Iran is weakened here and that there is regime change. That is important, I think, because they continue to try to kill Americans. They've attacked our military bases. Over the last decades, they've killed Americans. They've killed their own people, tens of thousands of their own people. And we need to make sure that there is a change there, because they are the most destabilizing factor in that Middle East, which affects the entire globe. And so I think the objective here is to come out of this with some type of agreement to open up that strait. If he can get them to turn over any enriched uranium, that's also critical. We need them to stop funding these proxies, Hamas, Hezbollah, Houthis as well. And that should be really the main objectives of this. And I think, again, they're in a much weaker position today than they were 5 weeks ago. So hopefully the United States and these negotiations can extract those concessions.
Well, and what role should Congress play, if any, in ultimately the finalization of an agreement? As we know, the president didn't ask you and your colleagues first before launching these operations. You didn't have a direct say, but should there be a say in how this ends? Senator Lindsey Graham, of course, who has been an advocate for this war, says any agreement should have a vote in the Senate, that they should get to take a look at it. I wonder if you agree with that notion.
I don't know that we need to have a vote on a particular agreement. The president did abide by federal law. He gave the federal government, or his partners in the federal government, Congress, the 48 hours notice that was necessary. The president does have, under the War Powers Resolution of 1973, 60 days. And so I think after that 60-day period, he certainly should come back to Congress. We should be briefed and updated on what is going on, and we should talk about the next steps together. But I think that we have faith in the president's negotiating ability here. We've seen what he's been able to do with other conflicts around the world, helping mediate conflicts around the world. And he is, known as the deal maker. So let's see what comes out of this weekend before we discuss next steps.
Well, I'd also like to talk about the next steps for lawmakers, for you and your colleagues in the House as you get set to return from recess next week. Pretty quickly, it seems, you're going to have to take action on a reconciliation bill to fund at least parts of the Department of Homeland Security. The president wants it on his desk by June 1st. What is your expectation as to how quickly this will get done, and if it is going to be narrowly targeted to just those specific components of the Department of Homeland Security, or if other members may want to be adding things to this package?
I think it's important that we fund the entire Department of Homeland Security. That does include ICE and Border Protection. Just over the last few weeks, we saw multiple American citizens in multiple states killed by people in the country illegally. And it is unfortunate that with the changes that have already been made to ICE, some of the de-escalation that we've seen in cities, as well as the removal of Kristi Noem from the agency, the Democrats will not work with us in a bipartisan manner to fund those critical agencies that do important jobs, knowing who is coming in and out of our country and removing those who should not be here. We just saw an 83-year-old man here in New York City killed, being thrown on the subway tracks by somebody who should not have been here and had multiple prior arrests. There was a lack of cooperation between these municipalities and our federal government to have that person removed prior to this 83-year-old veteran being killed. Completely preventable. We've seen that taking place, again, over the last few weeks in multiple states. So I think that we're going to go in there and fund this agency, and we're going to have to do it with only Republican votes through reconciliation. Then we will work together to get that done. We were hopeful that the Democrats would work with us in a bipartisan manner, but clearly that has not happened. And the reality is this agency needs to be funded. It's the 25th anniversary of 9/11. You have the FIFA World Cup coming. You have all these America 250 events happening. Right. This can no longer be delayed. The agency needs to be fully funded, from Coast Guard to TSA to ICE to CBP to counterterrorism to cybersecurity.
Well, and to be clear, Congresswoman, to get all of the parts of the agency fully funded, are you supportive of the plan to pass the Senate-passed DHS funding bill, ex-ICE and CBP, and then handling those portions with reconciliation? That two-track plan, is that one that works for you?
That may be the only way we can get it done, but a lot of members, including myself, would like to see ICE and CBP funded first. Now, if the White House can reassure us that they have the necessary funding to fund those organizations, because remember, we did this in the first reconciliation. We did put additional money in there so ICE can continue its operations and enhance those operations. If they have the resources, perhaps we'll be able to do the other parts first. But I think a lot of members would feel a lot better knowing that we're funding ICE and CBP first, or at the same time as the rest of the department.
Well, and of course, this is Reconciliation 2.0 that we're talking about here. But Congresswoman, I'm sure you're well aware that there's a lot of buzz about a third reconciliation package. In fact, your chair on the House Ways and Means Committee, Jason Smith, has suggested if there's going to be one, there's going to be some tax measures included. What would you like to see included in a third reconciliation package? Do you think achieving that is a realistic legislative outcome in a midterm election year?
Look, I think that, well, first of all, what I think we really do need to do is address some of the expiring provisions. We have a film tax credit, there's a NASCAR tax credit, things that are important for our local economies that have expired that need to be addressed. And that could be done in a bipartisan way. It doesn't necessarily need reconciliation, but no doubt that Ways and Means will play a big role if there is a third reconciliation bill. Look, we delivered a significant tax cut for middle-class families. We are seeing the benefits of that take place right now in my district. The SALT deduction is helping New Yorkers. The senior deduction are helping 88% of seniors across the country get refunded to them what they paid in taxes on their Social Security. Tipped workers are seeing an average increase of about $1,300 in savings. So are many overtime workers. So we delivered a significant product that was, yes, tailored to the middle class. But let's not forget the significance of what President Trump did going back to 2016. Now, if you look at 2017 when he came in and passed that initial bill, you have seen tax revenue, despite the tax cuts, tax revenue increase, as well as our GDP significantly from 18 trillion to about $31 trillion. All
right, we have to leave it there. Thank you, as always, for joining us, Republican Congresswoman Nicole Malliotakis of New York on Bloomberg TV and Radio.
It's 1:21 on Wall Street. I'm Amy Morris. Let's check the markets. We do it for you all day long here at Bloomberg. The S&P 500 down 0.2%, NASDAQ up 0.2%, and the Dow down 0.6%. The 10-year Treasury yield at 4.31%, the 2-year yield at 3.8%. WTI is up 0.4%, now at $98 a barrel, and Brent crude is at $97 a barrel, right at 0.9% higher. Bitcoin is 0.6% higher, right at $72,000. Nike shares are 3% lower on concerns that the athleisure market is peaking. Piper Sandler downgraded Nike to neutral from overweight on concerns that athleisure is too saturated across the industry, saying that Nike stock is still looking expensive despite the already steep slide this year. President Trump has praised software company Palantir in a post on social media, saying it has, quote, proven to have great warfighting capabilities and equipment. Palantir shares had been down as much as 6% before the Trump post. Shares of Palantir now down more than 2%. And round 2 of the Masters is underway at Augusta National. At last check, Justin Rose, Sam Burns, and Rory McIlroy all share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Checking on the markets for us here on Bloomberg TV and radio as we get set to close out the trading week. But the most important event of this week is actually going to come potentially on the weekend. Tomorrow morning, Saturday morning, local time in Islamabad is when U.S. and Iranian talks are scheduled to take place. And we've heard from this White House on the prospect of a negotiated agreement being within reach that the conversations that are happening privately are very different than what the sides are saying in public. But I just want to give you a taste of the public messaging we are getting from both sides right now ahead of these conversations. Take the latest True Social post from President Trump, who says the Iranians don't seem to realize they have no cards other than a short-term extortion of the world by using international waterways. That waterway, of course, he's referring to is the Strait of Hormuz, which was the subject of another post he made publicly last night. Iran is doing, he says, a very poor job, dishonorable, some would say, of allowing oil to go through the Strait of Hormuz. That is not the agreement we have. Iran would suggest that the agreement it has also is not being adhered to, as the Speaker of the Iranian parliament says that 2 measures mutually agreed, in his words, by the parties have yet to be implemented: a ceasefire in Lebanon and the release of Iran's blocked assets prior to the commencement of negotiations. He says these 2 matters must be fulfilled before negotiations begin. So if there's still things that need to happen for this to even get started, what does that mean for Vice President J.D. Vance, who is already on his way to the table? He boarded Air Force Two earlier today and set off for Islamabad, as he is charged with leading the delegation in these high-stakes negotiations. And it's that decision for J.D. Vance to take the helm here that I got into yesterday with Natasha Hall of Chatham House.
I think the choice of J.D. Vance as the negotiator says a lot right there, because as you mentioned, he was probably opposed to this war to begin with. So maybe this is the softer side of the U.S. administration going into these negotiations. But, you know, as Mackenzie just mentioned, you know, the Iranians are very skilled negotiators. They know all of the ins and outs of the United States, of motivations. They know all the details that need to be hammered out. It's not clear to me that J.D. Vance, for all of his knowledge, has as much background.
So how tough is this going to be for the vice president? Let's get into this now with our political panel. Jeannie Shanzano is with me, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Lisa Camusa Miller, Republican strategist and founder of Friday Reporter Public Affairs. Lisa, the decision for J.D. Vance to lead these conversations obviously is an interesting one, given his previous anti-interventionist bent, especially in the Middle East, especially considering the idea that he may be a leader in the 2028 Republican field, or the one that is tapped. Is this a make or break moment for him and his political future?
That's a great question. Kaylee, the thing that that strikes me is that they've sent him, as you previously said, and he has been reported to not have been in favor of the conflict in Iran, the way that it has unfolded. But the one thing that we all have heard over the course of time is that no decision in this administration is made without the blessing of the president. So perhaps he is there because he is the mouthpiece and the representative of the administration, but I'm not necessarily convinced that he will have as much of a say in what decision is made, as opposed to being perhaps the representative of the White House and the president himself. So I am curious about how this will go, but it's also, to me, very much an indication of how this administration operates and works, and that is that the president himself has the final say in all of these decisions, and ultimately that is what J.D. Vance will have to do and will do. Whether or not it affects his own political success as it relates to his future, hard to tell, Kaylee. It will be something Democrats, regardless, will be taking very close note of and will be using against him if it does not go well in future debates and discussion. But you and I and Jeannie all know that the attention of the American people and the voting electorate is quite a bit shorter than what we'll be watching this weekend. And so for him, this is a big moment, but it certainly will be one moment in many that we'll be paying attention to over time.
Yeah, of course, there's still a long way to go until 2028. I just think it's interesting that the president even publicly has said he likes J.D. Vance, he likes Marco Rubio. They both would be wonderful presidents. And it is not the Secretary of State that is leading this charge right now. It is the vice president. And I wonder if that is telling in some way. But Jeannie, obviously, the domestic political considerations here at home are really secondary to the wider geopolitical ramifications of these negotiations should they happen this weekend. Iran is suggesting, as I mentioned, that these can't even get started until two things change. Its assets are unfrozen, and there's a ceasefire in Lebanon, which Israel right now it does not seem like it is, at least at this time, ready to agree to. So is there a very real chance that the vice president, the second highest official in the United States government, shows up in Pakistan and gets stood up? I mean, what would that mean for the United States and its credibility?
I do think it's a real possibility. And Kaylee, I'm still stuck on the Truth Social you read, where the president is saying that Iran has no cards except to hold the entire international economy in a stranglehold. That's quite a card to play. So that I'm trying to get over that. Yeah, it is possible. And the reason it's possible is because the United States under Donald Trump has been desperate to get Iran to the negotiating table. We are the ones who approached Iran. We are the ones who asked them to put forward this peace plan or this ceasefire plan, if you will. It is the president who said that Iran's 10-point plan was something that we could work with as a basis for negotiating. And everybody should read that 10-point plan, because if the president of the United States said that's a basis for negotiating a settlement on this thing, Iran is going to win big time in this. Iran knows, unlike what the president said on Truth Social, that it is holding enormous cards, many more than it was holding 30 days or 40 days ago when he started this thing. And so that is why they feel fine to get out over their skis again and say, you know, in addition to all of this, we also want you to unfreeze our assets, and we also want there to be a truce or a ceasefire in Lebanon. And who knows if they ask for more. You've been talking a lot about the fact that the Speaker of the Iranian parliament came out and said these things. We also have the Ayatollah, who has come out and said, hey guys, there is new management of the strait and Iran is in control of it. That is an absolute red line for Saudi Arabia, Qatar, the UAE, in fact, most of the world. And Donald Trump has waffled about whether that matters or not. So this is where the United States goes in. This is where J.D. Vance is going in. And it is Donald Trump who said just the other day, if J.D. Vance fails, well, this is all on him and I'll blame him. If he wins, I'll take the win for myself. So it is quite a thing to work for Donald Trump, and J.D. Vance, I'm sure, knows that a year or so into this at this point.
Well, and to Jeannie's point on the idea of a toll being required to transit the Strait of Hormuz, the president had suggested in an interview that maybe the U.S. would get in on that could be some kind of profit-sharing arrangement going forward, but then has since gone on to say that there should be no toll. He said if Iran is doing that, they need to stop now. So speaks to the kind of mixed messaging we continue to get around this conflict. Lisa, I also wonder about the kind of third party in all of this that is not going to be present at the negotiating table this weekend, and that is Israel. Israel cannot send a delegation, in part because Pakistan doesn't even recognize the state of Israel, which kind of underscores the the tension around the Middle East as a whole that is the background context to all of these conversations. But we've had an ongoing conversation since this war began about to what extent the president's decision to start this in the first place was influenced by Benjamin Netanyahu. Is there a real chance that Netanyahu got President Trump into this and is going to be the biggest impediment to getting him out if Israel is not willing to stop what it's doing in Lebanon in the name of a wider ceasefire?
Well, if anybody is paying attention to what's happening there as it relates to who is influencing the president's decision, it's me and it's you and it's Jeannie. And there is no question, based on the reporting that I have seen, that he has had a very heavy hand in how this decision has come together. Yesterday, there was plenty of discussion about the TikTok of how this all came to pass. So it would be surprising to me if the White House, J.D. Vance, and the president haven't already considered what it is Israel and Benjamin Netanyahu want to see happen in these negotiations this weekend. So as much as they are not there in the room, they are certainly there in spirit with their own points of view and thoughts. And I think that the White House and the administration will keep that in consideration as they're going through the process that is set to unfold. It will be part of the discussion whether or not they are in the room or not.
Well, so Jeannie, weigh on this as well. We were having this conversation yesterday as the DNC in its spring meeting in New Orleans was taking up a number of resolutions or going to vote on them pertaining specifically to Israel, whether it was the influence of AIPAC in funding in primaries or recognition of a Palestinian state. I just wonder, as we're having this live conversation about Israel's influence on the Trump administration and the problem it may be causing for him and Republicans as a result of that in this war, if this is still an issue that Democrats are not sure how they would like to approach.
I think it is an issue that has split Republicans and Democrats, and I think that's absolutely clear. And I think you can see that on the Democratic side with the minority leader in the Senate, Chuck Schumer, who was just one of many people. That said, when it pertains to this ceasefire, let's be clear that Israel is profoundly unhappy with the ceasefire. And to Lisa's point, there has been a lot of reporting about the work they did, even as far as being beamed into the Situation Room, maybe a first of its kind, to help convince the president, because they were unable to convince his predecessors to go into this war. And of course, they do not want to end this war as it pertains to either Lebanon or Iran until they've achieved their goals. And of course, they have not achieved their goals or objectives, so they don't want this to end. And I think that's what raises questions about to what extent will Benjamin Netanyahu have the ability and the Israelis to undermine what the president is asking for by way of his push and pull to get this thing to the negotiating table. So Israel, to your point, is a huge, huge presence in these negotiations. And of course, in a country that doesn't even recognize it. I mean, this is how far back and difficult this goes for these negotiations.
All right, Jeannie Shanzano, Lisa Camusa-Miller, our political panel on Balance of Power on this Friday. Thanks for being here on Bloomberg TV and radio.
It's 1:40 on Wall Street. I'm Amy Morris. Wall Street traders bracing for talks between the U.S. and Iran, leaving stocks wavering as oil is on the rise. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.2%. NASDAQ up 0.2%. The Dow down about 0.5%. 10-year Treasury yield at 4.31%. The 2-year yield at 3.79%. WTI is up 0.5% at $98 a barrel. Brent crude at $97 a barrel at 0.7% higher. Consumer sentiment fell to a record low because of increasing worries about mounting inflation caused by the war in Iran. Consumers expect prices to rise at an annual rate of 4.8% over the coming year and see costs rising at an annual rate of 3.4% over the next 5 to 10 years. The current conditions gauge and expectations index declined, with consumers blaming the Iran conflict for unfavorable changes to the economy. Bond traders trimmed wagers that the Fed will lower interest rates once this year. Fed officials have flagged the prospect of higher inflation, keeping policy on hold for some time, as their preferred gauge of consumer prices is rising faster than their 2% long-run target. Anthropic has agreed to tap data center capacity from CoreWeave as part of efforts to handle increasing demand for its artificial intelligence services. The multi-year deal will help Anthropic build and deploy its Claude AI models, and the capacity will include a variety of NVIDIA chip architectures at data centers in the U.S. CoreWeave says it now counts the 4 largest AI model makers, Anthropic, OpenAI, Google, and Meta, as customers. CoreWeave shares are 12% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Checking on the markets on this Friday. Of course, the big event of the week is set to happen Saturday morning in Islamabad, Pakistan. That is where negotiators from the U.S. and Iran are at least scheduled to meet for conversations on a longer-term end to this conflict that has, of course, now in a third day of a ceasefire, but drug on for more than a month. Iran maintains today that some conditions need to be met first before these conversations can begin, one being a ceasefire in Lebanon, the other being the unfreezing of Iranian assets. Was this really pre-agreed, as the Iranian Speaker of Parliament suggests, or is this potentially a moving of the goalposts ahead of negotiations, knowing that the U.S. also says that things that it thought the U.S. and Iran had agreed to have also not yet materialized, including the reopening of the Strait of Hormuz. President Trump on Truth Social yesterday suggesting that the Iranians were being dishonorable in not opening the strait. And of course, earlier this afternoon, taking to Truth Social on the Strait of Hormuz specifically, and the idea of it being around a piece of leverage, he says the Iranians don't seem to realize they have no cards other than a short-term extortion of the world by using international waterways. So that is the backdrop to which we begin our conversation with Mick Mulvaney, the former acting White House chief of staff in the first Trump White House, also, of course, former congressman from South Carolina, co-founder of the House Freedom Caucus, also former director of the Office of Management and Budget in the first Trump administration. Mick, welcome back to Bloomberg TV and Radio. The last we spoke with you, the ceasefire had not yet begun, but you told us here at Balance of Power that the president cannot end this until the Strait of Hormuz is open. You have seen his frustration now over the course of the last several days that despite this ceasefire being in place, that still has not materialized. What lesson do you think he's learning here about whether or not the solution to this is going to be as easy as he hoped he would? Not saying that it was easy, but the idea that there can be a clean wrap-up of this and the free flow of transit in this waterway once more.
Yeah, I think there's an axiom, I think, in Middle Eastern politics that the Iranians have never won a war and they've never lost a negotiation. I think Trump is starting to realize that right now, that these are tough negotiators. He's right. They've only got, they don't have a lot of cards to play, but the one card that they play is a significant card. If you really can shut down the Straits of Hormuz for a period of time, that is a tremendous piece of leverage. And believe me, Donald Trump understands leverage as much as anybody else. Look, I don't know what the agreement was. You don't know what the agreement was. I don't think anybody knows what the agreement was. The point of the matter is there's no agreement. The Iranians say X, we say Y. The bottom line is the straits are still closed. So they might not be active military engagements right now, but this war is still going on. And this issue is not resolved. And Donald Trump needs and wants to resolve it quickly. But I think, again, as we talked about last week, he's finding it's going to be much more difficult than I think they expected.
You say he needs and wants to resolve this quickly. Is he being too obvious about that in public and giving the Iranians a stronger hand at the table, Mick?
You know, look, I'm not going to give Donald Trump negotiating lessons. He's better at it than I am. But I don't think it takes a rocket scientist to figure out that, you know, he has telegraphed that he wants an off-ramp here. How many different outlets have talked about that? How many times has he talked about it, that he wants this war to end and so forth? The Iranians don't need the war to end. They just need not to lose. This is a war of resistance and survival on their part. Time is not part of their calculation right now. It is when it comes to the United States, because the straits can't stay closed forever, because the world economy will choke, including ours. So yeah, to the extent that the Iranians do have that one card, as Donald Trump mentions, it's still a heck of a card.
Well, so what does it say to you, Mick, that the Vice President, J.D. Vance, is the one who has been entrusted in trying to spearhead the solution here, alongside, yes, the envoys that Trump has long gone to for negotiating various geopolitical disputes, Steve Witkoff and Jared Kushner. But it's J.D. Vance who is en route to lead this delegation in Pakistan. What do you make of this selection?
Yeah, I know a lot of folks are trying to read into the tea leaves on this, on, oh my goodness, it's J.D. Vance and not Marco Rubio or something like that. I wouldn't read too much into that, Kaylee. This is the issue here is, who does the president trust to go and deliver a message? And you can trust Marco Rubio and J.D. Vance, or both under those circumstances, or Witkoff or Kushner. It doesn't make any difference. But what I think folks need to realize is, regardless of who Trump sends, none of them really speak fully for him. Donald Trump is the only person who speaks for him. That was the case in the first term. It's the case in the second term, that you can go. You could be the Secretary of State. You could be the Vice President. You could be the Chief of Staff, whatever. But you're not there to make your own calls. You're there to sort of, you know, deliver information from the president and then take information back. And JD is going to be perfectly capable of doing that and a reliable source for the president. Look, there's a parallel here that, you know, when Mike Pence took over the COVID task force back in 2019, it wasn't because Mike knew more about COVID than, say, the Health and Human Services Secretary did. It was just the president trusted him to run the process. And I think you're seeing the same thing here with JD. It's not that he knows more or less than Marco Rubio. It's just that Trump trusts him.
Well, and when you say that all of this comes down to the decision-making of President Trump, is that to say, Mick, that once again, Congress has no role to play here, didn't have a role in how it started, isn't going to have a role in how it ended, even as Senator Lindsey Graham, who has been one of the biggest proponents of this war in the first place, says, look, if you want to make a deal with Iran, especially if there's a nuclear component, you have to bring that to the United States Senate first.
Yeah, really good question. That is a difference from COVID. So what I would say to my good friend Lindsey Graham is, okay, maybe. But I tell you this, the one thing that Congress can do, they can't keep the war going if Trump doesn't want to, okay? If Trump says, I'm bringing the troops home, Congress can declare war, but they can't prosecute the war. So as much as Lindsey would want the war to go on for a really, really long time, Congress doesn't have that authority. They do, however, have the other side of that equation. They can stop it. Because the Pentagon is going to run out of money. They need the $200 billion to continue to prosecute the war, and Congress could say no. I know a lot of folks have talked back and forth about, oh, Trump didn't go to Congress as required in the War Powers Act, always got 60 days under the WPA, et cetera. I throw all that out the window. It's an interesting constitutional discussion for another day, but from a practical standpoint, this is about the money, and either Congress is going to approve of what Trump is doing and give him the $200 billion he needs to continue the war, or they are not going to give him that $200 billion, in which case the war has to stop. It's a very, very difficult situation for Trump to be in. It's a difficult situation for Congress to be in. I've never seen an overseas contingency operation money, emergency spending for the war fail. But it could in this particular circumstances. So that will be fascinating to watch. My guess is, Kaylee, by the end of next week, I think, maybe the week after that, they're going to have to start having hearings on this.
Well, that'll be interesting indeed, as there's a lot else on Congress's plate as they get set to return from recess next week, including, Mick, as you know, a reconciliation package to fund ICE and CBP that the president says he wants on his desk by June 1st. In fact, the aforementioned Senator Graham and Senator John Barrasso are going to be meeting with Trump at the White House about that this afternoon. The idea is that this will be a narrowly tailored package, really just focus on these two things in the name of expediency. But how messy could even that effort get?
Really messy, really messy. You know, people, I don't think folks understand, you know, what reconciliation is. Reconciliation is just not, oh, we can't pass something with 60 votes, so let's use reconciliation and pass that same thing with 50. That's not how it works. Reconciliation is specific to the budget process, specific to the spending process, and you can't just say, okay, we're going to approve DHS funding on the reconciliation, and we're going to approve $200 billion for the military, and that's it. That would be ruled out of order in the Senate, and unless they want to overturn the parliamentarian, that's not going to see the light of day. They have to find a way to pay for it. Reconciliation is part of the budget process, and it has to be at least budget neutral, which means if they want to spend $250-odd billion on the war plus DHS, they're going to have to find $250 billion worth of offsetting cuts. And that's where it could get really, really nasty, because as you get closer and closer to the midterms, there's a lot of folks, even Republicans, who don't like to vote to cut spending. So, yeah, this is going to be, that's why this, how often do we hear this in life in general in Washington, D.C.? Follow the money. And this debate about money is going to be absolutely insightful as to where we are in the war.
Well, in our final moment, Mick, I want to follow the money in another way. The activity we're seeing in prediction markets that, at least for some traders, have been quite accurate in terms of the timing of events like a war in Iran or the capture of Nicolas Maduro in Venezuela. You, of course, are heading up a new coalition, Gambling is Not Investing. So just quickly, what was your reaction to the reporting we've seen today that in March, the White House actually sent out a memo to staffers warning them not to make bets on information they may have?
I saw that piece, and very briefly, here's my response. If the markets are functioning properly and they're being overseen properly, you don't have to send out that message. So you got to ask yourself, why did the White House send it out?
Got to ask ourselves, indeed. We'll have more on that hopefully next time you join us, Mick. Always great to have you. Mick Mulvaney, of course, the former acting White House Chief of Staff in the first Trump term, former congressman from South Carolina as well, here with us on Bloomberg TV and radio. Now, we also want to talk about what else is going on outside of domestic affairs and in geopolitics. Yes, the war in Iran is huge, and the talks this weekend will be major, but another big event is happening this weekend in Hungary, an election on Sunday, which could spell out the end of Viktor Orban's 16 years in power. So for more on that, we turn to Bloomberg Europe correspondent Oliver Crook, who is live in Budapest for us. Oliver, obviously, we saw Vice President J.D. Vance before heading to Pakistan, spending days in Hungary to advocate for Orban. Is it likely to pay off when the votes are counted?
Yeah, that's the big question here, Kaylee. If you look at the polls and everyone I speak to, if this is going to be a free and fair election, it's really going to go in the way of the opposition candidate, Peter Magyar, who's really staged a spectacular electoral campaign. He's really been campaigning for about a year and a half, really went back to basics, walked across much of the country to shake hands and really give a different vision of the future from President, or I should say Prime Minister Orban, but in some ways has really stuck to the Orban playbook. While he's sort of advocated a more sort of liberal economic policy, potentially being more pragmatic when it comes to Brussels, potentially unlocking those 20 billion euros of frozen EU funds that Orban has lost because of rule of law concerns. He's also been intensely nationalistic. He's been very hedged in terms of his way of working towards, in terms of Ukraine. So there are a lot of questions still open in terms of what his political agenda will be. But Kaylee, we should say that this would be really a remarkable feat for somebody who was once part of Orban's party in a year and a half to topple what is the longest current running European legacy in terms of political dynasty here. It's been going for 16 years. Orban trying to get his fourth consecutive term, fifth term in total, and something that seems very likely going into this weekend, despite all of the concerns that there have been around the fairness of the election, of which there are a great many.
Well, and that's actually what J.D. Vance was arguing when he was in Hungary, the idea around the fairness of the election and election interference to the detriment of Orban. I don't know what you make of that, Oliver, but when we consider the wider ramifications here for the Trump administration, for the U.S., for Europeans who are looking at Russia as well, just how significant is what happens in Hungary to outside Hungary's borders?
I think it's really rare to find a country that's only about a $250 billion economy, about 10 million people, that has so much significance on the global stage. And you see it really everywhere, and everyone's sort of lobbying in their own way to try to get their interests through. As we say, the EU has frozen funds coming to Hungary. That is part of the political contract that the Hungarians have with the European Union. That may be what J.D. Vance was alluding to. But of course, he's saying that while standing on stage with Viktor Orban and effectively campaigning for the Prime Minister of Hungary, which is a very rare event. You don't tend to see that from a U.S. administration. We had Marco Rubio here also after the Munich Security Conference, and Donald Trump sent a video message again endorsing Viktor Orban. And that's largely because they sit on the same side of what they see as the culture war, really trying to advocate for the American MAGA interests within the European Union. But it's not just the Americans, it's not just the EU. Kaylee, as you know, it's Moscow as well. I mean, there was a ton of reporting about the possibility that the Russians were considering a sort of false flag operation in which they might stage an assassination attempt to Viktor Orban. We printed this week that transcript of that call between Orban and Putin back in October, in which Orban very, very openly said to Vladimir Putin, listen, I'm here at your service. So a ton of countries with a lot of invested interest in terms of how this election will shake out on Sunday.
All right, Bloomberg's Oliver Crook live in Budapest. Thank you so much. Sunday, big day. Saturday, a big day as well, as U.S. and Iran talks are slated to happen in Islamabad. We'll have more on that, the lead edition of Balance of Power right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stenivek, along with Bloomberg News credit reporter Emily Graffeo. She's in for Carol Masser this afternoon. I think this is the first time you have been filling in for Carol on this show since your new job.
Yeah, I think so.
What a good time to join the credit team, Emily.
Yes, it's been a lot of fun on the credit team. I'm focusing specifically on investment grade private credit, which is a huge growing area, at least if you speak to the likes of the Mark Rowans of the world. But I'm still focused on cross-asset as well.
Okay, so we're definitely going to tap your expertise over the next 3 hours right here on Bloomberg Business Week. Well, Wall Street and much of the rest of the world really bracing for talks between the U.S. and Iran. Stocks are wavering now. Oil is higher. Negotiations are set to dictate the path ahead for a fragile ceasefire. We did see a move higher in equities earlier. That did fade. The New York Post reported that President Trump is preparing the military if peace talks in Pakistan this weekend fail. U.S. crude hovering just around $98 a barrel.
Yeah, and we got a lot of data this morning, Tim. Inflation up, consumer sentiment down. This, of course, just as you were saying, thanks to the energy costs due to the war in Iran. Ira Jersey with the bond market reaction and Greg Dacco of EY Parthenon are going to come and talk to us about what it means for the global economy.
On that energy trade, we're going to be joined by McKinsey Global Energy and Materials Practice Senior Partner and Leader on when or maybe if the Strait of Hormuz gets back to normal. That is the major choke point right now.
And the bank CEOs go to Washington urgently and at the request of Treasury Secretary and the Fed chair. That's quite surprising. We have the scoop on the AI that has Washington leaders concerned.
All that ahead over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here she is, Amy Morris, in for Charlie Pellet. Hey, Amy.
Hey, Tim, soaring gas prices led to the biggest monthly inflation spike in 4 years. Indexes now are mixed, oil modestly higher. We check the markets for you all day long here at Bloomberg. The S&P 500 down 0.1%. NASDAQ up 0.3%. The Dow down about 0.5%. The 10-year Treasury yield at 4.31%. The 2-year yield at 3.8%. NYMEX crude oil, or WTI, is up only 0.1%, holding fast at $98 a barrel. Brent crude up about 0.5%, holding around $96 a barrel. And Bitcoin is 0.9% higher at $73,000. CPI data is offering a first look at the Iran war's impact on inflation, and it does look like it is hitting Americans right in the wallet. The March Consumer Price Index rose 0.9% to a year-over-year rate of 3.3%. Gasoline prices accounted for about 3/4 of that jump. Housing prices also played a role. Ares Management is planning a smaller private credit fund. Sources tell Bloomberg this new fund, Ares Senior Direct Lending Fund 4, is expected to secure equity commitments in the $10 to $12 billion range. A smaller target size means a faster timeline for Ares to raise and deploy capital. NVIDIA-backed Lumentum says demand from the biggest U.S. tech companies for its optical components is accelerating and on track to fill its order books through 2028. Shares of NVIDIA now 2.5% higher. And round 2 of the Masters is underway at Augusta National. At last check, Rory McIlroy sits atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Emily Grafeo and Tim Stenovec.
Hey, Amy, thanks so much for that update. Do appreciate it. Look, this story, Amy mentioned it, U.S. inflation surging in March by the most in nearly 4 years. The war with Iran sent gasoline prices skyrocketing. On that, U.S. consumer sentiment fell in recent weeks to a record low, indicating Americans' increasing worries about mounting inflation due to that war. Great to have back in the studio with us Greg Dacco. He's chief economist at EY Parthenon. Greg, I want to start with headline inflation surging the most going back to June of 2022. I don't want to use the word because I think it's been banned, transitory. But it does seem like at least bond traders are pricing in like this is a temporary shock and the Fed won't have to do anything as a result of it. How are you thinking about it?
I'm thinking about it with a bit of a step back.
Okay.
I think we have to remember that we're in an environment where we're seeing a multidimensional framework where there are layers of supply shocks that are affecting economic activity. And I think that's how you have to perceive this specific shock from the Middle East. It's not in isolation. It's on top of tariff shocks. It's on top of an immigration shock. It's on top of an AI shock. All of these supply shocks are affecting the way prices evolve, the way economic activity evolve. And so when we think about whether this is going going to be transitory or not, we have to remember that we are in this environment where there are constraints on supply and inflationary pressures have been more persistent than initially anticipated. So I would take the bet that this has a longer tail than just a one-off quick spike in terms of inflation.
Okay.
And is that why you raised your December 2026 forecast for 3% year over year for the headline CPI inflation, and then core inflation, the one that the Fed pays more attention to, 2.6% year over year?
Yep.
What does that mean for monetary policy?
The first thing I'll note is that we have a distortion from the government shutdown and the fact that the BLS used methodologically in terms of capturing the missing prices that essentially understates CPI inflation. So I'm much more focused on core PCE inflation, and we have that essentially ending the year at 3%. So fairly high in terms of the 2% objective from the Fed. What that means for the Fed is that essentially they're going to be on hold. They mentioned in the minutes that they mostly considered it prudent to await more data on the Middle East conflict and evaluate the economic impact thereof.
Sit tight for a second, Greg. I want to bring in Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He joins us from the Princeton Bureau. Ira, yields edging higher across the curve. Come on in on this conversation with Greg and really how you're thinking about it, at least from the bond trading perspective and what yields are doing and today's data supporting the idea that the Fed will cut maybe once more this year.
Well, it's barely one, right? Like the chances of them cutting actually right now, priced by the market, is almost zero. So I'm going to have a really cool chart in our note that we're putting out on Monday morning, which shows the number of core sectors that have had negative prices. So about 6 months ago, almost a quarter of sectors within the core CPI actually had declining prices. Today, that's only 10%. So you wind up having, definitely more persistent inflation. So I agree with that idea. And the market is kind of getting set up for that. That's one of the reasons you said that the market's effectively said, look, if the Fed might cut once over the next 14, 15 months, but it maybe not even that. It's only 60% priced for next June a cut, and that's a risk of basically inflation maybe hurting real growth and worrying about the labor market. But generally speaking, when you look at things like inflation swaps, you're still looking at inflation headline CPI above 3% for the next year, then basically flatlining, right? So basically getting back to that 2.5% area where we were hovering for quite a long time.
Let's bring Greg back in here. Ira mentioned kind of different parts of CPI where prices are rising, different parts where they're declining. You look at the total economy. What sticks out to you? What sectors are facing the most persistent price pressures?
Well, the most persistent price pressures are actually coming from some of the goods segments where we're seeing still this pass-through from tariffs. It's been a gradual and uneven pass-through from tariffs, and you're still seeing it. Apparel prices still rising rather strongly, and that is a reflection of these tariffs being passed through. At the same time, you, of course, have strong disinflationary winds from the shelter side of the picture. Housing costs have been growing at a slower pace. That's been a strong disinflationary current. But on top of that, now, unfortunately, you're going to have the energy price shock, where we saw gasoline prices post the largest increase month over month on record since 1967. That will filter through to higher transportation costs. We're also seeing higher fertilizer costs, which will feed into higher crop prices and higher food prices. So it's going to be a layered shock in terms of how this affects inflation, and the real result is an income squeeze. That's the real risk.
Okay, so Ira, what's so interesting about this and what Greg said is that if we, and we're going to get earnings next week on, from a lot of the big banks, so we'll get an idea of what consumers are doing and at least how those executives are thinking about the environment. But the equity market, it's almost back to where it was, the S&P 500, when the U.S. started this war, or U.S. and Israel went to war with Iran. Bond market is telling a different story. Oil is also telling a different story. What are the stories that those are telling?
Yeah, so the very front end of the Treasury market, and I think I mentioned this on the show last week when we chatted, was it has really been from that inflation expectation component, right? Where 2-year yields are up, 50 basis points, mostly on inflation expectations going up, whereas long end yields really haven't moved very much at all. They moved 10, 12 basis points since the war started, so that's not exactly a very big move, right? That's just a little bit of position unwinds here and there. I think from a pricing perspective, when you look at oil prices where they are, the risk of recession, I think that the bond market is definitely has this push and pull between worrying about what does monetary policy look like in a recessionary environment, even when inflation remains kind of sticky-ish at 3 or a little bit above 3. I wouldn't call that stagflation, by the way. You have to be a little bit careful of that, right? Because it's not like we're talking about low real growth and then or negative real growth and then 9% inflation persistently like we had back in the 1970s. But it is an awkward environment for the Fed, right? Because they do have this hard 2% target, and it's going to be difficult, I think, for traders to price in a lot of cuts when you have 3+% inflation, and they've told us they want to get it back to 2. So unless something happens and something breaks in the economy, like you get 3 months of negative 200 payroll prints or something like that, the Fed's probably going to be kind of hand-tied here a little bit.
Yeah, Ira, just so we can finish with you here, the 2% level is so interesting to me because it feels like we've been talking about this number for many years now. We haven't quite hit it. What is the Fed's timeline now for when do they actually want to get to that target?
Well, we were actually under it for about 5 years, right? So, that we've never actually hit it. I think it's personally, and this is a personal opinion, I think it was a mistake for them to have such a hard target, right? At one point, they had said, we want over long periods of time to have average prices at around 2%, where they would be willing to have 3% inflation for 2 or 3 years and then 1% inflation for 2 or 3 years, right? And just have it average 2. But with a hard target, I do think that makes communication policy in some instances much easier because now that if inflation's above that, they're going to be reluctant to ease and they're more likely to hike. But it also creates a challenge because what if the steady state for inflation is 3% persistently? That's not necessarily a bad outcome for the economy, in my view, because it could just be that incomes are growing at 5% and inflation's growing at 3%. You have 2% real wage growth. That's actually a great environment, right? That's not a level that that anyone would complain about, except the Fed, because they want to have a 2% target.
Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Always good to see you, Ira. Have a great weekend. I want to go back to Greg Dacco here in our Bloomberg Business Week studio. He's EY Parthenon Chief Economist. He joins us on set here in New York. Greg, I want to take a step back and just think about the American consumer right now in an environment where we're seeing the highest CPI print in, close to 4 years at this point. Energy prices could be higher for a sustained period of time. I know the consumer is not a monolith, but in your view, how is the consumer right now?
I think the consumer is increasingly under pressure because what we used to have was this discussion around the fact that we had a K-shaped consumer spending pattern and that the wealthy were doing more than their fair share of spending. Now you've had a very significant negative wealth shock. Now, yes, markets have recovered somewhat, but that wealth shock has already occurred. So you're seeing downward pressure in terms of that wealth effect in terms of consumer spending ability. But most importantly, it's the income squeeze that I'm really focused on. You're seeing real disposable income grow at about a 1% clip. Consumer spending is growing at about a 2.5% clip. That gap is financed by savings, credit, and wealth. Those are not infinite measures to sustain consumer spending growth. So in an environment where you have job growth that's close to zero and wage growth that's easing, that's a key question in terms of how strong income growth can really be in that environment. And that is much more important than the so-called break-even rate in terms of how many jobs you need to create to keep a stable unemployment rate. I'm much more focused on income and what money people have to be able to spend and sustain economic momentum.
It's interesting because, and I've said this on the program a few times in the last week, but we had Chris Britt, the CEO of Chime, on just last week, and Chime's group of consumers is about $75,000 household income, and he said he saw their spending go up 25% in the month of March just on fuel alone. So that group obviously will have to pull back from other areas in their spend. I know that the consumer, the spectrum in this K-shaped economy is a lot bigger than just that. But when you have that group under that much pressure, what does it do for that portion of Americans?
It strains the economic momentum, very simply put. I mean, there was this narrative that we would have larger tax refunds, and we are having them. If you look at tax refunds so far this year, they're up about 14% relative to last year. That amounts to about $290 per household on average. Now, I know averages can be misleading, but take that and compare that to the oil price shock, which hit households by about $350 per household as a result of what has already happened. I'm not even talking about what could happen. I'm talking about what has already happened. So that means that there's a negative gap there in terms of tax refunds versus the oil price shock that hits households across the U.S. And to your question about who's doing the spending and how the income is structured, those families at the lower end of the income spectrum are much more sensitive to these higher oil prices, and they're much less likely to receive tax refunds because those we know are going to wealthier individuals.
How does the Fed factor all of this in? Because you basically have two competing narratives here. You have oil prices rising, and then you have a consumer that's increasingly under pressure. Do you think there's one element that factors more into what the Fed decides to do when it comes to rate cuts?
I mean, if they were to go to the textbook, they would say this is a transitory shock, but transitory is now forbidden. So what are they going to do? They're going to essentially look at the two mandates and the distance that that inflation and employment are relative to maximum employment and to the 2% target. And if you look at that, you're going to see that inflation is further away from the 2% target and moving in the wrong direction, whereas employment is pretty close to maximum employment if you were to take the unemployment rate as a gauge. And so what they're likely to err on is the side of inflation being the greater downside risk to the economy, and therefore maintaining a slightly, moderately, marginally restrictive monetary policy stance for the foreseeable future. So the next rate move, in my opinion, is no move for the foreseeable future.
For the whole year, do you think?
Potentially. We've placed a rate cut still in December, but for bad reasons, because we think that the labor market is not as strong as discussed in the FOMC minutes. The FOMC minutes had this notion that somehow the labor market was in balance. I don't think this is a balanced labor market. I think this is a very delicate labor market where, yes, supply has come down marginally, significantly, but you also have had a significant cut to labor demand.
So then how do you look at that last week's report that we got for the month of March? 178,000 jobs added to the economy. The estimate was for 65,000, according to economists surveyed by Bloomberg. A one-time blip? Do we have to look at the average? That seems like a pretty strong figure.
You know what's going to happen in the next few months is that we're going to see numbers hover around zero. And this is unusual for any economist, for any market participants to understand, because essentially the pace of labor force growth is very close to zero. So any job growth figure is going to be around zero. It could be positive, it could be negative. Whereas in the past we were accustomed to 200,000 jobs being added in normal times, now it may be zero. What does that mean? I mean, in any given month you can get plus 100 or minus 100, and people will panic because these numbers are unusual, but they're essentially telling you that the underlying pace of the economy is slower.
We only have about 30 seconds left, but we're going to talk about energy next, so I just want to end with energy here. The Strait of Hormuz, in your view, do we see oil prices come back to 60 in the next few months?
Not 60, no, but potentially, closer to 80, 75, 80 by the end of the year. It's going to be a slow rolling process, even if there is an ongoing negotiation and an ongoing ceasefire. Even in that environment, you're going to see a risk premium of $10 to $15 by the end of the year.
Greg Dacco, Chief Economist over at EY Parthenon. Greg, always appreciate you taking the time and coming by.
Thank you.
Taking a look at where we are with oil as we speak, we are just shy of $100 a barrel. WTI at $97.60, down ever so slightly. Brent pretty much flat at $95. Well, $96. Coming up next on Bloomberg Business Week Daily, we are talking more when it comes to energy with the person over at McKinsey in charge of energy. That's next.
It's 2:21 on Wall Street. I'm Amy Morris. Wall Street traders are bracing for talks between the U.S. and Iran this weekend. We check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the downside. NASDAQ is up 0.3%. The Dow is down about 0.5%. 10-year Treasury yield at 4.31% and the 2-year yield at 3.79%. WTI is now 1.2% lower, around $96 a barrel. Brent crude is down to $95 a barrel. That's about 0.5% lower. And Bitcoin is 0.8% higher at $73,000. Nike shares more than 3% lower on concerns that the athleisure market is peaking. Piper Sandler downgraded Nike to neutral from overweight on concerns that athleisure is too saturated across the industry, saying that Nike stock is still looking expensive despite the already steep slide this year. President Trump has praised software company Palantir in a post on social media, saying it has, quote, proven to have great warfighting capabilities and equipment. Palantir shares had been down as much as 6% before that post. Shares of Palantir now about 3% lower. And round 2 of the Masters is underway at Augusta National. At last check, Tyrell Hatton and Rory McIlroy share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Emily Grafeo and Tim Stenovec.
Amy Morris, thank you so much. Appreciate it. Well, U.S. and Iranian delegations are set to meet in Islamabad on Saturday with shipping through Hormuz, which handled about 1/5 of the world's oil and liquefied natural gas before the war, a central sticking point. On that, National Economic Council Director Kevin Hassett, he thinks the Strait of Hormuz can be open and the flow of oil can return to normal within the next 2 months. For more on energy, we're joined by Homayun Tai, McKinsey Global Energy and Materials Practice Senior Partner and Leader. He works with major energy companies, chemicals companies, utilities, natural resources firms, and more. He joins us here in the Bloomberg Business Week studio. Homayun, good to have you on the program. Does that sound realistic? Can the Strait get back to, I don't want to say normal, because it's hard to imagine anything looks normal, but sort of what it was doing pre-war in terms of the number of ships that were going through it in 2 months?
Look, Tim, I think the world has changed with this crisis, just like Russia, Ukraine, and COVID before it. I think ships can flow back in. We've got about 1,200, 1,300 ships that need to go back. But the long-term structural effects of energy supplies, I think, has reconfigured.
What kind of changes do you see in the next few weeks? You talk about long-term, but what about in the imminent? What are you watching for when it comes to global trade?
Well, so certainly looking at where insurance premiums are going to go, looking at just the number of ships, looking at commodity prices, the dissonance between what we see spot oil prices and physical contracts, $145 to $100, right? That, if we can see that dissipate, that means it's working. The confidence is working.
I want to go back to this idea of you saying that the world has changed. Has the world changed in terms of the sort of the floor for the price of crude and West Texas Intermediate?
No, the way I think about it, the world has changed. If you are a country in Asia where, then let's face it, Asia's been more impacted than Europe.
Oh yeah, I mean they're talking about fuel shortages, only certain people driving on certain days, people only going to work on certain days. It's a huge effect on the economy in some countries.
Exactly. So Sri Lanka is going to go back. Their Wednesdays are off. They're going to go back. Right. But if you're Korea or Japan and you've got these long-term contracts coming out of the Middle East, I think you're going to want to rethink how that supply comes in. So it's much less of a Texas issue. It's much more of an Asia issue, how things get restructured.
But from a pricing perspective, you have West Texas Intermediate and Brent crude at almost the same price. So even though, you can, and a politician can talk about the U.S. being energy independent until the cows come home, but when their constituents go and fill up the tank and it's $4.30 a gallon, it doesn't really mean much.
Yeah, I mean, you saw this morning, CPI came out, we're at about average $4.15 a gallon. So we're going to see these types of primary effects come through. We're going to see secondary effects for the U.S. consumer through fertilizer costs, chemicals, other things, heavy intensive transport, energy intensive transport. So I think that will continue to fall through over the next few months. It's not just going to get stopped because there's a ceasefire.
Talk about that a little bit more, the effects onto the U.S. consumers, particularly when a lot of our energy sources maybe are still coming domestically. Why should American consumers be concerned about rising food, rising retail prices because of the geopolitical tensions right now?
Well, just remember, oil and gas are very different things, as you know. So oil is pegged globally, and that's why you're talking about the price differences you're talking about, why both indices go up. Gas is different. Gas is more domestic. So we're going to see $4 gas type of thing, whereas in Asia, it's going to be like $19, $20 gas, right? That's going to be, so industries that are really gas intensive, so if you think about power generation in the US, we're not going to see as much disruption there. Oil intensive industries on the transport side, I think we're going to see more disruption. So that's where it sort of bifurcates for the US. But overall, all of these things are kind of sticky. Prices go up globally for oil, it sort of filters through, right? It takes time to come down.
Do you think, and you work with energy companies, chemicals companies, utilities, natural resources firms, and more. The shift in Washington over the last 18 months has made it so that renewable energy is no longer a priority for the United States. Does a shock like this make the companies that you work with, like the utilities, for example, think differently about renewables? I mean, nuclear is a topic, but that's years away. If you want a gas turbine for a power plant, you got to get in line and wait years at this point. Are they thinking about renewables even without the support of Washington?
There's still, I think, a lot of momentum on the renewable side.
You do?
Just in the U.S., because if you think about state policies, over 26 states have renewables policies, and they have targets for 2030 to 2035. And that's driving at a state level renewables development.
So it's still happening?
It's still happening. Gas is certainly happening, right? Gas, and we always said as McKinsey, when we looked at the market, even years ago, we said gas is going to be has a big part to play because you can't just substitute all of that with renewables. So we're going to see both develop. Now, in Asia, it's quite interesting. Korea and Japan have relicensed their coal plants. So there's a ramp up of coal that is happening and renewables. So Asia is doing this bifurcated policy of renewables and coal. And that's not going to switch back even if we get a resolution in the next few weeks.
We're speaking with Homayun Tai, McKinsey Global Energy and Materials Practice Senior Partner and Leader.
Homayun, I want to continue the talk on global trade, but I am curious as well. You work with these energy companies, CEOs. How are they getting information about the conflict in Iran right now? What is actually going on at the Strait of Hormuz? I'm curious if C-suite executives have some other way of kind of like understanding what's happening in real time.
You know, supposedly Citrini sent the undercover analyst.
That's what I was thinking.
I
knew
wasn't
going to say that.
I knew that's what you were thinking.
It was a conversation topic.
But to Emily's point, are they getting the same information that we're getting?
I think, yes. I mean, generally, so 50% of the clients we work with, CEOs I talk to, management teams over the last few weeks, probably until the last 2 weeks, probably thought this is going to come and pass, okay? The other 50% are worried about this in two ways. One group is saying, look, let's actually really think about our scenario planning in a very different way. We need real-time information, so they're going to a lot of different sources. The other 25% basically are saying, look, our hedging and contracting strategies have changed because we're relying on that. So it is a really 50-50 split. I think it'll be very interesting over the next week as we see what happens with the ceasefire as to how many actually companies really get in the mix. But the data, the information that you're asking me about, I swear it's like from all sorts of different angles. I don't think there's any particular angle that any company has an edge on.
So let's talk a little bit about the second order effects of this. And so energy gets so much of the attention, but we got to talk chemicals, nitrogen, fertilizer, urea. I mean, these things that I think really go into the background of the way that we get our food and what we pay for our food.
Right.
Do we start to see those prices, or when do we start to see those prices go up as a result of the strait closure?
I think the lag, so just to your point, 10% of fertilizer, or fertilizer costs are 10% of food inputs for the US. It's about 15% in Europe. As those pieces go up, we will see, and those contracts are going up, we are going to see prices translate. I think it takes a few months. This is where it's the stickiness. And remember, you've got 6 weeks of that supply sitting there in Hormuz. So whatever we have on land and whatever the Asian countries have on land for the first commodities, petrochem, et cetera, you're going to run out of that, right? So now we're going to see the pricing effects start playing in.
Wait, when you say we have 6 weeks sitting there?
6 weeks of tankers sitting in Hormuz with nitrogen, with urea, and other commodities.
But the problem is the tankers that would typically take the place of the tankers that are full and leaving those ports, we're not getting through either. So even when those tankers are able to get out, you have this bottleneck.
Absolutely, and that's where, so when you talk about the urea prices, nitrogen prices that affect fertilizer, that's in the next few months we're going to see some level of repricing for that.
Okay.
So you talk about in your notes this 6-week countdown to an inflection point. That's what you're referring to, but that would mean that this is coming, what, next week, 2 weeks from now?
We're at 6 weeks now. So our concern was, when you look at, and this is more when you think about supplies in Asia, Korea, Japan, you know, how much LNG is in reserve, et cetera. It's about 6 weeks worth of supply. So the 6-week mark, which is where we are right now, basically you're going to see repricing at spot for a bunch of contracts for manufacturing companies in Korea, et cetera. So that was our concern for the 6 weeks. Now, if the Strait opens and these ships go out, they're going to take 4 to 6 weeks to deliver, right? So this is a 12-week protracted set of issues we're talking about.
What happens if the Strait opens, but with a toll?
Look, if there is an actual toll and goes through, it's going to affect the delivery costs downstream. So that should translate, if that was true, that would translate into pricing. And not to mention the uncertainty that comes with.
Well, speaking of that uncertainty, I think one challenge will be if these insurance companies want to insure ships, at least in the beginning, and if there is, you know, God forbid, some sort of issue that happens, what that means for insurance companies. That's a big part of the equation that I don't think gets enough attention.
I agree. It's insurance. Look, it's port costs. It's a bunch of things.
Because
downstream.
you're not going to take a ship through there if it's not insured.
Right.
So it just sits there then.
Well, there's got to be different ways to think about how you get contracting done, right? I mean, so for those that, if you're paying for the insurance premium, it's going to either, and you're getting a supply, it's going to come through in cost. If you're recontracting, it's also going to come through cost in a different way. So you've got to look at the differential between the insurance premium and how you're recontracting.
Are you seeing the U.S. energy companies drilling now, or has that paused given everything that's going on now?
So investment in general, I think what I see from my clients and work that we're doing, people are very hesitant to invest. And it's not just on the oil and gas side, it's across. You know, we have Asian clients who are thinking about building manufacturing facilities that are now hesitating. So we're starting to see, that's the third order effect, I would say, is what's happening on the manufacturing side.
So even $100 oil prices doesn't get companies, you know,
excited about drilling.
To drill, baby, drill in West Texas.
I think there's so much uncertainty. This is where the scenario planning comes in.
Yeah.
The question is, well, is it going to go back down to 75, 60 and below 6 months later if there's resolution right now? Or are there other factors that keep unknown? And that's the scenario work that is really important for companies to be thinking through.
Do you think the price, just 20 seconds, are the prices that are reflected across the curve right now accurate?
I think the prices could change, right? They're accurate for the dissonance between physical and financial markets.
Okay.
Accurate. And that is our point. That's my point, is that this thing doesn't fix the physical. If we get a ceasefire, we don't fix the physical issues.
Humayun Tai, McKinsey Global Energy and Materials Practice Senior Partner and Leader here in the Bloomberg Business Week studio in New York. Coming up, the bank executives summoned to Washington. The details next. A Bloomberg exclusive.
It's 2:40 on Wall Street. I'm Amy Morris. U.S.-Iran ceasefire agreement still holding for the most part, and the energy markets seem to have noticed. We check those markets for you all day long here at Bloomberg. Let's start with oil. WTI crude is down almost 2% now at $96 a barrel. Brent crude is down 1.7%, around $94 a barrel. So everything right now less than $100 a barrel. The S&P 500 down 0.1%. NASDAQ is up 0.25%. The Dow down 0.5%. 10-year Treasury yield at 4.31%, and the 2-year yield at 3.79%. Consumer sentiment fell to a record low because of increasing worries about mounting inflation caused by the Iran war. Consumers expect prices to rise at an annual rate of 4.8% over the next year and see costs rising at an annual rate of 3.4% over the next 5 to 10 years. The current conditions gauge and expectations index declined, with consumers blaming the Iran conflict for unfavorable changes to the economy. Bond traders trimmed wages that the Fed will lower interest rates once this year. Fed officials have flagged the prospect of higher inflation keeping policy on hold for some time, as their preferred gauge of consumer prices is rising faster than their 2% long-run target. Anthropic has agreed to tap data center capacity from CoreWeave, part of an effort to handle increasing demand for its artificial intelligence services. The multi-year deal will help Anthropic build and deploy its Claude AI models, and the capacity will include a variety of NVIDIA chip architectures at data centers in the U.S. CoreWeave shares now 13% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. We go back to Bloomberg Business Week Daily with Emily Grafeo and Tim Stinovec.
Hey, thanks so much, Amy, for that update. Do appreciate it. It is one of the most read stories on the Bloomberg terminal. Everybody is following Bloomberg's reporting on this exclusive. Treasury Secretary Scott Bessent and Federal Reserve Chair Jerome Powell summoning Wall Street leaders to an urgent meeting on concerns that the latest AI model from Anthropic will usher in an era of greater cyber risk. Todd Gillespie has the scoop. He's Bloomberg News banking reporter. He joins us here in the Bloomberg Business Week studio. So almost every CEO of every big bank went. The only person missing, according to your story, was Jamie Dimon of J.P. Morgan Chase, and he couldn't make it for some reason. But why were 5 of the 6 big bank CEOs summoned by Fed Chair Jay Powell and Treasury Secretary Scott Bessent?
Well, we know, Tim, that in the past few days, in the past few weeks, even concerns have been raised about the severity and the strength of this new model by Anthropic, this tool called Mythos, which basically Anthropic have said can essentially at a user's will detect extreme vulnerabilities in things like web browsers, in security systems, and basically presents a whole new level of cyber risk for countries, for companies, for huge institutions. And Anthropic have admitted that they know the severity of this. They have acknowledged and are taking it very, very seriously. They've had a limited rollout for testing purposes among a select group of companies. We know JP Morgan is one of those. That's public. There are about 40 other companies as well who are on the list. Not all of them are public, who are getting early access to this and testing it out. Their information security teams have access to this. But essentially what this shows, and bear in mind, some of the top executives were already in DC for lobbying meetings on Monday, but this was a meeting that was sort of tacked onto that. It was a very unusual meeting in that you had Scott Bessent and Jay Powell. Remember, the central, the Federal Reserve has taken pains in the past few years to, establish its independence from the political side of government right now. But together you have the central bank chair and the Treasury Secretary having a joint meeting showing how important this is across the department, across the US government for financial stability and for the security of the US economy.
What is your understanding of what was really at the heart of the concern that both Bessent and Powell had? Was it just general, like, we need to be careful because there's now a more powerful cyber, criminal out there? Not criminal, I don't want to say criminal, but, a cyber tool that we're vulnerable to? Or were there more specifics of, like, this could actually happen? Here's a specific risk that maybe was flagged.
Yeah, we're continuing to look into this, that's for sure. But one thing to bear in mind, right, is the wider context here that you have around these AI tools. You have Iran, you have China, you have Russia, all creating their own
cyber tools, their own AI capabilities at the same time. Here is something that's been developed on US soil. There have already been partial leaks by some of these, by Anthropic itself, as we know, that are creating, questions around the security of the capability. So basically what the government is essentially saying to these banks is, hey, like, you guys are the most systemically important institutions in some ways that we have in this country. You of anyone need to be the most defended, in case of potential risks, not just by this own tool that you will be getting access to. JP Morgan has access to it. We know that other companies are getting access to it soon as well. And that is, that to them is sort of the core of this. Like, can you test this? Can you make sure, can you help us evaluate its own risk and the risk that we might face from elsewhere as well?
And can they?
Well, I think that's a delicate question right now. Obviously these banks have been keeping this meeting extremely confidential. I mean, this was the results of a few days of reporting.
Yeah, I think in your piece mentions none of them even commented to you.
Yeah, none of the banks commented to us on this. I think it was very, very tightly held. And I think it seems to be more of a directive from the top down to the CEOs directly, a direct appeal to say, hey, you need to be taking this super seriously internally.
So what can you tell us about the way that banks do keep our money safe in an environment where, they could be at risk from these new tools?
Yeah, I mean, that's a great question, Tim. And we know banks aren't perfect by any means. In fact, some of them have the worst tech, right, of institutions. I've come on this show before to talk about, fat fingers at Citigroup, for instance. A lot of banks with crunchy technology, let's say, to be generous. We all know, even from a retail perspective, many people listening to this show will know that their own bank is far from perfect when it comes to technology. So the urgency of this is really not lost on these companies. They are reflective on this. The Federal Reserve, has a huge role, in particular in its supervisory role, looking internally at banks. They are the ones that have staff often inside the bank's offices who are looking at their capabilities, looking at their systems, looking at their defenses here. And they've obviously been evaluating that and evaluating the new tools and the new capabilities that are both available to these companies, but also to people who might want to hack these companies, and have decided that, look, the equation and the balance that stands right now is serious enough that this needs to have a top-down, extremely detailed and serious approach to what's going on here.
Is there a potential that approach would ever turn into maybe new rules and regulation for banks?
I think that's quite possible. I think there are, there's chatter around that, across sectors about how different companies might respond questions of best practice. As we all know, across Wall Street right now, a lot of banks, have public partnerships with certain companies, are trying out lots of different tools internally, whether that's for their engineers, their junior analysts, all this kind of thing. They are already playing around in the sandbox as it is, but I think it's only inevitable that at some point there will be some formalization of what's required.
Todd, I think what's particularly chilling in a scenario like this is just because one American company has this technology now doesn't necessarily mean that other companies won't get it soon and that it won't easily fall into the wrong hands at some point soon. I think people are pretty shocked about how quickly this tech moves, but no question, everything's moving in the direction where it just gets better, and more impressive and more impressive. What happens then? It seems like this is, it's always going to be a race between sort of the bad actors and the ones who are trying to keep this stuff safe.
Yeah, I mean, it's not, I mean, you're right, Tim, and it's not just Anthropic's own tools, but who could replicate that, right? A lot of this, a lot of AI source code is open source. China and Russia, Iran, are also developing open source tools, at least China is for sure, and this stuff is readily available. So it's not just a case of whether it's not just a question of whether Anthropic itself is secure, but it's who can replicate what Anthropic has, and what can the US economy learn from what Anthropic has in order to defend itself against what other companies might have and other states might have.
Well, it's an amazing story. It's the most read on the Bloomberg terminal. Do check it out. Todd Gillespie, he is Bloomberg News banking reporter, joining us here in New York. Once again, Besson urgently summons bank CEOs over Anthropic's new AI. Taking a look at markets just a little over an hour before the close of trading. We're not at our worst levels of the day, but we are down on the S&P 500 and the Dow. The Dow down 0.5 percentage point. The S&P 500 down about 0.1%. The Nasdaq still in the green to the tune of 0.2%. Oil right now is still above $95 a barrel. Brent at 94.67. This is Bloomberg.